Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And if you can believe it, we have reached the 1 year anniversary of Silver Squeeze. Amazing what a year it's been, seeing the way things have developed, seeing how not only did not just me, but other people document what was happening as it happened, as Ross Benham of the CFTC opened a silver investigation, as we saw the greatest crime in the history of the silver market take place just a day later. Then I sent evidence to the CFTC's whistleblower hotline to get it on the record. They refused to answer that. A whole ton of things have happened since then, yet at the heart of it, what never went away was the whole initial conditions that led to the explosion in the silver price. And then when myself and many others said it was impossible that they could have added that much silver, and that there was a problem in the market, we found out later that the commissioner of the CFTC, Ross Benham, also a member of the working group on capital markets that's known for their market interventions, confirmed that they tamped down the market. The LBMA wrote a report saying they were weeks away from running out of silver. That basically, as long as nobody ever talked about silver again on social media, the Ponzi scheme could be held intact. Yet now here we are a year later, and there's more evidence than ever. It's building, and now I think a lot of people are there are many people who didn't even know about this last year. And now, certainly interesting as I've had some time to reflect, and the clues are building and more evidence fits together. So in honor of everything that happened, certainly we've had a lot of coverage the last couple of days that I would recommend people see, including with Bill Holter, and then we had an update earlier this afternoon from Andy Schechtman detailing that we're seeing the physical market diverge from the COMEX paper price now. He describes how it's the highest physical silver premiums. Even earlier today, silver premiums were already well in excess of the peak of what they reached last year throughout the entire Silver Squeeze weekend. Now we're seeing COMEX silver price drop. While metal is harder to get, the premiums are higher than ever. So whether this comes back in and gets tamped down again, I think they're running out of time that works. But we'll be digging into that a lot. We're going to be replaying all of the coverage we had last year covering this. In fact, we have a marathon coming your way now that'll go for a couple of hours with the videos covering the events in the week leading up to the Silver Squeeze weekend. And then those videos explaining that. So, because certainly there's a lot of people who are going to be seeing this for the first time. A lot of people that I think will see it for a second time and see it in a new way now that there's the context of everything that has unfolded in the past year. And actually going forward, what we will do is, for example, on February 5th, each morning we'll start replaying the previous year's clips so you can see how this story unfolded in addition to getting the New Year's coverage. So we're going to be expanding our coverage here on Arcadia Economics. A lot of fun stuff. And fortunately, a couple new folks we've added to the team will be guiding you through tonight's show and some of the history, and just reminding you that this is coverage from Silver Squeeze 2021 as we are here now a year later. So I think you're going to find this helpful. It'll be going for a while, so you can tune in, enjoy it. I think you'll learn quite a bit, see a new perspective, and certainly a lot has happened in this past year. And I think to me, it feels we've reached the break point. And we'll see how this one goes. But with that said, happy Silver Squeeze anniversary. And here, let's take another look 1 year later.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome on into the live show. Thanks for joining me tonight on this Tuesday, January 19th. We're going to be doing some more live content, general going forward. So type your comments. Let me know if you like the live ones more than the pre-recorded ones. I know there's always a lot of questions, and I think people like interacting with each other. So anyway, you can type your comments in the field there, in the chat field. And welcome on in, because we are going to talk some silver. We're talking about a lot of things that are going on here today. And obviously, we have Inauguration Day coming up tomorrow. A lot of troops in Washington is what I hear. I'm not in Washington. So in today's news cycle, what is fact? Interesting question to think about. But anyway, we'll cover that. We'll dig into some option trading, some big silver short. Geez, let's see what I have in my pocket today. I carry around some silver coins regularly now. Maybe I'll have to switch up the rotation, but I say we give away something tonight. So how about this one here? Oh no, we could find a more exciting one than that. Actually, I'll tell you what, tonight, they say when you're to jog the subconscious, give it so you can like really feel it. So rather than the generic one, I'm going to give away to one lucky winner this really super cool, it's like a pirate coin, if you can see that there, guarding his treasure chest, which is pretty slick. And then on the back, you see that this thing is heavier than 1 ounce. So no prey, no pay, I think is what it says there. Anyway, so someone who does something silvery in the chat room or impresses our moderator, Yara, who is out there, well, we'll get one of these babies out to you. In fact, this exact one, and Yara, if you could order me another one, I'd like these. I'd like to have one for myself. So with that said, let us kickstart into the action here. Tonight's show is sponsored by The Big Silver Short. Great book. I mean, maybe I'm a little biased here, but how the Wall Street banks left the silver market in place for the short squeeze of a lifetime, which, again, not legal licensed financial advice, but what's interesting about the book, when I started digging into silver in 2009, I think it was around 2011, I think it was around September, after gold had gotten popped from $1,900 in the middle of the night, right as the Swiss pegged their franc to the euro, which I'm sure made a lot of people want to sell gold just like you see now. But so let's say 10 years of researching into silver manipulation, I kept thinking, maybe I'm imagining something, maybe I'm missing it. Although, the book really came about, I say, as an effort to find what I could be missing. That was one of the reasons why I did it in an interview style format, to get all these other folks that I was listening to and considered experts. So anyway, 10 years later, I guess I'm more convinced than ever. I keep trying to find an alternate explanation, but fortunately, we got actually pretty lucky. Obviously, took about almost a year plus. We started in April or January of 2019. Fortunately, got it out on June 18th, which was when silver was still $18. Then, as we can pull up here on our silver chart, we got a nice little late night spike during the show. Silver up. And I think this is interesting. I mean, I don't know what to make of this, but there are these times where you see it's like a mirror image, maybe different dimensions on the curve, but quite similar these last 3 days. And, we'll see how it shakes out by the time we're done. We started a little earlier tonight, I might add, because there is a roundtable with Bix, Cliff, a few other folks starting in a little bit. We're also looking at different start times, show options, whether we do more live. So by all means, type in the comments if you have any preferences there. We want to get things queued up. Might do it earlier, closer to after the market closes, maybe while the market is open. But we're a team here with my Arcadian family. So anyway, let's see. Back to our silver chart. You can see been floating around 25. And where's the 1 year? Yes, you can see here. This is, fortunately, I was really worried right around January in particular. People who are around me day to day might have often seen me a little cranky because I was thinking, Jesus, I hope this thing doesn't blow up before we get the book out. Fortunately, the spirits were with us. So there's June 28, really right before that spiked up, which by all means, I'm not claiming is any brilliance on my part. But what I would take away from there is that when silver sits below $20 for 4 years, and then when it finally moves, so I mean, here's the 10-year chart. You see up at 50, and then ever since 2015, and here's the spike in 2016, gets right up to 20. So pretty tight range, then gets driven down. There's an example of the law of unintended consequences. What happens when you suppress a market? It was glorious to see it happen that quickly and shot right back up. Yes, COVID was happening. There were other things happening. But keep in mind, there were even a couple months after those things that were directly impactful to the silver market happened before that shot up there. I would say that is the effect of the leverage. Normally, asset markets don't work like that. So I still think that's just the tip of the iceberg of what we're about to see. So if you want to know how I think it's going to unfold, or how at least, who all did we have in the book? There was David Morgan, Dave Kranzler, Andrew McGuire, Ted Butler, Bart Chilton, who confirmed all of the, what has long been alleged, Craig Hemke, Ned Naylor Leyland. Great chapter by Ned, and hopefully we'll get him back on the show soon. And anyway, I stand by my research. In fact, I feel more proud of it than ever, just in the sense of, do I feel that is worth passing along to folks now? So anyway, that'll be the sponsor of tonight's show. And go ahead and type in questions, because I know I said Q&A last time. We didn't get to quite as many questions, but anyone got a good home run play, says Nicholas? Yes, and I would call it silver. That is my home run play. But let us continue on here. I will keep an eye out for the questions. We'll take a quick look at gold. Pretty flat, which is interesting. I mean, you have, where is that link? Okay, so thousands of National Guard troops pour into Washington as states answer the call. I am not going to claim to know what will or will not happen tomorrow. Certainly my thoughts are, I hope that it is, people can express themselves peacefully more than anything, whatever you feel. But still, just to the degree that when there's a gun in the room, there's a higher probability that a gun goes off. There's volatility, which fortunately ties in. We're going to talk volatility and options because we don't know exactly what's going to happen. But if you can, let me see how to put this appropriately. If you can price things more accurately, price probabilities more accurately than the other guy, then you get to become the casino, which we talked about in our silver chat the other night. Come back here. Will ingesting silver give me hair like yours, says Quackbow. Possibly if it's colloidal silver, I think that could do some good things. I don't know if you're planning on taking down a physical silver bar, that would be less recommended. Mr. Tim A says, the law of supply and demand apply to physical metals as much as any other good or service on the planet. COMEX contracts ratio 250-1. How soon will we see the final disconnect from SLV and physical? Tim, I wish I knew. The way I'd look at it is that it could be tomorrow. I mean, let's be clear of our phrasing here. I don't know that it will be tomorrow, and most likely it will not be tomorrow yet. If you think of it slightly differently in terms of, if you do think that a break point is inevitable, and you say, well, what kind of day might something like that occur on? I mean, tomorrow's the kind of day. I don't know what Trump will do, but I mean, at least to me, it's plausible that he would drop a truth bomb. I mean, I'm not taking sides here, but I think one thing, whether people who love or hate Donald Trump can agree on, is that backing down is not really his go-to move. And you saw, for example, what happened with the whole thing with China, where it just keeps escalating, digging deeper and deeper in. So, he sat there, gotten, at least on the surface of what we see, attacked by Pelosi, Democrats, he gets attacked by the Republicans. And I do believe, I mean, we don't have to go into conspiracy zone or my personal thoughts or beliefs. I mean, you can go look on YouTube. You can do 5 minutes of research or read a couple of books. It's not hard to find documentation of things that are not within the legal code. Like I phrased that to avoid any hot button triggers or algorithms that are kicking in there, like on Wall Street. So to me, it's like he can at least make a big stir on the way out. I mean, for example, when he delayed the release of the JFK files a couple of years ago. Now, ironically enough, in my book, The Bush Crime Family, which is sensational so far, by the way, I might add, we just covered how George H.W. Bush still claimed that he did not know where he was that day, which seems a little unusual. Would there be something like that coming out? I mean, Trump clearly knows. I mean, it's not hard to find things about some of these politicians that most people in the public don't know for the people that they're voting for. So anyway, obviously, we will not get into some of the darker things that have certainly emerged that I, at least, do believe have been occurring on probably a much wider scale than is comprehensible. So again, I can't tell you the future exactly what will happen, but in terms of how we would price this from a volatility perspective, I mean, it's kind of the same as like on an earnings day. Sometimes the earnings number comes right on the number and, it's not a big deal and it doesn't move. But on average, when you have certain events such as the labor report is a big one where gold and silver would often get hammered, Fed meetings, and certainly I would put tomorrow in it, would seem to be a higher than normal volatility day. And I am going to look back in here for some more questions. Hey, Chris, interested in silver? Total newbie here. Any comment on the Quest trade RRSP for holding silver and gold? Stu, can you? Not quite sure what you mean there. Perhaps if you could explain that again, I will do my best to answer it. Any way to short Trump properties? I'm sure there are. I don't know exactly what that would be. I mean, there's probably some company that is directly linked that's publicly traded. Speaking of shorting real estate or stock market bubbles for that matter, I mean, on one hand, yes, I think that you can make some clear arguments. These are in bubble territory as well. Although what I wonder is that, I think stocks like Tesla are overvalued due to money printing. But given that it's hard for me to see, even if the stock market goes down 2%, to see the red scarf request. Well, we will not do that. But it's hard to see anything happening where the response is not quickly more money printing. So I think anytime the bubble tries to pop, it will get inflated back up. Let's see what they're we'll take a quick look at what is being discussed on CNBC tonight. I'm sure there's something about more stimulus. Stock futures flat in overnight trading ahead of Biden's inauguration. Trump doesn't mention Biden in. Oh, here we go. Biden looks to give a big boost to home buyers and builders. There you go. Perfect. So again, I know you asked about Trump real estate, but here's real estate in general is proposing 15,000. So, I mean, they're pumping money in. And when you read things like this, I mean, by all means, enjoy anything that you want to dig into and understand, but don't let the details bog you down. I know I used to have a habit of that, but whether it's 15,000 for first-time home buyers or 10,000 for second-time home buyers, the net effect is that money in net is being printed and pumped in to prop up the market. I don't think we will ever see in this current system. In fact, I'll go as far as to guarantee you that we won't see it. They will never let the real estate thing collapse. I mean, I don't know. Does it say somewhere? There's some stat. I think the housing market is like a third of the economy at this point. So, you know, I mean, I think when people say, well, they don't have a choice. Well, you have a choice. You stop lying directly to people's faces and, you know, say, hey, we're insolvent. You know, we have to restructure. We have to acknowledge this. But instead, they just keep compounding and doubling down. So let's see. Michael says, Chris, I like to store my silver and gold in PSLV and OUNZ because they're allocated metal and you can take delivery. It's all in a Roth IRA. I'm not familiar with the second one you mentioned there, but yeah, I'd feel comfortable with the Sprott Trust. That's PSLV. They also have a gold trust. I mean, if you really don't want to take physical delivery, which, you know, I get it. There's situations where, well, you want to have storage, but instead of SLV, go to the Sprott Trust. I mean, what are you supposed to say? SLV, JP Morgan's the custodian, GLD, HSBC is the custodian. I mean, they're both banks that have a track record of felonies and screwing their customers. So I very much hope that no matter what happens, the people who own SLV and GLD are going to get reimbursed, or that the metal is there. So, I mean, by all means, I'm not rooting for a failure there, but does it seem like a significant risk factor? Sure does to me. So anyway, there you go on the mortgages. Let's take a quick look at the dollar index leading into tomorrow's festivities. We see it's right around 90.39, come down quite a bit after last half year or so, really since October, September-ish there. And I guess I would imagine that would be what the folks in the technical industry call a resistance level. And despite Janet Yellen saying that she doesn't support the weak dollar policy, but just kept interest rates at zero while she was in office. So make of that what you will, but let us take a look at the volatility index going into tomorrow's events. Let's switch the quote there. That's the VIX, which you don't hear as much about, but in option trading land, we're quite familiar with. So higher than average, still not a massive level. Now, if I recall the math correctly, it's not exactly linear the way it's calculated, but you see here was what happened. We got up to 66 back in March around Corona. Going back a little further, there you see, I remember I've seen prints of 80 back in 2008, shortly after Lehman Brothers. So obviously, while the bubble was being inflated, you saw it sit there in the teens for quite a while before spiking back up. But anyway, another thing to keep an eye on as we go forward. And with that said, I'm going to come back and take a look for some more questions here. Okay, there is Chris. Do you prefer American Eagles or bars? I don't really have a ton of either. I don't go nuts over the American Eagles. I mean, I generally was thinking if my core view is that we're more than the mining stocks. I mean, what I believe in my heart at the end of the day is that the price of silver has to go up. So I generally opted for most silver per dollar. Now, with that said, you could say if we really have a wacky situation and there's a silver shortage, would the premiums on the minted coins from the American Mint, the Eagles, and the Maple Leafs from the Canadian Mint, would they spike as well? So, yeah, I mean, I guess anything is possible. And perhaps it's like, if you get just have the silver, and it's like we're like splitting the rounding error most likely. I mean, you can make a case for either. So I don't think there's one set answer that is going to pay off more, but of course, you can get a mix, I guess, is the last thing that I would add on that. Chris, will you flee the U.S. as tax ramps up? Well, I don't know. I'll tell you what, I did leave the U.S. once before when I was first learning about how this stuff all goes and how I thought it would ultimately have to unfold. I did find that these same banks that own the U.S. own Europe too. Excuse me. Which actually is interesting when you think about it. Now, I like to assume hopefully there was a guy named George Washington and Paul Revere and all of that. I wasn't there, and turns out my Rothschild's grade school textbooks were not always giving me the most accurate version of things. Yet the idea that, even the governments seem to be beholden to the hidden upper layers of the banks. And it just makes me wonder, like, how independent are we really? We keep hearing about how these British banking families are still controlling everything. So fine, tell them America's free, but in the end, you still own it through the banking system. That was the conclusion I came to. And certainly in the last 8-9 years it took me to get a business up and cranking, which was one of the harder things for me anyway in my life. And then the idea that, now you write out a big check. It's like I understand very much why people who have started a business have a different perspective than those who haven't. I've seen both sides of it, and both are equally important. I find an appreciation and understanding for each other goes a long way. But I just say this in the sense that when I think about what I went through and what I know other people who started businesses who've gone through on a level that I hope to one day maybe experience, I do wonder if Biden's the president and implements the kind of things. Now keep in mind, we never know what anybody's going to implement based on what they say when they campaign, because usually that's not actually what's happening, but at least what you would imagine. I wonder if we will see some capital flight out of here. So anyway, I am not sure what I'm going to do. I have a lease here in Austin I got it for half a year. Was hoping to do Silverfest 2 up in Vancouver. Although I hear some sketchy stories about their virus police and like creating like ratting each other out culture, which, so I don't know where the next stop will be. Guess I'm just learning to be grateful that this was part of my plan when I was leaving the trading floor, to be able to go wherever I want, continue to learn, continue to share things that I think are important for people. So certainly I really appreciate all of you who tune in each night and make this possible. And with that said, let's see if we have a couple more questions here. Love to get some analysis on miners, royalty streams, exploratory. Yes, well, we will actually dig into something I found darn interesting. Let me come back over here. We'll go to the come back. Silver stock portfolio. I've looked at this before. I'm sure actually, maybe I didn't mention it before, but you probably know there's the GDX, the gold miner index, the GDXJ, which is for the junior miners. Then for silver, we have SIL and SILJ. And I would say that at least, and I'm guessing I'm not alone here, but when you think of prime junior silver miners ETF, the SILJ, that I would look at that and think, oh, this is, I looked at that, I'm like, well, this is cool. The index of junior miners, where certainly, we've heard the stories from the old timers about, the 10 bagger and the 30 baggers and 50 baggers. I think that's going to be possible. Silvercrest, I think, is Kranzler got that at 16 cents. It's $9 now. So many baggers, and certainly if you have silver go to 50, if you have silver go beyond 50, and some of these companies find what they're looking for, then I think that's very possible. And I've been thinking about it where, say you took $10,000, right? You bought 10 silver junior miners. If you hit on one that becomes a 30 bagger, even if the other 9 find nothing, then you still 3x your portfolio, because the 1,000 becomes 30,000, the rest becomes 0. So you turn 10 into 30. So, and again, not legal financial advice, but just something I've been thinking about, which is like, all right, well, then maybe you have this thing which provides that for you. Although you look at the holdings, I couldn't believe this when I first saw it. Where do we go? So here you have Pan American, which I sent this to one of my friends who is part of a royalty streamer. That's you, Uncle Scotty from EMX. That's right. EMX, great. That's, again, not legal financial advice, but a stock that I really like. And he pointed out here, the market cap, $8 billion. And if you dig a little further, Pan American, he actually was kind enough to look up the stats, 31% revenue by silver. So I don't even know if I'd call that a silver company, despite the name, and certainly not a junior. Hecla, I don't know that I would consider them a junior. First Majestic Silver, I love First Majestic Silver, although of all the things that I love about First Majestic Silver, they're not a junior miner. Here's Yamana Gold, MAG, Silvercrest. I mean, I was just stunned. I mean, this, again, I'm not saying, I mean, I'd be happy to own this thing. I love most of the companies in there, and I think that they will do incredibly well. But silver junior miner index, I would say no. And fortunately, as I think you've probably learned if you're a longtime viewer of the show, my goal, generally speaking, is to be as lazy as possible. And I was thinking, wow, well, just putting together an index that actually, what is AXU? That's a Lexco, good stock that worth looking into and doing some due diligence. Discovery Metals, I hear many good things about. But just like the premise of creating something that actually replicates what I think SILJ is advertising, because I don't think they quite, I mean, that doesn't seem like a silver junior miner index to me. And so I'm actually putting something together, and I was thinking, gee, that could be fun, get like a good index. It'd probably be a nice little project to work on, and at Wall Street fee schedule. So yeah, there we go. Anyway, so I thought that was interesting. Speaking of First Majestic Silver, though, quick note to pass along here from my good friend Mark Carruthers. Hopefully you guys had the chance to meet Mark at Silverfest in the First Majestic booth. Mark is one of my favorites in the silver industry, and keeps me posted. Just a good dude in general. Well, who I will very much be open to see if I do make it to Vancouver. And he passed along that tomorrow, First Majestic will be holding a conference call at 11 a.m. Eastern time. The call will be focused on Q4 and full year production and the 2021 outlook. Let's see. To participate in this call, free from Canada and the US, is 800-319-4610. Maybe someone can type that in the chat window. 800-319-4610. And you can also click on the webcast on the First Majestic homepage at firstmajestic.com. Again, that will be 11 a.m. Eastern. So, and you can let your, okay, we do have the link. See, look at that. Mark Carruthers. That guy's so awesome. There he is, even putting up with my emails at whatever time it is in Vancouver right now. So I'm going to put the link in there. Yara, maybe you can go into the description field, add that in, link for First Majestic. who is one of the sponsors that brings you this show each night. So they bring you the show and they go get the silver. I mean, it's a good portfolio of great deeds in the world they're doing, in my opinion. Obviously, I'm a little biased, but thank you, First Majestic. Also, thank you for hiring Mark. I'm darn grateful I got to meet him. Todd Anthony, also great there, and Jill, and of course, Keith Newmeyer. That I'll tell a quick Keith Newmeyer story here that I guess now that we've been doing this for a while, I can get into things like this. But I still remember the first time I met Keith. It was at the Sprott show in 2018. So the channel was already up and running, but nobody really knew who I was or was watching back then. So, and I was still kind of like naturally a little bit of a shy introvert, and went to the First Majestic lunch, and it's like a little fanboy. I'm like, Keith, oh yeah. I remember he was kind of looking at me. I was like, I couldn't tell if he was like, what does this guy want or what? And I was just, even at that time, though, already had great admiration for how he had stood. I mean, so I've learned more and more about the company. I've always been impressed with the things that I've seen them do. But even years before that, obviously, you know how I feel about the manipulation of the silver market. And that bothers me just when you see people cheating. It's just something I don't personally like being around. And so that Keith stood up in his position and spoke up about that. I will just say that's why he was the single mining executive in the big silver short book. So anyway, thank you, Keith. Thank you, First Majestic. And yeah, that link is in the field below or in the chat window, and hopefully will be in the screen below shortly if you're able to get that in there. I'm going to take another look back in, see if we have any questions here. Jenna Moorhart says Keith is a rebel. Yes, Keith is he's like it's like a Brad Pitt in Fight Club, silver badass that is like a role model for me. So Tony Elbows, are we expecting the market to crash tomorrow? Again, in perspective of a volatility trader, there's a higher than elevated probability, I would think. So if the market does crash, I'll tell you what, you will see the Fed acting pretty quickly, would be my, as Peter Spina of Gold and Silver Seek would say, that'd be my 2 cents. All right, Jeff Clark had a great interview. I see in the comments here. Got to get Jeff back on the show. Did talk with Jeff recently. So yeah, Jeff is great and he's doing well. Then who is Chris Duane in Fight Club? Well, you guys can name your own characters. Can also start, maybe we could start a little discussion going about some roles for the Big Silver Short movie. If you'd like to have a part in there, if you have thoughts about how to film the movie, if we have any producers out there too, that's on my list of exciting things that we'll be getting to. Chris, yours and your subscribers' patience has been of heroic proportions. We'll all look back and relish the ride. Well, yeah, I think it's interesting how, I don't know, to kind of find the whole silver thing, I find requires a little soul searching and patience. And at least for me in my life, there was something about the whole Austrian economics and getting away from this Matrix. I don't want Christian Bale. I want Brad Pitt, Tom. Come on. I was thinking Brad Pitt. I can work on my abs a little bit, but I'm hoping Brad Pitt could play me. Let's get the haircut down. Nice shortcut. Yeah, I remember like the whole Austrian economics. There's something about it that to me in my own life journey, it was a part of maturing where, you go out and learning to market, learning to trade, to put your value into a way that's useful to someone in the world and trade on a free voluntary basis rather than the government model where everything is just done by force. So, Anyway, Chris, are you going to Rob's event next week? I'm very much looking forward to it, Michael. That's the great Rob Kientz of goldsilverpros.com is having a conference online. I don't know the exact details, but I'm hoping I'm invited and I would love to be there. So anyway, unintended consequences from stimulus could crush stocks, says Jim Paulson. All right. Well, I would certainly see that possible. A few more here as I take a sip. Do have the option board pulled up. We'll take a quick look at First Majestic. I was option shopping in there today. I actually bought a range of maturities, a few 2-year options, some 1-year, some 1 week stuff expiring at the end of this week, some Februarys, some Marches. I'll just pass this along. I don't even see how to phrase this properly. There's some things that I think or feel that I don't necessarily say on the show, not because I'm not trying to be transparent, but I also realize we're talking about investments and rightly or not feel a responsibility not to phrase things in a way that, you know, gets people in trouble or getting them overexcited, because I understand a lot of people out there interpret things in different ways. For example, I talk a lot about $50 silver, but I mean, when I think about how this stuff is all lined up, I mean, with all the debt, all the leverage, all the paper silver out there, the whole COMEX Ponzi scheme. Yeah, I think probably now, if you told me it takes 10 years or something along like that for that to really fully unravel, I could see that happening. But my guess is that by the time it's all said and done, we see some numbers that are genuinely mind-boggling. So anyway, and along those lines, I'm not saying just because whatever everybody else is thinking to go out and write that down as gospel, but I think I mentioned this on the live call the other night, where just when I see people who have, always been on the conservative side and then see a lot of them changing their view, their opinion, their calls, or their perspective all at the same time, I don't know. I wonder if we will see. This is not by any means financial advice. I've never, if I ever have a strong opinion on the price, certainly I'll share it. But I don't know, to the degree that at least I was willing to buy some options of a shorter term and accepting the risk. And, but I guess just what makes it worthwhile is that, even in that call we did, yeah, I try and keep things conservative, but gee, what if, Trump does say, again, he doesn't have to release any conspiracy stuff, but if you just told Americans what happened with MK Ultra, or explain the artwork that you find in some of these elite families where it shows things that I think are mind-boggling. And, so I mean, if something like that happened, or if the COMEX, whatever day, if let's say it is, Friday and we wake up Monday and the thing has failed to deliver, if you ever get like the $75 or $100 silver price and First Majestic is like $200 or $300, I'm not saying that's how it's going to play out, but when I really look at the fundamentals of what is conceivable given the underlying dynamics, where you see Tesla just went up 19x in the last year and a half just on money printing alone. So again, this is not saying that that is going to happen, but is it possible? And in that scenario, what I'm getting at is that the upside, if you ever do hit that, I mean, the return is just so stunning that essentially what I do is back out as eloquently as possible how to leave that coverage on consistently, so I'm not necessarily timing it. And then if I am ultimately right at some point, things go pretty well. So Anyway, that is today's options thoughts of the day. I'm going to look back in here for some more questions. Maybe crypto taking a chunk from PM. I know that's certainly possible, and a lot of people talk about that. I don't know. I just think there's so much money being printed that I think the manipulation has hurt the investor interest and demand over the past decade. To me, that's feels like that would be a bigger factor. That's not to say that's right. Just that's my gut. So one last thing here, two last things here before we wrap up tonight. Three last things. All right, maybe. Well, actually, we could go four, but we're gonna get close to wrapping up here. In fact, we'll come back to that one another night. One note I did want to pass along: you saw Gwen Preston and Peter Kraut back about a month ago on the show, and they were doing a silver-focused newsletter, just silver stocks, and it is now finally available. There you can see at the Resource Maven. I'm going to fire this in the chat window. Yara, maybe perhaps you could put that one in the comment field below as well. But yes, that newsletter is now available on the Silver Stock Investor. And certainly I think Gwen and Peter know their silver stocks. So nice to have something just for us silver investors who are like, yeah, gold, you have your thing. But anyway, you can find that at resourcemaven.ca/subscribe. So thank you, Gwen and Peter. I'm looking forward to getting my account squared up there and start logging on. Although here will be our last one for the evening tonight. Read this before. I cannot guarantee the accuracy of it, so you can take that as you will. But darn interesting, I'll tell you that. Black Eagle Trust Fund, 9/11 attacks, Black Eagle Trust Fund. Brilliant summary. And I believe there were a lot of, were there a lot of links at the bottom there? Or am I confusing that with something else? Where to find footnotes. To explore the excellent footnotes for the above article, see the full essay available here. This is a condensed version of the story. So again, as with anything, I mean, especially 9/11, I'll leave you to decide the truth. I'm not going to try and convince you or anybody of what to believe about 9/11, but we will take a look through here because it is quite intriguing. Heidner presents volumes of solid evidence to support his thesis that one of the main reasons for the attacks was to cover up the laundering of over $200 billion in bonds from a secretive fund that were to come due the day after. Below are some key excerpts. So let us go here. September 11th attacks were likely meant as a cover-up for financial crimes being investigated by the Office of Naval Intelligence. Interestingly, just happened to be in the section of the Pentagon that was blown up that day. Now, keep in mind that if you had, this was like the size of the Pentagon, the wings would have been out here. You've never seen a plane part. And coincidentally, the auditor's work was destroyed. Was intended to cover up the clearing of $240 billion in securities covertly created in September of 91 to fund a covert economic war against the Soviet Union, during which unknown Western investors bought up much of the Soviet industry with a focus on oil and gas. And so basically, these were 10-year bonds that came due, at least according to this article, on September 11th, 2001. Again, my studies of history without having gone through his further documentation is something I've thought about for years and certainly fits within the realm of possibilities. The trust they created takes its name from the Nazi Black Eagle Trust stamped on gold bars of the Third Reich. That certainly I've seen and read about. A lot of gold moved hands during World War II. Certainly doesn't get written about a lot. And keep in mind that who would have been the president while this catastrophe was going down in 1991 was George Bush. And if anyone is doubting the Bush family's involvement with the Nazis, then I would suggest getting this, which I am reading now. I'm on the Bush crime family. Plenty of documentation and evidence in that. Also have this one, which I'll dig into soon. Also another one, yes, which will give you ample documentation, resources, verification of the Bush family and such groups like those. So anyway, interesting article. I just thought I would pass along. It's a nice light reading on the night before the inauguration, which will be going down tomorrow, and of which right at the moment, silver up a little bit, gold up slightly. And we'll see what happens tomorrow. But again, more importantly than anything, wherever you are, by all means, speak up about what you feel is right. Do it peacefully. There's enough stuff going on in the world that is a challenge as it is already. And just hope everyone is staying safe out there. Be well.
You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live.
Here we are, everybody who's logging in to watch the replay. We're here to talk Inauguration Day, silver options, and other good stuff. We have a few more coming in, but perhaps to give an idea of what's possible, maybe this isn't really the best way to start this. I really don't want to get anyone in trouble. And again, by all means, I would not consider anything that we're talking about here tonight legal financial advice. I used to trade equity options. I did have a big position on in the move in 2011. It went great on the way up. It did not go so the way down. By all means, speculative, highly risky. Done in the right context for the right person who understands the risks. I mean, it can be fun in its own right, but please, this is very different from when we talk about, hey, if you have silver, you throw it somewhere, you leave it, and whether your kids are waiting, this is more if you like taking educated guesses or things like that. Let us kick it over to option land. By the way, good news, everybody. Silver back up on the day. It was down 44 cents. I was getting all your Twitter messages. Oh, it's going to get pounded. And well, there, look, it's silver roaring back strongly. Up 8 cents here now. Oh, I thought this might make people smile. Good one from Ronan Manley. The inflation adjusted prices of gold and silver. We can read on your own time which one he uses, but the number will make you smile. Where is it? Somehow he comes up with $1,000 silver and some big number for gold. Well, what is this? Yes, you read that. Nearly 21,000 for spectacular January 1980 high. When adjusted for inflation, would be 20.9 thousand for gold, silver. Okay, here we go. David Smith, I see in there. An honor to have David Smith. David, before we get into some option fun, would you like to comment on this? I know your buddy David Morgan said 600 a while ago, but here, using the same shadow stats version of inflation, the real all-time high in the silver price is adjusted to an incredible $966 per ounce. Although if that's just matching in 1980, then I would still think, at least when you're thinking of what is the theoretical value, that's with 1980s debt load and monetary burdens. So that would still You know, David Smith. Is David Smith in the house? Does David Smith
Yes.
care to
Can you hear
comment?
me?
There we go. David, how are you, buddy?
Oh, pretty good. How about yourself, Chris?
Fantastic. I mean, how could you not smile when silver was down 50 cents? It's down 50 cents. Now it's higher. We're debating who's filming Rambo in the White House. I mean, it happened, whether whoever did it, and then we see. And would you agree with that? Where, I mean, this is just inflation adjusting to that high. That wouldn't even say like, all right, but theoretically, then you'd have to tack on the additional debt and money printing burden. Would you not say, sir?
No, I agree. And, I'll be happy to see 50 or 60 on the way up to whatever that upper number is, getting us out of the rut we're in now. But I really believe that we're going to see extremely high prices, and I think they'll surprise just about everybody. Silver likes to paint really ugly looking charts and then all of a sudden turn around, and it's a master of doing that, even beyond any manipulation theory. So it's a little discouraging right now, but when you look at many of the miners, how they've held up pretty well, all things considered, and a lot of them are making money, good money. So I think if we've gone through a lot of the pain, get ready for some of the gain, as Rick Rule would say.
Yeah, and I mean it's interesting because we're humans, so we're biased by the past. So we like, even me, and we're like, most of the time we're talking about $50. It wasn't $50. Yet we just saw Bitcoin, let alone a couple of years back. Bitcoin just went up 13x in the last year. I saw Matt's head, like he's like, no, that couldn't really be true. I see you there, Matt Carr. 13x in the last year. Matt Carr, how much do you think Tesla is up since the Fed started the swap lines a year and a half ago in September? Take a guess. Although I'd probably have to recalculate it because it might have added a few more X's since then.
I'm not sure where they're at from the swap lines. I know since their convertible bond issuance, they're up like 12x because they also did the split.
Come on, buddy. It's like 18 or 19 now.
Yeah, so it's been quite a run in both of those assets.
Yeah, and it's also interesting when you look at the psychology of people, especially in today's, or I don't know, maybe the markets have always been short-term, ADHD focused. Yet it's like normal. Kind of like the housing market was like normal. Like, oh, we'll just go up 15% next year because it should, Doesn't matter if interest rates are 7%, and that therefore makes the new greatest career. You do realize that I'm not speaking to anyone in particular, but just know that if home prices go up by 15% per year and mortgage rates are only 10%, then you have the new career of just buying the biggest home you can, because the more expensive it is, the more you make. Your $1 million home goes up to 1.15. You pay 100 in interest. So that's the stuff that, I don't know, maybe that's normal. I mean, it sounds like the things people like giggle at today is the same thing they were giggling at in 1929, where manias and money printing bubbles do what they do. But I mean, again, it's normal to people that these assets like go up 10x and they're like, how come it didn't go up more today? Yet when we talk about silver, it's like, get out the alien. Oh, there's the alien hunter talking about $50 silver, let alone 3x to 75. Okay, let's call the asylum, lock them up now. Where, I mean, look at some of these texts, like the fucking stock market is back to all-time highs. And the only thing that's happened since last March, I mean, Powell still tells me that the thing is a tinderbox and his business is closed, I guess. So so I say that to point out, see, even the stock market up 3x since 2000. It's silver's half of its 1980 high. So I don't know. I just wonder. I mean, keep in mind, hopefully this comes across. I very rarely say like what I think the actual prices of silver targets will be. Because, I understand I'm doing a show and it's important to me. Like, I don't want people like going blowing themselves up or, you know, but I mean, if it was $50 in 1980, and then you've had all that leverage to, in the big silver short, I asked a bunch of people what they thought was the number of claims. By the way, that's a future roundtable. David Smith, you want in on how many claims are there for each ounce of silver?
Well, it's pretty phenomenal, you know, and I was just thinking, when silver does get up into the $50 area, I think the disbelief will be as strong on the part of investors as it was when palladium went above $1,100 after dropping down to 900 and going back again. And the next thing you know, it kept advancing to almost 3,000, and it's been around 2,500 for a couple of years. So if the build out in the EV vehicles takes place like the Silver Institute said last week, where they're talking 90 million ounces demand by 2025, which is most of that is new demand that isn't there right today. You could see it elevated for quite some time. It may not just be a spike that goes up to a couple hundred and then comes back down to 40 again, you know. So I'm sure there'll be a lot of chills and spills on the ways and a heck of a lot of surprises.
I mean, if you told me like one day it's in the multiple, I know there's a psychic that was on John Claw's show that said it goes to 600 to 800 in March, then comes back down to 400 and then goes no offer. I'm like, yeah, that'd be fun. But I mean, in fact, if you told me that happened, that's because I guess what, you know, and that's the stuff, it's like, you know, especially like I really like to be careful of how I phrase things. But I mean, it's like on the other hand, it seems pretty damn clear at this point that these guys are going to hyperinflate this thing. So it seems like they're not like any period in which it was like, well, maybe they'll slow down a little here. We won't have outright hyperinflation. To me, we've blown past that point. I have a hard time seeing anything out of the political system that indicates that that's not where they're going. I mean, it's hard for me to see that. So anyway, and hello.
Well, it's like, you know, what Jim Ricketts talks about, that snowflake, that last one on the edge of a precipice of snow that creates an avalanche. And, you know, where that is hard to say. But the point is, I think it is in our future. And once it gets going, why, it's going to be pretty amazing. And that's why it's such an asymmetric trade. You don't have to mortgage the house. You're better off with a smaller position that you can sleep at night no matter what it's doing.
Yeah, but David, with 0% interest rates, if there ever was a time to mortgage the house, this could be it. Although, no, don't anybody do that. That's possibly true, but I'm just trying to be funny. It's kind of funny.
I'm looking at a home mortgage right now, 2.3% for 30-year fixed, which is just hard to imagine, really.
Yeah. So anyway, with all that said, now some of the reasons behind this and some of the things that cannot be shared on YouTube. Well, by the way, if we have any other YouTube creators on there who got censored, we got it solved. Rob, I can't wait to tell you more about that one as I check raise you with a crafty hand that you're not expecting in the poker room. But can everybody see the option calculator sheet here? Somebody say yes, please, if you can.
Yes.
All right.
Yes.
Okay.
Yep.
Cool. So I know a lot of people have asked for it. And if you may notice, it looks different than it did on the show the other day. I was playing around with it while I was on my couch. So I think it's close to being ready. And again, I'll go through, I'm going to try and keep my part as brief as possible, and then we can open up and take some scenarios, because obviously there's a million ways to do this, but I'll see if I can explain what we got here. Rob, can maybe you be my co-pilot? So I'll just often say, does that make sense? And tell me if it does. Hopefully I will explain these somewhat eloquently. Sound good?
Sounds good.
Or as T. Harv Eker said, yes or yes. Anyway, so what we have here is my little calculator. This isn't anything rocket science, and yes, soon I will send it out if you're not on the option list. email Arcadia at Miles Franklin to get on the option list. If you got an email tonight, then you're on the option list. But this is a little calculator. Green fields are inputs. Yellow, do not touch. Teal, also do not touch. Teal is the fun part. So if you don't feel like listening to me right now and you just want to look at like some of the exciting things in teal, that's fine. And I understand. But so essentially, you know, my school of thought, I think at some point we're headed towards the end of It's a Wonderful Life. As the Tyler mentioned before, hey, maybe it happens over a day, maybe it happens over a year. So again, you know, the point isn't, I'm not telling that I know the answer. I'm just, here's how you can put whatever parameters you want in there. And what's fun is that we can even put a scenario where, I don't know, let's just say there's ruckus and silver. I mean, you could, let's say there's, you know, nothing happens wild with Trump and just, you know, the thing goes in, but I mean,
but they also stopped me from uploading for 7 days, and I have, you know, here's Sunday. I have Sunday, Monday, Tuesday, Wednesday, at least Wednesday, that I can't upload anything. So I have to go to another player. Remember, I did the test I did with Daily Motion. If they put commercials in it,
someone mute. They have something on in the background there.
Greg Hunter.
I'm using a Daily Motion player. So.
Thank you. All right. So what I would want to see if I were watching Daily Motion is that, Rob, I mean, let's take a look at the silver chart. Could have guessed we'd do that tonight. Oh, wait, actually, look at that. This is perfect. Okay, so here's you see, Rob, you see my 30-day chart and a whole bunch of these here, right, on Kitco?
I do.
So here's January 5th to January 11th. So less than one calendar week, silver went from $27.50 to $25. So it dropped $2.50, right?
Mm-hmm.
So, you know, here, let's see, we saw silver go from 25 to 27.50, went up $2.50 over, I don't know, the 22nd to the 5th. So 2 weeks, came down in 1 week. Here we see 20. Oh, that was back in July. But I don't know. I mean, you could even have like silver move $2 next week when just on random volatility. So one of the things that I like to do, regardless of whether I'm looking for something, and I don't often do weeklies like I've been mentioning in this call so far, but this is an occurrence where, I don't know, this just seems to me like an educated, like a good spot. And I look at it, you know, if I see spots, if I pick 10 spots I like, I might only need to win on 1 or 2 of them. Say you take $10,000, Rob. You can do this with junior minors or option positions, but let's say you take $10,000. Oh, Steve Mueller is coming back on. Steve Mueller, I hope you're there. You're going to want to hear this, because if you take $10,000 and you say, I'm going to make 10 individual $1,000 bets, and if you get 11, if you lose 9 of them and they're worthless, but you get 11 to 1 and you win 11,000 on one of them, you still came out ahead, right?
Right.
So essentially, yes, I mean, I'm looking at this week, but it's not like I'm never going to trade again. So the more that you look in terms of adjusting your bankroll to your sample size, I mean, so in fact, one thing I might suggest for a lot of people, try option trading. Do it with 1 lots or small amounts that, you know, anything you do, you're going to learn, which I think is good. So, I mean, there's a variety of ways to win. You can, again, we're going to go through how you can use whatever inputs you want. So you can just look at how the prices look. But anyway, I laid out why I think this is, spent an hour and a half laying out why I think this is an interesting week. So let's say that, you know, fine, we'll leave aside like Trump doing anything wild. And we'll just say that, Rob, we'll say silver goes up $2 and First Majestic Silver goes up $3 on a $2 silver move. Does that seem reasonable? I'm not saying that's going to happen, but give it, it's not like too wild, right?
Yeah, sure. I'm with you.
So here's First Majestic. Wow, First Majestic was $14 like a week ago. Amazing. See, that's the best part. If you live in a world where everyone is addicted to the short term, but you have any degree of patience, you can really monetize that, which if I do this properly, we will be experts in by the end of the evening. So here, 1 month. So there is $14.23 on January 6th. Today's the 17th, almost the 18th. So went down $3 in 2 weeks. So again, not to say that it's going, but is at least possible when we're extrapolating reasonable probabilities. Rob, makes sense so far?
Mm-hmm. I'm with you.
So if it went down on no particular news, it just got hammered. I mean, here again. So put another way, let's say you had put a weekly or 2 weekly trade on here. If you happen to buy here, you probably would have done all right on that way up. You don't have to have the COMEX implode, although because it's fun and glorious to think about, we will also price in what it looks like when the COMEX does implode. And that's where, for anyone who's listening, they're like, oh, I'm a little tired, or an hour and a half in, but I mean, it gets quite intriguing. So, Rob, we got 25, we'll call that $25 silver. So let's say we said silver's gonna go up $2, right? And First Majestic's gonna go up $3. So that would give us $7 silver and $14.81 First Majestic, right?
Mm-hmm.
So I'll put that in here in my spreadsheet. And what do we say? 14.81. Okay, just to explain what this means, I'm for now just going to say this is our outcome. But what this thing has been designed to do is, let's say I wanted to, this is basic, your basic premise underlying your Black-Scholes and fundamental option pricing theory. Rob, remind me to tell you later the time the guy derived Black-Scholes from the beginning. This guy Susquehanna came in the room. He's like, today we're going to derive Black-Scholes. I was like, it was like about 30 to 40 seconds in. He's like already using Greek notations I didn't even know existed, let alone what they mean. And it was one of the most, it's like, okay, but we can simplify that. Fortunately, you don't need to know any of that stuff. Let's just say, and actually this is what I like to do at times. So you can make it for any given period. Let's say a year from now. Again, these are my assumptions. Everyone can, I'm sure, and you'll have the sheet so you can plug in your own. But I think probably there's some chance that silver is sitting right between 25 and $30. Maybe we'll call that a 30% chance that they just drag it out, just still sits there and nothing happens. I'd say maybe there's, let's say, a 30% chance the COMEX loses control, and we'll say, in that situation, we'll say silver goes to $60. Rob, what do you think First Majestic's trading with $60 silver?
Oh man.
David Smith,
$30.
If you want to chime in on that, hop on in too. Huh?
I'll listen a little bit more here. Go right ahead.
David, I don't want to put words in Mr. Morgan's mouth. I believe I asked him once at $50 silver what he thought First Majestic would be. I think he said 100. Do you think that sounds like what he would say?
I
or does
think
that
it's
sound
very
reasonable?
possible.
Let's not speak for David when he's not here. I don't want to do that. But
I think
Rob?
it's very possible that it would be. And if you look at first,
on a cash flow basis, does that make more sense?
well, it's beyond that, because it has to do with the narrative and the perception of a changed company. And if you look at what Keith has done, and I own First Majestic, but they announced with that new HIG operational machine where they can grind the silver and get much bigger returns, than they had been. It's like picking up $100 bills off the floor. And if the tax issue goes in their favor, if it doesn't, they're still going to be okay. It's just it'll be more muted. But if it goes in their favor, it could be another silver Wheaton where you would have a doubling within perhaps a few weeks of the share price. So it's really a powerful company, you know.
David Smith. So what does, okay, two-part question. Do you think in the next 5 years, we're going to see $60 silver?
I do. I think we could see it in the next 18 months.
Okay. And what does your gut tell you that the day that we see $60 silver, what is the price of First Majestic that day? We won't publish this anywhere. You're just giving a wild guess. No.
Well, you know, during the 2016 run up, and I can stand to be corrected by anyone here, I think it hit around $24 or something, $24, $25. And that was, you know, with silver prices considerably lower than they are now, physical silver. So it's the most heavily traded silver company on the NYSE, and it has the greatest, one of the greatest betas to the price of silver. So it's not just the price of silver, it's the implication of what people think that's going to do to the company and where silver is going to go. So it has several metrics that go beyond the question you just asked. Does that make sense? In other words, it's a
gut reaction. What do you think is going to be?
I don't think $75 would be out of the question,
right.
even if it's a spike.
Yeah, I agree with that. And you have to factor in the shorts would absolutely get crushed in that case.
Right. It has a big short position, so they would be getting trampled. And, you know, it's a really a quality stock. There's one or two others that have, believe it or not, I think they have a similar price movement to First Majestic in terms of percentage moves, but they're not as widely followed. But everybody knows about First Majestic. So it's the go-to, and the spread is usually, you know, 1 basis point, bid ask.
Okay, and you see down here, and that's actually a couple people wrote in wanting to dig into the First Majestic short position, which we're setting up a show where we'll cover that more. But here you can see 23.9% of float shorted. It actually has been getting higher. So Rob, we can dig into that more another time. But I guess what I would look at it, obviously a lot of the people that bought the miners weren't having too much fun that last year. Well, they're watching silver going from 18 to 28. Check this out, Rob. So even like when COVID was starting, let's say February, we see First Majestic on January 31st, $10, right? And check this out. It's so special. Let's see, 1 year silver chart. So when silver is $18 before COVID, First Majestic's $10. Actually, I'm going to skew my numbers a little bit to cheat, but you'll see. Let's go back. You see it was a little higher to start the year. So here on December 27th, the peak of that last rally. Oh, wait, no, that's the wrong year. Here, this one we see there. First Majestic is $11.97 on January 29th well, not last year anymore, 19, right, Rob?
2019.
So, and we look, and silver at that point is still, there's January, it's still $18. So silver is $18. It went up still $7 higher since then. And First Majestic, you know, if I pick the peak, it's actually lower than when silver was $18. David Smith, do you see that?
I do, and I just went over to the chart.
And actually, David and Rob, if you could comment on that for a moment. I'm going to use the restroom and be right back. So you.
I have a question about the price to earnings ratio.
Just under $27 in 2011 when silver hit high about $49. So First Majestic under $27. I'd argue but now they're worth quite a bit more than that in terms of having 3 primary silver mines rather than a couple of additional silver equivalent mines, I think they're a much leaner operation, a much more profitable one because they're making record profits right now. So
Yeah, they are. It's a lot different company it was back then. And a lot of their share price has to do with the short float,
yes,
people betting against them, but that would go away. And I think that would have sort of a boomerang effect on their price.
exactly.
I think long run too, like you have a price to earnings ratio of 40 something right now. If this Capitol riots was so damaging to the Republicans, and we're going to see multiple Democrats in office, right, and a lot of QE, you're going to see that PE ratio crunch because the government's going to have to stop the inflation of commodities in certain places like gas and oil, where the miner uses a lot of that. A lot of the cost in producing the metal is oil, so they'll shrink it there, but they'll let the silver run. Right.
Okay.
And I think maybe long-term, 5 years, 4 years, 3 years, we're going to see the PE ratio of First Majestic shrink a little bit.
And I'll add one thing into what you just said. I think when they go to the cryptocurrencies, they're going to let both gold and silver run, and because they'll have no reason to hold them down anymore. They won't need to manage it. So maybe that same 2 to 3 to 4 year window. I laud the management of the precious metals and the futures market is going to go away.
And even the counter of that, if they don't let it run and Bitcoin gets crushed, how many people are going to say, for years I've been parroting this nonsense about, gold is garbage, Bitcoin is the future gold. And then when they lose 50, 60% of their money, then they go, oh shit, I got an epiphany. Let me go here. Right. You're going to see a flow of billions of dollars into this little door that we're already in. Right.
Right. All right.
That's ultimately where the money has to go. It's going to go to the precious metals eventually.
I agree with you, Rob, and I am back here. And
that was a quick bathroom break, Chris.
That's the commitment. I couldn't wait that much longer to get into some of these option probabilities. So anyway, this table here, you see, so let's say I think there's 30% chance silver goes to 27. And I think when silver goes to 27, I can put what I think. Again, this can be any stock. We're looking at First Majestic. You can put any assumptions in here you want. This can be over any time length you want. This could be over the next week, the next day, the next month, whatever you want to do. Obviously, this doesn't even factor in the Vega, which would be the volatility impact. This is just, keep in mind, you can sell things prior to expiration. That would be more like a 7-year webinar to cover all of that rather than one-nighter. But basically, this could give you a weighted average. So here, the weighted average price of my stock, if you do this on a percentage basis, give you 39. And if anyone didn't quite follow any of that, don't worry. That's not important right now. But one thing, if you are using this sheet at some point in the future, you want to make sure that your probabilities add up to 100%, which you can see if this number here is 100%. If it is not, it's going to say 90%. Maybe I'll get some. Raheem, if you could, can you figure out how to make that thing change colors so that it does something like shoots off fireworks when it does not equal 100? So anyway, we'll leave that for now. So let us say that we'll just use one probability, ignore this stuff here. And let's say that back to what we're thinking over next week. Silver rally's $2. First Majestic, maybe I should put a decimal increase there. If that's really important. Well, no, we'll take the decimal increase out. And in the effort to make the world a better place, stop worrying about things that really aren't that important. We'll just say $15 instead of $14.81. So then what you can do is go to Market Chameleon. Will McBride, are you in the house? I saw McBride log in. There's an appearance from Will, the creator of Market Chameleon. Handsome guy you've seen on the show a couple of times. Will, well, if you're there, you can hop in. If not, or Adam. But anyway, this is his site that fortunately is great for options. So we'll pull up the option chain there. And because, there's a lot of flaws with Wall Street, certainly, but I guess it's kind of cool that basically it is a full service casino. So, they really will you can find somebody to gamble or make a market on just about anything. Rob, we're going to also invoke more random prop betting, and I'm going to encourage that in the Arcadia Club, which is going to be launched soon, and I'm quite excited about. But anyway, you see here, these are the expirations. So January of 2021. Now they have weeklies. Back when I started out, they didn't have those weeklies. Back when I was a boy. But now we have them, which is pretty cool. Which means that it used to be, you would only have one expiration per month. Just allows you to be more specific in your bet. So I can actually look at this one, which expires January 22nd. So that's basically end of next week trading after the close on Friday. So if you look back at our model here, so we say, maybe First Majestic, I see it go, the chance it goes to 15. So if that's the case, then I can look here and say, hot darn, 14 lines offered at a nickel. Oh my God. And actually, these are Friday's closing prices. So you have a weekend of time decay. And I am personally hoping silver is much lower tomorrow. I mean, I'll bet when these babies open, the 14 line is a nickel. Geez, the 13 lines, 11 cents. I mean, I think if you just Rob, if you just played this situation 10 times after, if you just wait till the thing gets smashed, I mean, it's different than a couple of years ago where it would get smashed and then it would sit there for the next, 4 months or something. Now, I don't know, if you just wait till it gets smashed $1 or $2 and then just put on something in some form of that. So you can even buy the 13 line. So basically you buy the 13 line, your break even is that if First Majestic ended at $13.11, that'd be your break even. So that'd be a $1.28 rally in a week when there's troops being called in.
I actually did Google that if an insurrection is actually done and the market is closed, your option will continue until the market reopens for a day.
Okay.
So if you miss the expiration date, it'll still be owned by you.
All right.
Exercisable.
All right. And so anyway, you see here, so that's how you can look at these, where you can just calculate even without a spreadsheet. You're paying, this is the offer here. Here's your strike. So you have the offer to buy an option for 11 cents that gives you the opportunity, the option to buy the stock for $13. So if I buy this option for 11 cents, I have the right to pay $13 for the stock. Now, when the stock's $11.83 on the open market, I'm not going to want to pay 13 because I can pay 11. Oh, Tony Elbows is entering the room. And all right, so pay 11 cents. You're not gonna, it's out of it's not in the money yet. It's out of the money, that 13 strike. But if First Majestic goes to, what do we have it on our sheet here? Why is my Zoom kind of freezing? One moment, folks. Let's try this again. All right. So now if First Majestic goes to $15, and you have the option to pay 13 for the stock, of course you're going to do that. Even if you have no opinion, you don't want to hold the position anymore, you can buy it for 13 because you have the option to do so. That you bought this 11-cent insurance premium that says stock goes over 13. Then if it's $15, you can buy it for, you can exercise your option, which means you're going to buy it for $13. And on the open market, you simultaneously sell it at 15, which means you made a $2 profit.
Hey, Chris, just to recap, do you add in the 11 cents to the strike price? So you're in for 13.11. Is that right?
No, I would not say it like that. Because you're only going to pay the $13 if you're getting back more.
Right. I'm just trying to figure out what you're all in for.
You're paying 11 cents. If the thing goes, if the stock closes at $12, meaning your 13 strike is out of the money, you're going to do nothing. If the stock goes to $14, which means your 13 strike is $1 in the money, yeah, you'll pay 13, but you can say all right, and I'll collect my 14.
Right.
So, it's good when that happens. Don't worry. That's not list of things to worry about in life. That's not one of them.
Now, I have little experience with short-term options. What if that day,
Tyler, can you hang on? I'll let you know when we're going to take some more questions, but if you could just hang on for a bit, please. So that's going to be the same, the 14 strike. Your break even will be 14.05. But let's show the good news here. So, all right, we are looking, let's go back there. All right, so we'll look at the 13 strike first for 11 cents. Keep in mind when it opens tomorrow, unless First Majestic's up a little bit, it's going to be even cheaper than that. I'm going to buy some now. So 13 strike. Now, fortunately, I think I got my formula right. Let's see. Ooh, how glorious. Yes. So as I change my input up here, that weighted average price 15 carries over there. So those yellow ones you don't touch. So Rob, if I own the 13 strike and the thing is at $15, that means what is referred to as the intrinsic value or parity would be how much, sir? Rob? $2, as you see down here. Intrinsic value, that is not the option payoff. So again, for everyone who's saying they want the spreadsheet, this is why I've not sent it out yet. I want to make sure all this stuff. By the way, there's a nice big disclaimer here that I'm going to send it out. I'm going to put a lot of effort to make sure as certain as one can be and have a couple of people proof it. Keep in mind, spreadsheet links get busted. Always check these by hand. Don't be like mortgaging your house on something where the difference in a calculation is going to do something that we don't want to deal with. So, so Rob, you see $2, the intrinsic value, right? So if we paid 11 cents for it, there's the option price. And we'll say we invested $1,000. Actually, you know what? Let's say I'll bet, the offer is probably down to 10 cents, which would make the math nice and easier. So keep in mind when you buy an option, covers 100 shares. So what I do, this little trick from trading on the option floor, I just move the decimal point over. So 100 times a dime comes to $10. So you just move that over 10, then times 100. You get your 1,000 invested. So basically, if you say I have $1,000, I want to risk on a trade like this, and the option price is 10 cents, you get 100 contracts. Rob, does that make sense?
It makes sense so far.
All right. So then here is the fun part, because you are talking, we're laying out a scenario here where you paid 10 cents for something that became worth $2, correct?
Correct.
So that means your 10 cents was a how many bagger, Rob?
That would be a 20 bagger.
Yes, as is located in, maybe you should, I feel the bagger weighted average multiple, let's call it the bagger field. Very scientific. Rob, I feel like this is so glorious we should make it a different color. What do you think?
All right.
What color do you want, Rob?
I do orange.
Huh?
I would do orange.
Orange?
Mm-hmm.
All right. Orange for Rob's profitability. We'll even put a nice border around it. I think that would look snazzy. Yeah, look at, oh, no, that's the thin border. I like bolding the border. Yeah, just get like a little wild, really. A little crazy here. Come on. Yeah, look at that. Ooh, oh, we got to get there around there. You thought that this is what they'd be doing on a Sunday night tonight. You never know where life takes you. But the glorious news, I think it's that special that deserves a boundary because that's a 20 bagger. So essentially, let's say, in other words, if you staggered your bet size appropriately, if you picked this spot 20 times and you were right 1 out of 20 times, you break even. I would say with what's going on and that silver, you know, doesn't move logically, but it, you know, it's gone up from 29 down to 22. It's gone back and forth like a ping pong ball. So I don't know. Again, I don't know what is appropriate for anybody on this call. I'm not you. To me, as someone who does stuff like this, it seems like a worthwhile thing to do because again, here's the best part. So imagine like 19 times you lose $1,000, but on the 20th time you hit this scenario. Now, if you hit it 2 out of 20, then you would have 40,000 versus only putting up 20,000 in cash. So you would have doubled your money. That's why, to me, picking educated spots, and it could be someone has, you know, maybe you just buy a 2-year option and we'll look at one of those as well. But here's the best part is that let's just say that next week was the week that the thing finally moved. We won't go nuts. Let's just say it went up to COMEX ran into trouble. Let's just say it happened next week. We had $35 silver. So let's say that brought First Majestic up to 20. Thanks to leverage derivative math, you see that it's not a linear ascent here because now, Rob, we're talking about a 7-bagger. And especially like, for example, here's the glory of it all. Someday I'll tell you what I was doing in 2016 and why I completely missed this one. But this is what I'm still like wanting to catch here when First Majestic went from 3 to 18. And that was when silver went from 14 to 20. So again, the reason I showed how First Majestic is still down, is still lower than at some points when silver was $18. It seems kind of like a coiled spring on top of a coiled spring. So if silver suppressed, I would assert First Majestic is suppressed even relative to silver. Now, the downside to that is that when you have things like last year, you can have silver move a lot. And if you have options on mining shares and the mining shares don't move, you didn't win. Now, if you had had those options on SLV during the move, then it would have gone great. But counterbalancing that, at least what I'm hoping for is that like when silver moves like some break point, and I would think there's a lot of pent up energy in some of those mining shares. So, you know, again, you go back to where did it go? You know, let's say for someone who thinks we'll see $50 silver in the next 6 months, and let's say we had $60 First Majestic, we go back here. Let's say we're looking at the Julys. All right. So obviously these are going to be a lot more expensive. You're going further out, but we'll look at the 25 line, which is 28 cents, let's say. So option strike 25, whoops. Strike 25 strike is 28 cents. And First Majestic went to $60. So there, basically, the more specific you are with your timing and you get it right, the higher the multiple. If you can have a longer policy, which is great, if your multiple goes down because the price of the option goes up. Yet still here, basically, if you got a half-year policy, that 25 line, and you see a $60 First Majestic, then your $1,000 became, Rob, how much? Rob, it became
125,000.
Yeah. So you got a 125 bagger. So basically, maybe I'm going to get my old clerk from the New York Stock Exchange on the show one day, and he can tell stories of what it was like in 2011, watching my mood swing between, I mean, this was like, it was kind of in this territory back in 2011. So I don't remember too specifically, but I'm guessing on May 1st of 2011, when silver came from $49, I think down to 42 overnight. I probably wasn't a lot of fun to be around that morning, but that's, you get used to seeing numbers go big and small quickly. But let's just say for a second that why we had this whole original part of the call. Let us say that let's say that Q is correct. Trump is essentially going to do something that is probably would be wilder than the collapse of the Roman Empire, but it's going to be packed into one afternoon. So let's say that, I mean, and again, I can't tell, I wish in fact, what I've studied last year is to be as prepared as possible. So if there ever was a situation where it's like, all right, I know when it's finally going to happen. This is what I've been preparing the last decade of my life to do. And I can't say that's Wednesday, but certainly Wednesday is the type of day you would think. So let's just say that, the $50, let's say silver was $50 this week, just so you can see how the math looks. And then perhaps even more importantly, because, even if it doesn't happen this week, you start seeing that same process of looking, if I do this one out of X number of times, how does the math back out? You can back this out. You can put this on for 20. If silver hits $50 in the next 20 years, you're still getting wild multiples. But old Werner Wolf, let's go to the videotape. So there's the 22nd. Wow, I can't believe so let's look at let's say I think I bought the 15, I bought something the other day. I think it was like the 15 line for 3 cents. Got a couple of those on Friday, which made me smile. Let's say that's 2 cents. Let's say the 15 line is 2 cents when it opens tomorrow. Whoops, that would be, so we'll go down here. And I think that's pretty possible. If anyone, Matt, are you okay with that assumption that the 15 line could be down to 2 cents, especially if First Majestic's down tomorrow?
Yeah.
Offered at 3 on Friday, could be offered at 2 cents.
Yeah.
This due to the weekend decay and how, again, when I was trading, when I was a specialist on the floor at the end, I had 600 symbols I was monitoring. It's like most of them, I couldn't even tell you like what the symbol stood for. And a lot of it, you have it on autopilot algorithms. So let's say that the 15 line went down to 2 cents. So that means, in a simple way of doing even better, you don't even need this spreadsheet. But remember how I said you can move the decimal point over. So just the simple math, you can do this on your iPhone. Just move to calculate your multiplier. Oh my God. So move that. So 2 cents becomes just 0.02, make it 2. And 1,000 divided by 2 equals 500, right? Rob, can you check my math there? 1,000 divided by 2, last I heard, is equal 500. Even I think I can still get that one right.
Yep, still is.
So obviously the chances of First Majestic hitting, or I don't know, maybe I would assert that the chances of First Majestic hitting $60 this week, I think what I would say about that is that I could write a book about my thoughts about it. Yet I would say that the probability of that happening, I feel pretty confident it's higher than what the average, even the average silver bug, let alone the average Wall Street participant, is factoring in. Based on the fact that the most likely scenarios that I've been able to come up with, and at least have been discussed so far tonight, are either that Trump and Pelosi are friends, or B, that they have leverage on him, or C, that he's just going to whimper out after everything that we've just seen happen. So anyway, please, I think hopefully the context is clear. We're just looking at the math of what these will be. And as you can see here, your 1,000, if you had this scenario, your 1,000 there gets a nice 2250x multiple and would be 2.25 million by the end of next week. Come on, baby. Like, come on, Q. Come on, Trump gold standard. So now again, I think it's only appropriate to factor in that in that type of scenario, if there was an overnight reset, you know, some of these numbers, I mean, does the OCC, which is basically the, you know, like how they say FDIC guarantees your bank deposit. I mean, is there at some point where the exchange blows out, or I don't know, do you fully get paid on this? That's why, you know, with a lot of these investments, I would, one thing, if I may pass along, that I have a TD Ameritrade account. I don't know anybody there. Maybe I should print out my statements. I have a number on a screen. So if the internet goes down and like all heck breaks loose, I have a number on a screen. I have my mom's account at Sprott Global, which I guess is better because I know Rick Rule. I know my broker there. There's someone, if something happens, they have lawyers. They have, you know, I don't necessarily have, I can call Rick and say, hey, what's going on? Your lawyer's on it. So, you know, one thing that I've thought about, especially if you have stuff that you're planning to hold for the long term, again, this is obviously going to be specific to each person, but maybe even considering getting these stock certificates. Certainly a lot of these mining companies, you can call and meet these people. If you're a big shareholder in one of these companies, call up the investor relations, just say hello once, say, hey, I'm a big shareholder, like what you guys are doing. And, you know, I have no idea what's going to happen, but just, you know, so you know I exist, or ask them. I've asked the Mark from First Majestic about the share certificates. I think it's one of those things, there is a fee, so you don't want to like buy a share, get a certificate, buy another share, get a certificate. But, you know, if you have like $500,000 worth of First Majestic, call. I don't know the exact answer, but that's at least what I've been thinking. Again, you know, some of these things, you know, we don't know how it, like, what's happened by if this occurs, you know, is it the market's functioning, is electricity on, or we at war? So there's some degree to which, you know, it's fun to play with these things. And, you know, I think, I don't know, someone was asking on Twitter, is it better, like, if you have a base position in metals, to get American Eagle coins or to get bars that have less premium? I mean, you know, probably the premiums would soar. It's like, as long as you have silver, it's like we're worrying about, like, would we get a 2,000 multiple or a 2,050 multiple? I mean, it's like, Sure, have fun thinking about it, and in fact, enjoy thinking about it, and think about it and discuss these things, because really, anytime we're doing that and you're thinking about it, your mind's thinking about the different possibilities. That's how you learn. That's how you become prepared. Reading this great book by Bill Walsh, the guy who was the coach of the 49ers, and it's like he would think through the scenarios that the other coach wouldn't think of. So when it's in the fourth quarter and something happened that wasn't according to the plan, he had an edge because he had spent the time to think about it, and I mean, if this feels like homework, or your eyes are bleeding and you're bored shitless right now, then, maybe it's not, but if it's intriguing, it's something you have fun enjoying and discussing or thinking about, asking people about, I think even if you just do this, don't put more money than any dollar more, or don't put any money if it's not risk you can handle. But if you find this interesting, trade one lot. So it's like your 2 contracts would cost you $2, and just you'll learn more by doing. Now, if you mix doing with some education and thinking and reflecting and learning from people who are experienced and understand something, then it's like that right balance. But you also want to be careful you don't read like 1,000 cookbooks without ever cooking a meal, where it's somewhere in there, that integrative balance, which can be handy. So anyway, the point I'm getting at here is, if you have anything on during any period when, like, if the COMEX does break, or there's some fracture and we're still able to get paid on our trade, you win big. So, you put it in the lottery ticket category maybe. And I mean, it's, I would say for most people, start with metals or shares. Matt, something I've wanted to talk to you, maybe we'll talk more about this week. Been thinking, again, I don't know, depending, like if someone has an income or a business that feel pretty confident about going forward, you had a certain size portfolio, I'd wonder what a true good comparison between, for someone like me that feels pretty confident, when I sit there today and I think, is it possible that silver is less than $50 2 years from now? Now, certainly it's absolutely possible. So let's say that first of all. But I mean, when I think of like, geez, of all this stuff, I mean, to me, I think there's a high chance of that. So it's almost like on some level, because I guess addressing some of the earlier topics, and I know a lot of people have some asked about it. And let's look at, if you go as far out, if I'm really pretty darn confident that this thing can't last 2 years, if there's ever been a situation where, even if I should sell some of my mining shares, which there's no time limit, but I don't know, do I feel confident enough that rather than holding majority of my mining shares, I'm thinking about it anyway, if I just bought the first Majestic, I think these widened out. I think he was like offered 235. So let's call it 230 the price. We'll take this, 225-ish on the 25 line. So this is a 2-year option. It expires January 20th of 2023. So I could buy this. I guess what I like about it, yes, and I think, again, to the earlier point, there's no set answer. You can mix and match. You can do whatever you like. You don't have to do anything. I'm not telling you to do anything, just laying some different possibilities out. But, we looked at, here's the ones expiring next week. Here's the ones here. Because I walked through it in the call on Friday, and I was just thinking, that's interesting. Let's call these 225 the price on the 25 line. So let's say option price 225. David Smith, 2 years from today, what's the lowest possible price you see First Majestic and silver being? Is David Smith still there? All right. Rob Keynes, you want to take a crack at that one? What's the lowest you see silver and First Majestic being 2 years from now?
Silver $30, First Majestic $40.
All right. So $30, First Majestic, we'll call it $40. So Rob, if First Majestic's 40 and you bought we're looking at the 25 strike, we're paying 225. You have the 25 strike and it ends up 40, the intrinsic value or parity, the option's worth how much?
15.
Right, which we see down here. And if you paid 225 for it, who knows how to calculate without even looking at the spreadsheet? Rob, how would you divide the math here? 15 divided by 225, right?
Mm-hmm.
So if anybody's got a spreadsheet or a calculator, I know
about a
that I know you,
7, is
maybe,
it right?
but to actually right now, just calculate it. Even if you see the math here, but going through that step will begin wiring subconsciously. You know, you'll remember it a little better in case one day you want to look at something like that and you don't have the math. So, so you just 15 divided by 2.25, and I will check it. Even after doing this for years, I always somehow like, am I doing that right again? But 2.25 equals 6.6667. Again, all right, maybe I'll increase the decimal here. 1. And there, we'll do that. So even there, you know, and Rob, I asked you your minimum, but even with those parameters, if First Majestic got up to $40, you have a 6.67 multiple. So in that scenario, you had the 2-year insurance policy, your 1,000 became 6.667 thousand. Again, let's say we get the wild scenario, and that's perhaps the best part. It's like, because you're down there, one of the things I like is that your downside is capped, but let's say we get something crazy. Let's say we have $100 silver by then.
I think it's crazy to assume that silver will only be $30 in 2 years.
Well, okay, I get that, but let's say we have 100 for both of them on the leaps, then your 1,000. So, I mean, I would say, like, to me, for most people, like, if you didn't want to get too clever and you took $1,000 and you bought 4 contracts and you looked at it like, hey, I have an insurance policy. If I'm wrong, my $1,000, I've spent it. But if things get wild, my lottery ticket pays off. Now you can decide for anyone how wild you think things are going to get. Your break even here is going to be 27.25. There's your strike plus the premium. So if we go to, all right, maybe I should make these 2 decimals. Guess that makes sense. Stop being stubborn. So there you go. 2 decimals. Yay. And so there you see at your break even 27.25. You would be getting a 1x multiple, means you get your money back. Now keep in mind, you do have a sweet spot. So even if you have the 25 strike and you paid 225, let's say that silver goes to 26, you're not going to win, but you will lose less because it's still in the money. You paid 225, parity's $1, so it's worth $1. So I mean, you don't, you know, keep in mind you can have options where it's the derivatives. So you get the extent, you get the exponential factor. So here, you know, if it's worth $1 and you paid 225, well, you lost $1.25, but better than losing 225, right? So, anyway, I guess that's, and there's a variety of ways to do this. I mean, you could buy a thing every 3 months and roll it over, or, you could look at any stock. I mean, not all of them have options listed. The bigger ones do, but I don't know. I would say even, if you have like $100,000 portfolio and you took $1,000 and bought these and are okay with that risk, if you think in the next 2 years, let's say you had $30 First Majestic, you'd get a double. I mean, if you think we're going to get the explosion price,
Yes, with UBI for sure.
if someone thinks they're going to get the explosion price, then at least that's how the general concept works there. And with that said, Rob, can you take over again? I finished that coffee, so I'm going to use the restroom again. We can open up for conversation. Anyone has any questions or discussions, but anyway, that's what I've been thinking about and looking at, the combination of the events that are happening. And then if you do think it's inevitable that the COMEX is going to be a tinderbox, anyway,
I mean, with the letters being exchanged between the two of them and the 40 million people that are out of work, I think we're pretty solid in the area of silver going hyperbolic. When, I don't know, but over the next 2 years, I mean, that's a solid bet for sure. And if they do UBI, I mean, you're going to be given 300 million people, $1,000 checks a month. How much of that is going to go to silver? Right? Silver, we've got 80% of silver being used by industry, 20% is investment. If only a handful of the population of the United States starts to buy silver, and with all the green policies that the liberals of the whole world are talking about, Europe, Britain, us, the silver demand is going to be off the chart.
Yeah, I agree. And I think with the space economy, silver demand is going to be off the chart. I think it's quite possible that every single ounce of silver produced going forward is used for industry, and then investment demand is
gone. Yeah.
Yeah. It's going to do nothing but send it vertical.
Not to mention if we go to war.
Mm-hmm.
What would happen to silver then?
Well, silver's a strategic commodity in that case, because you can't have weapons without silver, right? Yeah. Or copper. This is what happened during World War II. A lot of the key elements like copper, zinc, and some of the others, just base metals skyrocketed. But I think in today's wartime economy with today's weapons, you would start to see silver and probably even some gold, because they'd have to substitute gold in certain applications where they didn't have enough silver.
Yeah. And I think the other red herring for if you want to go long term is Bitcoin. So when you look at Bitcoin, the energy cost to mine Bitcoin is very high. And if we do have this environment, the macro trends point towards energy costs going up. When that happens, you're going to have a clampdown on Bitcoin, because it's going to cost more and more to produce it. And a lot of producers are going to go, it's not worth, I've made my money. I have a lot of Bitcoin. Let me turn off these machines because it's getting expensive.
Mm.
All right. Well, I want to open this up. Anyone who hasn't had a chance to ask anything, has any questions, want to stick around and handle that for a little bit, but also give people a chance to express who haven't had a chance to hop in yet. And also don't need to sit here endlessly either. So is there anyone else that would like to ask anything, or perhaps has a option question?
I have a bet potential, but it's not option, but it's kind of related.
Whoever is speaking, I can't really hear you very clearly. Can you get a little closer?
Yep. Is that better?
Yes.
So there's this contract called Trump Feb. It's on this crypto exchange called FTX. and it's currently less than 2 cents, and it says that it'll expire to $1 if Trump is president on February 1st. And so I can't really figure out how to get exposure to that contract, but it seems like a pretty asymmetric bet, like you were talking about.
Yeah, I'm not sure the particular contract you're looking at, but actually the way, at least one way of thinking of it is, this is how we would look at it back on the floor. If you look in terms of future style, like I say, like I'll pay 2%. So basically if it's 2 cents, it's trading at a 2% chance. If you're right, you get 50x. If you're wrong, so you're paying 2% for that insurance policy. So certainly if you're of the school of thought that you're pretty confident that he's going to be there, then, that looks like some good odds. Again, here's the thing that I guess I'd really like to continue reinforcing. I know I've said it before, but you don't have to bet the farm on it. If you just, I'm doing this myself, reminding myself to do it more, just notice spots where you think things are out of line and just make small bets more regularly. Then you get to win. And in fact, then you're becoming the casino. So, sometimes with the Fed funds, you can back out the percentages from the futures contracts somehow. I forget how to do it right now, but so it's like there's only 10% chance the Fed is going to do this. If it's trading at 10%, but you really think there's a 20% chance, then if you're finding spots where there's edge and you stagger your bet size appropriately, then the math is coming out on your side. Like if you're flipping coins, you win 51 cents, but you only pay out 49 when you lose. Well, if you're betting $1 at a time and you only have $10, you can be right, but get blown out in the short term. But if you have $1 million, you can bet $1 each time and you can do infinite simulations. Like, we can do this from the beach too. That's what the casino does. So anyway, hopefully that helps. And
I think there's an issue with that bet though. Maybe Biden might not be the president, but that doesn't necessarily mean Trump will be the president. So they can wiggle out of that bet if there's a temporary holding period.
Well, like in all sorts of wagers, and especially ones where JP Morgan's the counterparty, keep in mind, to me, that's what we're really pricing with silver. I think we stopped pricing the fundamentals a long time ago, but as a lesson I got ample training on the trading floor where, just because the floor broker acts like a floor broker, which is kind of like a less successful version of a JP Morgan employee, and they do something that is technically illegal or clearly against the code or rules of the floor, does not necessarily mean that after it happens and you get screwed on it, that you're going to get a reimbursement check. So the Hunt brothers, I would say their thing was right, but if everyone is saying like, well, why would I manipulation this? You're playing a rigged game. If you don't like it, don't bet on it. It's a simple thing. If you feel that you're up for the task of gaming and pricing that and understanding how it's rigged and that you can come out ahead, I mean, I certainly think that can be done. That's what I'm sitting here trying to be ready to do. But I mean, that's the downside you're pricing, and not the easiest thing to price, especially in the short term. Do I know that, the price of silver won't be $2 tomorrow? Of course not. But that's why I'm not going to like lever up to bet, but I don't know. Like I won't, whatever I put on something this week is not something that's going to like jeopardize, like, do I, have enough money to pay my expenses or take care of your family or whatever. It's not that kind of bet, but I don't know if if $10 isn't a lot to you, then fine. If $100 isn't a lot, if you have $2 billion and you put $1 million on it, it's going to be relative. And the point is not the size. The point is that if you get your money management correct, you will win this. If our underlying thesis is correct, no matter how long it takes. If you manage your money properly, you will win. If your underlying thesis is correct, which I think it is, I think we're all here because we think it is. If you manage your money correctly, if you manage your money correctly, you'll make a lot of money. You'll find that the people that you've seen who have already made a lot of money will say the same thing. We bring them on the show and you hear from them regularly and you've heard them say it. But if you go all in on 99.9% favorites, but you go all in every time, you're mathematically guaranteed to go bankrupt. That makes sense?
Yeah, that's a cool point.
So
I think there's something else to mention about that particular contract that he's bringing up. It sounds like it's a binary option, which means only one of two things can happen. So you make the money, it sounds like if Trump stays, you lose it if he doesn't. The options here that Chris has been discussing are American style options. So a whole slew of different price outcomes can actually take place. And you can actually exercise the contract before it expires. The other thing I'd mention about what you brought up, the exchange FTX, I know that's an offshore exchange. So when you're dealing with offshore exchanges as an American, one of the risks you should check into with that particular exchange is what is your recourse? Oftentimes, there are real problems with that. If an exchange runs into problems, you can have issues collecting, even if you are right about the underlying bet. So that's another risk. So anytime you look at derivatives domestically, if I think most people on this call are Americans, versus offshore exchanges, you should actually be getting better pricing when you look offshore because you're taking jurisdictional risk. So I would think about, can I make that same bet somewhere domestically? And if I can make that same bet domestically and it's a different price than offshore, now I have another trade I can make. I can collapse that spread between the two. Because in America, I can sue an exchange that doesn't pay me. In a place like China, or I know a lot of these crypto exchanges are in the Caribbean, you're going to have a really hard time getting funds back, even if you made a correct bet on an options contract. So there's like different ways you can manage those risks.
yeah,
Cool,
I mean, similarly, if I have a TD Ameritrade account and TD Ameritrade gets blown out, you know, there's that risk. How do you price that? I mean, I'll leave that up to anybody to decide, but I think that is relevant to at least be aware of. I remember there was something when Lehman was collapsing where it was like, I forget exactly what happened, but there are plenty of reminders that trading is a science that if you understand the difference between what should happen, what you want to happen, what you think is fair, and what ultimately is going to happen, that'll save you a lot of money. So anyway, does anyone else who has not gotten a chance to join in tonight still have a question here?
I have one, Chris. Can you hear
Hello?
me? I have one
Yes.
from Sal. I want to know if anybody has discussed or thinks that a lot of this is going on before First Majestic has dividends. Because at some point, aren't the shorts going to have to be responsible for the dividends?
You would think. I mean, it seems, my best guess is, I don't know. It's like if banks can rig gold and silver, I'm sure it's even easier to rig First Majestic. And if there's ever been someone who would be a target, I mean, it would have to be Keith. So I don't know. I mean, I think there's also a degree to which a lot of the institutional folks are still remembering 2016 price came down. I don't like, there've been times where there's been a lot of money flowing into silver in the last year in particular, but Just look at how like when Bitcoin, once it was up like 13x, there was the guy on the Seahawks is like buying Bitcoin. They're putting him on, the cover of CNBC and like, like, oh, well, the pros are doing it. I got to get in. They got, and so I don't think we've seen anything yet in terms of money coming into silver or to First Majestic. I mean, I don't know. How do you, it's like on one hand, like how do you sit there and short First Majestic given what we've laid out? On the other hand, I know that the people on Wall Street are not looking at it like this. It was there. Like they're definitely not, even now they're not looking at it. They've been trained not to look at it. That's what business school is called, that's the training. So I would say this to me always fit the category. If you're making a bet against someone and you're saying X, he's saying you're wrong. It's great if you think you're more right than he is, but okay, I think I know why he's wrong because it's the same people who follow Ben Bernanke and say subprime is contained. So I don't think they're spotting the bubble. And I think, you guys have all heard the reasons of why I think that. So at least if I'm correct and my reasons are correct and he's wrong, the blood is on the streets, I guess you could say. And in one sense, the more people who dislike an asset, that's great news because the more people who are selling it. So for example, with First Majestic, I guess there's some funds, that can't buy First Majestic because there's an ongoing case. So that doesn't have anything to do. All right, well, there's whatever premium for the case, but if these guys are just restricted from trading it and the other ones would buy, that seems like the energetic balance is out of line for a reason that's not validly backed by the fundamentals. So the more stuff you find like that, if like when you hear people say like, I'm tired of the metals, just throwing in the towel, I don't want to wait anymore, I can't take it. Well, they may feel that way. That, I guess if everybody felt that way, then yes, on some level that would change the demand. But if that's just one guy and the fact that people are actually buying physical silver and the money printing is going on and is never going to return, then okay, that means he's selling something. And the more people who do that, the better your pricing is, the better the odds you ultimately get. Now, can most people handle buying something, watch it go down, and be happy about buying more? Anyone can do it. Do most people do it? No, they do the exact opposite. And that's the difference between winning and losing, usually has been my experience, whether in trading, my own results, or the people that I've talked to. So, extrapolate it even simpler. Can you win? Yeah, if you can be patient, and if we're right and it's a Ponzi scheme in the government and everyone else that you think is delusional, and how do they not see these things if they're wrong? And if you can be patient enough, because we're waiting until they realize what you already know. That's the difference. Because like people often, they see a fundamental mispricing and think, all right, well, this is mispriced, I bought it, and it's not going to go up the next day just because you finally realize it. You're waiting for the rest of the world to finally, I think we're right. But when we really get paid off is when all these guys on Wall Street have been reading Krugman. They're like, shit, I got to get some shares. Shit, we got to find a fund. Matt, when your customers, you start getting people who, are watching silver go up on the ticker and they're saying, hey, we got to get some exposure. And you have people coming out of Harvard and Wharton and Sloan. They're 25. The hedge funds are in the banks. They're going to get whatever the customers are requesting. And you saw it a little bit when silver was moving last year. The thing finally started moving. They're like, then everyone's like doing it. Remember, there's like a month when it was moving and everyone's like coming out of the wood like, yeah, look at this silver stuff. And then they drop away. That's the human nature part. But look at what just look at what's happening with Bitcoin. And if we're right and that silver, it's an inevitability. So any final questions, anybody?
Yeah, one thing to follow up on that question, with regard to the upcoming implementation of a dividend, the current shorts that are actually short that stock, they should be taking into account that the company is going to issue that dividend come at the end of, I think, Q1. And that will be a cost that they have to bear. So they'll be paying out that dividend quarterly. And they also pay a borrow cost, which I think right now is like 0.8% per year to borrow the
negative
shares.
yet for locate, Matt?
What?
We're not into negative territory for a stock locate yet.
No, it's just
how wild would that be if actually, like, to short a share, you get paid a credit because it was a negative interest rate policy? Don't rule it out.
Well,
It's coming.
yeah, no, I mean, but yeah, I mean, it should take into account the dividend. Those people should be thinking about it.
It's theoretically priced in, but most likely priced in Wall Street fashion, which is, you saw how that works out in The Big Short. Imad, did you have a question? I see a hand raised. I just realized that thing's there. Sorry, anyone who's been raising their hand before. But Imad, if you...
Hey, Chris. Yeah, I was just going to say we were talking about risk management earlier. And I heard something, Jim Chanos, he was talking about how he manages his risk. And he just says for any position he has, he doesn't have more than 2%. And if he really likes a position, he'll go up 5% as a percentage of his portfolio. So maybe that's just a good rule of thumb for maybe some traders in here if they're trying to figure out, how much their position set size should be. So that was just my comment.
Yeah, well, thank you. And for some people, that's going to be great. I had to point out also that for some people, that's not the way to go. Everyone is different. And I think trading, like basically anything else in life, goes the best when your style is somewhat congruent with who you are. I was trained on an options floor by people who were professional speculators that, were like, hey, you take the single when it's there, but there's a time to go all in. If someone's coming from an actuarial background where that's a very much different mindset, where maybe more conservative, they're doing insurance or something different is probably going to be appropriate for them. I think what Imad just mentioned makes a lot of sense and could be, with that said, I think that could be, a good rule of thumb for people starting out. Just, I guess maybe that's the fun part of life. And I noticed how I've gotten any of the things I've learned to do somewhat well. It's like, I like seeing a bunch of different people who are successful at doing it, take different bits and pieces and then you become who you are. So, like Matt runs his own hedge fund. So there's some stuff that's more sophisticated that is a great bet for Matt to get into because Matt knows what he's doing. I mean, any of the trades, you can always explain it clearly, but I mean, the real skill is that, all right, when the thing's getting pounded and you thought you're all clever, you're like, like all of us silver guys are like, oh, we're going to buy some silver. They're going to do QE 6, 7, and 8, and then silver's down $2. Did you have a plan in place that leaves you with the ability so that whatever you feel is the right trading decision with a calm-headed mind, and if that's a good plan, do you actually execute the plan? It's like the poker player gets pissed off and goes on tilt, doesn't matter how many books you read about like probabilities or whatever. If you can sit there and get loaded at the table and just lose your shit. So I think it's a balance of all of those. It's going to be different for everyone. And perhaps on that note, I think maybe we will wrap up there and remember that sleep is good too. And trading is fun and all this, but also taking a break, getting some sleep. And, more than anything, this was not by any means an advertisement for people to go speculate on this week's event. I hopefully what came across, I know, geez, we've been here, was it 3 hours already now? Just that whenever you see a situation that looks out of line, you can provide this same framework and thought process, whether it's whatever you think is going to happen this week. And by all means, I'm not, everyone's going to think whatever about Q or Trump or whatever, and that's fine. Hopefully this was at least helpful.
Something just came across my screen about 9/11.
Options and how you can look at those. So with that said, have a good night, everybody, and we'll see how this week goes.
Worried about the national debt? Inflation concerns keeping you up at night? Looking for ways to preserve your wealth but don't know where to begin? Well, good news. By reading The Big Silver Short, you can learn about the wonders and complexities of the silver market and why it's the most undervalued hard asset out there.
Silver is a place to be. Gold's important as well, but between the two metals, the most leverage to the upside and downside is the silver market.
Find out how Wall Street banks have left the silver market in place for the short squeeze of a lifetime as Chris Marcus of Arcadia Economics interviews leading silver experts, including former CFTC Commissioner Bart Chilton.
In silver and soybeans and oil, there's never enough physical to back up all of the futures contracts. Never is.
See why people are calling The Big Silver Short a must-read for silver investors and a groundbreaking book on the massive short position in the silver futures market.
Chris has done more for silver in that part of the precious metals market than anybody.
Click on the link below to order your copy of The Big Silver Short in paperback, audiobook, or Kindle now.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Sorry, we had a couple false starts there. Not finding the Zoom to YouTube functionality, always the easiest thing to use, but just a quick video, as we are going to be doing a lot more live, maybe less scheduled stuff, but more live updates. So that way, when there's something to say, we can just get it up there. And certainly it caught something last night from the great Nick Laird of Gold Charts R Us that not entirely sure what to make of it, although I did record a call with Andrew McGuire this morning, which will be posted on Sunday, where you'll get to hear a little bit more about it. But you see here, this last night, about a little over 20 million ounces allegedly deposited into SLV and the Silver Trust, which, to put that in context, that's 1 day. Now, if we back out 6 months, you see that's the biggest one-day spike in the past 6 months, in the past year. So even everything that happened last year, that's bigger than that. We can go out 5 years. It's the biggest one. 10 years. So you have a big spike there, 2013. But anyway, you get the idea. A incredibly large spike of pile of metal went into the silver, or I will say again, allegedly went into the Silver Trust. I don't know what to make of, or I don't know whether they have it in there. I hope they have the metal in there. I hope they're not going to screw investors. JP Morgan is the custodian. So, you know, to me, it seems like a risk premium I don't want to mess with. But anyway, that is your quick update. It's a rather shocking number to me, what that actually means. Perhaps we'll find out in due time. Although before we wrap this one up, if you'd like to stay posted, I know some people haven't been getting the YouTube notifications, but the best way to make sure you get these updates as soon as they are released, before Wall Street even learns how to spell silver, we'll click in this one in the link below. That way you get them right to your inbox, and you get entered to win this 10-ounce silver bullet. Beef up your stack a little bit. So anyway, that is the news that I have to share with you today. There will be a full episode later tonight, live episode with Dave Kranzler, Rob Keynes, and Chris Marchese, digging into what's going on with that First Majestic short position out there. So anyway, that is the update today, and thanks for joining me. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. We are live on a Thursday night in a very exciting time in the world. We have a new president, apparently, and we also have a rally in the silver stocks. Man, they were on fire yesterday. I think First Majestic had flames coming out of it. There were people rushing. And fortunately, one of my rare option wins. I put it on at the right time. So anyway, we have a show tonight digging into First Majestic, and especially the short position on First Majestic. We've gotten a lot of reader comments. I guess they'd be viewer comments, but in either case, joining me on tonight's all-star panel, we have Rob Keynes of Gold Silver Pros. Hello, Rob. How are you?
Chris, I'm doing well. Thanks for having me.
Well, it's a pleasure to see you there. And then we have Chris Marchese from SilverSeek. Chris, welcome on in. Back to the show. Good to see you.
Yeah, you too, Chris.
And then, of course, we have a well-known legend on the Arcadia Economics program. The man, the myth, the legend, as they say. Dave Kranzler. Hello, Dave. How are you tonight?
Doing okay. Thanks for having me on. This should be fun.
Yeah, well, I appreciate that. And of course, what kind of silvery host would I be if we did not take a quick look at the silver chart just to kick things off here? By the way, we are live tonight, which is nice. So start firing your questions in the window there, and we will take some of them. Here we see silver down a quarter. Let's call it 25.70-ish. And, after yesterday's rally, it's a little bit flat on the day. The stocks, after quite a rally yesterday, which was good time, and I'll log into my portfolio here. We'll take a look at the mining shares, but to tonight's topic, here we see First Majestic Silver trading $13.50. And down here, you can see percentage of shares floated, percent of float shorted, 23.9%, which is interesting, a bit higher than the last time I remember looking at that. So who would like, Dave, would you like to kick off? What do you think is going on here? Is that impacting the price? Any thoughts on why there's such a seemingly large short position on First Majestic?
It's First Majestic seems to always have a pretty large short interest in it. I don't know if I've ever seen it up at 24%. There's no way to really know for sure unless you can, talk to some of the entities have the largest short positions. But I'm sure there's some people making bearish bets against First Majestic for whatever reason. If you just look on the surface at some of its valuation metrics, it looks like it's overvalued. But you could say that about most of the stocks in the NYSE right now. I don't know. From my perspective, I think it's kind of stupid to be short, have a big short in First Majestic, because especially when silver is rising, this stock can be explosive. We saw when this bull cycle kicked off at the end of 2015, First Majestic ran from like just over $2 up to as high as 19 pretty quickly. So, this is one of those ones where the shorts have the potential to really get burned on. I have to believe that there's some long short hedge funds that are using First Majestic as the short leg of a pairs trade. So maybe they're long, you fill in the blank, Hecla, Core Mining, whatever silver stock, large cap silver stock. And maybe they're long that, and maybe they're short First Majestic. I don't know. I would say anyone who's just outright short First Majestic it probably doesn't really know what they're doing in mining stocks.
So, Dave, you're saying that it would seemingly be not the smartest thing to short one of the largest silver producers while the Fed is hyperinflating the dollar simultaneously?
If you like throwing your money away, it's a good idea, right?
Yeah.
Chris, what do you think?
So just going on top of what Dave said, yeah, it's expensive by, a typical DCF valuation. But it's always been like that. That's how it's always traded. It's had one of the highest betas to silver. But, I think it's now at this point at almost 24%, I think it's, several variables. The first is, so it's always had a high short position since I started tracking it in 2016, mid-2016. I think it was 14 or so percent then, and it never really got below that level. I don't check that often. I check about every 2 months, but anyway, I think it's, so they have the tax overhang when they acquired San Dimas, when they acquired Primero. So that could be something. I also think, I mean, you know how short the commercials are on silver. So it could be, you know, this is another way of doing it, you know, through the equity market. And, you know, those are the biggest two things, you know, the tax overhang and it being, you know, a leverage play on silver, having, you know, like I said, one of the highest betas. But what's interesting is, so the float, Eric Sprott has a certain amount and that doesn't move. Wheaton Precious Metals, they got 20 million shares during the silver and gold stream amendment. So the float isn't nearly what the total shares outstanding are. So
that's a good point.
Yeah. You know, so that makes it a little more vulnerable, I would say, to the shorts. However, you know, if we get a short squeeze in this thing, yeah, we could see $20 real fast. So I wouldn't want to be shorted. I don't know what the shorts are thinking. Silver is actually held in very well relative to gold. You know, usually when gold falls, silver will fall more. It hasn't really been the case. You know, with the GSRs trading 70 to 75, it's been pretty stable. And the chart looks stronger for silver.
Yeah, and Chris, you mentioned that if you actually discount the cash flows, that the current level, you know, looks a little bit high. I think that's something a lot of people wonder. How do you, what's the framework to go about valuing, you know, where obviously people are going to have different inputs and projections, but what's the basics of how someone could look at valuing that?
So it's basically like silver production times the silver price less the costs. You know, most people use all-in sustaining costs. It's a little bit more than that, but whatever. You come up with, you know, annual cash flows, and you discount that to the present, whatever you want to use. And especially in this low interest rate environment, you would use a lower discount rate. So that just makes it more out of whack. So basically, you know, that's how you value any cash flowing asset. It's the present value of all the future cash flows discounted.
And Rob, any thoughts there? Especially you and I have talked before about how we saw First Majestic trading lower at times with $25, $26 silver than with $18 silver. So perhaps you could touch on what Chris said and tell us how to mix that all in there.
So I think a lot of mining stock analysts and investors look at different ways to finance or to value stocks. A lot of times they look at dollar per ounce in the ground. They look at discounted cash flow analysis. There's net asset value when you're discounting what they have in the ground, how quickly they're going to get it out. There are a lot of different measures. Although I found, honestly, a lot of times those don't hold. Net asset value is probably my favorite, but with the market overall being so undervalued right now, I believe a lot of the mining stocks are undervalued. And I think First Majestic, based on their potential, is undervalued for what we think the silver price could be in the ounces that they have on the ground, especially considering all the technological advancements they made at getting better percentage rates of the silver out of the rock that they're pulling out of the ground. I think Keith has done just about everything he can with this company to position it to lead the silver companies for the rebound. And I agree with Chris that the silver price has been stronger recently than gold. I think the chart has held up a lot better than gold. So, and what the chart tells me right now is we're positioned for another bull run in silver. It's not very bearish. And especially with gold, I think it was a day or two recovering past its 50-day moving average. I think both metals are positioned to continue to go up in 2021. So yeah, there's a lot of short position on First Majestic right now. I'm looking at market beat, and it looks like that short position has doubled in value. This time last year, it was about 217 million. Now the value is about 549 or so million of the short position on First Majestic.
Rob, I'm going to enable screen sharing for you if you would like to share your screen with anything there.
Sure. Let's go ahead and do that real quick.
I think Dave's going to find the answer while we're recording there. He looks like he's cracking the code.
So the cool thing about market beat is it gives you over time. So if you look at about a year ago, December 13th, 20 million shares at 217.84 million. Now we're at 43 million shares at 549. So the shorts have basically doubled down on this stock as we had silver go from about 18 to about $26, $27 an ounce. So I can't imagine the shorts really are too happy right now because you've seen about a 40% or so increase in the price of silver. But you haven't seen the subsequent increase in First Majestic when you consider leverage. So First Majestic's gone up about 35% in that time frame, but you haven't seen the leverage that First Majestic or any miner should get to that increase in the silver price. Because, for every additional dollar that silver goes up above the cost of mine, that's pure profit on the mining book. So for me, I think First Majestic is it's undervalued right now. If silver continues up and it hits 30 and 32 and goes through those traditional resistance levels, I think the shorts are going to eat it on this stock, honestly. I understand why there's shorts there. First Majestic is one of the most liquid precious metal stocks if you want to play options or if you want to short it. So I get some of the motivation for people who feel like if you're using like a discounted cash flow analysis, it's currently undervalued. And I would agree with Chris on that. But I think the potential in the future is that the shorts get crushed because I don't think I see silver itself falling back down to the $22 support range. And I don't see First Majestic falling back under $10. I mean, it could happen. It's just very, very unlikely.
Dave, you think this is headed to a short squeeze?
That's impossible to know. I mean, if you're talking about an engineered short squeeze, I mean, I think you probably could engineer one, but it would mean that a lot of these long-term, the tightly held contingency, as Chris was pointing out, would probably need to all get together and have oh, look who's on there. Susquehanna owns 2.6%. Is that because
I actually asked someone about that from the shop. Could conceivably be a hedge. Who knows? But
yeah, no, that's true. Who knows what they've got going on the other side of that? They may have a boatload of puts or something, or written a bunch of calls. Probably wrote a bunch of calls.
Mm-hmm.
But they'd have to have a conference call. All the ones that tightly hold their shares and say, okay, on the same day, we're all going to call our brokerage custodian and demand that we want our shares back that are on loan. So, that's essentially how you would engineer a classic short squeeze. I was actually just working some numbers. I haven't looked at First Majestic in a long time, and I've followed this company since 2001, 2002, because it's just such a large company. For me, it's kind of boring to look at. I mean, it's a great large cap silver play, a great way to leverage the silver market. To me, it doesn't require a lot of fundamental analysis. I mean, if you own it and you have a poor position in it, yeah, you got to, keep track of things like the potential tax liability and things like that. But you're talking about a company here that produces 15 million silver ounces right now, or that's what they're projecting for 2021, and over 20 million silver equivalent ounces. And just on that basis, the upside leverage they have for every dollar increase in the price of silver is enormous. So even though maybe using, the traditional valuation metrics, price to sales, price earnings, price cash flow, it may look like it's overvalued, run those same numbers and plug in $35 silver. And it looks cheap very quickly because of all the silver they produce. That's an enormous amount of silver. I mean, it's not quite the largest primary silver producer in the world, but that's their goal, is to become the largest primary silver producer. So, I was looking at their total resource, and this includes the inferred, and if I was actually doing a valuation analysis the way that I value this thing, I'd probably give them, I don't know, maybe 40 or 50% credit for the inferred resource.
San Dimas alone, right?
Pardon me?
San Dimas alone,
right, exactly.
The conversion should be there, right?
Right. I would think so. But, let's just take the face value total resource, and it's 600 million ounces of silver equivalent. I mean, that's one of the largest silver resources in the world. And, with the potential upside explosiveness of the price of silver, I just don't see how someone, unless they've got some other strategy they're pairing it with, whether, it's maybe they short the stock and sell puts. I don't know. That actually probably be a pretty good strategy right now. I just think if you're outright short First Majestic, you really don't know what you're doing in this sector.
Although, Dave, well, let's not rule out people not knowing what they're doing in the sector too. Yet at the same time, it reminds me something I ran into quite a bit in my time back in the industry. Do you think there's some degree to which it's one of those things, well, we're short it blows up. Hopefully it's after its bonus time. Because I think that factors in. It's like we hear these. I remember I used to read about these massive derivative books that Deutsche Bank had. And, I was always thinking like there's some complex strategy going on. Later on, I find out they're just basically writing options and then railroading the price. So they screw all their customers by pinning them. So, I mean, it's like a lot of things that sound bizarre to normal people are quite bizarre. In fact, the bankers, it's often that like CIA, like little criminal, like gangster mindset. And is that a possibility that there's just someone? I mean, it's like how are some of these funds short so much silver? Doesn't really make sense either. But
They're not short physical silver; they're short paper silver, and that's obviously they're short it. And it's not funds that are short paper silver; it's the banks.
Well, then they pawn it off to the tech funds, though, which is what I've always found interesting. Where I mean, basically, the reason that the banks can manipulate, they need someone to buy and sell. And at least as I've come to understand, they've been eating these guys' lunch for the last 30 years, which is bizarre because, I don't know, when I was back on the floor, we would check the products each month. We'd be like, all right, we made money. And if there's, 9 stocks you're always winning in and one that you just get clobbered in consistently, at some point you'd say like, either there's a reason or maybe I can't figure out the reason, but I'm just going to stop. And
well, the managed money right now is net on a net basis. If I'm just looking at the futures, because we're talking about the futures now, on a net long basis, the funds are pretty net long right now. So, and you're right, there is the tech fund, the CTA fund aspect where they're just basically they're institutional momentum chasers. So, they get long when it's going up and they sell, and they get short when the price is going down, and they baseball their position back and forth with the banks. And I'm looking at the banks now, the swap dealers. I mean, they're net short quite a bit of silver. So, and who knows how much of the producer, merchant, processor, user commitment of traders position, who knows how much of that is actually bank positions. So,
the banks know their customers' positions because they have their house account and their customer account.
Right.
This is similar.
And they run the COMEX.
Yeah, on the COMEX. So it's similar when I used to work for FXCM, a currency broker. They swore up and down they didn't trade against their customer position because everybody in Forex did it. But then they got busted years later for trading against their customer position. It's how they made money. So,
JP Morgan denied spoofing the markets, and now in the settlement, and now find out they cheated. And also, I mean, as we've seen, it's not like this comes as a surprise, but when they lie and cover it up, then at least there's some probability that anything they say in the future, I don't know, maybe sometimes they tell the truth, but it's at least, worthy of question. Although anyway, I guess maybe the alternate hypothesis that I've wondered, I don't know that I have evidence, but I think it's at least fair to consider, if these banks can manipulate silver, and we know there's politics in the world and there's politics in banking, and fortunately Keith has the courage to stand up and be honest about what's going on, which I certainly appreciate. That's the one reason, the main reason he was the one mining executive in the book that I did. So is he a target?
I think that has something to do with it, because if you wanted to make a statement about hey, shut your mouth. What's a good way to do it? If you're a company CEO, well, you discourage the price of the stock. I don't know if that is occurring. It's impossible. We don't have the data to know that, but I mean, yeah, that would be one way to do it.
I don't know. I think Keith's kind of empty. They might view him as empty threats at this point. Remember when he said, "Oh, we're going to hold back silver, sell it at a higher price." They did that for all of one quarter. That didn't really come to fruition. I mean, I don't think that anyone or bank or anything would take notice of that. Just, I mean, in the big scheme of things, First Majestics doesn't like produce that much silver. It's what, 11, 12 million ounces this year, maybe 13 to 15 next year.
They're projecting 15 million silver and 20 million silver equivalent.
Yeah, and that could grow because they have La Pria, Del Toro, La Guitarra, or they just need to drill to find more resources, and I think it's there to increase production. But anyway, I don't think that's anything significant that anyone's worrying about. I don't think that's a target or anything. And just because I've seen First Majestic have such a high short interest over so many years now. It's been about 5. That's been over 15%. I just don't think that's the case.
I think, from having written for places like Seeking Alpha, which is mostly a generalist site, there are only a few precious metal stocks that sort of move the needle with people. First Majestic is one of those. It almost has a cult following at Seeking Alpha. And when I wrote about it before, if you write anything in which people could perceive as being negative, a lot of the guys there will jump on you because they're fans of the stock and they're very sort of sensitive to it. I think from that perspective, if you're following the silver market, you look at probably Pan American Silver and First Majestic probably first because of the popularity and the production. So if you did want to make a statement, First Majestic, maybe a stock in which you would want to target. But then my question is, why aren't you looking at some of the others as well?
Yeah, like MAG. I mean, that had a great, 2020.
Yeah, well,
Keith Neumeyer is the only large cap mining stock CEO who speaks out publicly against the manipulation activities in the precious metals sector.
That's what I was getting at.
And I mean, I see Chris's point where, he may be targeted, especially by who knows, it could be half the short position could be the banks, and they're trying to keep the price down, because if somehow First Majestic lags in a big move higher in the price in the sector, First Majestic would look bad.
That's exactly right. And going back to my Seeking Alpha point, Dave, the generalists take notice of First Majestic. So if you were running a suppression scheme and you wanted to keep generalists out of the silver stocks, doing exactly what you said on First Majestic could
suppress the price. Yeah.
Yeah.
I mean, that's why I think a lot of the large cap mining CEOs don't say anything about the manipulation. I mean, they have to know what's going on, but they keep a low profile because governments have, they have tools in their toolkit that they can use to make life hell for some of these big companies, whether it's in environmental restrictions or whatnot. I mean, it's so, I think a lot of them keep a low profile, and Keith has always been, I mean, since I've been involved in the sector starting in 2001, I mean, I don't know if he's still a huge, I know he contributes a lot of money to GATA. And, he used to, publicly be, one of GATA's biggest supporters. And I don't know if that's still the case, but, he's always been outspoken about it and has been willing to step up and tell the truth that other mining companies CEOs refuse to talk about.
It's almost not a waste, but kind of a waste, because the only way this is going to get resolved is through supply and demand finally winning out. It's, I mean, these ridiculous cases, JP Morgan, found guilty. We'll give you a little slap on the wrist, like BFD, right? I mean,
Yeah, like spoofing's the problem.
yeah.
Just a little spoof here. So Dave, you mentioned GATA. Quick note: GATA got part of one of the Arcadia Foundation's first donations, just to making the world a little bit more silvery. They got, I hear our cubes actually came in. There's 27 of these babies.
Those are sold out?
They're sold out, but I got one. Yara got one. Silver Bill Murphy, Chris Powell, and Scott, the silver historian Craig, who laid that great story at Silverfest.
I want one.
Dave, well, maybe when I come back to Denver, we can roll dice and gamble on football together or something like that. Although one last thing about First Majestic here that I know is on a lot of people's minds is the tax issue. And as silver analysts, I'm wondering how you guys look at it. And perhaps one thing in particular, if anyone would like to comment on this, when I hear that some funds have a legal mandate or fund mandate that they can't buy it because there's a legal issue. I mean, I understand, maybe there's a different price, but whenever someone's legally prevented from doing something, that seems to me to be altering the equilibrium balance of any market. So anyway, Rob, do you want to take that one? Any thoughts on what people should think or how they should approach the Mexican issue?
Yeah, I wish I knew more information on that. I've tried to look at this and essentially I think what the Mexican government's trying to do is just get the fair share of taxes from their perspective. And it's kind of like what Indonesia did to Freeport-McMoRan in the Grasberg mine a couple of years ago. They said, you know what, we want to recover some more of the value from this in terms of why don't you train us how to do the mining and provide more jobs. Maybe that's what the Mexican government's trying to do, but they're trying to do it through taxes. Maybe they're just trying to recover more value. We've had a deflating economy last year. Maybe that's part of the motivation. But there are legal restrictions for big funds, especially to get into a stock that has an outstanding legal issue, and especially one that's probably a lower cap for them in a silver company. So it may just be, people are going to be hands off. The institutions will be hands off until that's settled. I don't know if that's why the legal issue exists, or more if it's just the Mexican government trying to, basically trying to recover its fair share. I kind of believe the latter, but yeah, I could see where that may put, less institutional upward pressure on the stock price, I guess, if they're not able to get into it.
Dave or Chris?
I mean, I haven't, because I don't spend a lot of time analyzing First Majestic's fundamentals. I mean, I buy and sell the stock more as kind of an intermediate trading play on where I think the market's headed, up or down on a shorter term basis. Has anyone quantified the tax issue?
Yeah, so here's what I know about it. Don't quote me, I might be off on a thing or two. So Wheaton Precious Metals initially acquired a silver stream from Gold Corp on the San Dimas mine. Gold Corp then sold San Dimas to Primero Mining. And at that point, they were all clear that they would be taxed at the transfer pricing price of silver, which was $4 an ounce. And then years later, it came up that no, the Mexican government wanted the transfer pricing at the spot price. So you got that price discrepancy between the spot and the ongoing purchase price.
What was the spot price at the time?
So I think it was I think San Dimas was acquired in 2018 from Primero, or so First Majestic to Primero, Gold Corp, or Primero acquired it from Gold Corp in, I think, 2010, give or take a year. Anyway, that was supposed to be in good standing from what I understood. And so basically when First Majestic acquired Primero, that was an ongoing issue. So that still has to be settled. But I hope and I think First Majestic will win out, because if you remember, because Mexico wants to have a good relationship with Canada. Canada puts a lot of investment money into Mexico. They benefit. It is government, so I don't know if it can be looked at logically, but so they had that thing with wheat and precious metals, the Canadian government, that it should be taxed at spot price, not transfer pricing, and wheat and precious metals won out. So I think that First Majestic will come out on top. If they don't, that should be now.
Did
6 years?
Did the lawsuit issue come about the same time silver was popping last year? Is that timing?
No,
right?
The lawsuit has been ongoing, or the dispute has been ongoing with Primero, which is gone. That was acquired by First Majestic and the Mexican government at the time.
Okay.
So I think it's been about 6 years in total, if I had to guess, 5-6 years. So if the taxes between $4 and let's say gold, silver's
17 or 18.
Yeah, something like, so the difference between that multiplied by the streaming production, which was very high when Wheaton had the stream with Primero, not as high with First Majestic. And I don't know how First Majestic is doing the taxes. I don't know if they're still taxing it or paying taxes on transfer pricing or spot price. So, I mean, I know that doesn't help a lot, but it kind of narrows down, the neighborhood of what it would be. And maybe that's why First Majestic is keeping a excessively large cash position, and why they did that financing with Sprott. I don't know.
Well, appreciate that, and some good things to think about with the tax issue. By the way, for everybody watching along at home, if you're having fun, hit that subscribe button and the notification bell so you can stay posted when we do fun stuff like this again. Although we are going to continue on here, and technically this is still the Denver Dave, well, I guess we dropped Denver, but the Dave Silver and Gold Hour. So one of the themes and highlights that's become a staple on the show is getting Dave riled up. And of course, Dave, I did not disappoint the fans tonight. I have some titles. I love getting these. Our buddy Chris Powell sends them out, and I can just like picture like the fury as I expect, because here EU plans to limit US dollar reliance and boost the euro. So first we had China backing away from the dollar, then Russia, now Europe, but probably is nothing to see here. Just carry on. Or actually, Dave, no, fortunately I do have I'll even answer this one for you if I may. We could just call them all currency manipulators. So as see, Janet Yellen was warning partners. Dave, do you have any thoughts on how the world is spitefully manipulating to screw Janet Yellen and the fine dollar? What do you think about that one?
It's funny because she I think it was today actually, where she gave a speech and she said, we're going to deal with China's currency manipulation, blah, blah, blah. And yet, I mean, the U.S. is the biggest currency manipulator in the world, and it has been since like 1936 or 1934, whenever the Exchange Stabilization Fund was erected. So what I found interesting about that EU announcement was that you basically have another country that is supposed to be, as opposed to China or Russia, supposed to be allies with the US and partners in NATO. And they're out here saying that headline basically says in so many words, we're diversifying out of the dollar. And they said, and if you read the article, they said they're doing it because they don't want to have exposure to when the U.S. decides to, wield around sanctions to try and achieve their political aims internationally, right? So,
Dave, now that we have a new administration, I'm sure that's, it's all gonna be solved soon, taken care of. Good plan in place.
What I found interesting about what Yellen said was a couple days ago, she said the U.S., under her being the head of the IRS and the Exchange Stabilization Fund and all that good stuff, that the U.S. was going to support a strong dollar policy. And now she's out here saying, well, we're going to use all the tools in our kit, to punish China for manipulating their currency. Basically, she's saying she wants a stronger yuan and a weaker dollar is essentially what she's saying. Because the only way you're going to fight China from propping up or pushing its currency lower, or not propping up, but from pushing its currency lower for trade advantage is to push your own currency lower, right? I don't know what else you can do. You're not raising interest rates, and that's what you need to do to support a strong dollar policy. So, I mean, she's talking out of, as always, she's talking out of both sides of her mouth at once. And I don't even know if she realizes she's doing this. Honestly, I think she's borderline senile.
Mm-hmm.
That's just
she's definitely. I call her Dementia Jan, like Dementia Joe Biden. But what I thought you were going to say is bring up the asinine comment about the 50-year treasuries.
I didn't even hear that.
Yeah, she wants 50-year treasuries. You got to pay 8-10% for any human to buy those, except the Fed will probably buy them, monetize them.
The Fed will just buy them.
Yeah.
Well, Dave, fortunately, we got you covered, because if you go near any central bankers, here's like garlic to the vampire. I know you have a nice hashtag got silver shirt.
Love my got silver shirt.
I got the coffee mug, which I enjoy. And I hear the yoga pants are quite sensational. By the way, folks, that's in the bottom underneath every video. So pick those up anytime you would like to. One note before we look at a couple silver stocks tonight, have some news. And I guess we brought it up earlier with the First Majestic short, but you mentioned, a lot of it depends on the future price of silver. And it's like, if there was something to point to that, you would see it going down. Yes, we know they can hammer paper on there, but I mean, it's like, I hear the numbers that Biden is planning on cranking out there. You're really gonna like shock and awe.
We won't be saying trillion pretty soon.
I heard Shinzo Abe is jealous, which, it's hard to do. So, and then along those lines, we get the reports from Andy Schechtman each week. People are buying a lot of physical silver. In fact, this week, a little teaser for the show coming on Saturday, mentioned even over gold. Like, people just want silver. So seems hard to put the tree back into the acorn on that one, but who knows what Wall Street will have cooked up, and should be fun to watch. Although in terms of getting leverage on some of these assets, Rob, I think you're on deck here now, because we had a company that wanted to have us take a look at them, see what we think. And I know you've taken a look at Calinex here. So Rob, would you like to take it away and let folks know what they're looking at?
Yeah. Do you mind if I share screen, Chris?
Sure. I will stop my share and you take over.
All righty. We'll do that. So Calinex Mines is a stock I covered, I think, back on the 12th, and it's risen about 30%, a little over 30% in 7 days, almost up 30% today. They've had really good performance. A lot of it has to do with several factors, most of it being their polymetallic mine, and every single one of the metals they're mining is in a bull market, at least the 4 top ones. They're mostly a copper zinc provider, and those are both in bull markets. I think copper's in a seven-year high. Zinc has done very well. And I did a presentation for O&M the other day, a town hall about polymetallic mines, volcanogenic massive sulfide deposits, which Calinex has. And they provide a lot of the world's base metals, and the projections for both copper and zinc going forward are very, very bullish for 2021. So then you also have gold and silver in a bull market. and they're not heavily diluted. They've only got about 30 million shares outstanding. They have 3 geologists on staff that have basically won awards. So this is a company that knows what it's doing. It's finding more resource. It's in the 2 premier Flin Flon and Bathurst VMS districts in Canada, which have traditionally supplied a lot of base and precious metals in Canada. And they've got a 3rd one in Newfoundland as well. They just did a study here. Let's see if we can, well, I'm not going to be able to blow this up, but this is basically a new electromagnetic survey that they did where they're finding 1.46 grams per ton gold, 24 grams per ton silver on top of nearly 8% copper. I mean, these are ridiculous finds.
8% is big.
Yeah, ridiculous finds that they're finding at the rainbow. So their premier mining district, great management, not heavily diluted, finding new resource, polymetallic. You've got that gold cliff coming in 2030 where proven probable available ounces in the world falls off a cliff. Silver's already fallen off a cliff. You've got a world that wants to reflate and build infrastructure. How are you going to do that? You're going to need zinc and copper, right? So all of these things, at least for 2021, are extremely bullish. So anybody that's got one of these polymetallic deposits that has these 4 metals in it is probably going to do well. But you add to the fact that Calnex has really, really good management in 2 premier mining districts. And I think the market has taken notice of that.
That's basically describes almost every active mine in Mexico, right? Silver / polymetallic.
That's right. Lots of gold, silver, lots of big gold, copper porphyries.
Yeah. Copper, zinc, lead, moly.
Yep, molybdenum.
Chris, any comments on that one?
That particular company?
Mm-hmm.
No, I don't know much about it, but
I don't either. I wish I did, though.
Yeah, it seems interesting.
Although I'll pull the site back up, and I think actually would be interesting for folks that, I know there's a lot of people at home that are new to mining stocks. When you see a company like this, what are the first things that you go and look at? What do you guys evaluate?
So when I do it, I go look at the people. That's first and foremost. Then, I'll just go through, the corporate presentation, just get an idea what they're about. And then start, digging in from there.
Dave, anything particular that you check into first?
Hey, I check first to see if Jim Cramer likes the company, because if he doesn't like it, then I don't like it. No, I pretty much do what Chris mentioned. The first thing I do is I go and I look at the corporate presentation, which has the management team and directors, et cetera, usually at the beginning. Then I look to see, just assume going into this, I know what type of metal the company is either exploring or producing before I look at it. So then I look to see, where they're geographically located. And again, it kind of depends on if it's a junior exploration company or if it's an actual producing mining company. I mostly look at the exploration companies, so it's the methodology is probably a little bit different. That's pretty much what I do. If they're a producing company, I look to see what their resources are, what their exploration upside is. If it's an exploration company trying to make a discovery or trying to advance a discovery, there's other things that I look at. So.
All right. And a few last notes I had here. We do have in terms of the insider ownership between management and friends, family and associates, north of 30%. There is no debt. Rob did talk about the management team that is pretty well regarded. So.
And I should say, I pay close attention to that. I want to see if management has skin in the game. 30%, a lot. That says a lot that management has 30% of the shares that they own. And then I also go through the news history of the company because I want to see, how the company was formed, how it was founded, and what their history has been up to the point at where they are at it. Because that can actually tell you a lot.
Yeah, I look at that, and I specifically pay attention to share rollbacks because
Exactly, I do too.
I hate sloppy share structures. And just because someone has a tight share structure doesn't mean it's not sloppy if you go back 5, 7, 10 years.
Right. A lot of these companies use, well, you're nicely calling them rollbacks. I like the way these companies call them share consolidations.
Yeah.
They're reverse splits. That's what they are. And
Yeah.
with most of these, especially the junior companies that do them, with most of them, not all of them, they're hiding warts in the company's past where they've issued, hundreds of millions of shares and have, gone after projects that were complete dusters. So, and if that's the case, I want to know it. That doesn't necessarily mean I'm going to throw the company out and not consider it as an investment, but I need to know that history.
Mm-hmm. Totally.
Righty. Well, I appreciate that. And we have a couple other news updates. Here is one from Silver Sands. Let's get that up on the screen. A few of you guys met Silver Sands. My friend Keith Anderson. They were at Silverfest last year. We will consent to the cookies. And you can see here, Silver Sands reports encouraging initial drill results at the Virginia project. Pleased to report results from 6 initial diamond drill holes representing 903 meters of the 2,831 meter phase 1 exploration program. And you guys get to meet Keith Anderson and Silver Sands back at Silverfest.
I did not.
Although, is that the same Virginia property that was once owned by Mine Finders or then Pan American? I mean, do you know?
I assume that it was, but I don't know for sure.
Yeah, that is their Virginia project. So anyway, and we've had Keith on the show a couple of times, and we will have the link to their update below. Quote from Keith here: extremely pleased with the initial 2020 drill results from Virginia. Confirming the phase showing strike potential for additional silver mineralization in known veins and indication of new mineralization in minimally to untested peripheral veins. We're excited to get the next phase of fully funded 2021 exploration drilling underway to further expand the known mineralization. So that's one of the stocks that we've been following here. Proud sponsor to the show as well. And it's nice that they've been cranking and getting things back underway down in Argentina. So silver stock to be aware of, folks. And Rob, I know we have some news from you. There's apparently a conference coming up soon.
Yeah, we're going to be hosting our second virtual conference here in about a week. So I'll go ahead and share screen if you don't mind, Chris.
Alrighty.
We're going to be doing it on the Hopin platform. It is January 28th, 11 a.m. to 9 p.m. Central Standard Time. I believe you're going to be in one of the sessions with me. We're going to be talking about what happens. What do we do when the dollar dies? I think is the name of the session. It's going to be free for everybody to register, for the attendees to register. We're going to have Fernando Aguirre, survivor of the Argentinian currency crisis, leading off the conference. We'll be talking with the Silver Independence, Dr. Scott Craig. We'll be talking with Andy Scheckman, James Anderson at SD Bullion, Kieran Von Hest, who's very popular on my channel talking about Bitcoin, is going to come back and join us. Alex Newman from the New American. We're going to have the technical traders there, and Jerry Huang is going to be there from Gemini Capital. And lastly, we'll have.
How did you book Jerry? How did you get him on board?
He's really hard to book.
I know.
But it'd be great to have the conference. One of the smartest guys I've ever known, a CFO of 2 companies in the mining sector. Runs his own capital company now, just supremely talented and smart guy. Really glad to have him at the conference.
And can you give us the date again on that, Rob, and where they can find that?
Yeah, so we'll go back here real quick to the share screen if I can. It's going to be exactly 1 week from today, January 28th, 11 a.m. to 9 p.m. Central Standard Time. You can sign up by going to hopin/events/solutions-2021. It's a free ticket for everybody to join. We're going to have a bunch of exhibits, as I said, and then we're going to have a little after party from 6 to 8 p.m. where we all get together and just chat about mining stocks, the mining sector. You can meet some of the presenters. I'll be there as well. So come join us. It's free for everybody to join. We had a lot of fun last August when we ran a conference. I think we'll have a lot of fun this time as well.
Well, I'm looking forward to that. Dave, are we going to see you there?
I'm putting in my calendar now. It's a good possibility that I'll be able to watch the festivities.
Well, that always draws the crowd. By the way, everybody watching along at home, any questions for Denver Dave? I know this is a rare opportunity to interact with him via the computer anyway. Dave, did you get your vaccine yet? The Truth Monster asks.
Seriously? No, man. Even if I wanted to get one, I'd be, way back in the line.
Would you want to get one?
Not right now. I'd like to see a little bit of track record on how it works and what the side effects are.
Dave wants to see some drilling results on how that all goes.
Exactly.
Just hopping in there. Although, speaking of drilling results, we do have.
I know people are dying. There's people dying from
Yeah,
getting the vaccine,
I saw
and they
that.
don't know
Yeah.
why. And I would like to know why first.
It's not a vaccine. They're calling it a vaccine because under United States laws, a lot of international laws, if you call it a vaccine, you're exempt from lawsuits. But it is not a traditional. I mean, you can't get sued. You can kill people, and there's nothing they can do about it. It is not a vaccine in traditional terms. It is not a dead version of the virus. It's an RNA messenger, and they're screwing around basically with creating the virus in your body to combat the virus. But RNA messengers can also rewrite. They can rewrite things.
So
your DNA.
something they have no professional experience with. Is that
People
what
who
you're
are
saying?
getting the
Pretty
jab
much government's
are-
plan, Chris.
Yeah, they're the guinea pigs, basically. You're the guinea pig for this RNA.
They're trying to play God with our bodies.
Yeah, I mean,
Exactly
I'm not going to get it. I don't want to be elaborate.
Yeah,
Well, we'll leave that aside for now and make sure that the free speech protectors aren't too proud of what we're sharing here on the show.
Oh, did I say something wrong?
I know Dave gets excited about drill results, and my friend John Lee over at Silver Elephant was trying to get him on the show this week. But here we see that Silver Elephant has completed 940 millimeter drilling program at Pulacayo. We have some drill results down here below. And Rob, would you care to, for people again who are new at reading through some of these press releases, what would you take away from what you see here?
Let's see, grams per ton, silver 200, 200, 164, 132. Those are pretty good numbers. You've got a little bit of zinc mixed in there. The width is pretty good there as well. I mean, there's some encouraging signs there in those drill results. I'd like to see it drill a little bit more, drill it out a little bit more, but not bad at all.
Well, these are quite a bit below Pulacayo's current resource estimate, the grades at least. So I wonder if this is PACA, which I think they've kind of combined the two in terms of reporting. We'll see.
It says Pero is located at the southeastern extension of Pulcayo.
Oh, sorry, I was saying Para. So Pulcayo is an underground deposit.
Right.
PACA is an close nearby open pit. And, the last few drill results that I've seen, they kind of integrate the two and don't differentiate them.
Gotcha.
So this, just by looking at the grades, this seems like it doesn't seem like typical Pulacayo grades, but, I need to talk to John, obviously.
Is that it says an extension of Pulcayo? You think it's maybe a new area that they're drilling out?
Yeah, it could be. It could be. I hope so. I hope they focus on those two assets, which are more advanced and developed, rather than the two new projects they acquired. I'm having a brain fart right now, so
Well, that's all right, Chris. You may be thinking about hitting the subscribe button and the notification bell so that when John Lee is coming on the show. And that's one of the things I like about John, that he is very accessible. So if anyone does have questions about that, you can find John through the Silver Elephant website, or I know he is quite responsive on Twitter as well. And here you see commences 2,300 meter maiden Sunawayo drilling program in Bolivia. So It is commenced, and good to see that they're underway. I know they are drilling a lot, and John's goal is to round up 300 million ounces in the ground. So we have an update here, and again, folks can find out more about that silver elephant. Any other comments on this one, gentlemen?
I think Bolivia is a little misunderstood. It's opened up a lot recently. If anyone's been paying attention to New Pacific Metals, they've made great headway with the government in terms of getting some land from Comibol. And I think, it's very mineral rich. This is going to be a place to focus on the next decade or two. And I don't think it's really gotten its day in the sun yet, but I think it will. Not specifically this company. I'm just talking about exploration and development in Bolivia.
Well, I appreciate that. I may still be going down we were supposed to go down there to see it in person. Got delayed with a couple things, but hopefully.
Get in shape.
Yeah.
Altitudes. Get in shape, the altitude.
Okay.
Yeah.
Well, we will be ready if that does come to pass. And folks, we're going to round up for the evening here tonight, but thank you to our three brilliant guests here, Rob Keynes, Dave Kranzler, and Chris Marchese. And Dave, perhaps before we end, you can let folks know where they can find you and the great things that you offer there.
Well, I guess it's subjective as to whether they're great or not, but my website's Investment Research Dynamics, and there's links to the two newsletters that I write and publish. The latest mining stock journal just went out today, as a matter of fact. So there's a little bit of a silver emphasis in there. I review Arcana again and have updates on several of the silver companies that I think are good investments and that I invest in myself.
Yeah, and Dave, you know how we've discussed, we've analyzed before in the show that if you're going to have this big monster truck that you drive around Golden, Colorado all the time on your way to the Coors factory. I didn't know why you were filling it with Fiat. And I told you I was going to have my people do something, and we got you covered so you can update now your truck.
Send me that and I'll switch it out. I like that.
Get some silver. Although, Dave, you're not going to believe it, because I got this one from my team and your buddy Yara, and Yara that everyone met at Silverfest sent this over. Although the same exact day, in fact, I believe it was yesterday, we had some fan mail for you. Even your fans at home are making pictures of trucks for you to back up and put silver in. So anyway, we'll send those over.
Send me all of them. I'd like to have the option of using all of them or rotate them around.
That is investmentresearchdynamics.com. And Chris, who can be found at SilverSeek, can you share with them what did they get there?
Yeah, SilverSeek, GoldSeek, we put out the latest news releases for companies, provide company reports. Peter Spina and I, who founded Gold and SilverSeek, I think 17 years ago for SilverSeek, 25 for GoldSeek. We recently launched goldseeker.com. It's a premium newsletter. We have an actively managed look over my shoulder portfolio, those type of things. So, and at Twitter, I'm at CJMAUAG.
All righty. And
I've been going to GoldSeek since 2001. It's been around for a long time.
I go every day. Gold and SilverSeek are my first stop every morning, and that's a true story.
All right. And Rob, after you stop there, you load it up onto your site. Can you tell folks about goldsilverpros.com?
Yeah, we just redesigned the website. We started a subscription service, quarterly newsletter. We're about to have our annual mining stock update come out here on February 1st. And we also have Gold Silver Pros University. So if you're a beginning investor and want to learn how to risk manage your portfolio, we have about 40 videos and articles there for you.
Wish you were there in 2007 betting against the housing market? How about 1999 before the dot-com bubble burst? Sick of chasing the hottest stocks or investing based on FOMO? Yeah, that shit. How about you take a good hard look where no one wants you to see? Not the banks, not the politicians, and it's something so useful and you probably never even think about it, but everyone needs it and it's insanely undervalued. Silver, that's right, and you can learn all about it from this one incredible book, The Big Silver Short. Just click the button and buy the damn book.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, as once again, it is time for this week's physical silver and gold market update with Andy Scheckman of Miles Franklin. Andy, it's great to have you on the line here today. We're recording just a couple of hours on Wednesday after Joe Biden was inaugurated, so certainly will be plenty to talk about. And how are you doing?
I'm doing good, Chris. A little, I don't know what the right word is. Morose, I guess, is a good way to explain it. Sentimental, I guess. And you take a look at the country that I grew up in, I look around me and I don't recognize it anymore. And today just puts an exclamation point on that. And I think I echo the sentiment of a lot of people that I speak with, that this is a day to remember for sure, and one that perhaps will be the turning point in many respects of this country. For good or bad is debatable, but I think in many respects this country will never be the same moving forward at the culmination of the Trump presidency, or the end of the Trump presidency.
Well, I hear you, and certainly I'll be hoping you feel less morose soon. And we'll dig into silver in a second, although I'm going to go out on the limb. Actually, I'm not going out on the limb, but I'm going to be more genuine. I know we focused on silver. That will remain the focus, although, I don't know, Andy, as you know, we've been making our plan around certain freedom of speech issues, so I guess I'm going to just start letting it fly. And by the way, the people who, if you like this stuff and you go to the website, you can get the emails direct, so no matter what happens. But I don't know, I just feel it's important. And the politics are interconnected. So just to the degree that I think there are a lot of people that are wondering if something would still happen. And I don't know, maybe nothing will and things will continue on like they are now for a while. Although here's the question that I'm left with that just makes me wonder if we haven't seen the end of it. And again, it's interesting. People will be listening to this on Saturday, so we'll see what happens between today, Wednesday afternoon. But at least on the surface of it, we saw how Trump handled the negotiations with China. It wasn't exactly like, let's bridge the common ground. It was one guy did one thing, the other guy digs in his heels. We saw the pattern there, right?
Yes, sir.
And I mean, Trump, you know, I know some people like him, some dislike him. Leaving that aside, I mean, I don't think it'd be inappropriate to say, in terms of like someone who has the potential to be stubborn or not back down, that would be Donald Trump, right?
Right.
So what I don't get is that I've heard for the last couple months how there's clear evidence of the election being stolen. I've not researched that myself. I think that I believe it's likely to be true. It sure seems like Trump believes it's true. And given that you can go onto YouTube right now and find videos of the new president doing stuff that I just don't think anyone would feel comfortable with, I wondered why Trump didn't bring it up during the campaign. And there's just something to me that doesn't add up with the narrative that just has, I mean, there's evidence that he could unleash that I think people are aware of what I'm talking about. that we don't have to go down the conspiracy theory rabbit hole. And if there's ever been a situation where, you know, you see Pelosi and all these other guys duking it out against him, does that make any sense? There's something missing that doesn't add up, and I'm not saying that Q is coming back and saving the world or anything like that, but there's something to me that just is unanswered at this point.
You know, I could take that question down many, many paths. I've always believed, Chris, that when you're having a conversation or you're driving on a slippery road and you start to slip, it's your first immediate reaction or thought that is the correct one, and it's the one to choose. Your mind quickly sees clearly, and then your gut starts to cloud the picture. The first thing that pops into my head when you say that is, and I might get flack for this, but he's afraid. One thing has been evidently, or apparent, abundantly rather, excuse me, one thing has been abundantly clear to me over the last several years, and that is the power of the liberal media and the power of the left side political party is extraordinarily strong and convincing. I know a lot of people who I would consider to be incredibly well-read. And when you have a discussion with them about Trump, it turns into a very hostile, angry discussion, one that I've just stopped really taking part in. It is divisive amongst lifelong friends and family, and these people who I pay reference to that are so very well read and so very articulate are just reading the wrong thing. And you have so much of that. It has become apparent that these people are a lot more powerful, shall we say, than maybe we give them credit for, because how else could they completely and totally dominate the narrative for the last 4 years? I used to like watching Jimmy Kimmel once in a while. I almost throw up every time I turned it on over the last 4 years. I'd stop watching it after a week of Trump being president. The narrative that has been spun by the left side, the ability to railroad politically on the left side, to fabricate evidence by the FBI, to spy upon an incoming president. All of these things were all, I think, little glimpses into the power that they have. And maybe he's scared. And, you know, I guess if all of these things culminating with election fraud, supposed election fraud, alleged election fraud, happened, then indeed they wield a much mightier sword than people give them credit for. And I think that's a possibility. He's got children and a family, and he wants to live the rest of his life without being, plastered to 2 Secret Service agents. So I think that has something to do with it. Maybe. Now, maybe I'm wrong, but if I had to spitball, that's what it would be.
I find the reaction when I even bring some of these things up is interesting because, to be completely honest, this was the same thought process, and that's often the exact same reaction I got in the process of spending a decade digging into silver manipulation and finding what we were able to uncover there. And I don't know what's going on, but I'm just
let me interrupt you. Let me interrupt you for a second. Now, you say that's the reaction you get, but you're getting that reaction speaking to the choir. I'm part of the choir. Your listeners are part of the choir. I know you live somewhere near Austin, Texas, which is the most liberal part of Texas. Go have this discussion in a bar. Oh, I forget. Probably bars are closed, but let's just say they were open and you could go have an open discussion. Go do it with some liberal folk and see how far you get. And that's what I mean. It's the power that they wield has turned half the country against the other half. Doug Casey speaks of civil war. Who the hell ever would have even thought of saying something so foolish that now sounds so plausible? That's the point. We've got to, I mean, I'm only 50, right? So people who are 60 and 70 and 80, like my father, well, they lament even more for what the country that they see and remember. But, you know, this is not the country I grew up in, where people's differences of opinion were respected. So, yeah, I think that dichotomy, that divisiveness between people is what makes me feel this way, that things are not going to get better anytime soon because of this. And you first have to have a unified country like our grandfathers were after World War II, a unified country pulling together with a sense of patriotism and unification, not divisiveness and no unification whatsoever. So in any case, I don't mean to interrupt. I think it's frightening, because it doesn't always need to be about gold and silver between you and I when we talk. Because how about what makes people want to buy it instead of the benefits of owning it? Why should we think about owning it? And not the metal itself, but the reasons that drive us to cryptocurrencies and precious metals. And I grew up in a period of time, Chris, where my parents were told to file bankruptcy in 1983, 1981 or 2, 83. I don't know. I was 13 years old then. But my father took a job as a commissioned salesman at a precious metals company here in Minnesota. We come from nothing, and he took to it like a fish to water. Was speaking on behalf of that company 2 years later, because he immersed himself. He was a history major, but immersed himself not in precious metals, but why you need to own it, and became very successful and started speaking around the world on behalf of this company, where he was approached by some folks who asked him to bring the concept of Swiss investments to the United States. Now, he came back home after 2 or 3 years earlier, nearly filing bankruptcy, finally having some stability, and decides to make a go of it, start a small business. And my parents sold their life insurance policies. My dad's middle name is Miles, and his best friend who loaned us $60,000 to start this company 30 years ago, his middle name was Franklin. We bought him out, and 30 years later, by having strong fingertips and good grace of God, somehow we're the embodiment of the American dream. And ask yourself, how likely is it that something like that could happen today? How likely is it that, you could start a business that isn't completely and totally digital and online, any business, and succeed? I think everything from 150,000 small businesses closed or closing or closed forever or more. I see massive money printing and cost of living increasing, inflation on the horizon, and massive divisiveness that has been fostered by the left. You can say what you want about conservative people. Yeah, they may like guns, and yeah, I don't know, that's about the worst thing you can say. I like guns. I think that this divisiveness, you talk about conservative people, they respect people's opinion. And through all of this, the scariest thing that I've seen in my 50 years is this environment where You can't even go have dinner with people who you love, who you've known your whole life, and have an open conversation without saying, I'm never going out with them again. And so anyways, I digress. I just simply say that this is a big deal. It's a big deal because this country is a far cry from what it was founded upon. A similar ideology, a unification, patriotism, and a respect of your neighbor. And those days are gone. So I'm very concerned, and I hope I'm not just being fatalistic, and I hope that the spirit of this country can resurrect. But I'll tell you, what they're doing on every level, from economically, monetarily, and also just the way that the whole country is divided about what is right and what is wrong. These are the reasons you own precious metals. And there's another big reason also that I'd like to talk about that's vastly different, but it's worth talking about, and we can talk about that a little bit later. I interrupted you, but anyways, Chris, that's why I'm concerned, because it's not just the economy and the currency. It's a lot more than that. It's just the way that people are these days, and the prospects of starting a small business or being an entrepreneur, having different beliefs than your neighbor and respecting it. These are the things that concern me right now.
Yeah, well, fortunately, I'm sure JP Morgan's consumer lending division is going to be cranking up. Maybe we top some nice fresh round of quantitative easing on that, and it should be good and solved in no time soon. But Andy, please don't leave me and our audience hanging in suspense any longer. What is the mystery topic you have on your mind?
Okay, so, we've been talking about the prospect of a Fed dollar, a Fed coin, a digital Fed dollar, and it's because the banks aren't lending and there is no money velocity, yada, yada, yada. They want to have a new digital currency to keep their thumb upon us all and to be able to control monetary policy right into your monetary and fiscal policy. Basically, with Janet marrying the Fed, you have, the recipe for massive inflation if indeed we do see this digital currency. But I'm going to move eastward for a moment and talk about what's happening in China with their digital yuan. I don't hear enough people talking about the Belt, Road, and Rail Initiative in China. This is the largest infrastructure program in human history. It connects 65% of the world's population, 40% of global GDP, by connecting Asia and Africa. Asia and Africa, not just by road and rail, but by internet, telecom, all of the things that you need to build a vibrant first world economy. And China is doing that. The problem that, as it relates to silver, you can see the massive benefits. You can see the potential for silver on top of all of the other things we've talked about, batteries and solar power, wind power, all that stuff, the Green New Deal, connecting Asia and Africa, which is indeed the most ambitious undertaking, literally, in human history, will need immeasurable amounts of silver. And when you talk about a 330 million ounce deficit last year, 250 million the year before last year, with 8 or 10% decrease in industrial output because everyone was locked down, you have nothing but, I think, more and more and more and more needs for silver right now in a digital green world, and an expanding one, exponentially so, in Asia, that they will not be able to hold the price down. They will make more money, they being the banks that have held down the price, those that get long using these subsidized prices will make more money exponentially on the upside than they did on the down, because silver is depleted, it is disappearing, we continually run deficits, and the expansion of industrial uses and applications is exponentially growing. And so, but, you know, there's another problem with this Belt, Road, and Rail Initiative, and that is the Chinese have been the largest purchasers of our U.S. treasuries for a very long time. And normally, to keep interest rates low as well, they would roll over those treasuries. This year alone, and now they're not, by the way, they're cashing many of those in to fund this new initiative. So we buy their products and we are building their infrastructure. I'm going somewhere with all of this in a moment relating to the digital yuan. But in any case, so they're not rolling them over any longer, which will lead to the U.S. having to pay out for all of this treasury debt. This year alone, over $8 trillion, according to Bloomberg, $8 trillion in U.S. debt comes due. And then you have Biden coming in and saying, hey, I'm going to do a $2 trillion stimulus plan for COVID. That's $10 trillion. That's $330,000 a second. If indeed $8 trillion worth of debt needs to be placed and the $2 trillion COVID relief plan. So on one hand, you have the U.S. funding this massive product, which will come to its own demise as interest rates rise and this mountain of ever-increasing debt expands. But the one piece that people aren't talking about is that this entire infrastructure plan is being funded or used or denominated in the Chinese digital yuan. So you will have a shift to 65% of human population and 40% of global GDP that we are funding using a digital yuan. So everything comes together. You have a dollar that in our lifetimes will be challenged for singular world reserve currency by a Chinese digital yuan that we are helping build an infrastructure many times, well, 40% of global GDP that we are building by the sale of or the purchase of their goods and sending our money eastward. So I guess everything is changing here, Chris. The central theme here is change. The country's changing. People are changing. Opportunities are changing. And now I believe we are at the very beginning stages of the end of the U.S. dollar as world reserve currency, or at least singular world reserve currency. The U.S. is not part of this initiative. And, you know, when you got 65% of the world using one unified currency, that's going to really take a little bit of air out of the bubble. And at the same time, they're not buying our treasuries anymore. So there's a very strong recipe here for big problems ahead for the U.S. And it doesn't make it any better when nobody gets along. So, you know, but on the bright side, I would say to you that from an industrial standpoint, the industrial demand for silver alone will make it, in my opinion, the buying opportunity of a generation. I've said that before. I mean it in my soul. You will see it do Bitcoin type of gain someday. There's just not enough of it, and the need for it is expanding. And when you see companies like JP Morgan do what they did to amass 1 billion ounces long before everybody else, that tells you where it's going. They front ran all of this. They saw it coming. They're smart and nefarious. So I don't know. Thanks for letting me be on my soapbox, Chris. But these are the thoughts that run through my head. And when I look forward to the future, and for the first time in my life, I'm not really optimistic for my kids' future. I mean, it still is the best country in the world to live in, but I don't think it'll be the country that many of us remember growing up in. And it probably already isn't.
Yeah, well, there's the optimistic spirit. But on the positive side, I'm going to focus on your prior, more uplifting message of change, because apparently amongst the things that are headed for change, I mean, sorry, I'm trying to get ready to read this one, but I pulled up some. I was wondering. Sure enough, it didn't take long to get to what the Fed is going to do under Joe Biden. Here's the CNBC article today. Well, we'll read one bullet point for here. The Fed is likely to enjoy a more cordial relationship with President Joe Biden than it did with Trump, who once called central bankers boneheads. Well, there you go. I guess if Joe Biden doesn't call Yellen a bonehead, we're off to a good start. But what's further interesting is that the Fed under Biden will likely be pushed towards addressing racial inequality and climate change. So apparently another shift in the Fed's mandate. Now it has climate change and racial inequality as things to print money against. And here, if you read a little further, the Fed has joined the Network for Greening the Financial System. Herbert Hoover must be jealous somewhere about this global central bank consortium aimed at addressing climate change. So, wow, I guess in 2021 we're going to learn how stimulus can solve racial inequality and global warming. Andy, what do you say before I can't contain myself and read the additional headlines underneath this whopper?
Well, that's just what I mean. This isn't the country I grew up in. Just hearing that kind of stuff. That's not to say that racial inequality and global warming or climate change or whatever you want to call it's not important, but there are a lot bigger problems in this country, a lot bigger. And that also comes at a price tag. I mean, it's very apparent we're going full monetary theory, and they're going to juice as much out of the system until there's nothing left to juice. And then what? And then we're a shell of what we were, and we're indebted at the lowest interest rates. What's that?
Well, actually, I apologize for interrupting, although I do have the answer to what you just asked, because you said they're going to take everything they can out of the system, and then what? Well, fortunately, if you look at the alternate headlines underneath the Fed's new plan, just listen to a few of these. These are just the different headlines. Biden's call for $10,000 in student loan forgiveness, not included in the stimulus plan, so it's not even included in that one. Janet Yellen at top of Treasury would give boost to bull investors, Jim Cramer says. Translation, more money printing. Here's Treasury nominee Yellen says U.S. can afford higher corporate taxes if it coordinates with other countries. Okay, that sounds pro-business. Unintended consequences from massive stimulus. Worry longtime bull Jim Paulson. So again, more stimulus. And then just when you think you're going to top anything else onto that, but Joe Biden may need new exercise equipment, so there, a little more government spending.
Well, I got more for you.
Yeah.
I'm sorry. I don't mean to interrupt you. Well, I got two to add to that. You got the IMF, who came out last week and said that they came out in terms of policies right now. They said publicly, one of their spokesmen said, I would go out and I would spend. I would say, please spend as much as you can, and then spend a little bit more. The head of the IMF says that. And then just the other day, speaking of Janet, she was speaking in front of the Senate Finance Committee, and she said, neither the president-elect nor I proposed this relief package without an appreciation for the country's debt. So she does see it, debt burden, excuse me. But right now, with interest rates at historic lows, remember we're talking about interest rates at historic lows, bound to go higher, the smartest thing we can do is act big, said Yellen. So here you got spending from the IMF, 195 countries around the world, spending from the Fed, spending from the Treasury, spending, but no one is producing. So, where does all that money go? Where does all that money come from? And that's the question that's not being asked. It's just like, screw your children. let's live for today. There's going to be a price to pay for this. That's the point. When it happens, I don't know. But when the rest of the world starts moving away from the dollar, you can bet there will be a spiritual awakening in this country.
So, Andy, would I be correct that if Janet Yellen's thinking about going big, that she is still not thinking about raising interest rates?
I would think not. And, you know, I think you'll see them go negative before they go, I mean, really negative, nominally negative, not just, 90 basis points with 3% inflation or higher. I'm talking if they really want to stimulate the economy, go 2 or 3 or 4% negative. You're going to see that in Europe. You're already, 1% negative in Switzerland. You'll see it, and they will force people to spend. Anything they can do to stimulate the dying Keynesian economic engine, which must be supported through consumption and spending. And that's not happening. So all you have is spending and no consumption.
Yeah, it's pretty wild. Although, Andy, I guess the question normally we start each episode with, today we got a little action-filled banter before we got there, but curious how investors are responding on the physical level of the silver market. Obviously, we have that useless COMEX price, which really just tells us what banks are fleecing the hedge funds on in the paper games. But, I mean, at least in the shares, some of these mining stocks today, First Majestic looked like it had flames coming out of it. People were rushing. I mean, I don't know if it took Joe Biden swearing on the Bible to wake up the silver stock investors, but the shares were on fire. What happened on the physical level?
Chris, people, it seems these days, only want silver. I mean, it's the damnedest thing. I used to, pretty much always just use the word gold. But the reality is that everyone's buying silver. Now, we do sell gold, don't get me wrong, but the demand for silver is, it's probably the most drastic difference in my business in 30 years is everyone is buying silver and no one is selling silver. Nobody. I mean, nobody. And on days when you see it slammed, it's just laughable. It has an inverse correlation between demand. Not only is there no one selling when the price drops, everyone starts buying. And, I guess the demand for silver really is the precious metals industry, Chris, right now. There are plenty of people who buy gold. Typically, they're much larger purchases. But when someone is spending $50,000 or less, it just seems these days almost every one of them is silver. And I'm somewhat generalizing, but it's accentuated more and more and more, really since you and I started doing these shows. And I'm not saying there's that correlation. I'm speaking the entire industry is this way. And I think there's a realization between people who are looking to precious metals that just silver is just too darn good of a value. And, the COMEX price has very little to do. It has much more to do with it on the upside than on the down. On the downside, it attracts buyers. On the upside, people get a little cautious waiting for that pullback because, like the little boy who cried wolf, there's always the pullback. And until the wolf comes at the end of the story, and then there ain't no more pullback. So that is typically the way that it works, is that our business is much, much, much busier when the price falls than when it really takes off. But anyway, so business is still like it was in 2020, 3 to 5 times what it has ever been in 30 years, if not more. And I would say the COMEX price has less bearing on it than it ever has because the backdrop of it, everyone realizes that it's a BS price.
Yeah. Well, and before we wrap up, Andy, I would like to issue a disclaimer. Obviously, nobody should be such a complete idiotic fool to take financial advice from a bunch of nut job, alien hunting, weekend hobbyist conspiracy theorists like you or myself that are just sitting there talking our own book. So by all means, please, definitely, whatever you do, do not listen to anything that we're saying. Although, Andy, for anybody who's just a complete fool and wants to buy silver at this time when silver's in such a bubble and the economy is so sound and all that other good stuff that, Biden and Janet Yellen will surely explain to us in the near future, and with the deficit reduction plans and all that. If anyone is still foolish enough to want a hard asset like silver in this solid environment, do you have any specials so at least they can get it on discount?
Yeah, so what we're going to do this week is brand new Buffalo and Asahi silver rounds. These are the nicest, brand new, right from the mint silver rounds you can buy, both varieties. And what we're going to do is, because of the way that I had to acquire these, we're going to say that anything up to 1,000 ounces of silver will be at $2.19 over any quantity. Anything over 1,000 ounces will be $1.99 over the price of silver, any quantity from then on up. And certainly we appreciate working with your clients, or your listeners rather, Chris, and very, very much, and we try to treat them as family. So that's what we're going to offer this week, and we'll continue to try to find the best deals out there for your listeners and make sure that it gets delivered promptly, and we'll only sell stuff that's in stock, and if it's not in stock, your listeners will know up front before they decide to make a purchase.
Yeah, and of course, just a reminder that you'd have to be a complete fool to listen to anything that I say or have written or talked about years in advance, or to even consider purchasing a non-traditional Wall Street asset that a solid firm like JP Morgan or Goldman Sachs would not probably recommend in your portfolio. And I don't know why you'd want a piece of metal like silver instead of the safe haven treasury bond in these challenging times. But in either case, if anyone still wants it, Arcadia at Miles Franklin is where you can find out more about that. So Andy, we'll see what happens in the days and weeks to come. If I may throw in one plug for my ego here. I know, I think you got to catch some of the options webinar we did last Sunday night, which shockingly enough, I put on my trade on Tuesday. I hammered it on pretty big. Actually had a little trouble sleeping Tuesday night because I wanted to put it on bigger. I wanted to go overboard. I didn't end up doing that, but fortunately, I actually caught a silver rally. So that might be the sign of the apocalypse. I timed one of these right for a change. Although, for anyone who didn't catch that webinar, did you see some of it, and what did you think?
I thought it was very impressive. I love the format. I love the back and forth. I thought it was very cool, and it's a good way for like-minded people to communicate. It was pretty impressive. You heard me. You got my message. I told you to do that for me as well, right?
I did not hear that part, Skipper.
It was impressive, Chris. You publicly went out there, told us all what you were doing, and it worked. And I think you're looking at a 7 or 8 or 9 bag return on what you did. It was pretty impressive.
Well, we got my partner Yara a 9.5 bagger on one of hers, although to be clear, those are not, I had about 9.5 years of feeling like the Washington Generals prior to that. So easier said than done, but again.
Line squirrel, Chris. Line squirrel.
Well, I'll tell you what, at the end of the day, and we talked about a whole bunch of stuff today, and, but still underlying it all, because the COMEX tells us nothing. And the shares, they've become derivatives of the COMEX price, and really what changes the COMEX price, what I look for anyways, the clues underneath the surface, and
thanks for filling
I
in.
think that's what
getting
this.
some direct
That's what
access
this whole. Yeah, man, that's what this whole talk was about. I mean, today was different than anything we've ever done, and I think it's not just about buying precious metals for the money side of it. To me, it's a whole lot bigger, and I don't know. I think that those things are important to talk about once in a while also, Chris. So thanks for letting me chat with you about it. And it's fun to get it off my chest because, just because I talk to people all day long about this doesn't mean I don't feel the same frustrations everyone else does. I'm sure many of your listeners face it more than I do, in that they don't have people in their lives who feel the same way they do. It's a lonely existence. But it's nice to be able to get it off your chest, and I've always enjoyed our conversations, Chris. It's whether they're offline or on. It's nice to be able to vent once in a while. So, I welcome the discourse and the intriguing conversation anytime. So, thanks for letting me come back and do this. And and by the way, the precious metals thing's important too. So, but I'll be here when you need me. I'll look forward to chatting with you online again next week. But in the meantime, stay well. God bless this country. God bless you and everyone else out there. Have a good afternoon.
Yeah, and I'm honored to have found out that Donald Trump once called central bankers boneheads, that we got to share that. And next week, we'll tune back in, everybody, as we dig into how the boneheads at the Fed will solve racial inequality and climate change with future rounds of quantitative easing. And with that said, we'll see you again soon.
Worried about the national debt? Inflation concerns keeping you up at night? Looking for ways to preserve your wealth but don't know where to begin? Well, good news. By reading The Big Silver Short, you can learn about the wonders and complexities of the silver market and why it's the most undervalued hard asset out there.
Silver is a place to be. Gold's important as well, but between the two metals, the most leverage to the upside and downside is the silver market.
Find out how Wall Street banks have left the silver market in place for the short squeeze of a lifetime as Chris Marcus of Arcadia Economics interviews leading silver experts, including former CFTC Commissioner Bart Chilton.
In silver and soybeans and oil, there's never enough physical to back up all of the futures contracts. Never is.
See why people are calling The Big Silver Short a must-read for silver investors and a groundbreaking book on the massive short position in the silver futures market.
Chris has done more for silver in that part of the precious metals market than anybody.
Click on the link below to order your copy of The Big Silver Short in paperback, audiobook, or Kindle now.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a Friday morning here in Inauguration Week, January 22nd. And probably you woke up to a silver price much lower than when you went to sleep last night. And this is just going to be a quick video on this one, but let's take a look. Here we have the silver chart. It's rebounding a bit. As you can see, let's call it 25.60, right around there. I mean, it started dropping last night. Let's say that it will ballpark 25.90-ish, let's say, and then drop below 25.60. So almost a 90 cents peak to trough. I got that right. Rebounding, let's see, a good 40-cent rebound. I think it was 88 cents when I woke up and took a look at it. Learning not to do that first thing while still in bed. Issue I have. But anyway, why I thought this would be relevant is that in case you were searching for the news, wondering what happened that would account for such a vicious sell-off in silver. So let's take a look at gold as well. I have my key bookmarks to silver chart first, but you see same move in gold. And I understand they're correlated, but as you'll find out in tonight's episode with David Stein, Kuya Silver, who actually did some studies on this, which was interesting. And he found that, it's like, and, solar panels, silver here, silver there is all well and good. But really, if you want to know what prices it, look at the correlation with gold. Although, with that said, what often drives the real peaks is when investment demand kicks up. Given that we've already had that start last year, I don't know, maybe it takes kind of like marketing. You get like base in there and then repeat it over and over. And so, I mean, if the mainstream hears about gold and silver, it's already somewhat in some of their universes, maybe not all of them. But anyway, David talks about that. Good call coming up tonight. And you see both of them down and then both rebounded. The supply and demand curve on both gold and silver, go figure. But in case you are switching to the news and reading some of the headlines, miners and metals slide as China's surging COVID cases prompt shutdowns. Huh? Wait a second. I'm not trying to be mean to the author here because, to be honest, I'll let you in a little secret on how these things work. Basically, my guess, I don't know Carl. I'm sure he's a good dude and smart guy, but it's like the market moves, and you're writing an article. I mean, I make the videos. I have to come up with some headline. Now, I don't know how this comes across. Maybe I'll do some research on this, but I mean, I'm always balancing. All right, A, there's on one hand, I want to get people to watch. Although B, I don't know whether this comes across or not. I spend more time than trying to make sure that things are always phrased in a way that's still not only appropriate and respectful to the truth and what's going on, but also factoring in. I know a lot of people are watching. I appreciate that people come here and watch what I'm saying and the coverage of the markets. And I don't want to be, blowing people up out there by going overboard. So to be completely honest, I usually don't share, like certain numbers of what conceivably I think that my gut tells me when this all completely unravels. So anyway, I find usually it's people who've gone to business school and have been trained a very specific way. That's really what I took from my experience at Wharton, not any great bestowing of the knowledge, but just that you're trained to think a certain way. And if you think outside that way, you usually leave Wall Street quickly and they don't want to hear it. So, I see that just in the sense where, I'm thinking COVID. Okay, let's say that China's COVID cases are surging. This prompting shutdowns. Again, I'm just remembering back to what happened last year in the metals once you had the shutdowns. And again, that's not to say that that's exactly what will happen if you had the same thing this year, but it's a sample size of one, but I don't know. At least that's what happened last year. So the idea that there would be a surge in COVID cases in China to the degree that it was causing shutdowns, if we accept that as a given in our Bayes theorem equation here, a little conditional probability for your breakfast, wouldn't that make the metals and miners go up? At least that's what happened last year. So anyway, again, I'm not trying to be critical of Seeking Alpha or the author here, which is not important, but just this is why I left Wall Street, because I saw things like this where I'm not saying this is intentionally misleading, but just that, I don't know, before I studied Austrian economics, I was usually confused and would get clobbered to things like this. So now, on the other hand, my guess is more so the reason that the gold and silver are down. Here's the silver chart. You see the volume there on the bottom below. Just, interestingly, at the exact same time that the price falls off a cliff on no news or data that I am aware of. So you can make of that what you will, but that would be my guess. I'm not saying I'm right. In fact, you know what? As a new theme here, new disclaimer, I'm completely crazy. Don't listen to anything I say. Should probably ignore this. I hunt for aliens on the weekend. I'm a big conspiracy theorist into all sorts of wacky stuff like that. Government conspiracies. I think the Fed has a history of getting both sides into the war, lodge them both in debt, then basically take assets. I read John Perkins' Confessions of an Economic Hitman, and I thought, gee, well, that sounds wild. And then I remembered watching Oliver North in Congress when I was 8 or 9 years, 10 years old, and then read about that later. I'm like, okay, wait a second. Let me see if I get this right. We have Iran, the terrorists over here. The George Bush DARE program, war on drugs over there. And somehow we're going to sell cocaine through the government, even though the Boland Amendment was passed explicitly, because they knew there are other people who knew this was happening. They knew what was going on. So they passed an amendment. Reagan lied about it. Bush lied about it. And selling weapons to Iran, cocaine to your own citizens, funding Sandinistas. And excuse me if I got any of the sides of that. But it's even hard to keep track of. Well, maybe I'll watch American Made again. Speaking of which, good news. I did find, for everyone who remembers, we were hoping to do movie night at Silverfest. Apparently Amazon has a watch party feature. So you'll have to buy your own ticket for like $3, but we can watch American Made, The Big Short, other fun stuff together. I could share it's in the other room. One of these days, I'm going to bring my book about the Bush crime family on here, because again, like I said, don't listen to anything I'm saying here. I'm a conspiracy theorist, but for any other conspiracy theorists who like, looking at some of the history behind this, for example, here, while this is definitely conspiracy theory to even suggest that the price here, instead of falling because China is shutting down, now you're completely nuts if you think that it had anything to do with this spike in volume, because obviously I'm sure some mining company at that exact moment just dumped that onto the market in physical. I'm sure they did it again here. And which would therefore be further corroborated by this clearly fictitious doctored press release that looks like it came from the CFTC, where they say JP Morgan for manipulative and deceptive conduct and spoofing that spanned at least 8 years and involved hundreds of thousands of spoof orders, and not just precious metals, but the treasury market too. So that's definitely conspiracy theory as well. Let's see if there's a CFTC press release explaining today's events. Guessing not, but let's be fair. No, I do not see that, although there's something else. What is concurrence of commissioners regarding JP Morgan Chase? Well, that should be a hoot. Let's see if there's anything entertaining in here. So presents wholly troubling. And by the way, now Gary Gensler heading the SEC, which I was thinking is an interesting resume, and would be now head of 2 agencies that managed to overlook what I think mathematically will in due time be known as the most costly financial fraud in history. And, which it's great that you have this $920 million here that, to my knowledge, has not gone to anyone in the public, but even more so that you have this, which in Bart Chilton's own words, that's what I asked him about these things. He described it as spoofing. So it sure seems like same things coming on. If you call it algo trading, either case, here's if you go to the CFTC site, there's the contact information. You're welcome to send them this video or anything else that I've done. I know, try to only be critical of well-deserving government and central banking officials. But I do stand by the things I say. I mean, not making it up. And there's also this. So, and I think sentiment is shared. A lot of people who wonder why you have that today. So anyway, you can send that there. I'm applying for their whistleblower award. And actually, you can send this into tips and complaints, which I think when this blows up in the future, maybe I'll do that too. Because if you get it on the record, I think that really increases your chances of being able to submit a claim later. Although fortunately, Andrew McGuire was on, I talked with him yesterday, and we dug into thoughts about precedent for one hedge fund that has already settled a case with JP Morgan. My school of thought is that if they were already willing to settle, now I asked a lawyer friend who says that apparently that settlement, I don't know the terms are public, but I'm sure there's some way to find out the gist of it. If you use that same argument, could you get JP Morgan to settle with you? I hope so. We'll find out. But anyway, that is what's going on there. I'm about to wrap up for now. We have John Lee coming up at 11 a.m. Eastern. He has some silver elephant news. So John will be joining us. I'm going to go hunt for some call options while the price is down. Again, by no means is that legal financial advice, and it's unsuitable for 99% of investors probably. But for folks who are looking at option trading, at least if you're making a bet on the upside, you know, certainly a better entry point today than 2 days ago. So just an alert that is going on. You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live. Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and ready for this month's Andrew McGuire call. A little bit delayed, although I have a feeling it will be well worth the wait. Certainly some exciting things happening. We had inauguration, what did or didn't happen behind the scenes. We have JP Morgan lawsuits, and we'll dig into some of those. Although, Andrew, it's a pleasure to see you again today. How are you doing, my friend?
It's great to be with you, Chris. I was just in the middle of reading my book.
I heard it's like the Gray Sports Almanac of the silver world. And I'm glad that made it over there. You got a nice signed copy, I hear.
Yeah, the shame is it cost you one of these to even post it.
Well, I guess maybe that's what I didn't get in my 20s earlier on, where you think now about the things that a piece of knowledge, you know, sometimes is worth millions of dollars, or an ounce of silver, all relative depending on how you look at it and what you can do with it, which I appreciate is what you come on and help us do each month. Before we start, I might add this episode sponsored by Miles Franklin. So if anyone's looking to buy or sell physical silver, Andrew, I know you have a crowd of institutional investors who follow you. So can always check in pricing on anything at arcadia@milesfranklin.com if you're looking for physical, which we will dig into the physical market with Andrew today. And Andrew, although I guess we're recording the day Thursday after the inauguration, and perhaps to begin the question, I got tons of them from people. I know you got the same one. All right, Trump came, went, nothing happened. Deep state's still in there. The manipulation is going to go on forever. We're all screwed. We should put our heads in the sand. It's over and give up, and all those other uplifting sentiments. But what would you say to folks who are feeling that way today?
I'd say, look, we're going to tell you why that's going to be in the history book, and why this will be a history book in no time at all. And I think there's so many questions. Yeah, we fielded a lot, and if there's anything I miss here, but let's kind of go. What I'd like to do, Chris, is, because each time we do an episode, then we need to pick up the various threads from our last interview. And I know because since then there's been questions about some of the things we talked about, and I think the first place to start, because this is the
month and a half ago, you never know what felonies JP Morgan's committed since then.
Well, I mean, hour by hour, we have to. Sometimes
we'd have to make it a daily show to keep up.
Well, that would be fun. But I guess really the immediate place where we should start is because, I mean, new year action. I mean, come on, you know, we need to put that into context with a larger picture because so it's probably best perhaps to start by getting right into the weeds, as this is where most of the questions I've been receiving kind of revolve around there. And then we'll look at what to expect medium and long term for both gold and silver, with a particular focus on the end of the second quarter, which is important, and where we expect the culmination of a deeply, fundamentally and technical oversold $500 rally in gold and at least a $10 to $12 initial rally in silver. Now, once that rally starts, though, it's going to take no prisoners. But now this is going to culminate with the implementation really of Basel III rules. And we're going to pick up that thread in a mo. But more immediately, drilling down into the action as we move through, which is, gosh, this is the third week of 2021. Chris, I can't believe it. But I mean, in the first 2 weeks, we saw some amazingly counterintuitive action. And it can be summed up really quite simply as a flush of fresh spec longs who jumped into gold and silver future contract naked long, utilizing money borrowed from the criminal market-making insiders, which we call the house, of course, and that left a large vulnerable gap to fill right back into the exact December 15th rally points in both gold and silver futures. So it's important to know this is not all hell broken loose. This is a simple technical retracement. In fact, it's bullish. Now, let's not forget, this rally actually commenced from the rally into New Year. It commenced right from the mid-December stair step. And really, if you think about it, most institutional money had squared the books by the 15th of December, ahead of what was really a very thinly traded Christmas holiday. Now, from a wholesale market perspective, witnessing the gap open on the first trading of January had us really cautious that this gap would be technically closed before the physical market could catch up. Because if they hadn't done something about this, the insiders, the house hadn't done something about this, the physical market would have adjusted to this price. So it had to be slammed down. And so basically, especially if you think about it, I mean, we're conditioned to these things, and everyone that's on your show knows these things. When you get upcoming Fed events, and there were two in the first week, there was FOMC and non-farm payrolls, both which have been historically heavy for gold and silver. But this 3-week New Year retracement event ran into very strong institutional buying, which is still present in central bank and sovereign size at this mid-December closing level. It's important to understand that because that is a solid stair step. Now, if you remember, that was 24.5 silver, around 18.20 in gold. So these are levels that will never, ever be breached. Now, this gain pullback offered up a huge opportunity to pick up cheap bullion, currently valued by all the first-tier banks and liquidity providers, everyone we speak to, at, well, really close to $500 below fair value. And when I say fair value, I'm talking about a fair value derived from paper market dilution. Now, footprints make it clear that it was the Bank of International Settlements, the BIS, who was behind the selling, and with a very good idea why. And how do we know this was an officially sanctioned sell-off? It's easy, because the stage sell ignition orders laid at each of the full set of moving averages, they massively exceeded intraday position limits that are allowed. Now, given increased regulatory scrutiny and large fines evident for regulatory breaches, not a single market-making bullion bank would dare to exceed position limits without a free pass. Now, it was so blatantly obvious that the spurious timing and size of these New Year sell ignitions grossly exceeded position limits. It's as simple as that. But officials, if you think about it, they openly admit intervening in all the foreign exchange currencies of course, which include gold and silver, as they are, and also the primary dealers that operate for the officials are exempt from if CFTC imposed CME position limits in the directly related gold and silver futures markets. Obviously, if they're operating in the foreign exchange market, they're also operating in the futures market. And it's often forgotten, though, that gold and silver trade as a foreign exchange cross. Now, these positions are either long dollar, short gold, or long gold, short dollar. And to give an idea of scale, over-the-counter gold versus the dollar constitutes over a $15 trillion a year market. Now, aside from the fact that only insiders acting as agents for officials would be naked short ahead of a node intervention, not a single first, second tier bullion bank or any trading desk for that matter is naked short gold or silver for their own book following the EFP blow up last year. Now, following hundreds of millions of losses after the March 23rd debacle, no compliance officer would allow it. And we know this firsthand. So basically, essentially, as we partly evidence, as you will evidence by tomorrow's grossly delayed COT report, you're going to see, just like the footprints were hidden in the last Friday's deliberately delayed COT report, it's going to be seen that this was purely a house-generated PSYOPs operation to trick out the last few rinsable long specs. And we saw a hell of a lot get rinsed out. And that includes incentivizing remaining spec longs to add shorts to protect what little long open interest remains. So you never forget that they are not just short, they're going naked short, they're actually or dumping long positions. If you have, a lot of these speculators need to protect those positions because they're embedded and there's other things that relate to them that they may have borrowed against or whatever. So, but in each and every one of those situations, the insiders take the short side, and ultimately that creates an ignition to move back higher. So basically, really what we're looking at here, I mean, we're talking about a casino, aren't we? We're talking about being able to what we're actually talking about. And the reason for this, and I think we needed to tell you the reasons for this. So footprints in the over-the-counter market futures has evidenced the ejecting through this rinse of very large BIS unallocated gold positions surgically dumped into a known volume of visible futures long stops layered at and below each of these full sets of moving averages, which were targeted and rinsed. Now, it's just a simple equation. Known margin long stops, visibly sitting on the books of this house, determine how far the house can push price before delivery demands overrun what can be squared for cash. I mean, that's how a casino works. The house insiders keep 95%, the speculators keep 5%. So with specs rinsed and wrong-footed, we've probably figured it would take until inauguration volatility to settle before we started to see strong legs appear in both gold and silver futures. Now, we see this starting and continuing. So basically, as I say, given the strength, though, and the tightness for immediately deliverable supply in the physical market, and this is where we need to bring the wholesale market view in, the spot market, basically the spot market is is so strong, it is going to actually provide what we call a put under the market. Now, obviously, we've experienced a put under the market in stocks because of the Fed, but now we're looking at a put that is appearing in the market because of we're going to go through more of the reasons why this is going to happen. But essentially,
Biden green energy put. I want to get trademark name on it early.
Yeah, exactly. So, I mean, essentially, that's what you're talking about. You're talking about You're talking about a need now. The BIS is dumping unallocated positions. They're looking to get out of those positions. And basically what we're looking at here is the ability to get out of those positions before June 28th. And, you know, given the strength and tightness for immediately deliverable supply in the physical market, the spot market is going to continue to be well bid and ultimately force discipline on insiders gaming the paper market. Now, to anyone, I mean, obviously we looked at the COT report from last week's 12th of January report, and it revealed the extent, and a lot of people have looked at this, and you realize the extent of speculative wrong footing that insiders had hidden in the previous January the 5th report. I mean, it beggars belief, Chris, that in this picosecond world, the CFTC allows this CME, self-regulatory organization, to deliberately delay publishing this report for an unbelievable 3 days, despite the electronically captured data is available by the close of each business day. And to anyone doubting this, and this probably shows the fact that, of my age, but to anyone doubting this, data is available for publishing daily. And to illustrate just how rigged this COMEX casino is, now the Tokyo Stock Exchange, the TOCOM, used to publish granular data on every member with a seat on the exchange every single day, split down into exactly how many individual longs and shorts were held by each reporting bank, down to the last trade published each day, and actually published within 3 or 4 hours of the close of that day. And this is important because, you know, we were fortunate to have, before Adrian Douglas from GATA passed away, he provided a perfect example of and how this transparency at that time when that TOCOM reported was leveling the playing field. And in fact, Adrian tracked Goldman Sachs's 55,000 TOCOM short position in gold. That was in 2006, being fully unwound to a net long position at the exact period Goldman Sachs were actually covering and shouting about. They were shouting about short gold. There was foghorns everywhere. Short gold, short gold. And this entire time that they were doing that, we could evidence through the TOCOM positions that Adrian discovered that they were actually dumping their shorts. And in fact, not only did Goldman Sachs ditch this massive 55,000 short lots, they moved net long into repeated gold sell advisories. And they managed to complete it, though, interestingly, just before gold rallied strongly in 2010. Now, as you can imagine, this data is invaluable in assessing what every single market-making bank trading on the COMEX was also doing on a granular level. Now, this information enabled us to trade on a much more level playing field. That's what transparency allows you to do. And this is why the COMEX, undoubtedly assisted by the BIS, lobbied TOCOM to stop publishing this data, which they did. And by the way, it's no coincidence that Goldman Sachs and every other first-tier bank is positioned long physical gold and silver now. So basically, in summary, I mean, we can kind of sum this up. Both GC and SI evidenced the ringing of the House Register on the latest report painted data, but by design provided insiders the opportunities to cover shorts as specs at the specs expense, but to also add longs to benefit from an upcoming large revaluation in gold and silver. That's just what they did now in this first and second week in January. So basically, so before leaving the short-term view, and we'll look at the other information, but we expect ongoing volatility as unallocated contracts get closed ahead of Basel III, June 28th deadline. And again, we'll look at this deadline and how the steamroller attempt that the LBMA have been putting in play to delay the implementation, and how that's going to fail. But on the plus side, we also evidence bullion prices, again, some $500 below fair value, being accumulated by insiders into the closing of long gold, short dollar, unallocated FX gold positions. Now, balancing this is, of course, a very large short gold, long dollar FX position, which will need to be squared and kick into play just as the specs run out of rinsable spec futures open interest to cover into. Now, all of this is coming into play into deeply oversold futures market conditions. And this is so structurally very bullish. And I do want to pick up on Basel III thread, but let's purse foot. This is very important to put the catch-22 trade that is going to provide this massive put under the gold and silver market going forward. And this picks up on one of the threads from our last interview, the catch-22 arbitrage trade, as this also T-bones the LBMA attempts to delay the implementation of the Basel III NSFR standards. Now, we looked at this arbitrage trade in more detail last time, but this new constraint upon the House is backed up by what we're evidencing in the wholesale market, which is really important. And this is important as it is just one more of the jigsaw pieces that radically change the paper to physical game as we move into the second quarter. This is unprecedented and history making. Now, COMEX market making insiders will need to avoid triggering backwardations large enough to activate this catch-22 arbitrage trade. Now, Chris, as you probably know, Swiss refineries are backlogged for both gold and silver. We're waiting weeks. Premiums for immediate delivery are required in order to front run orders stacked for processing into an extremely backlogged refinery hopper. And of course, it's not just COVID. This is actually strong demand into the fact that there's a slowdown at the refineries. But so really, size for immediate delivery comes at a very large premium to spot. So give you an idea from a wholesale market perspective, from anything over 3 to 5 tons, we have benchmarked sufficient information to determine that this is currently commanding at a minimum 2 to 3% charged over spot. Now, that's quite a lot, and by historical standards, and we're talking 3 to 5 tons here. But larger central bank and sovereign size central bank demand commands significantly higher premiums. Now, physical cannot be magicked out of thin air. And with such large discounts to fair value, a race into physical will drive the offer to sell bullion higher. Hence, the strong sovereign and central bank spot index buying we're evidencing with the first-tier market-making bullion banks hanging on to their coattails for dear life for their own books. Now, this condition is providing this unseen, massive put under the market. Now, the tight supply and premiums for physical will govern how deep officials are willing to offer technically deliverable COMEX registered inventory for sale. Now, if it is sufficiently backwardated, it will be drawn down. And if you remember, in November, we uncovered that $40 premiums were required to pay off the 10 tons that were not held by insiders, the 10 tons that were required for delivery. So in other words, for them to not take delivery, these fully paid up COMEX long holders were settled for cash. And the reason it was $40 was it was the exact premium required to access 10 tons of bullion accessible for immediate delivery in the global market, which is pretty close to the percentages we just talked about. Now, since November, insiders have been very careful not to exceed 90 cents to $1 backwardations through the entire sell-off. Now, officials and agent insiders have avoided triggering this catch-22 arbitrage trade. And that's the sole reason the New Year sell-off failed to get more traction. And you need a minimum of $1.80 to $2 backwardation to really to trigger a physical buyer that would cover off delivery and transportation friction. So, by keeping it under that level, that is where the formula for the put sits. However, into dips if you remember last Friday's chart painting and the Monday capitulative rinse, February futures did flash dip into an actionable backwardation, which is interesting because I know there were a lot of people, and we all looked to see if anyone got filled. No one got filled. It's really important to keep in mind that, as we know, these COMEX inventories are being sought after, but they're structurally rehypothecated, and deliveries, as we know, represent little more than paper warrants shuffled among market-making insiders. And so what is notable is that on each occasion gold futures dipped into an actionable $2 backwardation, it was immediately flash covered within 1 to 2 seconds. Now, in other words, futures were brought by the house to cover. Now, it's really, really odd because it should be first in, first out. But for these guys, for nobody, I know that there are several major players sitting here ready to jump on that trade. We invited the sharks in. We went over Twitter. We went everywhere saying, come on in, guys, coming in on this trade. This is a perfect way to get yourself 2, 3, 4% over gold and be settled for cash. And you don't even have to take delivery. And so it's really strange that when you have a first in, first out, when these guys should have got filled. No one that we spoke to, and we did go and call everyone around, no one got filled. Now, so it's suspicious. Now, this disciplining effect really, though, is the sole reason gold was not able to be rinsed through the gold futures 1800 level. Round numbers are always targeted. And that was despite the downside momentum ignition into paper thin conditions. Now, so it's important to be aware of this governing factor. The game of who blinks first has changed. Insiders have no gold warrants they can convert into physical deliveries, while the house insiders in the crosshairs to deliver these warrants cannot afford to cash settle another failure to deliver. And as we said last time, the sharks are circling for another risk-free getaway. So really, the only question is, how much of the backwardated conditions were covered off by insiders and how much was auto-triggered by the catch-22 trade? Now, we know none were, that we could see, that this will become clearer by Monday ahead of the February 26th options expiry next Tuesday. But one thing for sure, the physical market actors will be seeking to capitalize on any follow-through momentum selling. So this is why the put exists. So really, this leads into Basel III and some of the most recent questions around this. And as we discussed last time, Basel III net stable funding ratio standards coming into the front burner in March will begin to devalue unallocated gold and begin to treat physical gold at very close to an equivalent cash asset. Now, given unallocated gold receives an 85% haircut, this is a game changer and leads into a clearly sanctioned gold revaluation. Now, this timing jives with 2,500 gold revaluation target assessed by most of the first-tier banks. And there's been a lot of discussion around the LBMA's attempt to halt and failing that effort, try to delay the implementation of Basel III initiative. However, most importantly, it is not the case as far as the US, Switzerland, and the EU is concerned, all of which will implement the 85% haircut on unallocated gold by June the 28th. That's a major important effect because given physical gold's fungibility and that the primary global physical trading hubs and refineries are centered in Switzerland and Europe, and that all the market-making LBMA bullion banks also have physical presence in the EU and Switzerland, like it or lump it, they will largely be exposed to these standards at the same date. Now, this will impact the hundreds of tons of unallocated gold cleared every day by the LPMCL, these member banks that are part of that clearing process, as it opens up a massive arbitrage opportunity for a physically starved market at current prices. So only a higher gold price will incentivize more bullion to be put on offer in the first place. So also, the LBMA member banks exposed to EU and Swiss compliance will not be able to shuffle paper position for settlement if it is not backed by physical, if it's moving into those jurisdictions. It's not the case right now. So there's a big change coming. And even if COVID-19 delays the full, I mean, what an excuse, really. That's absolute crock. But even if that was used as an excuse to delay the full implementation of Basel III in the UK, the cat's out of the bag. With at least a $500 gold price anticipated into the second quarter, we're going to see first-tier banks adding to their net long books. And it's already obvious that no one is naked short gold. Furthermore, way into this, the bullish wave, that the spec paper gold and silver open interest that you would need to cover into is actually running extremely thin at the same time. So these rules will extinguish and force to market any unallocated gold contracts that are not closed or squared by June 28th. UK aside, but as we've explained, UK are caught in a noose. Now, the closing of billions of dollars of unbacked unallocated gold contract is required to comply with Basel III net stable funding ratio. And this is required ahead of this, what we feel is going to be this sanctioned and very necessary gold price revaluation. And there is no coincidence that the BIS needed to implement this despite all the lobbying. Now, the action following the BIS defensive action that commenced on January the 6th has evidenced a series of consecutive fix painting exercises. Now, we evidenced this again last Friday, as we say, and given the counterintuitive paper to physical action experienced over the last 12 sessions, we're doing this on Thursday, so this is the 12th session, and really actually no 13th session, but into yesterday's capitulative attempt, we're quite certain these efforts are directly related to Basel III preparations, namely an attempt for the BIS to unload as many unallocated contracts as possible, which are directly related to large rehypothecated GLD holdings, which have to be marked to market on the deadline of June 28th. Now, Chris, this is huge. When you think about it, you remember we talked about the implausible hundreds of tons of gold and that supposedly flowed into GLD and, of course, in SLD, which is the same situation. We'll talk about that in a little while. But how much these hundreds of tons supposedly flowed in after the March debacle, we knew this had to be unallocated gold. There was nothing available for sale during this period. Swiss refiners were actually shut down and the physical market was frozen. These positions have to be allocated by June 28th. Now, this is huge because GLD, as you know, is a large, that holds supposedly a large store of physical, and we know that it's rehypothecated essentially. Now, what is key to factor in when we make trading decisions is that the race to unwind unallocated gold positions is actually a two-edged sword. So you have to think about this. The size of these unallocated over-the-counter positions are massive. So we must expect some short-term volatility. But as we've just explained, dips will continue to be jumped on, and that we see some stairs. We'll see the stair step being higher and higher. But despite these immense LBMA lobbying attempts, the refusal to allow LBMA to exempt unallocated gold from the net stable funding ratio forces a massive swathe of unallocated gold to be marked to market in a very untimely manner. Now, this, as I say, is huge opportunity to buy cheap physical gold and silver into every shallow dip, as fresh higher stair steps are now going to be sequentially anchored. And that beggars the question, what will that market price of gold and silver be into the second quarter? And the answer is refreshingly simple. It will be the price a real buyer and a real seller are fully paid for immediately deliverable physical bullion is prepared to either offer the bullion for sale or the price a buyer is willing to pay for physical. Now, it's not rocket science to understand that when unallocated gold is marked to market to square up a position, at a minimum, it requires buying 99 ounces of physical gold to square up a 100-ounce unallocated position. We're being generous here. I'm sure it's a hell of a lot worse than that. But even if the UK operations of the LBMA banks can drag their feet in implementing NSFR, the catch-22 arbitrage trader will run them over. Now, bottom line, there will be an unwind of paper-settled contracts, and the resulting price that gold will be offered for sale in dollars will be a hell of a lot higher. And between now and the end of the second quarter and the June 28th deadline, we should expect some additional volatility as unallocated contracts get closed, as the bad actors race to exit. However, countering the effect of closing unallocated positions, there are thousands of tons of spot indexed long gold foreign exchange positions which are locked into a cheap price that can and will be demanded for delivery. And with gold and silver trading at important components of the foreign exchange crosses, dollar strength has recently been weighing on spot gold and silver in the crosses against these currencies. However, countering this cheap foreign exchange price gold and silver is also evidencing strong physical demand. So very short term, this bullish driver has not fully offset the heavy foreign exchange action. We're beginning to see that now, but it will serve to underpin dips as backwardations in GC or gold futures have to be managed. And of course, silver, we'll talk about it perhaps later, but these conditions are ultimately unprecedentedly bullish for gold and silver as predatory house accounts seek to load up on physical ahead of widely anticipated at least 20% gold price rise into the end of June. And this will likely be the revaluation point, and gold will be priced in physical terms. Hallelujah.
Well, I think people are ready. Although, Andrew, what would you say if we took everything you just said, yet Silver Chris re-raised you and said, if we tack on Tuesday, apparently, we had 20 million ounces on one day allegedly deposited into the SLV and the Silver Trust. So that is the first part of this month's call with Andrew McGuire. Hope you enjoyed what you heard. I think you're going to want to stick around for the second part where we talk about how to sue JP Morgan for spoofing all over the wise investment I would assert you made when you saw what the governments around the globe were doing, and JP and the other banks decided to commit felonies in response. So we dig into that, a whole bunch of other fun stuff.
Wish you were there in 2007 betting against the housing market? How about 1999 before the dot-com bubble burst? Sick of chasing the hottest stocks or investing based on FOMO? Yeah, that shit. How about you take a good hard look where no one wants you to see? Not the banks, not the politicians, and it's something so useful and you probably never even think about it, but everyone needs it and it's insanely undervalued. Silver, that's right, and you can learn all about it from this one incredible book, The Big Silver Short. Just click the button and buy the damn book.
Welcome on in for a quick early afternoon video. As you can see by the title, is First Majestic Silver getting short squeezed today. Interesting situation, and I'm going to pull up the chart here. But looks as if First Majestic Silver could be getting short squeezed a little bit. As you can see on the silver price, certainly quite a volatile chart today. And it's interesting, was studying the option board last night. So we'll come back to that. But what I found fascinating is that a couple hours into the trading session, I look and I see First Majestic, which we'll pull a second chart up here. First Majestic's up about 80 cents. Well, everything else, silver was down. All of the mining stocks were down, which now First Majestic has come quite back in a bit. But here you see at 10:47 a.m. Up at 1490. Then over 1480 again, 1484. So it came back in, sold off quite a bit. But let's take a look here. Can see the blue line. That's the price of First Majestic. Here's where it's up 80 cents. And in the other lines, the teal is SLV. So you can see that was down. The brown line is SIL, Silver Miners Index. That was down even more. And you can see MAG Silver in the green line on the bottom. So that was a pretty consistent pattern. I would say SIL, maybe it's not perfect indication of all silver stocks, but measuring pretty much what you saw there. And my first thought was to call First Majestic as I was looking around to see if there was any news out. I didn't find anything. So I called First Majestic, talked with one of the investor relations people there. He said there was no news out. There had been a large buyer round, but what came to his mind, it looked like it could be a short squeeze. So to be clear, that is different than saying that it conclusively was a short squeeze, but that was what popped to their mind. No particular news. Did call Dave Kranzler, and he certainly thought it was a short squeeze. So now what's interesting is that if you take a look here, is that we actually recorded a call about this last Thursday, I believe it was. Here's our roundtable. What's up with the short position on the First Majestic Silver? So anyway, I don't know if somebody was watching that and decided to take action on it, but just was really interesting to see First Majestic up so much while the other miners were down. Again, obviously there's imperfect information there, so I can share with you what I saw and the feedback that I got. And by all means, that's not legal licensed trading advice. So make of that what you will. And last note, before we wrap up, again, this is going to be a quick one, although stay tuned later tonight, part 2 of Andrew Maguire coming. And that's also where that gold and silver options expiration clip that I posted last night came from. And it's interesting. Perhaps didn't get to do quite as much on this over the weekend as I might have liked, but here's the option board, if we can get that out of the way. And it was interesting because I was thinking about what Andrew said. I watched that a bunch of times, and then I looked at the option board, and certainly there are some interesting conclusions. I don't think going into it, it's completely blind. I won't say that I knew it precisely, but when I looked at what happened here, and especially I think I was looking at the option board, maybe right around here, and there are some clues that some of this would make sense, which I will be doing another option call about. And for everybody who saw the last option call or is interested in digging into this more, we're finally organizing our option group consulting program. So you can find out more about that by clicking in the link below. We'll have more details out shortly, but some of the option things and creating an area where you can get your questions answered, but also creating a network of other people that you can discuss things with, which I often find is a biggest part of any of these ventures. So a lot of good stuff on the way. So click in the link below to find out more about that. With that said, we're going to wrap up for today. But again, Andrew Maguire, part 2 coming up later. And the link to get more information about the options for metals and miners group program in the description field below. And I will see you soon.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight, part 2 of my call with Andrew Maguire, where we dig in how you can sue JP Morgan, or at least some thoughts along those lines of how you can recoup some losses. He does think some class action suits, even bigger ones, are coming. We dig into a bunch of different intriguing stuff in the silver world that I think you'll want to stay posted with. Although real quick before we start, I'd just like to let you know how this video came your way tonight. And it is thanks to our friends at Bluestone Resources. Obviously, with Joe Biden in the White House, Janet Yellen in the Treasury, and insane amounts of money printing coming soon, if you're looking for gold exposure, this is run by Jack Lundin of the Lundin family. Going to get him back on the show soon. You can see at their website, they had some nice drill results last year. So again, should gold continue to soar, as I think that it will, certainly Bluestone, a company that you want to take a look at and be aware of. There will be a video to Jack Lundin of Bluestone at the end of tonight's clip with Andrew McGuire. So just hang out. It'll be coming right your way. And with that said, here is today's call.
These conditions are ultimately unprecedentedly bullish for gold and silver as predatory house accounts seek to load up on physical ahead of widely anticipated at least 20% gold price rise into the end of June. And this will likely be the revaluation point, and gold will be priced in physical terms. Hallelujah.
Well, I think people are ready. Although, Andrew, what would you say if we took everything you just said, yet Silver Chris re-raised you and said, if we tack on, this just came over late last night from the great Nick Laird of Gold Charts Are Us. Go sign up, everybody. Gold Charts Are Us. Plug for Nick Laird. I love his service, especially because he pointed out that on Tuesday, apparently, we had 20 million ounces on one day allegedly deposited into the SLV and the Silver Trust. Although, to put that in proper context, back at the 2-year, you can see that that's not like a couple bars lying around the closet. I think that would be a one-day record. Possibly, okay, it looks like maybe there were a couple other days in the history of silver that were more, but what do you think about that one? Again, we can see here a big number they put up there, Andrew.
Yeah, I mean, silver, that's our baby, isn't it, really? And 600 tons, I mean, come on, Chris, we this is la la land. I mean, it's impossible. It's just not possible for that to be physical. It's just not available. I mean, that is as much as the entire UBS in fact, it's probably more at this point than the largest store of physical silver, which is not all for sale, but it would be sitting at UBS. That is it. There's nothing else. And that, as I say, even that 600 tons is not available. And in fact, you try and buy anything off them, and basically it's just not available at this point. And silver at the refineries, we're still looking some months out for size to complete orders. So implausible. And I think, you've raised silver. I mean, in fact, come on, let's look at this. Let's look at this, Chris. I see this now as a history book, because I think what we're looking at now is going to be all the work you've done is already encompassed in here. And I think, yeah, you can maybe add some more to it, but essentially in the rear view mirror, the timing of this book is amazing. Look, we've talked about Basel III. Silver will be a massive beneficiary of the unwind of undeliverable unallocated gold. This is an official move to revalue gold. Paper silver positions will also have to be closed. We talked about GLD. What about SLV? Totally impossible. We just talked about an impossible situation. We also remember these hundreds of tons that were flowing in, probably 200 tons a day at one point in March. It is impossible that this was physical silver. These were silver credits, as was GLD, just gold credits, i.e. unallocated positions. This is extremely bullish for silver, and why every major bullion bank is loading up on physical silver. And as a result, dips will be competitively jumped on by both good and bad actors alike. Now, it's important to also keep in mind that this SLV represents, it's important to remember, it's unallocated silver credit, not a physically deliverable price. So we're going to evidence, I mean, we're talking 100 to 1 in gold. It's probably 500 to 1 in silver. I mean, this is these are the most leveraged positions on the planet Earth. These are the banks that are valuing silver right now at $35. And I'm talking about right now at $35. Do you think they've got a single ounce for sale? No. The paper positions they have that they've been controlling have simply because of position concentration, where they immediately snap up anything in the spot market that might be deliverable and put into the hopper of the refineries. Now, I think once silver closes the technical gap, and I think this is an important level, because I know from a wholesale market perspective, I know that a lot of the first tier banks are looking at this. You get above 26,225. You're going to see a gap close pretty close to $35. Look, it's going to take no prisoners once you get there either, because it's going to be $50 pretty soon after that. As soon as we see $30, it's going to suck in a massive amount of sideline money, which is going to compete with these insiders who have a very long physical gold position, the silver position. Now, as I say, we're 100% certain that these actors you're talking about are filling their boots with all the physical silver they can, and they are busy taking delivery of all physical silver on offer so deep below this fair value. It's just a no-brainer. 25 silver, give me a break. I mean, the upside profits, even in the March contract, are huge. In fact, you're an OPEX guy, right? You understand, but you're an OPEX trader. You understand the options market. And you only have to take a look at the structure. It's so blatantly obvious that the House at no point needed a price, a sub 25 silver price. And if it had, that would have moved into backwardation, potentially putting SI in the crosshairs of even larger size delivery. Look, we're not alone in seeing dips in silver as an actionable physical buy.
Well, I appreciate that. And actually, we'll come back to options in a moment. As I know you mentioned, I've been lazy and forgetting each month to look at the option board before option expiration. But this month, I want to be ready. So perhaps we can dig into what we can ascertain leading up to that. But something I'm so excited about, I can't even wait any longer. So here we have criminal enterprise, JP Morgan. And in terms of, all right, maybe we can or can't affect the silver price by just letting investors know that the banks are running a Ponzi scheme that's set up for the inverse of It's a Wonderful Life, which we'll leave that aside. But what we can perhaps influence is the legal process here. Now, one thing I'll throw out there to begin, I forget who it was I was talking that mentioned this, but saying something to the effect that JP Morgan will never go, it may have been you even, that they'll never go to a courtroom because they'd be subject to the discovery process, and God knows what else you would find in there.
Yeah.
So you take that a step further, but here's what catches my eye. JP Morgan settles lawsuit that accused firm of spoofing precious metals. All right. So the suit by Daniel Shack. Any chance you've been in contact with him or have ever met him, Andrew?
No, I haven't personally, no.
Well, I'm going to see if we can get in touch. I'd love to talk with him because here, settles lawsuit. That's an interesting precedent because while this article does not say exactly what the settlement was, basically, these guys went to JP Morgan, said something, and JP Morgan said, here is your check. I've asked a couple legal friends, or maybe there's a lawyer watching in the crowd tonight, but basically, 3 plaintiffs had accused JP Morgan, and by the way, long denied, JP Morgan, which declined to comment, has long denied engaging in spoofing. So basically, this sets a precedent that anything JP Morgan ever says is at least worthy of further examination. But again, down here, these guys went with some case. They got an agreement. So based on what you know and have seen, I know there's a couple suits out there, but what's the next step? I'm welcome, happy to spearhead something or at least pass along information. But for the people who were stolen from, what do you know there?
Well, I think that, look, what you've just really drawn attention to is the fact that somebody has gone and lifted the lid enough to spook them to want to settle. Now, I think that there, as we said before, there is no reason that an infinite number of class action suits could not be sprung up at this point. You've got enough here that any good lawyer could put together a class. And there's enough people who've been rinsed over the years to join that class. And ordinarily, you would maybe get 10, 20 cents if you were lucky on the dollar, and the lawyers get rich. In this instance, you've got admissions of criminal, well, you've got the regulators talking about criminal organizations, and it's going to be very difficult. And I think in each and every case, I think you'd find a settlement before you even got to the court steps. Because, as you say, it's this discovery process. You cannot, in a court, the forcing of that discovery process would lift the lid on not just spoofing, it would lift the lid on the kind of evidence that we're providing, which was, this is where the gold price, silver price will be on the next day. So really, it's a question of, I hope somebody is watching this and sees the potential. A good lawyer could easily put this together, and you would instantly have enough subscribers to come in on that, participants to come in on that class. And it really, in this case, because it would probably be settled without many legal fees at all, I think a series would have to be, probably non-disclosure clauses would be put on, but there'd be a range of settlements popping up. And each one would not be revealed, but there'll be a lot of them. None of them will ever get to court. They have to be settled. However, this bank can make $1 billion in a trading day. So perhaps not in gold and silver anymore. Again, now we've got this situation, this put under the market, and to me, that's never been there before. It never ever been there before, and it's only because they've screwed themselves by making themselves a physical, pretending to be a physical market, and people simply coming and saying, "Well, I can't get it from a refinery. I'll come and get it from you. You better know." So they can't price it at that price. So this is the only condition. We've never seen this condition in the history of the COMEX before. It wasn't designed as a delivery market, but it's kind of got themselves in the squeeze now, and the COMEX will be grossly affected, hugely affected by Basel III rules too, because obviously you can't have a spot price that is different, a physical price that is different to the futures price. And so the spot price will have to be, because we're having unallocated contracts converted into physical, so the spot price will be a physical price, and all of a sudden you've got to have exactly the same price in the COMEX. So it's really, and the over-the-counter market is 10 times larger than the COMEX. I think we have a solution here. I think these guys are running for the hills. But I think for those people that have been hurt, and to recap many of the things that went on in here, should go and get a settlement out of these guys. In fact, they've got their arms out saying, just let us write you that check, because we can't let you look under the cover. And I'm sure there's, unless somebody refuses to actually accept that and continue just for the sake of getting discovery, and refuses, no matter what the size of the settlement, well then, okay, then maybe we would see that come crashing down. But I think whatever it is, start to getting into $1 billion, start getting into big money. But what I'm saying is, go grab your money back, go buy silver, and then, hey, you've won anyway. It doesn't matter. These guys are bad actors. They're criminals. There's a lot of criminals in this world. Let's move on and be positive.
Yeah, and if there are any lawyers or experts in that field watching who have some insight there, you can email at arcadia@milesfranklin.com. Last one, is there anything you can point us towards here to look at the option structure? So if we have option expiration come in next Tuesday,
yeah,
I want to be ready for this one. So what can we look at that can give us any insight into which way the price is going to be rigged? And I might add, just before I turn it over to you, that this isn't my opinion, and I actually have some weird hobbies. I actually read some of those settlements where the former JP Morgan traders confessed, and in one of them, they talked about front running the options, driving it. Basically, they're selling insurance policy and then lying about the fact the house is on fire. But how can we outgame the spoofers next week? And again, not legal financial trading advice, just
no, exactly. But I think what it tells us at this point, what it tells us, and again, we'll know even more on Monday, but what it tells us at this point is that for silver in particular, as I say, at no point has the options market suggested sub 25 is going to be beneficial for the insiders. It is really, I think 26 right now looks more magnetic. But I think it's going to be difficult because you're only talking about 3 trading sessions away, and then but silver, as you know, has at no point since March moved into backwardation. It is running at up to 30 cents. Currently 10 to 12 is about never drops below 8 or 9 cents contango. And the reason is because it has become the market. And I think what they're trying to avoid is any form of backwardation to be attacked. So to me, the option structure, I don't know if you see the same as me, but I see right now, really 26 is more magnetic. 25, they really don't need it below 25. In fact, I think it would actually not behove them to have it below 25, simply because there's a lot of wholesale interest that in the spot market that would be competing against them. And I think that we further out the curve, we're seeing some lightening up of positions all the way up into 30, seeing some lightening up of resistance. So I think we're at an interesting point here. I'm not telling everyone go out and buy silver or buy the dip, or I'm not saying any of that. But what I'm saying is it would not suit insiders to have it below that level.
All right. Well, we'll look forward to the fireworks next week. Andrew, and wrapping up, any updates with Kinesis? How are things coming along? Things people should know?
Yeah, look, I would actually, in fact, Tom Coughlin, CEO, just gave a really good update on Kinesis. I really would invite everyone to hop on the Kinesis website and catch up with the Kinesis 2020 year-end update and pretty much what to expect. I mean, if you look at that, some of the detail there, and I think if you scroll up to page 12, I think you're going to see, look at the increase in trading volume. And I think you're going to see, look at that. I mean, we're talking in the region of over 360 million traded just in December. It's really catching on. Digitizing gold. I mean, everyone's talking about Bitcoin, everyone's talking about cryptos, but really when you're talking about digital gold, you're kind of attracting the people. It's not a crypto. It's what it is just digitized gold, not just digitized gold trading on the blockchain. So obviously, and if you're sharing the yield of those transactions, it's going to attract a lot of institutional interest as well as everyday interest from people. So, I mean, we're talking about the report. If you look at Tom's update, we're looking at the release of the virtual Kinesis Visa card. There's the iOS and Android mobile applications, new platform interfaces, the new Mint integration into the platform. These functions are becoming simpler and simpler. We've had massive back-end development in the EU and the UK banking card program, the Indonesia projects. banking integrations, which you're going to hear a lot about soon. You'll soon be able to trade Kinesis in almost every single currency seamlessly. Look, there's so much more. I mean, really, I just want people to come and join us on this journey, because it's not going to cost you anything, and yet you can just use this as a payment system. So please go and have a look, and come and be part of the solution, because we are all part of the solution.
How are we looking in the U.S.? I know they stick silly regulation everywhere. And I know you guys have spent a lot of time digging through the damage that government does. So how's that looking right now?
Well, I think really there's nothing to stop this being a full global currency. I don't see any obstacles along that route. We are KYC'd. We are. I mean, we've got the wind at our backs in this situation, because we are actually we adhere to regulations. And really, but all we're doing here is providing an alternate monetary system to the fiat system, and also at the same time having 5,000-year-old gold. Equally the even more ancient silver, backing each and every transaction, backing and having that gold and silver in your name. Sometimes I know that some of my family members here keep buying KO. They never spend it, but I think it's important that you do actually use the system and then share in that system, because your bullion that you own is never going anywhere. If you can draw that bullion down at any time, it sits in the vault. So, it's something, I think, to understand how it all works, just have to hop on, and there's people there will answer your questions. Any granular questions you've got could be answered live on chat.
Thank you again for sharing this update on gold and silver. Folks at home, go contact your lawyers so we can sue JP Morgan, have a big party, and we'll look forward to doing this again next week.
And take this book with you when you go.
Yeah. Well, I thank you. Thank you for being a part of that one, Andrew. And if anybody does want to pick up the book, link in the description field below, available in audio and paperback. And Andrew, with that said, I guess since we were a little bit late this month, who knows which felonies JP Morgan will commit by your next appearance in about 2 weeks. So thank you for being here, and we'll catch up soon.
I think there's going to be a scramble. It's going to be exciting. Thanks, Chris. And I look forward to the next one.
Worried about the national debt? Inflation concerns keeping you up at night? Looking for ways to preserve your wealth but don't know where to begin? Well, good news. By reading The Big Silver Short, you can learn about the wonders and complexities of the silver market and why it's the most undervalued hard asset out there.
Silver is a place to be. Gold's important as well, but between the two metals, the most leverage to the upside and downside is the silver market.
Find out how Wall Street banks have left the silver market in place for the short squeeze of a lifetime as Chris Marcus of Arcadia Economics interviews leading silver experts, including former CFTC Commissioner Bart Chilton.
In silver and soybeans and oil, there's never enough physical to back up all of the futures contracts. Never is.
See why people are calling The Big Silver Short a must-read for silver investors and a groundbreaking book on the massive short position in the silver futures market.
Chris has done more for silver in that part of the precious metals market than anybody.
Click on the link below to order your copy of The Big Silver Short in paperback, audiobook, or Kindle now.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome on into the show. We have a midday matinee today where we are going to discuss whether there will be a failure on the COMEX this year. Fortunately, I am joined by two great COMEX experts, analysts, and certainly in an interesting time in the world, a lot to dig into. So real quick to welcome our friends in here. Rafi Farber of the Endgame Investor. How are you today, sir?
I'm pretty good considering I'm on a complete lockdown, but things could be a lot worse.
Well, I guess that's fortunate for us because you have plenty of time to dig into the COMEX on a level that I think is really hard to find elsewhere. maybe if there's one other source, at least in the galaxy, it would be our friend Rob Keens of goldsilverpros.com. And also, Rob, I hear you have a conference this Thursday with not what's going wrong, but some actual solutions. Is that right?
That's right. We got a conference called Solutions 2021. It'll be this Thursday. So I guess 2 days from now. And I'll be hosting yourself as well as many other guest speakers, 11 a.m. to 9 p.m. Central Standard Time. It's free registration. And Chris, if you'll just include the link in the description.
Yeah, that link is in there. And Yara, perhaps you can put that in the chat so folks can get access to the conference. I'm looking forward to it. And one last note before we dig into all the wild things happening on the COMEX, but we do have a sponsor for today's show, which is Bluestone Resources. Jack Lundin, who you've seen on the show before, and is advancing their Cerro Blanco gold project. And here they were announcing that basically they did a project readiness update, thorough and extensive review of the current mine plan, engineering, flow sheet, capital, and operating costs, along with the execution strategy. And Rob, I know you're familiar with Bluestone. In fact, when I first heard about them, I asked you, you want to give a quick recap of the news they have here today?
Yeah, so this is basically their 2020 highlights. So they have opened a $30 million credit facility with Natixis, which allows them money for exploration and to kind of takes away the uncertainty around where they're going to get their financing, which is so key to the explorers. They got their financing secured. They can use as much or little as they needed that. Jack Lundin was appointed as a CEO into the board of directors, which is big because the Lundins are really, really big mining family, serially successful, get involved in a lot of good projects. And when somebody like that signs on to your company, you know you're doing very well. They did a lot of optimization. They did their studies, engineering assessments for their project, 92 million equity financing, of course, for the company. Completed basic engineering, but probably the part that investors really want to hear the most is they completed 15,000 meters of infill drilling. Infill drilling is a type of drilling that you do on a mine to tell exactly how good your resource is. So you start doing your dispersed drilling to see where the resource is. You infill to see, okay, how much resource do we actually have? And it's highlighted here by 1,380 grams of ton gold and 2,194 grams of ton silver at one of their intercepts, which is astounding. Those are bonanza grades, beyond bonanza grades on both fronts. So it's going to be a good gold, silver exploration company. And because of their success this year, it looks like their profile just got upgraded. So this definitely is one that your viewers may want to take a look at.
Well, appreciate that, Rob. Again, you can find out more at bluestoneresources.ca. And with that said, for the question of the day, and Rafi, let's start with you. We'll just throw it right out there. I mean, we've heard people talk about it for years. The events are seemingly building. You're one of the people writing about it. So do you think we're going to see some sort of break in the COMEX this year?
Well, when we say break in the COMEX, we're probably talking about something like the gold shorts are unable to deliver on the gold that they promised to deliver, or something like that. Right? But people conceptualize it as in like if the COMEX fails, then the dollar fails. But I see it the other way around. I mean, the question, will the COMEX fail, is more of a question, will the dollar fail? The reason I say that is that the only reason that a massive amount of futures traders or a massive amount of institutional investors would want to deliver on physical gold and actually have it is because the dollar is failing. That's why they would want monetary gold. So if we were going to get like a flood of physical demand like that and stands for delivery, in in the hundreds of thousands until it clears out the COMEX, the dollar would have to already be significantly, obviously on its deathbed, like let's say inflation 10% a year or 15% a year, and then it becoming obvious that these debts can't be sustained anymore. So then everyone would go to the COMEX and say, yeah, give me the gold and take the dollars and let's just get out of here. So yeah, a dollar failure would probably cause a COMEX failure. But if the dollar is still functional in some way as a money, then I don't see it happening. So the question really is the dollar going to fail this year? And it could very well happen. especially if food prices start to rise very fast and the CPI finagling that they do is no longer believed.
Yeah, I think that's a great way of phrasing it. And Rob, what do you think about that?
So the COMEX acts as the futures market for most of the world. You have the LBMA, which is really sort of an OTC, unallocated gold market. So if you're wanting to trade futures, most people go to the COMEX to do that. And it's sort of the center of it. So it's not really a great physical delivery market. However, there have been healthy deliveries on it this year. In fact, I think we had more deliveries on COMEX this year than we've ever had. Rafi did a really good job in his Endgame Investor newsletter of talking about a particular phenomenon that started to occur a couple of months ago. And that was that people were using the COMEX for spot delivery, meaning in a futures market, you'll take a futures contract. If you want to actually take delivery of the gold, these sellers will say, okay, we have gold to deliver, and the longs will take that physical delivery. But that occurs a small percentage of the time. But typically that while the longs will declare their intent to take delivery on the month of delivery, the futures positions are set up ahead of time. What's been happening the last 4 or 5 months, Rafi, correct me if I'm wrong, people have been coming into the COMEX and been taking what he calls spot delivery, what other people have been calling the shadow contracts. And that's essentially they're coming into the market, they're presenting a futures position, they're taking delivery of that gold almost immediately within a few days, because it does take a couple of days on the COMEX to facilitate that transaction. So now you were getting, for several months, a lot of physical gold pulled off the COMEX, when traditionally it's heavily dominated by the paper trading, the paper side of the market. Then we started to notice at the end of 2020 and going into 2021 that had slowed down. December, we expect to be a really big delivery month, and it was fairly robust in gold and silver, but it had started to slow down in the precious metals. And then we saw the EFPs kick up. The EFP is an exchange for physical. It's where you take like a COMEX future position, you go over to like the London market and you do your physical that way. So some of the physical delivery that had started to occur on COMEX looks like it's been shifted over to London. So people are going back to London to get their physical gold. So there's all sorts of uncertainty and questions around, what happened there? Why did people go to COMEX to pull a lot of delivery, more than we have that I've seen in recent memory in a given year on a market, which is really a futures market. And then why all of a sudden did that stop and it started to shift back to London, to the LBMA? It's very curious. I think it shows maybe some signs of distress in the inventory numbers. One thing I talked about on my show, I want to say last night, and then also we've been talking on it the last few weeks especially, is there are ounces coming out of the registered category, which are the one tied to the actual deliveries, and going into eligible, which is basically just gold storage. So people are using the COMEX vaults for gold storage. They're not necessarily using it for delivery of the physical as much as they were in 2020. So we'll have to see that trend. Now, why I bring that up is because if the COMEX runs out of physical, while it is a futures market, it would affect their credibility to be able to deliver the metal. And all you're doing is trading paper on this market, and it's just a bet on gold one way or the other, then it shouldn't really affect the gold price, and it shouldn't affect the gold market, I would advocate. So we'll have to see if those delivery patterns hold up in 2021 to see if they're really having stress in their physical inventories.
Well, Rob, we have, and Chris, we do have a big delivery date coming up on Friday. I think it starts. Right, the February contract is reaching its rollover deadline, I think on Friday, on the 29th. And then the remaining contracts in the February contracts that are open should go to delivery or otherwise settlement. So I think there's something like 125,000 left, and like 25,000 rolling over the last few days, for the last 3 days. So, I mean, at this rate, there could be about 50,000 deliveries. I think that was the May or the June record last year. But it's hard to say how many of these deliveries are actually physical gold leaving the COMEX versus how much are just delivery tags or warrants being exchanged on gold bars inside that, and everything's kept inside. So the one thing I'd point out is that one thing that we haven't seen, and you were correct about the spot deliveries. The other thing that we're seeing is that the other reportables, again, those people that are trading their own accounts, they have a lot of capital and they'd be interested in getting physical gold delivered, as opposed to the money managers or the hedge funds that don't, because they're managing other people's money. they are still holding a record position of about 170,000 contracts, which is unprecedented, and it keeps inching up month after month after month. But if these people were taking delivery, we would see their positions start to fall as the contracts close out and they actually get their delivered gold, which hasn't happened yet. So, and in the meantime, the managed money category has fallen, I think, to the lowest level since May 2019, which was when gold finally broke out of its 6-year trading range. So I think we're seeing some very bullish numbers on the COTs, and I don't think the other reporters are going to be spooked out of their positions by the bullion banks smashing the gold price any given day. I don't think that's going to happen.
Well, Rafi, you raised the key question there. I know there's been a lot of debate, rightly so, but what can we take away from these COMEX numbers? We've seen the deliveries are large, like you point out. It doesn't appear yet. I haven't been seeing much evidence of metal leaving the building. So perhaps, Rafi, you can start with you, but what can we take from that, and what does it really mean?
Well, I'm thinking, I've been pondering this question a lot because nobody really knows what's going on behind those doors. And nobody's going to answer nobody's going to answer that question straight. It's like trying to ask the chair of the Federal Reserve to, say something honestly. It's just, he has his script and that's it. So, I'm thinking, if I was a COMEX trader, why would I stand for delivery and then not take the metal? Just exchange the warrants. And maybe some of it is leaving, but it seems that the supply of registered metal goes up and down, and there's no real crisis going on yet. It seems to me maybe it's the beginning of some suspicions. Maybe they want their warrants to, or they want the right to their bars. Maybe they have an intention to take it later, or, they don't want to be stuck standing for delivery when there really is a crisis. It could be just some kind of suspicion that maybe something is off here, which was pretty obvious in March and April when, when the shutdowns first started. And then there was these huge premiums in the physical market. So I think it's just actors in the COMEX getting ready for, if they need this, they should already have the warrants in their names, and then they wouldn't be in a scramble. It's like, let's call it like COMEX preppers, maybe. They're unsure and they're being careful.
And Rob, what do you think?
So the issue, I think, with the COMEX is I think they did run out of gold earlier this year, or get really close to it, because there was a huge amount. And I don't have the chart ready for you. I wish I had. I showed this earlier on in a video. I want to say about a month, 6 weeks ago. In 2020, they came dangerously close to having no registered gold stocks. I can share that if you don't mind. I'll share a screen on that.
In a moment.
I'll talk through that, Chris, as you allow screen sharing. But so essentially, they ran dangerously low on registered inventories of gold stocks, which means those are the ones that get delivered against the contracts. So let's look at this chart from Gold Charts R Us. You can see the eligible, which is the light green, had surpassed, after the last financial crisis, had surpassed registered. Registered, this dark green, as you can see, dwindles here from the financial crisis to about 2020. Had dwindled down to almost nothing. In fact, it had touched zero, I think, 3 times and almost a 4th time. That means that nobody's putting that gold up for delivery on futures contracts. And if you don't have gold for delivery on futures contracts, you don't have gold. Again, there are 2 categories on COMEX. There's registered and eligible. If you're sticking it ineligible, it's just storage. And I think April 19th, this came out. Ronan Manley of Bullion Star was the first to document this. On April 19th, it came out that the COMEX admitted they had no clue as to how much of their eligible gold inventories could be up for delivery on a futures contract. They were guesstimating 50%, and they said, you know what, we'll move that up or down. We don't really have a clue. And the reason is because it's private investment. So the majority of the stock was right here. You can see right here, they had nearly no stock for the actual futures positions until this point. And this point occurred, I want to say, I think it's about April, if I remember correctly, I want to say around April 20th or so of last year, the registered category, this dark green, shot up, and all of a sudden there was this influx. And you can see the overall amount of gold just shoot up on the COMEX like all at once. It happened over a period of a few days. It's like they just took this massive delivery. And I don't have the next chart for you, but I have documented in my videos previous to this that most of that gold we think came from London, because in the last 5 years have been very minuscule deliveries from London to the US. A little bit here and here, but net it had been negative. More gold had flowed, east to London than had flowed west to the US. That trend reversed in April at the exact same time that the COMEX inventories exploded. And there was a massive amount of gold that came from London to the COMEX. So what I think happened, more than likely happened, or at least a large part of what happened, is that the London gold market basically bailed out the COMEX, and that's where they got their gold from.
Could be. Two things about that, Rob. The date April 20th, that was probably one of the weirdest days in modern market history. I remember, I think that was the day that oil went to like negative $35 a barrel, and everything was just getting mixed up, and nobody knew what was going on. The other thing I wanted to mention is that I had looked at gold import statistics around that time, and you might be right about London, but I seem to remember that I think Switzerland was also involved. Maybe London didn't have enough, or maybe London was going through Switzerland or something like that. Maybe they owned gold through the Swiss, and a lot of it was going through JFK. Most of the gold imports in April, May, and June during that quarter went through the JFK airport, which is COMEX rules. I think it has to be within 100 miles of New York City. So all that gold coming from Switzerland, maybe someone from London, was going to the COMEX. So that was a huge import boom of gold in just a few months. So yeah, it might have been an emergency.
Yeah, and Rafi, in your recent article that I'll pull up here, you also mentioned that you see something building in palladium, which gets a far less attention. So perhaps you could share what you're seeing there.
Well, palladium, I'm not a palladium expert, but I follow it along with gold and silver. They do tend to move together sometimes. So, I noticed in palladium that, I'm looking at this chart since somewhere around July, it looks like. Since July, palladium has moved within a very, very tight trading range. Something that I've never seen a coil this long. Usually when a security or a commodity coils like that, there's a very tight bid call spread. And I'm not talking about on a scale of a minute, but in a scale of weeks. Like if you reach a certain price, it's knocked down, then it gets tighter and tighter, which means there's a big fight going on in the price. And I can't figure out exactly what is special about palladium that is giving it a 27-week long coil like this. But usually when they break, they first break to one side and then they break to the other side. Usually when a coil breaks, you see it go down, sharply for a week or two and then reverse, or sometimes it goes up sharply and then reverses down. But what I think is a lot more interesting than palladium and is related to this coil could be platinum. Because platinum, I think for the first time in 21 years, first time in over 2 decades, excluding the 2008 crash, I think we have a platinum golden cross, or you could just call it a platinum cross, where the 50-day moving average, the 50-week moving average moves above the 200-week moving average, and this is the first time that's happened in 21 years in platinum, and platinum has been severely underpriced for a very long time. So I think the coil in palladium and the price action in platinum might be related. So they're both platinum group metals, and they're used for similar industrial purposes.
Yeah, will certainly be interesting, especially platinum. I believe the all-time high was 2,300-ish a week or two before Bear Stearns collapsed. JP Morgan took over and the price plummeted, which I'm sure is just a complete coincidence. But Rob, amongst other things that I'm sure mean absolutely nothing and people would be wise to throw in the conspiracy theory bucket, what do you make of this massive one-day addition to SLV and the Silver Trust? It looks like it was about 20 million ounces. Now, keep in mind, this is the weekly chart, but if you look at the one-day chart, that was the biggest one-day addition going back 2 years, 5 years. I think if we go back 10 years, we can find one day that was bigger than that. But any thoughts on what we saw last week on that one?
Yeah, so the way that's supposed to work, and if you go back to my conversation with Nick Barishev, who's president and CEO of BMG Group in Canada, runs a gold fund, and has read the authorized participant agreements for SLV and GLD. He thinks, based upon his reading of that and his understanding of the market, being a gold fund CEO, is that a lot of the gold and silver that go into the GLD and SLV are leased and they're not owned because their fees won't support them purchasing and holding that. So you can have a big influx of silver into SLV, and that may reflect some of the transactions that people, purchasing shares of the SLV, whether or not they actually have that silver or the GLD has that gold. We don't really know because there's chain of title issues, and that's endemic in the gold industry. There's no way to tell that someone holds a bar that someone else doesn't have a claim to it, really, unless you audit it end to end every holding facility and put all that together. And we know that doesn't happen. So when I see something like that, it indicates there's a lot of demand for silver. But what I really want to know is who really owns that silver. Where did it come from? So those are my questions.
Well, I think that's fair enough. And Rafi, you looked like you had something to say there, perhaps? Comment on that?
I was just recalling again what happened on April 20th with oil. When oil went to like negative $35 a barrel, and then you had this U.S. oil ETF, USO. Something happened. It stopped tracking oil. It just totally backfired. And if we can see oil go to negative $35 a barrel, and in that time, gold was also selling off, but much less than any other commodity. Gold and silver were even though they were crashing, they were much stronger than let's say oil or wheat or any of those agricultural commodities on that day. If we can see that, then we can definitely see ETFs like GLD and SLV go the other way. If physical demand for gold on a failing dollar becomes a serious issue, these ETFs are not going to help. They'll help track price, and if you want to play options or leverage to get more dollars in the meantime, they'll work for a while. But like when there's a real crisis, they're not going to do much.
Yeah, I think that makes a lot of sense. And again, you guys both talked earlier about maybe the metals happens when there's an overt fracture in the dollar. Gee, sure seems like these guys are trying their best to facilitate that. Because let's say 10 years ago, if we go back to 2011, let's say that I told you that a former Federal Reserve chairwoman was now running the Treasury, Fed balance sheet bigger than ever. God only knows what they have planned this year. But to the degree that now a former Fed chairwoman actually says this.
But right now, with interest rates at historic lows, the smartest thing we can do is act big. In the long run, I believe the benefits will far outweigh the costs, especially if we care about helping people.
Well, first of all, I'd like to applaud that eloquently placed demagogue at the end. So if you don't act big and destroy the currency and steal money from the middle class that's working, you're the bad guy. Leaving that aside, isn't this the same thing Bernanke said back in 2010? We were supposed to act big then. They've been acting bigger and bigger. They set a new record for biggest act ever last year. And now, whether there's independence, not independence, now you have Powell who's already acting big, and now the Treasury is talking about acting bigger. So, I mean, is it possible that we will see that overt Lehman-like fracture of the dollar this year? Rob, you want to take that one first?
I don't think we'll see it this year, and there's a couple of reasons why. So really quickly to address what Ms. Yellen said, she's talking about monomonetary theory. And that's, if you've looked at the amount of money supply in M0 and M1, it's basically gone hockey stick. So when you see hockey stick formation or vertical formation in monetary creation, in the past, that's always led to the death of currency. So I could see people saying, yeah, we're getting closer to that stage. However, what happened in 2020 were a bunch of shutdowns, not only in the US, but around the world. So a lot of the flow of currency, the velocity of currencies had slowed down. And I think that temporary deflation had basically saved the monetary system or extended it out just a little bit. I don't think it saved it long term, but I think it gave it more time. And I think they've already got their replacement system ready. They want to go to digital currencies. They've trademarked the digital euro. The Fed has put together FedNow, which is direct payments to people, digital format. So and the IMF has laid out this plan in 2015. I've documented this on my channel. And the BIS has concurred with this. So all these supranational groups and the central banks have all come out and said, we want to go digital. They're not ready to quite go digital yet. Their frameworks aren't completely in place. There are some issues with the current digital currencies. They've got to get those worked out. They cannot let the fiat currencies die yet. They can't let them. They're going to put them on life support as long as they can until they're ready to flip the switch. When they're ready to flip that switch, they'll let the currencies completely die. Working against that, of course, is the internet and people, social media, deciding that, hey, that's one thing. Hey, we believe that the currencies are weak, and I won't limit it to the dollar. I say the dollar, the euro, the pound, even the Chinese yuan will come under some pressure as well. All of them will. And so the people are going to start looking for alternatives. And I believe in terms specifically of the dollar, you've had all these other countries getting out of dollar denominated trade and dumping treasuries and things. So they're exiting out, but it's a fragile balance. You don't want to exit out too quick and crash it, because if China exits out of the dollar and dollar trade too quickly, they've got all those treasuries, and they don't want that to blow up in their face. So it's like people are tiptoeing around the fact that they know the dollar is going to die, while you have the Western central banks trying to keep the dollar alive just long enough to get the digital currencies out there. And it's literally a tightrope. And I don't know if they're going to be able to hold it together until they roll out the digital dollar and the digital euro and the digital yuan. I know China's leading the way in terms of digital currency. Europe is right behind, and the US is right behind. But they're trying to keep it alive. I think for an individual perspective, your hedge is gold and silver, because if something like Rafi said earlier, if the dollar dies, if we have a banking crisis, a black swan, and it ends up killing the system, and they don't have the digital currencies ready, it's going to be pandemonium. And that's where you're going to want to have your gold and silver, because that's your value. That's where you're going to survive that sort of situation.
Rafi, if I can give you just the same question, slightly different twist, is Janet Yellen, the Fed, whoever else is involved in these things, are they going to go big enough to push silver past $50 this year?
I don't know on specific price targets, but yeah, it's very possible. One thing I want to say about Janet Yellen and these people that are high up and they have a lot of power and a lot of money printing tools at their disposal. We tend to think that they have these grand plans and they know what they're doing. And this is where I part company from Rob a little bit. I see things a little bit differently. That I remember something Julian Assange said in an interview maybe 3 or 4 years ago. And he was asked something along the lines of, what's the scariest thing that you noticed in seeing all these cables and seeing all these state secrets? And what he said was like, what scared him most was that there was no organized plan to any of it. It was just a cacophonous mess of power centers that are squabbling with one another. And the right hand doesn't know what the left hand is doing. And it's just this massive bureaucratic power machine that's totally confused with itself. So I don't think there's any central plan, or if there is, there's several of them from different power centers. But I don't think any of them really know what they're doing. And I think they've drunk their own Kool-Aid so deeply that they might think that they are absolutely powerful when they're not. But something is going to slip. And I think it could be this year. And I think the focus should be on food prices, because Rob mentioned something about a velocity of circulation, right? But people need to eat. They need to eat the same amount of food they ate when they're not under lockdown. So that means that all the demand for stuff that they're not buying, all the demand for food, for let's say airline tickets, which they can't buy anymore, is going to go into stuff that they can buy, which is food, or they need to buy because they need to buy the same amount of food, whether eating at a restaurant or at home, doesn't matter. And when prices of food become obviously higher, and people see what's happening to their grocery bills, forget about the CPI. How much is it costing me to go buy food for my family for a week? I mean, they can see the numbers. They don't need the CPI to tell them this. And when it goes too high too fast, they're going to keep buying and hoarding. They're going to hoard. and they're not going to want the dollars anymore. And that's when you're going to have hyperinflation, and digital currencies are just going to make it worse, because the only thing that slowed down hyperinflation in Weimar Germany was the physical constraint on actually printing the paper money, which if it's digital currency, it's going to go even faster down the drain.
Yeah, it's like
I will disagree with that for one moment, because I think the digital currencies, now I'm not going to say the digital currencies are going to be successful. I know I've disagreed with people like Alistair McLeod on this, and he's made comments on my channel. He disagrees with this, and that's fine if he does. I believe that the cryptocurrencies left alone in the current debt system would behave exactly as Rafi said. They would die faster than the printed currency. But the problem is they're not going to implement those in the current system. That's why they're not ready to implement it yet. When you tie together negative interest rate policy, you tie together modern monetary theory, which is basically print to oblivion, and then you tie together the digital currencies. What they're going to do is they're going to negatively discount the value of your digital currency in the bank. So if we go back to whether or not there's a global plan, if you go back to the position paper released by the IMF that's still on their website in 2015, which I've written about several times, they outline the plan they think they're going to implement. Whether they're successful or not, this is their plan. When they roll out the digital currencies and try to push out cash, they're going to discount your bank account electronic dollars by a certain amount. That's negative interest rates, not in the bonds, but in the banking system. And they think that's going to allow them to control the currency in circulation. Of course, the other tool that they have is taxation as well. And that is a popular Keynesian trope, which you can take money out of circulation by taxing it. You can also discount it through people's bank accounts. Whether that system works or not is to be seen, because they've never done it before. But that is their stated plan, and it is fully outlined in about a 50-page paper in the IMF as to whether they can all implement this, because you do have different regimes. You do have different central banks. Of course, the commercial banks are involved in this as well, because they're the ones that get the money first. You know, I do think that they're squabbling over it, but I think that the world is sort of moving that direction. China has indicated they're moving that direction. The European Central Bank has indicated they're moving that direction. The US has indicated they're moving that direction. How they facilitate that, you know, that will determine how much chaos we have and whether or not this system will stick. I don't think it's going to last forever, but I think they're going to get something into place where they go those digital currencies and they try to manage it. Now, as to how well they manage it, I don't know, but that again goes back to why you want to have gold and silver. That's your backup plan, because I do think whatever happens in the fiat and the digital currencies, it's going to be very chaotic and not as smooth, you know, as we've been used to. I would say prior to the last financial crisis, leading up to 2008, it was relatively, you know, a good system with some issues here and there. As we accelerate to the end here, it's getting more chaotic. And I think when they switch over to the digital currencies, it'll get even more chaotic. And that's why I think you want to have the gold and the silver. And I'm going to keep saying that over and over. The gold and the silver is your shield, it's your protection.
Well, on that, we definitely agree.
Yeah, and I think one of the themes that you both touched on and are in agreement on that I've been thinking about a lot, where, you know, yeah, things are manipulated. Yeah, there's a lot planned in advance, but I see it more, it's like a tie game in the fourth quarter. Nobody knows how this is going to go. I don't think the story is written, which kind of makes it fun when you can actually, you know, get in there, and maybe that's what life is all about. Fellas, we have 9 minutes left, and I have a couple reader questions. So maybe we'll do a lightning round here. If we can, we'll just one person per question. If you can keep it 30 seconds or less. And also anybody watching in the chat right now, type in your questions and we'll see how many we get to. But Rob, I will toss the first one to you here again, and keep 30 seconds or less. To what extent do the manipulators have the ability to keep manipulating indefinitely?
They can try to manipulate indefinitely. Their manipulation tactics tend to work in the short run. They got to keep doing it over and over. There's a research paper I quoted months ago, written by somebody who had looked at the U.S. commodities markets for about 130 years. And I guess coined the term hammering. You hammer the markets and it keeps it down, but it comes back up. So the market will eventually overwhelm the manipulators. But in the short run, the manipulators have the advantage because they have the market data and they have the tools. So what you want to do is be long-term and outlast the manipulators.
Can I take a crack at that one?
Yeah, actually, I'll toss in a little bit. Question number 2 is similar. If the banks have unlimited funds to buy COMEX contracts and sell at will, why would they ever stop? So take it away, sir.
Yeah, well, so when we're talking about gold manipulation, let's take it from the other direction. I mean, if we were on a full gold standard, the price of gold right now, according to, in accordance with the money supply, would be something like between $18,000 and $20,000 per ounce. So the fact that it's only $18.50 or whatever it is today, that's the big manipulation. And that's because there's very little demand for gold, physical gold, as a monetary medium, except maybe for the hoarders who plan to use it as a monetary medium when the dollar collapses, and central banks who, to some degree, in some countries, back some of their money supply. So when we're trying to blame the COMEX for manipulation, it's small change compared to that big manipulation. And what's the limit? The limit is the absolute limit is the demand for gold as jewelry, which is the second biggest demand for gold. It's not monetary, it's jewelry. So if, let's say, the COMEX, let's take an extreme example, manipulated the price of gold to $100 an ounce, then you'd have all these jewelers buying as many contracts as they could and taking delivery on them, and then that would be, that they'd arbitrage it back to around where it is now. So it's really the monetary value of gold that's being suppressed, not the industrial or the jewelry use, and that's the absolute limit, and it will break.
All righty, we're going to take one from the chat here. Joey from Seattle. Rob, maybe you could field this one. Why aren't U.S. Marshals arresting the bankers?
Well, that's a good question. I've asked this for a lot of people who have been in the industry for a very, very long time, both in gold and also the financial industry. And there are a lot of laws that make a lot of what they do legal, not necessarily the spoofing aspect that people are getting fined for, but a lot of the malfeasance that occurred in 2000, 2009 was legalized. Is it lawful from a constitutional sense? No, certainly not when the government's involved. But from a statutory sense, when they make laws that allow them to do things. I'll give you an example. FASB 56 is an accounting rule that was passed by the Financial Accounting Standards Board, I believe, which allows the government to go dark. They can report whatever number they want on their financial statements, and it does not have to be true in aggregate or each individual transaction. So there's now two books from the government. There's the transparent books that they don't show you, or the books that are real, and then there's the books that they're going to give you. So they can spend any money amount they want. Of course, Dr. Mark Skidmore from Michigan State University, Catherine Austin Fitts, former Assistant Secretary of HUD, documented what was 21 trillion in missing money is now 50 trillion. And now we don't even know what the next number is going to be because they went dark with FASB 56. Those are legal constructs which allow them to do it. Now, are those a violation of the Constitution and the requirement that the government is transparent with their finances? Yes, but until somebody takes that to the Supreme Court, it is what it is. And so you're not going to get that transparency in the spend, and they're not going to go to jail because they have a piece of paper that says that they can do that.
All righty. Number 3 on the list here of 4. Why are gold and silver markets on COMEX allowed to trade what seems to be 100 paper ounces for every actual ounce when other commodities are traded at a much smaller ratio? I'll take a quick comment on that. I don't think it's that the other ones aren't allowed to. And when I've looked at this, most commodities seems to be the same thing, just to varying extents. Rafi, do you have a quick comment on that one?
Well, I would say that banking cartels have a vested interest in keeping the gold and silver price down, because if it goes too high, their money is sick. But they're not going to. Farmers are going to be the ones that are trading wheat and oat futures, and they're going to be trying to hedge their bets. So the banks aren't going to try to manipulate that so much with their money, but gold and silver they will, because that's their business. Whether they know that consciously or not, I'm not sure, but I think they realize it, and which is why they're in there and they're dumping contracts. But even so, it's really small change compared to the real manipulation, which is gold should be $20,000 an ounce if you're on a gold standard. That's the big issue.
Well, it'll be wild to see whenever this stuff finally does lose their grasp of control, what numbers we get. My gut tells me they'll be bigger than I think. But anyway, we'll leave that there. And in the chat room, I don't know if you guys are watching this, but apparently Bob Hunter is on fire. So Bob, for you, I will ask Rob, what do you call a sheep that is religious?
Don't have a clue.
A Baptist, says Bob Hunter. So thank you, Bob, for lightening it up for anyone who's not feeling the silver price today. Although we'll do one last serious one before we wrap up here. Perfect question. What do you think will be the trigger when the banks, BIS, finally stop the manipulation? Will this be their choice, or will they be forced by a change in market conditions outside of their control? If the latter, what would that be? I'll go first on that one. I think they'll eventually just lose control. You guys touched on it before, where you got to remember, it's like the banker, it's kind of like that CIA gangster goon mafia mindset, but like when things go bad and they start turning on each other, and you're not dealing with people who are looking out for each other's interests. So I think the greed ultimately implodes upon itself, and one day you have a break when someone shows up for metal that they can't deliver. But quick thoughts on that one, Rafi?
I think it's food prices. It goes back to that, because once people can't eat enough food, what's financing all these lockdowns and why aren't people rioting in the streets is because you keep giving them checks and they can still buy food with it. But at some point that's going to stop, and people aren't going to have enough food, and they're going to get angry. And that's when this whole system falls apart. You need to give the masses their bread and their circuses. Right now we have, their dollars and their Netflix. That's what keeps everyone calm. But that's not going to last forever. And when people get angry, they will go out to the streets, and the entire system will be under basic threat, and they'll be forced to back the money, because otherwise the division of labor will break down. You can't have that.
Yep. Rob?
I kind of agree with both of you, Chris. I think it is kind of like the mafia. There are Eastern, Western, different institutions that are vying for power. Certainly China's wanting to rise now, and looks like they have the economy to do it. They've just been going gangbusters in a lot of ways. Of course, they have their own issues with their own banking system and some of their state-owned entities. But it is like different, mafioso families fighting each other for dominance. But the one thing that they agree on is that they need to control the markets and control the masses. And I do think the one thing that will end up breaking that, as Rafi said, is going to be shortages in food supplies, and where people can't feed their children. Because if you're a parent and you can't feed your child, you're going to do what you have to do. There's nothing that's going to stop you. And certainly we've seen that in some less fortunate countries, including one my wife came from in Cambodia, where the communists tried to basically subject them, and the people eventually, with the help of the Americans, of course, they eventually fought back. So I do think that we're in for a little bit harder times. And so beyond the gold and silver, you want to look for food security as well. That's a really good point by Rafi. But the whole world's not going to be able to do this. And so I think when it's going to go way beyond what we saw in the States. It's not going to be political. It's going to be, people's ability to feed themselves and take care of their families when they're going to put pressure on the people at the top, and when that system is probably going to break.
Yeah, and Rob, one of the things that's, it was a great answer, although even better than that, I know people often, it's easy to get overwhelmed by the things that are going on. Yet, fortunately enough, you've put together Solutions 2021. So for anyone who's hearing this and saying, all right, great, I get it, money printing, this and that, but what can we actually do about it? Could you just let folks know what you're doing on Thursday?
So on Thursday, we're going to be holding our second virtual conference. The first one we held was last August. This one's going to be a single day. It is free registration for anybody. You just go to this website. It's on hoppin.com/events/solution-2021. The link is on my YouTube channel for anybody that needs it. We'll be talking through with a lot of experts, including you, Chris, on what to do when the dollar dies. That'll be my session with you. We'll be talking to Fernando Aguirre, who is a survivor of the Argentinian currency crisis. We'll be talking to a couple of different precious metals dealers. We'll be talking to Daisy Luther, who runs the gigantic website, The Organic Prepper, about other types of preparations like food, like Rafi talked about, and other ways to secure yourself in the coming chaos. And then we're going to have, as Chris is highlighting here, probably his favorite part, the after party, where for 2 hours, we're just going to sit and talk. So if you want to come express yourself, ask questions, tell people your story, come do that at the after party. I hear that Chris is going to be playing To Spring Cheese at the after party and going to be giving a concert. So look forward to that.
I not know that was on the schedule, but we'll see how all that shakes out. And Rafi, so people can be prepared. I know Rob has one of the smarter conferences around, but one of the ways you could be up to date is going to the Endgame Investor. And if you could let folks know what they get there.
I do a daily market commentary with an extra with an extra oomph on the weekends, weekend review. I review COMEX numbers. I review, issues of backwardation and contango. We go through the technicals and we go through the fundamentals. And I also very closely follow the bond market. This was my last letter that I sent to subscribers, so you get a little idea of what I write. And so I have some good emphasis on the actual primary markets in U.S. Treasuries and how much has to be sold per auction now that the federal deficit is like $5.3 trillion. And we go through the math. Like-minded people, if you're on lockdown or you can't leave your house, it's just good to talk to people with common sense, which is why I'm so glad to speak with you, Chris, and with Rob. And, it's not easy on lockdown, and common sense might be the only more commodity that's rarer than gold these days in so many ways. It's good to talk to people like you, and join us join my newsletter if you want to see what I'm writing for a 2-week free trial, no charge, and see what I'm doing.
Yeah, and I'm glad I just saw this because we talked with Andrew McGuire the other day about COMEX options expiration, which is today. And I'd love to discuss this further. We're actually opening an options club here at Arcadia, so it'll be great to maybe we can get you involved there, because I think that's one of the times where there are some clues of what might happen, and perhaps we'll dig into that in a future episode of the show. So thank you guys again for being here. Again, the links to both of those in the description field right below. Go there, click on it, get the Endgame Investor, read that, and then come join us at the conference on Thursday. Rafi, Rob, thank you so much for being here, and it'll be fun to follow how this plays out throughout the year.
Thank you, Chris.
Thank you. Thank you, guys.
Wish you were there in 2007 betting against the housing market? How about 1999 before the dot-com bubble burst? Sick of chasing the hottest stocks or investing based on FOMO? Yeah, that shit. How about you take a good hard look where no one wants you to see? Not the banks, not the politicians, and it's something so useful and you probably never even think about it, but everyone needs it and it's insanely undervalued. Silver, that's right, and you can learn all about it from this one incredible book, The Big Silver Short. Just click the button and buy the damn book.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Welcome on in. An exciting day in the silver market, financial markets in general. Fed meeting coming up in just about an hour. We're going to be doing a live stream for that one, covering that event. Although obviously we have this GameStop situation going on. Been getting a lot of comments. Could we see something like this in silver, which we'll dig into today real quick. Our sponsor for today's video is Silver Elephant, that has some new drill results out. You can see there 4 meters grading at 393 grams per ton silver and 518 grams per ton silver equivalent. I'm going to record a separate short video where we'll go through that. It'll be coming your way in just a couple minutes. So lots going on today. And again, you can see the silver price, quite a divot. She got a little lucky, bought my options down there today. Worked out in my favor. And in between that, I've been reading comments about GameStop, which you've probably heard by now, that basically there's a group of investors on Reddit that realized there was a short position. And basically there was a big squeeze here. And what is interesting is you saw in a very short period of time, here is GameStop. Let's say there's January 11th. So 2-3 weeks ago at $19, here on the 7th, around $18. Now up to $340. People were talking about it yesterday when it was, let's see, where is yesterday's price? When it was quite a bit higher. But then you see today up $193, $194, showing what can happen when you have a short squeeze. Violent moves are possible. And as I woke up this morning, was checking some messages, and people were saying, well, what about if these same guys who were looking at this knew about what was going on in silver, which I've always thought something like that was really just a matter of time. Here is the group Wall Street Bets. I'm not a regular Reddit user, so I'm just learning on the fly as we go here, but to the degree, it's very interesting seeing what is happening here. And that was kind of what I always imagined with the book, The Big Silver Short, where we dug into this situation where it just seemed to me that it's like, there's going to be some day when people find out what's really been going on, how that comes out. I didn't even know there was a Wall Street Bets, but when you have a situation like that, eventually enough people find out and there's a break point. I don't know what that will exactly look like, but to the degree that a couple people were tweeting, sending messages on Twitter, asking if there was a particular thing I would recommend, I would say if somebody is new to the short position saga in Silverland and really wanted one specific thing that you could take a look at that I think would raise some questions that I've not been able to find the answer to. I don't know anyone in the financial world that's been able to find another answer to. And let's see if we can get that page loaded there. But there is a video. Let's see, I believe it's here. The Silver Manipulation Smoking Gun. So you can Google that or go on YouTube, which details really the bizarre sequence of events that happened in 2008 when silver was rising as banks and mortgages were failing. Then you have that Bear Stearns JP Morgan deal, which we had limited information about for a long time until Bart Chilton revealed much of what happened in that interview he did shortly before his passing. There's what the thumbnail looks like. So if you Google, hopefully you can spell a little better than I can these days, but Silver Manipulation Smoking Gun. I would say if somebody knows nothing about what's been happening, watch this one because the basic premise is that Bart Chilton, who was a commissioner during the CFTC's investigation into silver manipulation, really confirmed a lot of what was happening in this bizarre situation where price of silver is rising as money printing is soaring. And then right at the same couple days after the JP Morgan Bear Stearns deal, where Bart confirms that they did take over a position that combined was over the allowed limit. He gave them a waiver to reduce that. He was furious when a couple months later they'd come back and increased it. And this is the same time at which silver is falling from $21 to $9, in the face of which the people who really buy silver were buying more strongly than ever, to the degree that you had silver dealers reporting they thought they were going to go out of business because there was no inventory anywhere in the world as the price is falling about 60%. So laid out quite a bit more eloquently here. But if there is anybody who watches the show that is a Reddit user and you're wondering what I would suggest to share there, so that would be it. Alternatively, there is the book, The Big Silver Short, which is a little bit longer, more detailed, but I've always wondered what would happen if a lot of hedge fund managers or someone with bigger pockets than myself was aware of what was going on. Excuse me. So there is The Big Silver Short. You can get the audio version of that at our homepage, arcadiaeconomics.com. And lastly, just something to think about. So here, just pointing out again, that we have these markets where here in a matter of a couple of days, I understand there's different reasons, but here from 18 bucks to 334. So I'm going to ballpark that. That's a 40 bagger now, because 20 bagger, I'm sorry. So 10 bagger would be 180, then 100. So let's call that about a 20 bagger in 2 or 3 weeks. But it's not like this is the only time it happens. Here, if get my Tesla chart up here. Tesla, let's go back to September of 2019, right before the Fed swap lines. You see 48. So a 10 bagger would be 480. So almost a 20 bagger in Tesla. And then you have Bitcoin here, another asset that some people turn to in times, or I don't know, well, I guess I can't say in times of chaos, but I think that some people who are concerned about the paper currency thing are looking at Bitcoin, which if you go back here, let's see, in 2019, well, you got probably too many windows open, but you can go back and see that a little bit more than a year ago, thing was trading about 3,000. So 10 bagger territory now, went as high, maybe 12, 13 bagger, depending on where you want to market. And I point this out to the degree that it's like this just is kind of becoming normal. And then you have silver, which has a situation more glaring than any of these. And not only is silver still only half of its 2011 high, but it's half of its 1980 high. And I would say that the people who actually buy silver, you know, it's worth pointing out that, yes, there's different mindsets, different people focusing on this and looking at it. But I would say the people that actually go out and buy physical silver usually do so when they get scared off by what the governments are borrowing or what the central banks are printing. And you've had that. I mean, in 1980, we didn't even have quantitative easing. And now here in 2011, we had quantitative easing. Apparently it didn't work. And then now we've blown out, I don't want to say we, it's not like you and I were part of this catastrophe, but basically the Fed has blown that out in the past year, blown away by multiples. The balance sheet was at under $1 trillion in pre-Lehman, went up to 2 and change. Then last year spiked up to over 7. God only knows what it will be after a couple of months, let alone it could even be bigger in an hour from now. Again, hit that subscribe button and notification bell, and that way you can join us for some live coverage of this Fed debacle, whatever they have planned. But you add all that together, and now Janet Yellen is saying that, Janet Yellen, who's now in the Treasury, and is saying that the Fed and the government should act big with stimulus. So basically saying we've already blown past hyperinflation, but now that they should act big, and here's silver, half of its 1980 high. So again, I can't tell you the exact future, but if there's ever been something that has been primed, I don't know if there's anyone on the Wall Street Reddit's group watching, but in my opinion, I'm not telling anyone else what to do, but if there's ever been a situation more fitting for something like this, I would say even more so, because yeah, we talk a lot about what would silver do, what's its fair value, but let's say it experiences and goes Tesla, where it goes miles beyond its fair value. What would silver actually reach? Who knows? What if, who knows what will happen based just on the Fed meeting alone? Will be interesting to watch. So in either case, again, hit the subscribe button, the notification bell. I'm going to be back shortly with an update about Silver Elephant and their new drill results, which is also in the description field below. And then we'll be hanging out for the Fed meeting together, and I'll be looking forward to it. Thank you, as always, for joining me, and I will see you soon.
Thanks again for watching the Arcadia Silver Squeeze, a look back 1 year later, the events that led up to Silver Squeeze here on the Arcadia Economics Silver Network.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Hopefully I am coming through loud and clear this time. I had a false start. There we go. Looks like we are all set for the Fed press conference, doing some live coverage here with you today. And there is the news. Let me pull it up. Fed leaves the key interest rate and asset purchases unchanged. But just like on CNBC, today we will go through the news. We'll watch the markets as they react. I can't even imagine what's going to happen in silver after what we saw earlier today. and I was having a conversation with someone about how things have gotten so distorted in gold and silver pricing that even if you know what the Fed, even if you knew the Fed was going to launch a new quantitative easing package, you still almost wouldn't have any clue what is actually going to happen to the price of silver, because it seemingly continues to be spoofed at any time, anytime, any place. But anyway, we will cover and see what happens. We'll get a refresh there, but silver almost back to flat on the day. And as you can see here, Federal Reserve leaves interest rates and asset purchases unchanged. So let's see what happened here. And by the way, I will again mention this is a live call. So get your questions in there. And I'm going to pull that window up in a moment. And, but yeah, send your questions in and we'll field those. There we go. I see it. So as we dig into the statement, well, give me a second. Got a couple windows up here, but yeah, we'll dig into that statement. And again, let's get this off the screen. Send in your questions and we will start getting to those shortly. But Federal Reserve kept its foot to the floor Wednesday in terms of the help it is providing for an economy that central bank officials say has slowed down, yet is still at all-time highs, I might add. And we'll take a look at how the bond market is reacting to this as well in just a second. In terms of providing, they say it's slowed down. So I will say that would be a key phrase. The fact that they think it's slowed down. I mean, obviously anyone that reads Austrian economics and has broken through of the Wall Street spell knew the economy has been slowing down for the last 15 years. But when you hear central bankers say it's slowing down, that means there's more money printing on the way. Consistent with market expectations, the policymaking Federal Open Market Committee said it was keeping its benchmark short-term borrowing rate anchored near zero and maintaining. Wait a second, weren't they in the last meeting they were talking about tapering? That was the reason why gold and silver got hammered then. Now it's back to zero. I guess the taper is off. And maintaining an asset purchase program that is seeing the Fed buy at least $120 billion a month. All right, I'm going to get, let's see, 12. I'm going to get 1.44 trillion over the year. Let me check my math. But if we have 120 times 12, thank you, Mrs. Parks, for those third grade multiplication tables. And so that's 1.4 trillion over the year. Keep in mind that former Fed chairwoman Janet Yellen, who's now running the Treasury, has said that it's time for the U.S. to act big. So if we were already on a pace for 1.5 trillion of hyperinflated dollars this year, and now the Fed is going to act big, I mean, you know, we'll see. What are you supposed to think about that one? We'll get back to the announcement, although I do think we will be having a live guest appearance from the great Andy Schechtman, perhaps amongst others. So anyway, appreciate your patience, but I think we're about ready to kick in now. So at the core of the move to keep policy historically accommodative was an economy in which most sectors most vulnerable to the pandemic are taking the hardest hit. The pace of the recovery in economic activity and employment has been moderated in recent months. I wonder what's happening to silver as this is. Okay, silver is just sitting there doing nothing. I mean, this makes me want to buy more silver vol, which is not legal recommended financial advice, but pace of recovery has moderated. COVID causing strain, otherwise left the statement unchanged. Fed took the rate to zero. So, oh, here we go. Though inflation remains low now, right? what planet you're on. Investors worry that the Fed could start to taper the purchases unexpectedly. No. I'm calling BS on that one. Show me the investor that's sitting there worried that the Fed could start to taper purchases unexpectedly. I mean, they telegraph everything months before they do it. I can only imagine which banks get in on that before I find out. So if you find the person who's worried that the Fed's going to unexpectedly taper, please let me know so I can play poker against them or gamble somehow. It's possible. There's no one. No, it's not possible. Statement offered no new guidance. Fed officials remain cautious on an economy that has seen a 2-speed recovery. I love the car metaphors, like they're two-way gears shifting the economy, as if these guys like talk about they're going to tweak inflation. You know, it's 2% is our target, but it's only 1.88%. So we'll buy just the precise amount of bonds. I mean, it doesn't quite work like that. They can't even measure the inflation that's already happened, let alone anticipate it in the future. Under the approach, the Fed no longer will raise rates in anticipation of inflation, but rather will just tolerate the higher levels in the interest of a more inclusive recovery. Wow. I wonder how many copywriters it takes to come up with this one. In the past, jobs would fall consistent. The Fed would institute preventative hikes to stop inflation in its tracks. I don't see any preventative hikes coming in the near future. But what I could tell you is that Andy James Bond Schechtman has joined me on the line. And while he's logging in there, let's take a look at some of the other markets here. Let's see what is happening in bond land. I mean, essentially, the Fed said nothing, which is par for the course. But Andy, are you there? Can you hear me?
I hear you, Chris. How you doing, my friend?
All right. I guess we do not have Andy quite at the moment. Andy, let me know.
I'm here, Chris.
Andy is logged in there.
Chris, can you hear me?
Andy is talking, but is apparently muted. So we will get that figured out. And Andy, if you can hear me, feel free to join in anytime.
I do hear you, my friend.
Anyway, we'll dig back into the markets here. Let us
Chris,
see.
can you hear me?
What has happened with the bond market. It was right around 1% and not much movement there. And so far, not a whole ton of activity in silver, sitting there pretty flat. So I guess this is the kind of thing that, I don't know, maybe I am the only one who thinks about this, but this morning you had silver go from 25.40 down to 24.80, below 24.80. Fortunately, I saw that one right this time, and I actually did buy some call options right there, which worked out well. Then it rebounds another 60 cents in about an hour or so. And then when you have the actual meeting, there's no reaction in Silverland. So anyway.
Can you hear me now?
They could hear Andy, although I couldn't.
I'm back, brother. Can you hear me?
Okay. Well, give me 1 second. I figured out the issue here. And bear with me. But yeah, that just always strikes me as odd when you see, such wild movement earlier in the day. Almost have a set here to go. There was a workout video. I did buy the V-Shred options course. Andy, are you there? Can you say hello?
Hello, my friend. Can you hear me this time?
Andy, I can hear you.
Fantastic.
Got us all set up now, so thank you for the audience for getting that cleared up. And Andy, we just had the Fed meeting. Like usual, they said nothing, but I mean, Janet Yellen is telling us to act big. So any thoughts on the Fed announcement and so far muted market reaction?
No, I mean, look, the blessing in it all is typically when the Fed speaks. Leading up to it, you see massive sell-offs, always in front of the farm labor report, or anytime they have a meeting, typically we see a sell-off. But the thing of it is that I think there's a growing awakening and awareness that they are running out of tools. They are running out of arrows in their quiver, I think, to continue to paint a narrative that is becoming increasingly poor. And so, no, I'm not surprised one bit at all. And I don't know what else she can say except to act big. And the question becomes, once you act big and start paying people money to not be productive, how do you ever stop that? How do you ever stop that injection of liquidity that keeps people feeling, okay or wealthy? So it's these are interesting times, Chris. Very, very, very interesting. And I think the Fed really doesn't have much to say anymore, except we're going big. So no, interesting times for sure.
Yeah, well, Andy, in terms of other things that are going big right now, and I see one comment in our chat window there was about this situation on the stock GameStop, where apparently, and I'm kind of catching up to speed on what's happened as it goes along. So perhaps anyone in the chat room who has updated information can chime in. But basically, there was a short squeeze, and the stock went from, it was like $18 a couple of weeks ago. Then it got up to over 200, and today it's up like $200 right now. And it's interesting. I got a lot of Twitter messages and comments saying, "Hey, are these guys going to be aware of silver?" I don't know. It would certainly make sense, and just shared a video in the chat there of what I would share with the Wall Street Reddit crowd. Andy, I mean, doesn't this thing went up 20? I think it was about 18x. Tesla's gone up 18x, and Bitcoin's up 10 to 13x. Then you have the silver profile where it's half of the 1980 high. Is there kind of interesting to think about what could conceivably happen?
Maybe you call me old school, Andy. I know you like to joke about that a lot. And when I started in this industry in 1989, the Dow Jones was 2,100. And I'll tell you, I'm 50 years old, and I'll tell you, I've learned that the more things change, the more they stay the same, with the exception of the stock market. And you have a whole generation of people who are growing up believing that those types of returns are normal, that you see casino type returns, like slot machine ringing bells type returns. And granted, it is becoming more commonplace, but here again, ask yourself what would happen if the Fed hadn't been and stopped injecting liquidity into the system. They just completely let Mother Nature take hold. All of these massive gains would be exposed for what they really are, illusionary. And for the people out there who have made these types of gains, the issue, and trying to be completely impartial, I mean, take out of the equation that I and you believe so much as we do in metals, and I own a company that sells it. Honest to God, take that out of the equation. You got to be out of your mind to not take some of this stuff off the table and put it into something so massively undervalued that is so completely and totally needed and sought after in an ever-increasing green and electric and digital world. These types of gains are not natural. I mean, they're just not, unless the laws of investing and economics are being rewritten right out from under me. And, there is a fine line between being a traditionalist and old school and getting with the technological, age. I realize that has a lot to do with it, but, Mother Nature has her way of correcting things that get irrationally out of whack. And when you see these types of movements in a stock like that, it's irrational. It's a distortion due to massive money creation by the Fed, low interest rates. These things will change, and when they do, that's when you see spiritual experiences for people who have been indoctrinated and believe completely and totally that this is how markets behave. Because I can promise you, in the 45 years or excuse me, the 25 years prior to the last 4 or 5. It certainly didn't work this way in my experience.
Well, Andy, speaking of spiritual experiences, I think the shorts on GameStop are getting a taste of that, because I have the chart pulled up, and on January 7th, it was floating around $18. And let's go back to the 5-day here, because it's about $42 a week ago. And then what is today? I believe is the 27th. Okay, so yesterday thing closes at about 150, and it's up 112.93% today. So after closing at 150 yesterday, which a week earlier was 40, a week before that it was 20. So now it closes at 150 and then goes up 114%. After closing at 150 is up $168.99 on the day. So 20, let's do a little quick math here. If we take 315 divided by 18, so that's a 17 and a half bagger in about 2 weeks. What can I say? I wrote the book on silver. I mean,
which should underscore something very important as it relates to the silver short position. When you go long on something, your exposure is limited to 0. You go down to 0. You lose everything. But only to the value of the long position. But when you go short, your potential loss is unlimited. And that's, if you buy silver and it goes to 0, no one wants it, that's your loss. But in this case, this can bankrupt people and completely take away everything that they own, and as it continues to spiral. And that would, when you magnify that by what the commercial banks have been losing in 2020 on their short position and what could happen if this were to take off, you can see in a matter of a day or 2 or a week how fast things spiral out of control when you see a massive short squeeze.
Yeah, and Andy, I believe we have the great Matt Card joining us. So while I welcome him in, we have a question for you from Carlos Danger. Andy, are you seeing a short-term run-up on physical silver premiums? And there's a follow-up question, but why don't we start there? Anything happening with the premiums right now?
Well, I'm so glad you asked that. So every week, I talk to my operations and say, what can we offer for a special for Arcadia? And his exact words to me today, well, first he tells me about some 1/10 ounce gold ox that we bought a bunch of. And he says, but you want silver, don't you? And I said, yeah, I don't want the gold 10th ox. He says, his exact words were to me, silver is getting sketchy. And so this is kind of what I've been saying all along, is that this is a marketplace. And in particular, when you see the amount of money out there, where the amount of money just made in cryptocurrencies alone dwarfs the silver market. I mean, many times over in terms of, what's out there. And if people wake up and start buying, what is abundant today becomes massively sketchy tomorrow. And so premiums will rise. Availability is now getting tighter, and it's happening, and it will happen, and it will accentuate. But it's the same thing, just like this short squeeze. It one day it's great, and the next day it completely changes. And so premiums are beginning to rise, but more importantly, product is becoming more and more challenging to get, just like that. And I knew it would, and I don't think we've seen anything yet.
Well, I think that says it all. Although fortunately, joining me now is Matt Carr, a good friend of mine, runs his own fund and a lot of options experience, very familiar with gold and silver. So Matt, thanks for joining on in. How's everything going with you today, my friend?
Oh, it's going well. Thanks for having me. It's an exciting day, plenty going on. So good time to hop on a call here.
Yeah. So Matt, you've seen the Fed announcement so far. We'll come back to GameStop. I'd love to get your thoughts on that. I know you've been looking at that, but any thoughts on the Federal Reserve?
Well, we're staying at 0 as far as the eye can see here. So this is remaining easy, no real changes in asset purchases. They kind of tightened the rhetoric on the economy slowing down its improvement, so kind of giving themselves room to continue with QE and zero rates. So pretty dovish, really.
Yeah, and are you surprised we're not seeing more of a reaction in the markets today? So far, again, interesting day in silver. We had this move just plummets down, which seems completely natural, then rides back up. And Matt, I think I did send you a message when I bought some options here, and this one worked out well today. So maybe later on we'll dig into how you and I are doing some option projects and get some things up and running. But any thoughts on the silver reaction we see here?
Well, there was a big risk-off move across markets this morning, and you saw that in a lot of different equities. It certainly happened in metals. You timed your entry into that call option there in silver quite well, because there's been a bit of a reversion there, so that was a good move. But there are a lot of interesting things going on. I know when I just hopped on here, you mentioned GameStop, but really it's not just a situation of shorts putting on squeezes. The IPO market is red hot. The SPAC market, special purpose acquisition companies, is hot like we've never seen it. And that's essentially a way for people to bring businesses, companies public outside of the IPO route. So there's all sorts of things happening in different verticals that are pretty aggressive.
Yeah, I mean, it's like on one hand, we sit here, we watch silver not move too much until it finally moves, but there has to be some break point. And it's interesting to see the combination of using an online chat group where people are recognizing things, but again, on some level, people taking matters into their own hands. Andy, any thoughts on that?
Look, Chris, I think that we're not buying silver. People who are buying silver to get wealthy are missing the point. That's not what we're trying to do, and it will take off. It absolutely, most certainly will, just based upon the supply-demand fundamentals. People taking things into their own hands should be mitigating their exposure to a currency that is being debased and destroyed right in front of us. And the market that is so immediate in terms of, it's almost schizophrenic in terms of how we see the risk on, risk off play by the market daily and hourly. I think it's more along the lines of looking at this from a macro perspective, taking a big picture. There are so many ways to make money nowadays by trading this market that has such tremendous volatility. You can really make lots of money. I guess what I'm saying, and in particular respect to your comment of taking things into your own hands, is take some of the chips off the table. Not only is it, on so many levels, supply demand side, such a good investment. It's so much more inexpensive silver is than its previous 1980 peak, and all of those fundamentals that would say, hey, this is a good buy. But it's becoming really, really, really difficult to acquire. And I think as more people wake up to this, it's going to be center stage. Taking chips off the table, realizing that profit is not a four-letter word, and moving it into such an undervalued asset that is so needed, and taking possession of it, removing counterparty risk, third-party risk, it's so important, and it's such a no-brainer right now. So yeah, I think there are ways to make money trading this market, trading cryptos. And a lot of your listeners are very adept at that. Just don't forget that pigs get fed and hogs get slaughtered. Take some of that profit off the table, put it in silver. It is not only tremendously utilized and growing every day and in depletion in terms of mining and in terms of above ground supply, but it's half of its 1980 price. The fundamentals, I mean, logically, there's very few things on the planet that make as much sense as buying silver right now, period. And the ability, one of the only things other than cryptos, which you can, take in a thumb drive or whatever they're called and hold it in your pocket or know your code in your head. Same thing with precious metals. You can take it out of the system, have possession of it, take possession of it, and take control of it, be outside the matrix. And once we go to a digital dollar, which will come, a digital currency system, it'll be one of the few things that is autonomous from that system, giving you a little bit of freedom from that type of scrutiny. So in any case, Chris, I think right now people should be taking some of the profits that they've made in this crazy market and putting some of it into silver, putting it aside and forget about it.
Andy, you have a comment here. Perhaps give us a brief thought on David Morgan said on As Good as Gold interview, said that it is 4 to 6 week on silver rounds in the United States. I'm assuming he meant 4 to 6 week delay. Is that what you are seeing?
No. I have thousands of them in stock. What it means is that when I run out of stock, it's 4 to 6 weeks. So, and that's what people don't understand is that, we're not online, so it's a little bit more difficult. When you go to some of these online sites and you type in quantity, type in 99999, and you'll see what they have very often. But the thing of it is that what is abundant today is not tomorrow. The market is too much just in time, because in order for companies to have things in stock, you got to pay for it, hedge it, and wait for it to be either sent across the Atlantic or produced for you. Now, when no one wants it, those guys are calling you and said, hey, I got a whole bunch extra. I'll sell it to you, send it to you quickly and whatever. But when everyone wants it, you may have a really flush inventory today, but one guy calls and spends $12 million and depletes 25% of your silver holdings. And then you try to call that distributor and say, hey, I need another 50,000 silver kangaroos. He says, fine, we'll have them to you the third week in February. We'll get them shipped. And that takes another 10 days to get it to you. And before you know it, it's already March 1st. So David's right. But right now I have a bunch in stock. But what does that mean? That just means once it's gone, then comes the 4 weeks.
All right. We're losing you there for a second, Andy. Although, Matt, I'll turn it over to you. Any thoughts
Sorry
on
about that.
some of the reactions we're seeing here? Looks like nothing happening in the bond market. Stock market's down almost 1.5%, 2% on the day. What do you think there, Matt?
Yeah, I think I'd be keeping an eye on the bond market and in particular the yield curve, because it's increasingly clear we're going to have near zero rates for years. And this is quite a different story than the financial crisis, when a year out of the depths, we had a very steep yield curve. And, that feeds back into other markets, because you're looking to finance things, you're looking to leverage, you're looking for yield somewhere. And it might be the case that that's manifesting itself in some of the activity we're already seeing. But when rates are low and you foresee them to be low for years and years, it can change the calculus on depreciating and valuing assets across the board.
Yeah, and Matt, we've been hearing more and more about yield curve control. Can you explain to folks what that is and if you think that's something we may be headed towards?
Yeah, that's a concept that in action, the Federal Reserve would target some nominal interest rate. So they would effectively be saying, we're not going to allow 10-year Treasury bonds to go above some arbitrary number, 2.5% or 3%, let's say. And then they would stand ready to purchase those bonds in the market such that the price couldn't fall and reflect a higher interest rate. There's some discussion that ultimately they'll undertake a policy like that. There's no way really to know if they do or what rate they would be targeting, where along the yield curve. But that's essentially what the idea is. And there was something called Operation Twist. This was after World War II, when effectively the Treasury was working with the Federal Reserve. And in action, they were targeting lower long-term rates, trying to pin them down. So it is something that we really could see.
Yeah, of course, they did that Operation Twist again in 2011. What I thought was interesting and Wall Street media didn't seem to be as excited to cover was that they also did short-term swap lines to Europe, which kind of offset. So they didn't mention that they were offsetting one half of the hedge there. So really was just outright QE, which is usually the case. Folks, if you have any questions, type them on in and we'll take a look at them, although I have one that I'd be curious to get your opinion on. Matt, maybe you can take this one first, as I am pulling up something I mentioned on the show recently. Here's the case. A hedge fund manager named Daniel Shack has settled with JP Morgan. Now, I'm digging around and been talking to a couple lawyers of what specific, if it's public, what specifically they allege, but basically if they reached a settlement and you find out they went with this argument and you use the same argument, it would seem like that and the fact that there's a CFTC statement and from the Department of Justice saying hundreds of thousands of occasions, there are guilty confessions, fines have been paid. So maybe a little bit out of the realm of finance, but any thoughts on that situation and whether investors might have some options?
Well, I think it feeds directly into the question that many have about the fidelity and fairness of markets and the structure of the markets. You know, how many times have we seen these large institutions, large funds, large banks, essentially breaking the rules and just settling for some nominal fee? You know, I think that's part of the discordance that's actually going on right now with retail investors being frustrated. So yeah, you have to stay abreast of what the rules of the playing field are. But unfortunately, you know, certain situations like these spoofing situations or these price rigging situations like we saw in LIBOR, these are really large derivative sets controlling trillions of dollars, how they move. And you know, how it was dealt with, there were a couple of low-level employees that were punished, but firms just kind of settled and moved on. So I think it calls into question how we're actually dealing and enforcing rules in the marketplace. And that's really important to have a discussion around for everyone involved.
Yeah, I think so. Andy, would you like to chime in on that one?
Yeah, I think it's awful, and it continues to happen. If you look at the numbers, you know, it's billions and billions and billions of dollars over the last several years that they've all paid in fines. And if you look at JP Morgan settling a $920 million fine, making $1 billion in profit, so still walking away with the profit for the year and still being allowed to be the primary custodian of SLV. I think it's very disingenuous at best, and these are the things that I think people are. This is why I think we are having part of the reason why we're having so much more interest by the mainstream, because these kinds of things are now becoming, I think, more understood by the general public, that playing field, the rules on the written on the playing field wall only apply for us and not for the elite.
Well, certainly does seem to be the case. And good news. And we're going to turn it over, go live to Jerome Powell. Matt, do you have any idea? Can I live stream through my channel? If someone in the comments knows whether I'm allowed to do that, type it in now. In fact, Matt, we did have a question from the great Rob Keens of Gold Silver Pros. So while I get that ready to go, maybe you could field this one. And And again, if anyone knows, Rob, perhaps you can chime in. Where did your question go? And let me know if I can do that. I'm going to try for it and hope for the best. That's my new motto this year. But here we go. Matt, do you see yield curve inverting on rising inflation pressures in 2021?
Just to clarify the question for everyone, that means will short-term interest rates be higher than long-term interest rates? I think that's a really tough situation to see short-term rates rising. I think the Fed has continually said, they're going to steamroll the front end of the curve and potentially steamroll further out. And, a lot of market activity will probably do a good amount of work for them. US yields are still relatively high compared to other countries, other jurisdictions. So at what point do you start to take into account the currency risk, hedge out dollar risk, and buy treasuries if you're somewhere in Europe and your Swiss bond pays 0 30 years out, or your German bond pays 0 30 years out? So at some point there has to be, some of that activity going on too. But an inversion of the curve on the short end, maybe like 10s to 30s, depending on how we issue. I know Yellen just started in Treasury, but she's talking about issuing 50-year bonds. That's one thing I've been surprised that the United States hasn't issued 50-year or 100-year Treasuries.
I'm waiting for the 100-year. I think it's coming.
Yeah. I'm kind of surprised we haven't done it yet. You have places like Mexico and Ireland that issued 100-year bonds. So,
well, Matt,
we'll see.
You never know. It may be coming before the end of the day. So let's go live to Jerome, and we'll hear what the Fed is saying. And by any means, Matt, if you have funny comments, let me know and I'll pause it at any time.
Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. We've also taken actions to more directly support the flow of credit in the economy, deploying our emergency lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. Although the CARES Act facilities are no longer open to new activity, our other facilities remain in place. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Robust as possible.
Thank you, Gina.
I hope they let me in there for a question one day. That's on my bucket list.
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I was hoping that you would first react to the wild ride that GameStop stock has had this week. And then secondarily, you and your colleagues have repeatedly made it clear that you really plan to use macroprudential tools as a first line of defense when it comes to financial stability risks, but your macroprudential tools primarily apply to the banks. I'm wondering what your plan is if you see some sort of large financial stability risk emanating from the non-bank financial sector in the coming months, especially as it relates to search for yield kind of activities. What do you see as the solution there? Thanks.
So on your first question, I don't want to comment on a particular company or day's market activity or things like that. It's just not really something that I would typically comment on. In terms of macroprudential policy tools, so as you know, no doubt, we rely on sort of always on through the cycle macroprudential policy tools, particularly the stress tests and also the elevated levels of liquidity and capital and also resolution planning that we impose on the largest financial institutions. We don't use time varying tests and tools as some other countries do, and we think it's a good approach because for us to use ones that are always on, because we don't really think we'd be successful in every case in picking the exact right time to intervene in markets. So that's for banks. You really asked about non-banks, the non-bank sector, and so we monitor financial conditions very broadly. And while we don't have jurisdiction over many areas in the non-bank sector, other agencies do. And so we do coordinate through the Financial Stability Oversight Council and with other agencies who have responsibility for non-bank supervision. And in fact, as you know, in the last crisis, the banking system held up fairly well so far. And the dislocations that we saw from the outsized economic and financial shock of the pandemic.
Did he just say the banking system held up really well through the last crisis? Did I catch that right?
I could have
Really
swore that they
appeared.
were injecting $1 trillion a night into the repo market. So here again, take the Fed stimulus out and the Fed injection of hundreds of billions, almost trillions of dollars an evening into the repo market, and the banks would have all collapsed.
Well, fortunately, we can rewind a little. Let's see if he actually said that. Matt, did you have a comment?
No, that's exactly right. What Andy said there is the repo market was coming apart in August, September of 2019, long before COVID. And the Fed's involvement there abrogated the private credit system in the repo market. They just started infusing capital directly into it. That was a direct bailout, and that was all prior to COVID. So that's totally accurate.
And while we don't have jurisdiction over many areas in the non-bank sector, other agencies do. And so we do coordinate through the Financial Stability Oversight Council and with other agencies who have responsibility for non-bank supervision. And in fact, as you know, in the last crisis, the banking system held up fairly well so far.
Okay, he really said it.
And the dislocations that we saw from the outsized economic and financial shock of the pandemic really appeared in the non-bank sector. So that's right now we are engaged in carefully examining, understanding, and thinking about what in the non-bank sector will need to be addressed in the next year or so.
By the way, I'm reading this book right now about how to improve writing style, and everything's about really short, concise, get rid of the filler words. I don't know, aside from the fact that he claimed the banking system performed great through the last crisis, I don't know anything that, Matt, could you translate? Did he actually say anything in there?
One thing that sticks out to me is he's talking about providing support outside of the banking sector. And the Fed doesn't regulate outside of the banking sector. That's one thing that sticks out to me. Two, you're starting to talk about infusing capital into different sectors. My next question to him would be, at what level of market cap is this only going to be realized by large cap companies? Is this something that private businesses are going to be able to access readily? The diffusion of that new capital is very important, and it essentially is picking winners and losers. You can have interest rates be low, but if credit availability doesn't exist for that small mom and pop business, it doesn't matter what the interest rates are. So how they
That's
actually
exactly correct.
Yeah, how they actually move forward with this is very important. He's talking about picking winners and losers, for better or worse, is what he's saying in my mind there.
Well, let's remember 130,000 small businesses are gone forever. And I will be wrong, I think, with this number, but I believe that the small business sector, small to medium-sized business, represents 40% of GDP. And you pull that out, these businesses that were hanging on by a thread, they used every cent they had. They've been broke for months. And so when you talk about picking winners and losers, it's the big companies that win and the little ones that go by the wayside. It's very scary what's happening. You can see it very clearly when you look at it in that light.
Yeah.
Matt, you mentioned, conceivably an issue about going outside of the Fed's mandate. Although, fortunately, I don't think you'll have to worry about that because they seem to be changing it on the fly here. And here, I thought this was interesting, how the Fed under Biden likely will be pushed towards addressing racial inequality and climate change, which seemed a little bit outside of the original parameters. But now we're going to solve racial inequality and climate change with more quantitative easing. Someone in the chat room asked what question I would ask Jerome. I think that's what I would go with today. Can he explain how quantitative easing will solve climate change? But let's go back and see. Maybe that's the next question.
Thank you. James Politi, FT.
Thank you so much, Michelle and Chair Powell. I had a question on fiscal policy. Last year, you consistently said that the economy needed more fiscal support, and I believe we're pleased when the $900 billion package was approved in December. We now have a new president, a new Congress. We have a weakening short-term outlook. Do you believe the economy still needs additional support on the fiscal side, and in what areas?
Thank you. So I guess I'd start by saying that the fiscal response that we've seen to this downturn has been strong, and I think we can say now that it's been sustained after the passage of the most recent act in late December. And that's really a key reason why the recovery has been as strong as it's been. Fiscal policy has been absolutely essential. When we look back on the history of this period, we'll see a strong and sustained fiscal policy response. I would add that we're, as I mentioned, a long way from a full recovery. Something like 9 million people remain unemployed as a consequence of the pandemic. That's as many people as lost their jobs at the peak of the global financial crisis and the Great Recession. Many small businesses are under pressure, and there are other needs to be addressed. And the path ahead is still pretty uncertain. So all of that said, the judgment on how much to spend and in what way is really one for Congress and the administration and not for the Fed. And these discussions are going on right now. So there's a discussion, as you know, right now around those precise questions, and that's appropriate, but not for us to play a role in talking about specific policies.
Well, we'll take a pause right there. And if you heard a sound while that was talking, Matt and Andy, I'm getting messages that apparently silver is now being discussed on the Reddit Wall Street board. So again, Yara, perhaps in the chat room, you could type it in the link to today's video where I shared at least what I would think would be helpful for anyone there to know. But with that said, Matt, any comments on the last one here?
Well, he's trying to deflect avenues of expenditure back to Congress via the fiscal mechanism. And I think we're going to see a lot of spending coming out of this Congress. So, you know, what form does it take? What is the scale? Remains to be seen. And he's really demurring there as far as the Fed actively printing and pushing more money into different avenues of the economy. But, you know, the Fed's a political animal itself. So we'll see if they stand pat and to what degree.
I'd also like to comment real quick, Chris, that, you know, he talks about 9 million people still unemployed. The numbers are far greater than that. You know, you have so many people that had businesses that, bartenders, for example, the bars are closed. They're not looking for work. Look at the labor participation report, and the numbers have fallen off the cliff. So, you know, the numbers are far worse than they're leading on. And I think you'll see this type of demanding of intervening and of stimulus until the cows come home, until an economy comes back to some semblance of what is normal. But, you know, when you have so many of the people that ran these businesses on life support are already gone, when does it come back to normal? And how do things come back to normal when the engine of growth of small and medium-sized business has been kneecapped? And at the same time, the biggest businesses in the world have grown exponentially and made massive profits. It's a gutting of the middle class, and that's what people aren't realizing is all the stimulus in the world won't do any good. All it will do is you know, create more addicts to government intervention and stimulus rather than incentivize people to get out there and build the economy through you know, savings, investment, and reinvestment. Instead, it's, you know, can I put food on the table, and when's the next stimulus check coming?
Well, that does seem to be the case, and let's go back to Jerome. We'll do a couple. We'll go to the top of the hour here, and then really, it's probably not healthy to listen too much of a central banker talk, but we'll take one or two more here.
Thank you. Steve Leisman.
Thank you, Mr. Chairman. I wonder if I could follow up on Gina's question here. I understand that you do address issues of valuations through macroprudential policies in the first instance, but there's a range of assets, and I know you do watch a range of assets, but from Bitcoin to corporate bonds to the stock market in general, to some of these more specific meteoric rises in stocks like GameStop, how do you address the concern that super easy monetary policy, asset purchase and zero interest rates are potentially fueling a bubble that could cause
context? The shock from the pandemic was unprecedented both in its nature and in its size, and in the amount of unemployment that it created and in the shock to economic activity. There's nothing close to it in our modern economic history. So our response was really to that, and we've done what we could first to restore market function and to provide a bit of relief. The recovery, and hopefully we'll be able to do the third thing, which is to avoid longer run damage to the economy. Our role assigned by Congress is maximum employment and stable prices, and also look after financial stability. So in a world where almost a year later we're still 9 million jobs at least, that's one way of counting it, can actually be counted much higher than that, short of maximum employment, and people are out of the labor force who were in the labor force. The real unemployment rate is close to 10% if you include people that's the labor force. It's very much appropriate that monetary policy be highly accommodative to support maximum employment and price stability, which is getting inflation back to 2% and averaging 2% over time. So on matters of financial stability, we have a framework. We don't look at one thing or two things. We look, and we made that framework public after the financial crisis so that it could be criticized and understood and we could be held accountable. And the things that we look at are we do look at asset prices. We also look at leverage in the banking system. We look at leverage in the non-banking system, which is to say corporates and households. And we look at also funding risk. And if you look at across that range of readings, they're each different, but we monitor them carefully, and I would say that financial stability vulnerabilities overall are moderate. Our overall goal is to assure that the financial system itself is resilient to shocks of all kinds, that it's strong and resilient, and that includes not just the banks, but money market funds and all different kinds of non-bank financial structures as well. So when we get to the non-financial sector, we don't have jurisdiction over that. But so I would just say that there are many things that go in, as you know, to setting asset prices. So if you look at what's really been driving asset prices really in the last couple of months.
What are the chances he finally admits it's his interest rate policy?
It isn't monetary policy. It's been expectations.
Oh, there we go. Of course, nothing to do with monetary policy, just completely unconnected. I'm sure that Tesla went up 18 times since he started his swap lines is a coincidence. Matt, did you have something to add there?
This is just an unprecedented situation with the level of QE, the reaction we've seen since the repo issue of late 2019, and it doesn't look to be abated here. I mean, this is a question of how easy they're going to be. It's a question of degree, not direction. And he's not saying anything to me with regard to tightening, even thinking about tightening. He's checking back to Congress on fiscal spending. Not yet. Not yet.
Well, why would he? Because he just explained that there's no correlation. It's completely nothing to do with what's going on. Let's hear the end of this one.
And it's also fiscal policy. Those are the news items that have been driving asset purchases. asset values in recent months. So I know that monetary policy does play a role there, but that's how we look at it. And I think, I think that the connection between low interest rates and asset values is probably something that's not as tight as people think, because a lot of different factors are driving asset prices at any given time.
The indicators he looks at, it's like when his check engine light goes off, it's like he goes to the brakes looked at and then doesn't see the correlation, although maybe market sell-off intensifies with hour until the close, Dow now down 600 points. Maybe somebody else is watching this and getting a similar reaction.
Chris, it's so disingenuous what he says. How does 900 billion in payments and $600 or $1,200 checks to people drive asset prices? It's all the low interest rates and easy money, and the Wall Street banks are able to borrow it at next to nothing and drive asset prices higher. It has absolutely nothing to do with fiscal policy whatsoever. That's just an intravenous life support type of injection into the real economy, keep people going another month or two. But I would argue his monetary policy has everything to do with what's happening in this crazy environment, with real interest rates almost at, negative 1 or 2% right now, and there's no question it's so much monetary policy and virtually nothing in the way of fiscal policy that's driving asset prices.
Well, seems to be the case. Last one before we wrap up for today, fellas. This one came out last night. Biden administration to buy enough doses to vaccinate most Americans by the end of the summer. Guessing it does not mention how that's going to be funded. Matt, do you have any insight on that, or would you care to venture a guess?
No, I don't have any insight as to what the schedule or plan behind that would be.
Andy, you want to take a stab at how this one might be funded, the 300 million vaccines?
No, just like the way everything else is funded. They just create money, and most people think that it's just that's just how it happens. They create money, they pay for it. But, someone has to pick up the bill at some point. And, when they issue a 50% tax rate for the top income earners, when they, jack up capital gains taxes and corporate taxes, you'll pay for these types of expenditures through taxation and spending and a tax and a massive debt on our future generations. Nothing is free. And when you get to the point where we are, where it becomes exponential, people are forgetting and neglecting to understand that there is a price tag, and government just doesn't come up with the money. They have to come up with it somewhere, and it's through more debt and more taxes, and that's what we can expect over the next several years.
Well, that sounds about right. And fellas, just in wrapping up, Matt, can you let folks know where they can find you if people can contact you, find out a little bit more about some of the things you do?
Yeah, we're at qcipartners.com. You can email us at info@qcipartners.com.
All right, and I will get the site there pulled up in a second. And Andy, any specials going on? Anyone's looking for silver? Anything they should know? Any parting words?
Yes,
there,
absolutely. As far as specials on silver, we have 2020 silver Krugerrands that we are able to do at $3.19 over the price of silver, and silver Britannias from the United Kingdom can do at $3.09 over the price of silver in any quantity. And people can reach us at Arcadia at Miles Franklin. And thanks for letting me drop in, Chris. Always appreciate the opportunity.
Well, appreciate that, fellas. Certainly an interesting day. Maybe the prices weren't moving all that much, but hopefully this was helpful. We got a couple questions in there. I'm learning to get more in, but Matt and Andy, thanks for joining me. Will be interesting to see what the near future holds, but hit the subscribe button and the notification bell, and that way you can stay posted. And with that, we are signing off for now.
You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics for this week's physical silver and gold market update with Andy Scheckman of Miles Franklin. Andy checks in with us each week to provide an update on what's going on in terms of what's called the physical market, which is when people actually buy or sell physical silver. You may have heard of people talking about the paper market and all the derivatives thereof. And when the price doesn't match what would seemingly make sense, you hear, certainly on this channel as well as many others, how basically the two have been divorced from each other, but watch out one day if you have people demanding silver. So grateful that we have Andy each week. And Andy, it's a pleasure to welcome you back on in here. How are you doing today?
I'm great, Chris. Thanks. I appreciate it. And you're right. The divorcing of the paper price to the metals price is akin to the divorcing of the stock markets to the general economy. And it's the classic case of the tail wagging the dog. And so, yeah, I think that's a good description.
Yeah. So along those lines, we had a situation. We're recording on Wednesday, and you actually joined me on a live YouTube call earlier today. A lot of attention in the market this week about a stock called GameStop, because there's apparently a chat group on Reddit that targets stocks or assets where there's an unusual short position, and the shorts on GameStop got their faces torn off. The last I checked, it was over $300 after being $20 a couple of weeks ago. Andy, it seems really interesting to imagine what could happen with silver given the current setup. Any thoughts you'd like to share on that?
Yeah, for sure. I mean, you're looking at right now a setup that could absolutely destroy the commercial banks. And, you know, they already last year lost a ton of money in their short book, more so than they ever did. And now, as every $8 move right now higher in silver causes the loss that they've already experienced to further by $3 billion to the 8 big shorts on COMEX. And so, you know, you're talking massive losses right now. You know, combined, the 8 big shorts combined, their total losses from last year are north of $14 billion. So, you know, they're caught in a trap. And here's a perfect example of that, because if they tried or attempted to short cover right now, it would cause the most dramatic price move in history. And so they're caught in a position where they have to smash it to create a perception that silver's too volatile and it's archaic and it won't go higher, because if it starts to move and you see that type of short squeeze, it will be GameStop on steroids.
Well, it certainly seems like it's set up for that. And it's interesting, as we're recording today, I'm getting messages from cell phones, computers, chat, Twitter about that Reddit chat group has started a silver manipulation thread, and apparently people are becoming intrigued quite quickly. So quite exciting times. And along with that, can you fill in what is happening on the physical level? How many buyers versus sellers? What is the order flow like there at this particular time?
Yeah, we talked a little bit about this on our conversation today on your live chat. And, you know, it's important to understand that in this industry, which is just in time industry, which we really realized that in March, when the lockdowns inhibited the ability to get product imported and delivered easily. Right now, you know, for the last couple of weeks, supply has been pretty decent as 2021 product came into the marketplace. It's typically produced late in the previous year, late in 2020. And so the allocations that we all received here early in the year was produced earlier in 2020 or at the latter stages of the year. When you see the U.S. Mint run out of gold, eagles, and buffaloes 2 weeks into January, your eyebrows ought to raise a little bit, thinking, well, what's that all about? Typically, when we see problems with supply, they happen much, much later in the year. When I called my operations this morning to ask what would be a good silver item to list as a special for Arcadia, his exact words were to me, supply is getting sketchy. And, so it's something that can change at the drop of a hat. And that's something I've always had a hard time even getting used to in this industry, where one day I'm quoting someone the ability to do a $10 million order, no problem. And the next day getting a fraction of that becomes challenging without any massive delivery delays. In terms of order flow and style, I've been saying this for the better part of a year with you. The majority of the business we do, and we're talking hundreds of millions of dollars a year, Chris, the majority is in silver these days. And junk silver, as an example, which was been blowing out for the last several months, is getting hard to come by right now. All of a sudden, this is an item that you can't repurchase. And one of the things that I've often said about the characteristics of a gold and silver bull market, especially as it gets going, is that they say there's no bull market like a precious metals market because it's identified by concern. And whether the price is behaving in the manner we think it should, the concern collectively of the public is growing. For whatever reason, there's a myriad of reasons we should all be concerned, from economically, socially, politically, morally, whatever gets you concerned. That's a personal thing. But when people are accumulating precious metals, most of them aren't doing it to get wealthy. They know it's undervalued. They know it offers good potential. That's probably the biggest reason to buy it over gold, because it is undervalued and it does have massive potential. But they're buying it because they're concerned. So we're seeing virtually nothing in the way of people selling, nothing. And on the big down days, you can rest assured that people aren't flocking to their phone to place sell orders with us. It's the opposite of that. They buy knowing it's a great value, that they've received a subsidy for the day. And I will just simply end that question by saying it's the same thing I've been saying for the last several months. Always the little boy who cried wolf, always early. But this market will define itself by the inability to easily source product. It can change in the blink of an eye. And when my trader who tells me it's getting sketchy, when he says that, look, I thought we had more product than anyone through COVID. We had better selection and availability than anyone, including all the online companies. And we're very plugged into a very diverse network. And when I hear that, I begin to think, hey, this is getting concerning. So that's where we are right now. Still some stuff available, premiums on the rise, and availability getting tougher.
Yeah, well, I appreciate you sharing that. And, by all means, it's interesting just to see over time, you have the physical buying, you have the supply that goes offline when silver is $15 for a couple of years, and all these factors that I understand people get tired of waiting for it. I mean, there's been times I've felt that same way, and then it's like you wake up one morning at some point and realize, well, profile hasn't changed. In fact, the longer it goes on, to me, seemingly the further the beach ball is stuffed underwater. So it's just interesting to see this combination of forces, and especially today, looking into the GameStop thing quite a bit. Again, I'll be clear the way I phrase this. I don't know that GameStop will be what unravels the silver market, but when you put that much leverage on something and then hide it for so long, I don't know. It certainly seems like something like this could be the way that it ultimately unravels. Would you think so?
Yeah, absolutely. I mean, the difference is that you don't see tremendous amount of negative GameStop rhetoric. You don't see some of the most powerful financial institutions in the world pay $920 million fines for suppressing the value of GameStop. So what GameStop is a taste of what happens when Mother Nature steps in and corrects inequities and dislocations in markets. And you have the most powerful people on the planet, the wealthiest, that have an agenda. And that agenda that I've been, I think articulate in saying is for the last 4 years has been holding down the price for a reason. What is that reason? It's to accumulate massive quantities. Central banks have been doing it. Commercial banks have been doing it. The others on COMEX have been taking delivery in massive amounts. The big money is front running the importance of accumulation at subsidized prices. They're not holding it down just for the hell of it. I would argue they're holding it down to accumulate it. And at some point, those who have held those short positions 1 minute too long will feel GameStop on steroids. I mean, that's exactly what happens when Mother Nature gets involved. And this would be many times what GameStop is, but nonetheless, certainly a valuable tool to see what could happen.
Yeah, well, it'll be interesting because, again, I mentioned we're recording on Wednesday. Looks like GameStop closed the Tuesday session around $150. Then it had a decent day today, up $199.53 or 134.8%. And I'm going to, when we wrap up, take a look at the option structure on that one. Man, some of those downside puts are not looking cheap right now. But anyway, Andy, we're going to dig into your reader mailbag. You have fan mail as always. So first off the bat here, as you know, taxes on precious metals are hard to figure out, like buying the miners. In some situations, you don't have to pay the metal tax, and understanding long-term gains versus short-term gains. So I guess that's a couple questions wrapped up into one. But any thoughts, just general advice, how do the taxes work on metals purchases?
Well, that's kind of a whole big ball of wax. I mean, if we talk about when you purchase precious metals, there are 13 states out there that have some semblance of sales tax issues. So without getting too deep into that, we'll simply say that if you take sales tax out of the equation, you have it delivered to a state that does not charge sales tax, have it sent to a depository where sales tax don't apply, what have you. With that being the case, there are no tax implications on purchasing precious metals whatsoever. The capital gains rate for physical precious metals is at 28%, and it is not the same thing as normal capital gains in equities, albeit I don't know what Biden has proposed to move regular capital gains up to, but collectibles are at 28%. I always found it humorous that GLD and SLV, the proxies, the ETFs, are taxed at the same 28% collectible rate, then you can never take possession of it. I don't think anyone should ever own those products for a myriad of reasons, that being one of the bigger ones. And when you sell precious metals, the majority of what you would sell would be the honor system in terms of its reporting, in that the dealers only have reporting requirements on certain items in certain quantities. Quickly, in form of silver, anytime someone sells at one time more than 1,000 ounces in bar or round form, not coins like American Eagles or Maples or Krugerrands, but bars or generic rounds like the Buffalo rounds. If you sell more than 1,000 of those at one time, a dealer would be required to take your social security number and report to 1099B. Nothing else would trigger it except, take that back, junk silver in $1,000 face value, 1,000 face. So nothing else would trigger it, including the old Morgan and Peace dollars, Eagles, Maples, Krugerrands, Pandas, any of the coins, no dealer reporting. On gold, just for the couple gold listeners out there, you have no reporting on purchasing, and when you sell, the only things that would trigger dealer reporting requirements would be bars, Krugerrands, Maple Leafs, and Mexican 50 pesos on the 25th ounce in one transaction. So you could sell transactions throughout the year as long as they're not related. They're not reportable. But if you exceed 24 ounces being sold in any of those items, Krugerrands, Maple Leafs, 50 pesos, or gold bars, on the 25th ounce, the dealer would be required to take your social and file a 1099 be. Always best to chat with your tax professional, but in general, the laws are rather straightforward.
All righty. Well, I appreciate that. Next question we have here. If one wants the most silver for their dollar, what is the best way to go? Why don't we start with that? He has a couple follow-ons, but why don't you start with that one?
Well, I think there's a fine line between penny wise and pound foolish in this industry. And while you could buy a 1,000-ounce silver bar and save money over just about anything, you are so wholeheartedly illiquid and immobile, it just doesn't make sense. And you know more than anyone what it's like to hold a 1,000-ounce bar, Chris. You've talked about carrying it on the subway many times. And so that's about the only way, other than, once you pack it up, you can't do UPS and FedEx once you own it. Dealers can, but the consumer can't. And packaging it properly with registered mail, you're right there at the 70-pound threshold. If it exceeds it, as many times it will, they won't ship it. So you don't want to get the biggest bang for the buck without being cognizant of liquidity and flexibility. And for just a very few cents different to buy a 100-ounce or per ounce, to buy a 100-ounce bar or a 10-ounce bar or a 1-ounce round, you are many, many times more liquid and flexible. And in the case of a 1-ounce round, 1,000 times more. And so the savings often is not commensurate with the loss of flexibility and demand. Generally speaking, however, I would say bags of 90% pre-65 coins are the best value, period. Because not only do you have the greatest utility, it's recognized, it's very, very liquid, it is high content per dollar, silver melt, probably the best value. And it's unusual because in gold anyway, rather, or platinum, the smaller the unit, always the much, much, much higher the premium. Here in silver, you have the greatest utility, the smallest unit, and currently the best value, and it can't be reproduced. For me, I'd buy bags of pre-65 silver all day long, and if I'm looking for the best value, because you also get the greatest flexibility.
Yeah, that makes sense. Although in one of his follow-up questions, he mentioned the coins with the premiums like the Eagles. And I think if you just have silver, you're going to be okay. But what he was getting at is it worth paying for the premiums where, if we have a real silver shortage, you would think conceivably premiums on silver Eagles could skyrocket as well. But that's where, again, it's like just have the silver, trying to really analyze, well, are the premiums going to skyrocket? Or are they going to come down? I think would be less relevant than having silver. Is that making any sense?
I mean, if you need to blow your nose and you reach for Kleenex or a generic brand, does it really matter? No, it doesn't. One may feel a little better, may look a little better, have a nicer box, but it's important to remember that, normally when premiums are escalating, you don't hear people saying this, but it's only when there's no demand for silver that people bitch about the fact that the dealers don't pay big premiums. I'll always pay over the price of silver, minimum 10, 15%, usually somewhere 8 to 10% for sure, over the price of silver, no matter in the worst conditions. And in March, when, silver was $12 and you had to pay $10 over spot to buy Silver Eagle, I would have paid you north of $9 to buy yours back. So the moral of the story is the premium that you're paying on those Eagles, you'll get it on the other side. And in particular, if it's a demand for silver, you'll definitely get it. Almost all of it, and in some cases much more, because if you had bought Silver Eagles in December and paid $3 an ounce over in March, I'd have paid you $9 over. So premium is set by the distributors who get allocations from the mints. When the mints run out of product and the demand is through the roof, the distributors set high premiums. But that's not just on ask, that's bid too. So it goes both ways. It's just less visible because no one's selling when the price is going through the roof. People are selling when it's dropping, and the distributors and the dealers are loaded up to their gills with product, and then have to go into their line of credit to pay for buying more product. So anyways, it's an interesting phenomenon, but I would say to you that in general, if the market goes crazy, it's more important to have number of ounces. But I will tell you that on some of the coins like Eagles, you pay the premium if things go where we think, you'll get it if you do decide you want to sell. you'll get it on that end too.
Well, appreciate that. Next one here for silver bars. Does it really matter what mint they come from?
Well, not really. There's a half a dozen name brand mints. When I started in this industry, it was just Johnson Matthey and Engelhard. Those are very cool bars still. Both of them don't produce anymore. Johnson Matthey sold their production to Asahi. We've been running a special on 1 ounce Asahi rounds all week long that we announced last week on our interview. So the name brand, you know, you got the Royal Canadian Mint and the Perth Mint that make nice bars, and you have, of course, Johnson Matthey and Engelhard and Asahi, but the Johnson Mattheys and Engelhards would all be older ones. In terms of the new ones, it's Perth, PAMP, Royal Canadian Mint, and then you have others. And so I guess, you know, it's like anything. There's always a little bit more demand for something that's name brand, but in the end, is it worth paying an extra premium? Maybe if it's only about, you know, 15, 20 cents an ounce. I don't want to undermine the relevance and the importance of getting the greatest value. You know, 100-ounce bars are kind of it's an interesting question because, you know, I've seen generic bars trade for melt or below in normal times where the premium bars trade at 75 or 80 cents over. So if the spread isn't too high, it always is best to buy, you know, name brand. Asahi, Perth, PAMP, Johnson Matthey, Royal Canadian Mint, etc. If you can. If not, you know, getting CNT or Silvertown or any of those, well, that's a pretty darn good choice too. It's when you get into the wonky stuff that you know that's quirky and no one buys it. Now the dealers don't want to take much of it because they have to hold it and no one wants to buy it, so it sits on their shelf and the cost to carry gets involved. So sorry to be so long-winded. Promised you I wouldn't. Bottom line is simply this. If it's a small margin, 20, 25 cents an ounce, yeah, it makes sense to buy name brand.
All right. Well, that makes a lot of sense. And this last one here for today. Someone recently bought some generic silver rounds, 4 nines fine, so 0.9999. And he found it was actually less expensive than 3 9 silver eagles. Does that sound right, Andy? And any explanation on that one?
Yeah, well, the Royal Canadian Mint and the Perth Mint, to my knowledge, are the only mints that make 4.9 fine pure silver. I would have guessed that's what he meant because I don't know of any, and maybe I'm wrong. I just don't follow it close enough. I don't think any of the refiners out there make 4.9 fine, but the RCM does make the Maple Leaf is 4.9 and the Perth Mint Kangaroo is 4.9, and they are about $1 less than the Eagle. And you know, is it worth it to buy the Eagle in comparison to those? Well, if you live in other parts of the world, definitely not. If you live in Australia or New Zealand or Toronto or whatever, but here again, the American Eagle gold is 22 karat. It has an ounce of pure gold and a tenth of an ounce of silver sprinkled on it. Makes the net weight of the coin 1.1 ounce, but decreases the purity to 22 karat. Yet it's always been priced more than the 24 karat Maple Leaf. When you're talking such a minute amount, 3.9 versus 4.9, when you get into the thousandth of an ounce, you know, it's somewhat more of a novelty and inconsequential. And it brings into question, however, is it worth it to pay higher premiums for gold and silver American Eagles? And that's a personal decision. Some people would say no. Royal Canadian Mint makes the purest silver in the world. They also make the only 5.9 fine gold coins in the world, and they're always priced less than the Eagle. It's just a market, I guess, for North America. Might be different in other parts of the world, but the answer simply is it's a personal preference, no right or wrong choice here.
Well, that sounds good, and appreciate everything that you shared here today. Before we wrap up, any parting thoughts, any silver specials, any good deals that we should know about?
Well, the only parting thought, you know, I often comment about one person you have on your show, and that's Andrew McGuire. And I find his information to be fantastic. And, you know, I've been the champion of the Basel III reclassification of gold. I've talked about it as much as anyone in the country for the last year. And when he talks about the Basel III restrictions or implementations going into effect June 28th, it's very interesting. And very exciting, actually, when you think about what that really means. 85% ratio of collateral to position in a market that is so heavily rehypothecated. The potential is fantastic, and you wonder what it's going to take for these banks to clean up this massive short position prior to this revaluation. And I guess the mind can only wonder and wonder. So in any case, in terms of a special, as I mentioned on your live stream, we still have a halfway decent allocation of 2020 Silver Britannias that we will offer to your listeners. And the Britannias will be $3.09 over the price of silver. So that would be the special going forward. And if I had to guess, I think you'll see those will go very quickly. And as David Morgan was saying about the long delays in getting product back, when I have to reorder, that's when you're going to start to see delays. Product is available now, but when I have to reorder from the mints and the refineries, this is when the delays start to happen. So I guess we'll have to see next week. We'll revisit that.
Yeah, although, Andy, wrapping up, I've had a lot of fun today because, I don't know, I try and notice intuition and maybe the difference between that and when you're imagining or guessing things, but it sure seems like a lot of interesting stuff is happening right now. And I don't know how this will all unravel, although it's exciting to be in the game in either case. And just to have a little fun here, again, I've heard since things happened, there's been a thread opened on Reddit in regards to silver manipulation, which I'm guessing if you're listening to this now, you've probably heard of it. So to sweeten the pot and do my part to let freedom overwhelm JP Morgan and their big whales, I'm going to toss in 5 ounces of silver. We're going to give away 5 winners. So if they take this interview, which hopefully would help people that might be new to the silver story understand what's going on, and post it in that Reddit group. Again, I am not a Reddit user. I think you can't just sign up and go slam it in there. So this one will be counting on our Reddit savvy listeners. But to help support your efforts out there, I'm going to toss in 5. I'm going to go for the Britannias, Andy, because Yara sent me a roll of those. There's something beautiful about them. They just have a nice luster. And for some of our great Arcadians out there who are helping to bring back free markets, if you can post something in Reddit and then tag Miles Franklin and Arcadia Economics on Twitter, we'll find 5 winners to give away a 2020 Silver Britannia to. What do you think about that, Skipper?
I think we just double it and make it 10.
Double down. Wow. He re-raises. I love it. I knew I could count on you. And yeah, it's just nice to see. Who knows? Maybe this will be it. Who knows? Maybe we'll be seeing it go on for a couple more years. I think it's going to be sooner than later, but we'll have fun doing our part, following along, reminding people that if it does take longer than you might expect, well, certainly if you have income, that's what I do anyway, which I'm not recommending as licensed financial advice, but I would say just adapting my mindset to what is rather than what I think should be or want to happen. You know, that's what we can do, right?
That's all we can do, buddy. Keep fighting, keep fighting the good fight. And, you know, you're a mouthpiece. You got more courage and more leverage than most people out there. And so keep doing what you're doing. I'm happy and thrilled to be a part of it. And I'll be there by your side as long as we can keep doing this.
Worried about the national debt? Inflation concerns keeping you up at night? Looking for ways to preserve your wealth but don't know where to begin? Well, good news. By reading The Big Silver Short, you can learn about the wonders and complexities of the silver market and why it's the most undervalued hard asset out there.
Silver is a place to be. Gold's important as well, but between the two metals, the most leverage to the upside and downside is the silver market.
Find out how Wall Street banks have left the silver market in place for the short squeeze of a lifetime as Chris Marcus of Arcadia Economics interviews leading silver experts, including former CFTC Commissioner Bart Chilton.
In silver and soybeans and oil, there's never enough physical to back up all of the futures contracts. Never is.
See why people are calling The Big Silver Short a must-read for silver investors and a groundbreaking book on the massive short position in the silver futures market.
Chris has done more for silver in that part of the precious metals market than anybody.
Click on the link below to order your copy of The Big Silver Short in paperback, audiobook, or Kindle now.
You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live.
On a very wild day in Silverland, where to begin? We'll start with First Majestic Silver, which you can see is up in pre-market trading over $6, approximately 45%, let's call it. And I'm guessing you're already aware. If not, we've had this situation this week. Couple short squeezes happening, particularly in GameStop, as you can see up here, which was soaring once again. There is a forum on Reddit called Wall Street Bets where they've been targeting some short situations. GameStop, I believe, was over $500 this morning. So let's see. Wow, came back in quite a bit. I thought it was up a couple hours ago. Certainly, you're going to see a lot of volatile trading in these. But it looks like they targeted First Majestic Silver, which is fantastic news because talked before. In fact, we did an episode last week highlighting the short position in First Majestic Silver, which you see down here, 23% of the shares floated. We had Dave Kranzler, Chris Marchese, and Rob Keynes talking about that last week. And hopefully I'm live here. I'm getting an indication that looks like we are. So anyway, I will continue on here. Hope that you guys are seeing me out there. But anyway, yeah, we did a call on that last week, that short position. And sure enough, really overnight, this has happened. You see, let's take a look at the chart. Going back a couple days here. So yeah, it was still at the close yesterday, 1380-ish, 89. And again, you can see pre-market up at 1893 on this feed. Let's take a look at First Majestic here on CNBC. They are showing 2025. Again, when the market opens, a lot of this will become clear, and I know we're human, so we all want to watch and see what it's looking like, but you'll find out soon enough. A few notes on that, aside from, I think this is a historic day in Silverland, especially First Majestic being the leading silver company, Keith Neumeyer being the one who's spoken out for so long about the short position in silver. I don't know if that's connected to why there was a large short position on First Majestic yet. In either case, making a crack in it today. I know there's a lot of people in the silver world that are going to be thrilled just at $19 or $20 First Majestic. Although, let's take a look at GameStop, which was an $18 stock 3 weeks ago. So while certainly $21 is good news. And by all means, this is not legal financial advice. Definitely a day to talk with people you know and trust. But we really don't know. No one really knows how this will play out. Based on what you see in GameStop here, let's take another look. I'll pull out the 1 month. So here is GameStop at, what is it, $40 here, a little farther back at $20. I wonder if we can see the overnight trading. So it went from 20 to 310. And as you can see early in the morning, yes, just a couple of hours ago was over $500, then got hammered down and then got hammered down again. That's the kind of movement that you would expect to see in a situation like this, but also makes you wonder, could First Majestic be at $50 or $100 in a day or two? To be clear, I'm not saying that will happen, but when we live in an environment where Bitcoin goes up 10, 15x in a year, Tesla's up 19x in a year and a half, GameStop just did what it did in a couple of weeks, and here you have a heavily shorted stock in First Majestic Silver that people are finding out about, let alone the silver situation. And we will have some brief news about that as well. So again, this is not legal financial advice, but it's a situation where, as a former current equity option trader too, but I used to be an equity option trader running a specialist post on the New York Stock Exchange. So I would see things like this, and anyone who goes out there telling you they know exactly how this is going to unfold, I would be careful of. But going to be a great day, it looks like, and certainly congratulations to Keith Neumeyer. Well-deserved, sir. Well-deserved. Also, congratulations to Todd Anthony and Mark Carruthers. I know a lot of you know both of them, run their investor relations, and I mean, it's exciting. I did load up on some call options this week, so I'm particularly excited for the open on this one, but also just really getting to know those guys, becoming friends with them, and feeling like a partner in this cause. So again, congratulations to Todd, Keith, and Mark. We're going to make this one short. Actually, we'll have a separate video coming up. We've got some silver events that now tacking on, but just if there's anyone in the Reddit group or anybody outside of the Reddit group, but new to the silver manipulation, wanting to get up to speed, maybe like something that could instantly put this in perspective, I'd watch this one, the silver manipulation smoking gun. Link is in the description field below, so you can go down there and click on it. I thought that was one of the videos that really laid out the glaring nature of this, and will give you some stunning data points in case you're wondering, could this really be happening, as many in Silverland allege. Fortunately, you don't have to take my word for it. In fact, I'm going to cue up the sound on that one too. This is Bart Chilton, former CFTC commissioner. He was a commissioner during the agency's silver manipulation investigation back, it was like 2009 to 2014. So when they said they found nothing publicly, although keep in mind, this is the exact period that the Department of Justice now has found, in their own words on their press release, hundreds of thousands of occasions of spoofing. Now, spoofing, suppression, manipulation, in the end, they dump contracts on the market that paper, gold, and silver that doesn't exist in any amount that is helpful. I'd say the terms, people get caught up in the semantics a bit, but just for anyone new to this, again, this is a regulator who was inside CFTC. So let's hear what he had to say. Again, I appreciate you mentioning the spoofing. Curious, because my understanding of how some of the manipulation has occurred is that, if silver is trading $20.05, there's a lot of stop orders placed around the $20 handle. So often if the price can get pushed a little bit, then you get a lot of those high frequency algorithms kicking in, and then you'll see a drop, with many feeling that people kind of nudging a little are then able to buy lower. Does that sound like a reasonably accurate portrayal to put it in perspective to folks, or would you phrase it differently?
Well, it's a good portrayal, but it's a very good portrayal. But it's actually also...
Now, you can go hear the rest of that, what is spoofing. It's on YouTube, because he goes into next 3 minutes some of the technicals, although I would say after basically going through the technicals, he summarizes it here.
Seconds. So the difference in your description is that today, when a market moves because of a spoof, it can move a lot more.
And I think we've seen that. Anyone who follows silver regularly sees that regularly. So anyway, plenty of videos about that on the channel. So hit the subscribe button and the notification bell and take a look through there. Basically, anything you'd want to know about silver has been laid out on the channel. And again, I heard the forum was closed. I guess not anyone can just hop in there, but here is Wall Street Bets. Thank you guys so much for bringing some attention to this. There's a lot of us in silver world that are excited about silver and have been studying this for a while. And for whatever reasons, now our paths are crossing here. So anyway, appreciate you guys taking a look at this. And I think you'll be beyond stunned by what you find. In fact, I actually did write a book about this, which I released last year. And I know you saw that silver chart there. I'm aware of it. I'm teasing you a little bit. We're going to get there. But here's the big silver short, which is available on audio if you like listening to audio instead of reading. But for anyone on that short squeeze club, here's the title. This wasn't written yesterday. This was last year. How the Wall Street banks have left the silver market in place for the short squeeze of a lifetime. I will stand by that title or subtitle as strongly now as I did when I wrote it. Again, one of the things that I personally love about the way the book come out was it wasn't just me sitting there writing my own opinion, but I interviewed 15 random silver traders, but the most intelligent, informed people on this situation going back decades that I could find. That's what the Bart Chilton interview was for. Keith Neumeyer is the one mining executive interviewed in the book, and he talks about why he's been speaking about this for so long. David Morgan, Andrew McGuire, Ted Butler, Craig Hemke, Dave Kranzler, really trying to create something. So if you were starting from knew nothing about silver and wanted to come up to speed as quickly as possible, well, again, you could watch that video here, this one, the smoking gun, but a little bit more detailed and extensive, and you get really 15 experts with hundreds of combined years of experience. So again, I'm not trying to, I guess I'm pitching the book, but I think it'll be helpful in this particular situation. So anyway, going to wrap this up. I am coming back with a very short video about silver because look at that. Yes, it's going to be a fun day. Although we're going to wrap this one up real quick. Would like to let you know there is a conference tonight. Rob Keentz of Gold Silver Pros is hosting Solutions 2021. Going to be kicking off in a little bit. Quite a hot schedule here. Which the link to this is in the description field below, but there's James Anderson. Sure, there'll be a lot of talk about, there's my man Alex Newman, but a lot of talk about silver, First Majestic. And with that said, the markets are about to open. So I'll be back shortly with a video about the actual silver spike, which is quite exciting, but want to wrap this one up here. Hit the subscribe button and the notification bell. That way you can stay posted, and I will see you again shortly. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a very wonderful day in Silverland. And in case anyone who has been saying, I'm tired of waiting for manipulation, silver this, silver that, well, take a look at this, up $1.36. The same day where we see First Majestic. Where is it? Trading is halted. Ooh, trading halted on First Majestic. Hopefully I am indeed live here at this moment now and you're able to see this. Again, I guess that we'll call that some breaking news. First Majestic is halted. And perhaps give me a moment. I'm going to get the chat window pulled up so that type in your questions. I'm going to stick around a little longer for this one and we can take questions, see how things develop. But there is some breaking news. Yara, if you're watching and you can tweet out from our account that First Majestic is halted. I'm sure people know already, but Let's see, is this clickable? Not yet. So we have quite an exciting day. Even the silver spike, I'm sure you guys have been watching that. First, I think actually I can check my phone here. Fortunately, I take a lot of pictures and send them out on Twitter. So yeah, I saw first it was up 68 cents. Then by the time I called, Silver Bill Murphy was up 95 cents. And now you see, let's see, about $1.39. And let's make sure I have this all streaming properly. I think we have it. I think I have the wrong title in there. So give me a second. I will update that because the silver short squeeze is on. Is what I meant to say. So sorry we're doing things live here, but I am going to make it worth your while, I believe. And looks like we do have things live properly, which is great news. And I'm going to get it queued up so I can see your comments in a second. But in the meantime, we can just sit here and watch the chart. Click. Oh, $1.48 now. Let's take a look at the silver stocks. If you've been waiting 10 years or 40 years or however long, what an amazing day. There's Endeavor Silver. Fortunately, that I bought options on yesterday. It is now up 20%. You heard from Brad Cook of Endeavor Silver. I think it was last Monday. There's Fortune up $1.37. MAG up 11%. First Majestic up 29, almost 30%. And now it is halted. SILJ is up. I mean, everything in Silverland is up. So I'm sure your portfolio is also up today. Everyone who's been waiting, for a long time, just congratulations. I think this is, here's the best part. I think this is just the tip of the iceberg of what is to come. Now, by all means, today, I'm not giving legal financial advice. There's a lot of people watching, and everyone's situation is different. So, again, I'm giving you my research. And for anyone new watching, my background, I used to trade equity options in New York for a firm called Susquehanna, and I ran a specialist post on the New York Stock Exchange. So, we do talk about options here from time to time, and we can dig into that a little bit today. Probably not suitable for most investors because that is a very high risk thing. Although if you do have option positions on a day like this today, things go really well. Although I would point out, keep in mind, we're going to see some wild swings here. So we'll see when we get some news about First Majestic being halted. Yara, if you're listening right now, perhaps you can check in with Mark or Todd from First Majestic. I'm sure they have a lot going on, but maybe if we can see if they have any idea, and then we can update the audience. And we'll see what we can find out there. But certainly good news overall. Yet I would point out here this is the overnight chart for GameStop, which you see now is, looks like they're still trading. But you can see up here this morning, twice it got above $500. This thing closed Tuesday at $150. Then yesterday went up $200. Then today, pre-market was up at $500, comes back down $75, then back up 75, then down 150. So First Majestic, I'm guessing this is good news that it is halted. Let's see what Google can tell us. I've not seen a reason yet, but hopefully my dear partner here at Arcadia is out there, or someone could perhaps opening up the window with the chat so I can see your comments in a moment. Just got a message from Blue Horseshoe Grandy, who you've seen on the show. He is smiling now. Interesting message from another friend that I will leave nameless, but I think is somewhat fitting. He writes, "Holy smokes, the power of the internet." And, you know, I'm not going to go all Tony Robbins on everybody today, but I've always felt that we do have more power out there than we imagine. Yes, there's some people with a lot of money that do some things that are not so everybody today, but I've always felt that we do have more power. We'll close that window in the background, although now I can see your comments. But yeah, I think that it's especially something like this that is information based. That's why I wrote the book. That's why I do this show, because I always thought at the end of the day, if let's see what we got news here. The following issues have been halted. Trading halt. Let's see what we got here. I mean, at the end of the day, I always felt this was stuff that if enough people actually knew what was going on, I mean, they're being lied to. So, you know, when people know what's going on, that's what you saw, how quickly the Wall Street Reddit thing has, okay, pending news. Reason pending news can make a decision to, all right. So we'll see if we can get an update on what that pending news is. Perhaps if anyone watching live right now has any insight. And let's take a look in the COMEX. AG halted, pending news. Now, keep in mind there was, okay, Yara, I see you in there. So yeah, if you can check in with Todd or Mark, that would be great. There also was news on the tax situation last night. Yara just logged in. So Yara, again, if you're listening now, can you perhaps call Todd or Mark, see if we can get any comment on what is the news coming. I'm going to pull up. There was news last night about First Majestic. They had an update with their Mexican tax situation. Didn't seem to be, I mean, I would call it a small positive. First Majestic gets break in opening round of Mexico tax. So again, not that the situation is resolved, but I mean, there's some, I don't know, the way we would look at it on the option floor, there's a difference if something's 50% to happen versus 55% to happen, or whatever you want to call it. But at least a net positive. First Majestic gets break in opening round. And as you can see, I don't pay the $290 a year for Bloomberg. So you can, perhaps someone can put in the chat window a link there, and we'll keep an eye on First Majestic, see when that opens back up. We'll take a look at the silver price, $1.40. The other thing that I call this unofficial, but we've seen often the thing shoots up, then comes back down. But the fact that it's kind of, there's been 3 separate gaps is encouraging news. Getting updates. I'm not a Reddit user. Maybe I'm about to become one, but I heard that the chat room there, let's see, on Wall Street Bets was actually got closed to the public because there was a lot of action in the silver room. I'm told the activity is picking up, which certainly is exciting. And I'll tell you what, for anyone who's new to silver, again, if anyone doesn't want to buy the book, you really need a free audio copy, fine. I'm not trying to, sit here to pitch the book, but just that was the purpose of it, that if you're getting into silver and starting from the beginning and wanted things laid out in a clear way where you grasp what's going on, you can check out the Big Silver Short. There is an audio version as well. So I think that will be handy because we saw a little bit last summer, some of those events play out. And I might add, see the subtitle, How the Wall Street Banks Have Left the Silver Market in Place for the Short Squeeze of a Lifetime. I would very much stand by that subtitle that I didn't just make up today. That's been there for longer, even before this. But yes, I think that we're just seeing. Now, are we at the ultimate short squeeze? Obviously, I don't know the answer to that. This is certainly a great indication. Also, to see it happen in First Majestic first, because this was all happening after this started after the close yesterday and just escalated higher. And this happened after that. So, I mean, we had First Majestic up back here while silver wasn't moving. Now to see that up, again, where does it ultimately leave us? We'll find out. But, you know, the fact that it's the same exact time as what we're seeing here now, GameStop back up another $60 from 5 minutes ago. So that kind of volatility, you can expect that. Guessing we'll be seeing plenty of that in silver. Let's take a look at some of the stocks. There is the Silver Junior Miner Index, which I don't think is appropriately named. I mean, in fact, one of my projects, I'm interested in making what I would really call a Silver Junior Miner Index, because I don't, for example, now it worked out well if you have a position in the SILJ because First Majestic is part of it. So you're winning big to that. And by all means, I think that if you own SILJ, you'll probably do incredibly well in the long run. But not First Majestic is not a junior miner. But in either case, you can see the juniors up 12%, junior index up, SIL miners index up 9.5%. There's First Majestic, which is currently halted. News from First Majestic coming shortly, says Yara. Well, that is awesome. Zach Demon, no free copy. Chris, your stuff is worth it. Well, I appreciate that, and I appreciate the sentiment, and I agree. Although, just to the degree that, I mean, even the way that we do the show here, yeah, I guess there was some. I have a lot of thoughts, and this whole experience has helped me to grow and mature as a man and in a business sense as well. There was always a part of me that felt it was important for people to know this stuff, whether they have a lot of money or they just don't have money. So by all means, yes, I would encourage people to buy the book. But if there's someone out there that really wants to dig into this and you're struggling, then I'll tell you what, take this link, tweet it out, copy Arcadia Silver One and Arcadia Economic without the S, which is my address. And we'll give away a few audio copies to spread the word. And so I appreciate what you're saying there. And I agree with the school of thought. And yes, go buy the book too. In fact, go buy multiple copies, and then you can give it to some of your friends who can start learning about silver. And we can amplify. It's kind of like when Ben Bernanke talked about that circle of virtuosity when he sold hyperinflation as a concept in his 2010 Washington Post op-ed. Actually, this is a real circle of virtuosity because the short squeeze is on. Let's take another look at some of our prices. By the way, if you want your friends to know about what's been happening and building in silver, and it's still, I think the managers might be thinking about exchanging the lineup cards. I mean, they're not even out of the dugout yet. This is not the second inning. This isn't the eighth inning. Keep in mind, Bitcoin, which was let's say, I think it was maybe 2016 or 2017 when it was $500. So at 32 grand, that's a 64x multiple, let alone in the last year. You have when it was down to like 3,000 or so 10 or 12x multiple, depending on what the price is today. And we can take a look at what the price is today, see if anything is happening. And even though this is the silver channel, we can still talk about cryptos without getting our feathers ruffled. I won't dwell on it. I know where's that theta thing that a bought a bunch of those a couple years ago. Every once in a while, I just like buy something just for fun and end up being like a 20 bagger. But I mean, you see, there's Theta. Yay. Actually, here's another one, gold and silver related crypto. I've had Reggie Middleton on the show before, and I will just say this is one that I keep an eye on. I'm not telling anybody else what to do, but Veritasium, very interesting situation going on where they got railroaded by the SEC. Makes it somewhat fitting that Gary Gensler about to take over. And partly what they're doing was making software that you could have financial markets where you are not able to sell the same piece of silver to multiple hundreds of people. That's right. Especially if anyone in Reddit crowd is watching. In that book, The Big Silver Short, one of the questions I asked these guys, this was done interview style format. It isn't just me like running my mouth about silver. Bart Chilton was in there, the former CFTC regulator commissioner who was part of the investigation where he found plenty of evidence of manipulation, which he talks about. I might add, for anyone new to this, go to YouTube, Silver Manipulation Smoking Gun, includes chapter 16 of the book. That'll tell you all you really need to know. But one of the things I asked the folks in here was that for each ounce of silver, how many paper claims are on it? And I did not get an answer of less than 500 to 1. In fact, here you can take a look, David Morgan, silver 500 to 1. Let's see if that one comes up. How much supply was lost? So there's somewhere in here. I'll try that because I chopped out that question. Let's see. Okay, here we go. Let me make sure the sound is queued up on this. All right, we got share sound. So here's David Morgan, one of the leading, most well-known silver expert around today. And again, I asked him for each ounce of silver, how many paper claims are on it, and we'll play a second of that. Well,
is it possible?
Is anybody having
urinate?
Bladder issues? You can go to whatever this guy's thing is called. We get the name in there a little sooner, but here we go. One last area to dig into with silver. We hear a lot about all the paper contracts that are written. I've heard numbers from folks like Bill Holter that there may be as many as 500 paper claims to each physical ounce that is out there. What have you heard and seen in terms of that? Are those reports accurate? And if so, how does that unfold?
Yes, yeah, they are accurate. I mean, CPM does probably a better breakdown than the World Silver Survey from the Silver Institute. And really, 500 is the idea is what's important. I mean, the numbers are important if the numbers are important, but it's greater than that. And why? And you know, Bill and I are pretty close friends, and I'm not calling Bill out on this. I'm just adding to what he said. We have no idea what the over-the-counter derivatives are because they're not transparent. We're just looking at what the London Metals Exchange, the LBMA, the COMEX, and all the derivatives markets that are out there in Netherlands that are reportable. That's reportable numbers is 500 to 1. Well, all these bank-to-bank, peer-to-peer, mine-to-mine, mine to corporation, corporation to mine to banker, banker to corporation to hedge fund to you know, a coin dealer, you know, those kind of hypothecations and re-hypothecations in the over-the-counter market probably are equal to. So you could probably not only have 500 to 1, you might have 1,000 to 1.
Right.
And
let's hear that part again.
500 to 1, you might have 1,000 to 1.
Right.
So you could probably not only have 500 to 1, you might have 1,000 to 1.
Right.
And
which makes it kind of special. Now, I know a lot of investors were not happy last year. You had silver go from, was it $18 to $29 was the peak. Ooh, wow. Market Watch can't handle the First Majestic action. Well, we'll go back over to CNBC. Keep an eye out there. So you had silver go from $18 to $29, and there were times where First Majestic silver was trading lower. Like if you look at the price when it was $18 at the last week of December of 2019, and then you look at times when silver was $25, First Majestic was actually trading lower, and a lot of people were frustrated. My call options that ended up worthless last summer were, it was a learning, but that's the difference. I mean, I'd suggest to folks who are trading this stuff, if you're expecting silver and the stocks to go in linear fashion, and now we came back in a little bit. So again, to be expected, you don't have to, it's still okay. Still up there. It's back up 9 cents as you refresh. So, relax, have fun with this. If you can't have fun with this today, then probably something better to be doing in life. But anyway, you're going to see moves like that. And with First Majestic, it seemed to me that, you're not going to, accepting that you're not going to get silver goes up this, and because the beta is that First Majestic is going to go up that much on the same day, doesn't quite work like that. Obviously, there are days when the stock market is down, so the stocks will be sold off. But if you kind of just get an idea of where this is going for the long term and roll with that, I think you give yourself incredible power. And with First Majestic, it seemed to me a very intriguing situation where, because like you have, obviously it's heavily leveraged to the price of silver. And if silver is suppressed, and there's a massive short keeping silver lower, and then there's a massive short keeping First Majestic lower, it's like a short squeeze on top of a short squeeze. You really couldn't make this stuff up. So that's anyone in Wall Street bets, just let your friends know that First Majestic is a short squeeze on top of a short squeeze, and on top of that, it's halted. And we are awaiting news. Chris is smiling, I see in the comments today. Well, I sure am. In fact, I did my other video first, and then I looked at my option portfolio today, and it is quite good news, reminding me of the days of 2011. Again, I'm not saying it's not legal financial advice, and certainly for anyone who's done this for the last couple of years, was a thorough beatdown pounding, although the days where it goes well is certainly nice. And my partner here at Arcadia, Yara, who many of you know or talk with in the chats, fortunately, I bought her, we talked, I don't know, it was an hour or so before the market closed, and I run her account for her, and she was saying, should we have some in my account? I'm like, yeah, probably. So bought her some First Majestic call options before the close. And thanks to our great management over at First Majestic, that, again, congratulations to you guys, Keith, Todd, and Mark today, who have really stood up to a lot of pressure. All right, so it looks like it is unhalted, and First Majestic is a little bit lower now. So perhaps maybe if somebody else is seeing the news, can post that in the chat window. And let's see. Again, there was a development on First Majestic and their Mexican tax situation. Not a huge change, but could move the needle a little bit. Further good news. And if anyone sees the news that is actually coming out on First Majestic, let's see, what are the chances they would put it on a darn page here? Well, we'll refresh and see. Maybe you can type it in the chat window there. So First Majestic down a little bit from its highs earlier today, but don't get sad, anyone. It's going to be okay. Just look at the game spot chart. There you go. Back over 400. Trading halted in GameSpot. So lots of halts today. Might mention something. I'm going to ruffle some feathers here. I do like listening to Cliff High. I don't know always what to think. I mean, some of it's like wild, yet the guy strikes me as incredibly intelligent. So I do listen and follow along. I'm not telling you what to think, although I found it interesting. He was mentioning in his most recent video that he was picking up some emotional language around January 28th, which is today. I remember going to sleep last night. I was wondering, what are the chances if whatever he's seeing was like, finally, we're going to see something happen in silver? And I think we're seeing that. Again, as I mentioned before, I would say this is the first inning because I was pointing out the multiples on some of these other assets. And you have Tesla. I mean, I know Kranzler digs into it a bit. I don't know if they've ever even made a profit yet, and they went up 18x in the last 15 months. So, I mean, what if silver like reached its fair value and then went up 18x after that? And here's silver at 26 and change, still 50% below not only its 2011 high, but its 1980 high. That's 41 years ago, before quantitative easing, before, trillions of dollars of debt. There you go. See, it's coming back up. Nothing is going to change the situation. So the only thing that's going to happen is eventually more people are going to find out about what's going on. Now, with that said, could you have a situation where the thing ends up back lower where it closed yesterday? Yes, that's certainly possible. I mean, think of it like a tie game in the fourth quarter. We could be sitting here seeing GameSpot-like numbers an hour from now, or maybe the thing could be down on the day. I don't think that's going to happen. I think the cat is getting out of the bag now. And once people find out about something like this, I think that's what ultimately ends it. But just keep in mind that the path between here and there is likely to be rocky. So, hey, Chris, can you talk about the mechanism to stop the rise if prices are too high? Released 3 to 5 years ago. I'm not quite sure what you're referring to there, but I mean, the mechanism is typically, and I'll get a picture pulled up here. The mechanism typically is that when the price rises, they just dump paper contracts on the silver market. And when you can write unlimited paper, and so, I mean, let's say the Fed comes out and says, we're going to do QE 8 and 9 today. And people would be most likely buying a lot of physical silver. And you would probably think they would buy SLV and other things like that. But then if no matter how much they buy, someone comes and hammers more paper, because you can sell infinite paper. And that's kind of what has been happening. Yep. And there we go is a chart, which I will be able to pull up momentarily, which will show this. But yeah, that's what that's the mechanism. But that's why you saw that clip from David Morgan before, where he was explaining how you keep adding, it's probably beyond 100 to 1, and then when you finally have this moment where someone, in this case, looks like Wall Street Bets, is helping spread the word. And mean, if enough people were, actually doesn't even mean enough people. It's really, I would say, a better way of phrasing it would be enough buying power comes behind that. That's always been the Achilles of this thing, is that if you have 500 paper claims for each ounce out there, and you just keep increasing it every time people buy more silver, then yeah, it's going to frustrate a lot of people. It's going to be insane while it goes on. But if you ever get to that point where people demand their metal, that's when you have the end of It's a Wonderful Life. And certainly it's encouraging. I mean, there's a lot of people in the silver world have been talking about this for a while, but now that saw what happened in GameStop, obviously silver may be a trickier situation, but Here's a chart from last week. You see price falls off a cliff right as volume is dumped. Price falls off a cliff. I'm trying to get access to some of the trading data so you could actually see. So I'll make a note to do that today. We'll call Mickey, former floor broker. See, when I was trading equity options back on the New York Stock Exchange, if something traded at my post, it was a big trade, the brokers would come by, they say, hey, I see this on the tape, what traded? And it was required to say, you know, customer bought these for this price tied to this stock. So you get color on the trade. I'm assuming there would be a way equivalent of that on the COMEX. Then again, assuming anything fair, transparent on the COMEX is probably a little bit dicey. So let's not be foolish yet. I'm going to look into that because I think you would find that. And here you find silver back up another 11 cents. So for anyone who's, getting panicky, there, look at First Majestic, can't be held down. How beautiful is that? We go back over to our chat window. If anybody has seen the actual news on First Majestic, if you could put that back in there again, that would be great. Arcana Silver is sleeping. Working on getting Arcana on the show. I know someone there. Let's see. Anyone type in the news? Does anyone know what is the news on First Majestic? Start promoting physical silver on forums everywhere, says Barbara Spector. Yeah, we'll take anything on this channel. Tweet it, share it. Hit that subscribe button. In fact, just to show you the kind of silliness that we do here in Arcadia land. Let me see if I can find our silver giveaway this month. Yara, perhaps if you're listening, you could send that over on Skype and I will pull up our silver giveaway. I don't know. I think part of the fun is to get silver in the hands of people as well. Share the message. So we're giving away a 10-ounce silver bullet this month. Link is in the description field below. That's what it looks like. Yeah, it's 10 ounces of silver. Let's click them together. You can hear the ding, ding. Yeah, so get your silver now before... Actually, I'm going to be careful how I phrase things. I cannot guarantee the price will go higher. And in fact, I will try and be responsible and point out that even... In fact, let me put it like this. Let's say silver is $100 at the end of the year. I'm not saying that's going to happen. But even if it were, you should expect to see days where First Majestic is up $4, and then you look an hour later, it's down $2, then up $6. Kind of like what you see with basically every other asset these days, where it's become normal to see these wild moves. And it's interesting how you even suggest that. All right, here we go in the chat room. Win that 10-ounce silver bullet. So if you even suggest that the same kind of volatility could occur in the silver market, people think you're looking for aliens and all that stuff, which, I'll just say that there's no one has explained to me what I'm missing here. I don't get calls from people disputing it. Again, I'm not saying everything that I write is correct or that I get everything perfect. I'm not by any means saying that, but I'm just, in fact, I think for people who've been watching the show or know me well, I mean, my general style of investing is, when I come across something and I see it, and then I'll spend years trying to think, all right, how could I be wrong? Where could I be missing something? So it was September of 2011 when after silver had gone up to $49 that April, then got back up a bit higher into the 40s again by September, and then seeing the prices crash down. In fact, I'll show you the exact moment where it started to be like, yeah, maybe I had heard that there was something funky with the prices being manipulated. And let's show you a couple of the key ones. That is silver. But actually, what really started all of this, here is the gold chart of September 6th, back in 2011. This was after the US had been downgraded. Let's go back one day. Debt ceiling, these guys were making an ass out of themselves. So gold was at its all-time high, had crossed through $1,900. US is on the ropes. Europe is printing. Greece is blowing up. And then right around here, still remember it clear as day, because I get this. I have a big position on back then too. I thought it was home free then. Maybe this week will be the week and I'll do the next show from the beach. But right around here, you get this announcement from Wall Street Journal saying that the Swiss had just pegged their currency to the euro. Now, what that means is that at a time where the supposed safe havens are being exposed as the frauds that they are and were, essentially the Swiss were saying, we're going to start printing too to make sure our currency doesn't go. So supposedly the last safe haven is going to start printing. I remember thinking, geez, is gold finally going to go through $2,000? Instead, you see this, which I'm sure is becoming familiar to a lot of people. In fact, you can see there was one 2 days ago. This actually looked bigger when it happened, but today's move has made it look small in comparison. Back up $1.24. There we go, silver team. That's right, Reddit. Let people know what's going on in Silverland. Here's another one you can let folks know about, because as silver was rallying following Ben Bernanke's virtuous circle of money printing in 2010 into 2011, silver had gotten up to $49. Again, I'm not a technical analyst, but I'm guessing the fact that silver reached $50 in 1980 and then it got right under 50 in 2011 is not that silver hasn't, as a commodity that people most look to as an inflation hedge in a world that's being hyperinflated. I don't think it's that people thought, well, it can't be worth more than it was 30 years ago. But you see Sunday night open down $6 instantly. Chris's portfolio's trash. But these were the two events that made me start thinking, gee, there's something unnormal going on here. And so I basically spent the next day driving everyone around me nuts talking about silver. But this, again, was an attempt to disprove that, was an attempt to say this can't be, I must be missing something. So rather than write the book myself, it was done interview style format. Andrew McGuire, Ted Butler, David Morgan, Bart Shilton, every silver expert I could find who could add some insight. One of the things I think was interesting is a lot of the details behind the scenes that are kind of hard for people to confirm. You heard echoed by so many different people at the same time, such as Warren Buffett getting forced out of his silver position, which was bigger than the Hunt brothers, and that being what led to the formation of SLV. So again, some of these things that basically the story is that Warren Buffett was caught up in some scandal and they basically said, let go of the silver or we're going to have lawyers all over you for the rest of your life. I wasn't there, but I found it interesting that, again, you had multiple well-respected analysts confirm that. So anyway, I say that just in a sense that I've spent a decade thinking about this. There could be some blind spot I can't see, yet do this show every day, brought on everyone outside of Santa Claus who even wants to talk about silver. And if there's some other explanation, I can't seem to figure it out, but maybe it just is what it is. And the title here, how the Wall Street banks have left the silver market in place for the short squeeze of a lifetime, could be appropriately named. Let's take a look back over at the silver stocks. We'll give this one a little refresh here, but as you can imagine, seeing some big numbers. The texts are rolling in. I think someone was scared of the silver prices. Well, I mean, I guess there's no day to be scared. I mean, maybe it's, again, I want to be careful the way I phrase this, but keep in mind, based on this, I mean, we could be in the early innings of First Majestic. Again, it's not set in stone. There's a battle going on here behind the scenes, and you know, could come. The shorts could win out this round. I think ultimately, again, not legal financial advice, but ultimately, if people just sit there, buy and hold, you're going to be okay, and you don't have to be a hedge fund genius yet. Either case, let's take a look. SILJ up 13%. Is that ultra? What is this? Ultra Silver Pro Shares up 11%. First Majestic up 31%. So nice to see it's hanging in there. There's MAG up 233. MAG, a good stock to know about as well. Big silver deposit. There's Endeavor Silver. I'll leave her nameless, but my friend woke up. I have a friend at Endeavor. It was only up 7%. She was like, wow, it's only up 7%. Love it when stock's only up 7%. We're disappointed, but how about we almost get a blackjack and triple that one up, 19.5. Maybe it'll hit 21% shortly enough. Fortuna Silver, big day there. 18%. Pan American Silver, which I think is more of a gold stock if you look at revenue from the different assets, but there's Silvercrest up $1. Here's an interesting Silvercrest. We'll take a look. Fit that First Majestic profile in the sense that, where's my Silvercrest window? Yeah, like when you had silver, when it was $18, I think for Silvercrest is almost flat, which, let's see if we can get that. Click in there. So Silvercrest, I would say, is still seemingly, I mean, the First Majestic is finally like doubled since not doubled. First Majestic ended. So, okay, here we go. So here is January 19 of 21. Oh, okay, well, we want the 5-year chart. Oh, there we go. So here is, let's go back. Here's May. So you had a big rally here. Here's June. We'll even go a little farther. So July 1st. Okay. So July 1st of 2020, last year, Silvercrest is at $9.98. So July 1st. Yeah, there we go. $1.35. Silver coming back again. So what did I say here? July 1st of 2020. So here you see silver is still below $18 on July 1st. So below $18 on July 1st, we saw Silvercrest was $9.98. Now with silver, what is it? $8 higher. So here, let's call this 18. And then silver's up $1. Forget it. 20. So 18. So almost $9 higher, and Silvercrest has ticked up a penny. Again, you can mark it from different places. I know a lot of people mark from the lows of COVID. I kind of look at that as the anomaly and not the best place to look at it. Hey, you can mark it however you want. Not offering legal financial advice, but there are some thoughts. There's Lexco up 7%. Good news. Long some Alexco deltas. Look at some of the juniors. There's Reyna up 12%. There's my friend John Lee, Silver Elephant up 8%. Kuya Silver, there. We had David Stein on the show. I guess that was 2 weeks ago. I like Kuya Silver, and big day they're having, up 20% there, getting in on the party. And anyway, you can see, well, there's Endeavor Silver about to hit there's the blackjack. All right. So there, Endeavor Silver flying, First Majestic rallying, and Wall Street bets, excuse me, helping the cause. Let's take another look at our silver price. Seeing $1.35 there right now. $1.31. Okay, so as you can see, prices go up and down. That's normal. No need to panic. But let's give a special thank you to Wall Street Bets and all the folks there that love finding assets that are wildly underpriced because of a short squeeze, then spreading the word to, I imagine, fund managers and wealthy investors who get together and do something about this, which I think is fantastic. It seems completely legal in a public way where people or investors are sharing information, and there's like a Robin Hood like feel to it of finally, and that's what I think is encouraging, seeing that we do have power. Yeah, the government does this, the government does that, and they leave people feeling powerless, but this is just a snippet of when we let go of, I'm on this side or you're on that side of the parties. For people who believe in honest markets, honest living, honest government. I hope this isn't an inappropriate analogy. I say this respectfully, but when I think of what it was like for the people who were slaves that, and you have this one guy comes around beating them up all the time, but then eventually they say, wait a second, we're making all this stuff. This guy just comes around and hassles us. If we throw him in the lake, you can actually, interesting what can be possible. And I do think we have power. I think this is a great example of it. I personally believe there's still a lot of things going on behind the scenes regarding the politics, which doesn't mean you have to agree with what someone known as a letter of the alphabet says. I think there's and I think, no one even mentioned that. People go, oh, it's conspiracy theorists. Okay, fine. I think there's a lot of psyop misinformation mixed in. There's often the way that I find in finance or in politics is that, you mix in these things where there's part truth and part complete not truth. And then so it's like if anyone even considers the argument and looks for the different pieces and see which ones might be accurate. So I'm not saying that is the way to look at it, but I think there is stuff happening politically behind the scenes, whatever that may be. I guess we'll find out. I don't think it's completely unconnected to seeing what is happening here. And anyway, we'll take one final look at some of these markets and then going to wrap up for now. Maybe we'll be back later today. We'll see. Do have Dave Kranzler coming up, I believe, today, or maybe we'll save him for tomorrow, because also place to be today. In fact, we'll save Kranzler for tomorrow so he can cap off the week with a nice recap of what he's been seeing. But because today is Rob Kientz of goldsilverpros.com hosting the Solutions 2021 conference. Link is in the description field below. Going to be a lot of fun, and it's free to attend. How to survive a currency crisis. I mean, all these issues we're talking about. I am appearing at 3:30 Central Time. What do we actually do when the dollar dies? I'm sure we'll be talking First Majestic. Then there's an after hours party from 6 to 8 Central. So a lot of your favorite gold and silver speakers will be there. There's the great Jerry Huang. Look how darn handsome that guy is. But anyway, if you have questions, want to talk, hang out, great conference going on today, hosted by Rob Kientz. So go sign up there now. And when we get to that happy hour anyway, we'll see what price GameStop is. We will see what price First Majestic Silver is. Looks like as I get ready to wrap up here, it's about $18 silver. Let's get a final look at that one. $1.25 now. Also in the description field below, sign up to win this silver bullet, and you'll get posted with these videos. So as I maintain my pledge to keep you miles ahead of Wall Street on a regular basis. That way you can get the information there. So go have fun looking at your portfolio, refresh how much money you've made, enjoy it. You know, we've all certainly gone through enough days seeing the price down. I would say trade and invest responsibly. Talk to your advisors. But if you want to know any more about what's really going on in silver and what I'm seeing, by all means, hit that subscribe button, the notification bell, and plenty of content on the channel. And with that said, gonna wrap up for now. Maybe we'll be back later, but come join us at the conference and have a happy silvery day, everybody.
You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live.
Well, hello there, my friends. Chris Marcus back with you on Silver Thursday. Maybe if the fireworks continue on this one throughout the rest of the day, maybe get another $1 or $2 in silver. And this will be a bit of a historic day. Certainly has been the case for First Majestic Silver, which is still up. It's come back in a little bit. Still up about 279, 20%. Although we had some breaking news here. GameStop and AMC trading restricted by TD Ameritrade, Schwab, Robinhood, and others. Very interesting development. Here's the quote. We do not believe this situation will subside until the exchanges and regulators halt or put certain symbols into liquidation only, said Interactive Brokers. So some brokerage houses have begun to respond to rapid buying by social media inspired platforms. Somewhere down in here it mentions that they're halting buying. We have placed over restrictions out of abundance, blah, blah, blah. Margin announced that. Option trading, liquidation only. Now, if I know we have a lot of silver investors in here, if this is all sounding familiar, like what happened to the Hunt brothers, I would say that it is. In addition, long stock positions will require 100% margin. Short position will require 300% margin. Let's see. So they are somewhere in here. They're putting a limit on opening buys, I believe. I saw it before I started. We put several restrictions on the transactions. Says charge requirements, limiting how much an investor can borrow. So anyway, you can dig through here. I guess the main takeaway, anytime you have a market, supply and demand is what it is. You put a steak in front of your dog, he thinks what he thinks about it. Now, if you pet him and let him eat it, there's going to be one reaction. You can scare him so that he's afraid to eat it, would be another reaction, but that's not going to change that he wants to eat it. So when you start tinkering with demand, is the same as when the Fed tinkers with the interest rate markets, and then it always blows up because it inflates bubbles that eventually pop. And if the same here, you know, if you're trying to alter the supply and demand, people want to buy it and you say they can't, or you create legislation or rule changes that they can't. Reminds me of when you pull the goalie in hockey. It's kind of like a last-ditch move, which can work, and maybe this does subside, yet there's also the chance that if that blows up, then watch out. We'll see what happens, but it reminds me of when the, you know, the government tells you, oh, everything is under control, we got the budget and everything, and find out later that things are imploding underneath the surface. So GameStop shares fall over 50%, halted several times after brokers placed restrictions on trade. So you can see the impact there. There was a note at the top. Robinhood has halted buys. Maybe it was in a different article I saw, but let's click back here, see what they're saying. So down to, this was $500 like 3 hours ago. So wild volatility. I'm sure that may be reining things in First Majestic Silver a little bit. Was as high as $18 earlier this morning. Let's see, after halted several times after brokers placed restrictions on trade. David Tepper telling investors to be careful playing speculative names. I think, let's see. Don't be scared of the drop. One trending post said Thursday, don't be scared of the drop. I won't comment on these posts. I mean, keep in mind, I know there's a silver thread going, which I hear is quite hot right now for understandable reasons. There's probably a lot of good information. There are probably comments that maybe aren't exactly what you would follow. So, you know, I know it's going to be a little bit of might be a confusing time for people. Just talk these things through with people you've known for a while and trust. It's great to read the boards, see what's going on. I appreciate that you're tuning in and watching me right now. I will promise I'll give you my best honest opinion, and I think I've gotten pretty darn good at some of these things. So, but I mean, again, I think when we go out and research, the part if you're getting information and keeping track of these things is great. But at the end, the more in any area of life we take ownership for the results and what's happening, that's an important part of the formula too. So just passing along that word. And before I wrap up, here's another one I just saw. Is the Reddit rebellion about to descend on precious metals? So this is on Zero Hedge, and they're talking about the chat group in there. I won't go through all the reasons that silver is the most manipulated asset on the planet. You can check any prior videos. Go ahead and hit the subscription button and the notification bell so that way you can stay posted as we cover more. But I am going to look for, where's the view count? Because Zero Hedge, well, they have quite a large audience, and usually you can see that somewhere. So 140,000 people saw this. And, you know, I think, again, you have a situation where once the word gets out, watch out, and the word is getting out. Wall Street bets, silver thesis in full. Well, let's take a quick, let's look at it together. Why not? We'll hang out for another minute or two here and see what this one says. And then soon I'm going to go eat breakfast, which I didn't get around to yet, but well worth it on such an exciting day. Gold fix, Wall Street bets, silver thesis in full before the open, silver, gold, oil, and they all skyrocketed. So anyway, you can go through that one. Let's take a quick look at the other metals before I close this out. I'll hit the refresh here, but silver getting back up there. I might add, again, while this is not legal licensed financial trading advice, I bought, what did I buy yesterday? It was these SLV calls, and I'm trying to exhibit some restraint. So I bought the SLV Jan 29 of 20. So expiring tomorrow, I was making a 3-day bet. I bought the 24 strike. Let's see, what did I? SLV. So I paid 13 cents. I bought 24 of them. And I just sold 4, fortunately at 84 cents, which is nice. But really what I'm getting at here is that, you know, if the whole point is to buy low and sell high, yes, I think this is still early, but I don't know. I mean, if you told me silver was down on the day, I wouldn't be stunned. So especially if you do have some big gains, at least I'm not telling anybody what to do, but a time to consider some money management. I do think in the long term, things will go higher. So if you're just playing for the long term, then the best part, you can just sit there, watch this, not have to do anything. If people are trading a little more actively, I have a mix of both that I do. So anyway, that's just how I look at it. Not necessarily how you should look at it. Although fortunately, if you do have any questions, later on today is actually starting now, the Solutions 2021 conference by Rob Keentz of goldsilverpros.com. I'm speaking at 3:30 Central Time. I think we're going to live stream that to the channel. Then fortunately, there is happy hour, so grab yourself a nice something to drink and eat, and we'll all be hanging out. You can talk about a wild day of trading. So this is in the link in the description field below. And with that said, again, we will see what happens, but now trading houses limiting buy-side orders. And I wonder now, actually, the final thought, I mean it this time. If they told people that they could not initiate buy orders in First Majestic, if that gets placed on the list, man, that would be the ultimate showdown. Because again, you know, sometimes that can delay things, but could go the other way. We shall see. Hit the subscribe button and notification bell, and I will see you soon.
You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live.
Barstool President's Green Hammer. One up on you, Dave. Grab the sword. Fantastic. It's got some faux silver, some faux gold, and some faux copper. So this is what I'm bringing. This is what I'm bringing to you. Come at me, Dave. Come at me.
All right. Let's talk. Though in the market, Trevor, what do you see? Like, let's lay it out for us. What's the silver? What's happening in the silver space right now? What has triggered it all? Let's take a look at the history real quick of the last. The history meaning very young history. 3 days, pretty much, end of the week. Now, lay it out for us. What have we been looking at, and make sense of a bit, and then we'll switch over to Phil in a couple minutes to get more of a view from the producer side and how he's handling the situation right now.
Listen, we can say a silver squeeze. What I'm seeing is silver momentum. I don't know if you have the chart, if you can pull up the chart. Just looking at it, not only is this move in the last 2 or 3 days completely healthy, it's completely justified. We've talked about for the last year how silver needed to catch up to gold. Gold had that big run up into 2020 through August, then started to come down. Silver never regained its all-time highs like gold did. It had to play catch up. We're not even there yet. This is a healthy move. Where we go from here, I don't know. I think we can continue to consolidate and squeeze before a big move higher. I am excited. This is great. I thoroughly love it. I'm getting so many calls and emails and messages from people asking me about silver that never gave a flying shit before. And so this is good. I'm glad more people are coming in. Now, this is not overblown. I've got to address something that people who think, this is not a healthy move. F that. This is a healthy move. It's not at all-time highs. We haven't even reached $30. The squeeze, I don't know if this is as much of a squeeze as it is just a momentum. This is a good move. We need this move.
No, I think it is extremely good to get that attention on, right? And it all started earlier this week, or actually late last week, with the GameStop short squeeze and the Reddit group Wall Street Bets bringing a lot of attention to this whole sector. And people were just looking for short sold or sectors, stocks that were massively short sold, right? And the silver was brought up, and it's got over 10,000 likes. I think the Reddit group is at over 6 million members right now, just following what is going on there, looking for the next hot pick. And fortunately, silver made it, and we're in the junior resource space. Phil is a major miner here, so really excited to have him come on in a few seconds to give his perspective. But run us through it. Like you made some bold statements there, Trevor. Like, where is this headed? Like, and I want to talk a bit. And fortunately we got David Morgan and Chris Marcus coming on as well. I really want to talk about the fundamentals of this as well. Are we even strong enough to push the silver price? Who are we fighting? Right, that's I think something we want to get to the bottom of, and that's why I'm extremely excited to have these three guests on. I'm asking Trevor, should we switch over?
Okay. So I posed this question. Our friend Pete Panda thinks that J.P. Morgan dropped their short position last night. Pete, I think you're wrong. I think Chris is going to back us up, but the data shows they probably dropped that short a while ago. I think what we had been fighting was literally just sentiment. Nobody cared about precious metals for the last couple of weeks. They were chasing these high flying tech stocks. And this is why I wanted on Chris. I started reading his book about a week and a half ago. A lot of great information there. Is this a Hunt Brothers type of scenario? Probably not yet. But the bullion banks are definitely scared. Like, listen, like for every ounce of silver in the system, there's 500 contracts and derivatives. Compared to that to GameStop being short 140%. I mean, I know Chris is like laughing. He's like, every time I tell Chris he uses the word manipulation, he has to take a shot of tequila. Well, no. Hopefully he got his bottle next to him. But this is the game that the system was set up for them to have a higher power in the price, and now people are starting to push back, and this is good.
Fantastic. Like, let's get to the bottom of this. I've seen lots of photos on Twitter where people post their bullion and they just bought bullion. And I think it was Gold Ventures, a Twitter user with over 35,000 followers on Twitter, who told everybody, buy silver now, buy it physically. It's got over 2,500 likes, a zillion retweets as well. Now I want to switch over to Phil Baker. And I just switched over. So Phil, you're alive. Thanks for joining us. Really appreciate it. Are the bullion banks calling you? Are they desperate for silver? What's your feeling of that market? Are you getting more retail inbounds? Like, I've been getting some posts under our Twitter feeds, like who is AG in that case, First Majestic, or what is a short squeeze? Are you having retail investors now that invest maybe $500 into Hecla, reaching out to you or your IR department, say what is going on? Do you see that actually?
Phil, yeah. We've always been talking about there's going to be some sort of catalyst that moves precious metals higher next, right after this consolidation. In fact, we are currently seeing, as I'm talking, gold and silver are coming back down from its daily highs. But here's my question. Like, we never knew what the catalyst was going to be. And in hindsight, we wouldn't have known what the catalyst was until after it happened. Do you think this is that catalyst?
Phil, I really appreciate you joining us. Thanks for playing ball this morning. It was awesome. We said, as Trevor said, we set this up within 10 minutes, and I hope it worked all out. And really appreciate you being available. That was fantastic. Thanks for coming on. Bye.
And can you imagine being a CEO of a silver mining company right now?
It's got to be fun. I have to admit, it's got to be fun.
Just as exciting as being the CEO of a gold mining company when gold went up to 2,100 or whatever it was.
Exactly. So, Trevor, before we switch over to our friend Chris Marcus here, I'm going to ask you to jump out of Zoom so we don't get an echo. I'm just making sure. Okay. So just making sure we have our eyes and ears and everybody out here. So this is a live session with me as the technical director and running this AV poop show here, right?
You're doing a hell of a job.
So let's see if this keeps working out, and let me see if I can get Chris Marcus on here in a second. And I'm really excited to hear from him. I think I just need 1 second here to get him set up. I thought it had worked before. Let me just get him here, and maybe Trevor, you can talk about what you're seeing. Where's the silver price at right now, and where are the major miners trading? What do you see?
So I'm seeing silver's February futures is at 26.90. It has come down. It tried to get up to 20. What was the high? 27.77. So it is coming down, but it's still up for the day. Gold, on the other hand, has come down about $28, maybe a little bit more than that from the high of the day. So pretty interesting, but there's still continued flow. What I'm watching here really is we're seeing a sell-off in the major markets. Futures on the S&P and the NASDAQ really have tumbled in the last hour. The Dow Jones is down over 2%. And I think it's just kind of bringing a lot of people are kind of selling almost everything right now.
Okay. All right. I got Chris Marcus on. Chris.
Where's your battle axe, Chris? Let's show him your battle axe, buddy.
Resting for the studio. But I am planning a concert in Denver soon, Trevor. So I hope you're going to be ready to come out and Who knows what the price of silver will be in a month or two, but great to be here with everybody today. Thanks for having me.
Oh, it's fantastic. We certainly miss you here in Denver, my friend.
Well,
no,
be back there soon, and it's fun following what's happening today. That's for sure.
Hey, Chris. Okay, you tell me. We kind of iterated it. How many derivative contracts supposedly are out on a single ounce of gold in the system right now?
Are you saying how for each ounce of gold, how many paper claims are there?
Silver. Yeah.
I mean, I don't have, well, I guess I have some clue perhaps. I mean, I'd say the first thing, it's a lot of issues silver related, and maybe David Morgan can confirm this when it's his turn. We're guessing at a lot of this data. But I mean, when you look at, I think we hit 2 billion ounces traded in COMEX yesterday. I was looking forward to seeing the volume there. I think it was 2 billion ounces. I'll pull it up later perhaps, but 2 billion ounces traded. In a normal year, you only mine about 900 million ounces. So that's twice. So all these mining companies, they go out, they dig up in a regular year. Forget last year where the mines got shut down because of COVID. Regular year, it's about 900 million ounces. And yesterday on the COMEX, they traded 2 billion ounces. It's funny. I remember when I was doing the book, The Big Silver David, as well as several of the other people I interviewed in there, was that for each ounce of silver, how many claims do you think is on it? And I was actually watching David. I cut out his clip again because I love his answer. And he's saying, well, it's based on certain pieces of data, about 500 to 1, but we don't even know what's in derivative land or the stuff that they're not reporting. I don't know, maybe does even Jamie Dimon or JP Morgan, could they even calculate their true exposure? Probably not. So, a lot of it's guesswork. I've yet to hear someone give an answer lower than 500 to 1. It's a lot more than 1 to 1. I think the concept is more important than duking it out over whether it's 100 or 200 or 300. I've not found anyone who can explain to me another outcome aside from eventually the end of It's a Wonderful Life. And that's why, I'm sitting here holding the book. Trevor, I don't know why you just waited to read it. I got your copy a year ago to help you out. But here, with David Morgan in it, The Big Silver Short, subtitle, How the Wall Street Banks Have Left the Silver Market in Place for the Short Squeeze of a Lifetime. I didn't just write that yesterday. That's been there for a year. I've been studying it for a decade. And perhaps the last thing I would say is that that's kind of what I thought back in 2011. The book was almost an attempt to find, I'm like, no, there's got to be some blind spot or something I'm missing. So this was more of an investment where I could be, and at least I stand by that subtitle of it being the short squeeze of a lifetime more than ever. So we'll see if that plays out in our near future. It seems like it is starting.
If I could jump in there, Chris, and you said short squeeze of a lifetime. So you actually do believe that the current events are strong enough to take us to a new level? Or is that just a blip on the silver price radar and it's going to be gone and nobody's going to care about it next week again when the media stops covering it and Reddit is shut down or Wall Street Bets is shut down, Robinhood went the way of the dodo bird? Like, what do you think?
Well, to be clear, I did not say that. Maybe I'd phrase it a little differently. I see Trevor's got his sword out. Hopefully I'll have an answer that pleases him. I don't want to get him upset. Well, on one hand, you could say it's already made an impact. First Majestic's up $3 or $4 in the last 2 days. So,
is that sustainable?
Yes, but it's like a tie game in the fourth quarter. I think people assume this stuff. And I can understand that because a lot of the things are rigged. A lot of things are planned in advance. And I think when you really study and look at the things that have happened, but I think there's also that degree to which, it's not decided. And I think this is incredibly exciting to me, seeing that people are standing up and making a difference. Also, perhaps worth considering. Now, this is just something I'm wondering. Don't want to lead anyone astray here, but I see all these other things where you have influence from groups like Soros or one party or the other party. Is it at least conceivably possible that a political influence is in some way connected with what's going on? I don't know that to be the case. I've not seen any evidence of such, but as someone investigating a lot of unusual things going on at the moment, so I don't know much about that group. I don't know who's in there. Maybe Warren Buffett goes in there with his hot chocolate every afternoon for all I know.
Can I bust in here real quick? And I want to play a little bit of the other side and maybe less conspiratorial and more just what the facts are.
Okay.
The government, the Federal Reserve has printed 30% or more of all the US dollars in circulation right now have been created in the past 10 months. Your dollar has been devalued, continues to be devalued for the last 80 years. Now they can say they're going to create another $2 trillion in stimulus, and maybe the overall population of the country will get $2,000. That doesn't make up for the loss in your buying power because of the devaluation of your currency. The government is not going to come save you, and it's not going to come in the form of a check. They have lost control, and we're seeing people move into something that is either decentralized like a Bitcoin, or actually has hard value like gold and silver. One of the things that surprised me in this week, and Chris, maybe you can shed some light in on this, is I was seeing the data from the podcast. We have a lot of young listeners, a lot of millennial type and even younger who are listening to this podcast. But I don't necessarily think that the market, the silver and the gold market, is represented by that younger generation as a whole. It's always deemed like, oh, it's like, your grandpa's safe haven market, or your dad held silver coins just in case of Armageddon. But I do think that there's more going on for a hard asset allocation from a younger generation than we probably thought there was.
I mean, there may well be. Again, I'm interested to learn more about the history of that Reddit group. I don't know that much about it. I'm sure someone who is familiar with it. I mean, it's interesting to think who could be in there. It's like, even when you have a podcast, even if 1,000 people listening, well, who are the 1,000 people? It can make a big difference. But I think more than age, perhaps I thought there were maybe two ways this could end. Either A, someone eventually shows up for their physical medal and is not there, which it's hard to know how close we are to that. But I mean, now you have Janet Yellen in the White House with a $8 trillion Fed balance sheet talking about how it's time to go big and supersize that. So, it's like,
you think you think 2 trillion's big, like wait until it's coming down later.
So, I mean, in case people didn't have enough reasons to buy silver yet, I mean, I don't know what you're supposed to think about that, but I mean, it's also, to me, either my entire thesis is wrong and there's no massive short position out there, or it's not levered up some insane number, or it is. And at some level, whether it's Wall Street or Reddit group or a fund manager, the real dynamic is, say, when you have enough buying power that realizes or even thinks, whether rightly or not, that they can do something about it. Yeah, I think it's very vulnerable. Will we have like $50 silver next week? I don't know, but if you told me this is how it unraveled. So again, I want to be clear the way I'm phrasing things. There's a lot we don't know. there's imperfect information, but if you told me that one day my thesis is going to turn out to be correct, that is it possible that this could have been how it went? I would think so.
Is this the opportunity of a lifetime in the silver space?
Yeah, I think so, because whether it happens this week with Reddit or next year with something else, I mean, I don't know. I can't figure out how else it unravels, because I can't figure out how the Fed undoes the balance sheet. I personally don't think they're trying or want to. I mean, I think these guys are just stealing whatever they can and hoping that no one notices. So, and that'll go on until it stops.
I think I disagree with you about the opportunity of a lifetime in silver. I think the smart trading came in when silver was down to like $13 back in 2000. What, 18,
Trevor,
19?
Trevor is still half of not only its 2011 high, but it's 1980 high. So even before QE, before like 28 trillion or whatever the real amount is. But we're in an environment now where Bitcoin goes up 10 or 15x in a year. Nobody flinches. Tesla's up, I think, 18x since they started the swap lines a year and a half ago. GameStop, I think, was up 40x. So, I mean, we're talking about, what if silver gets back to its 1980 high, or whatever the correct inflation adjusted equivalent actually is, and then goes up 17x after that? I know that's like, people say that like it's like we're not allowed to talk about that in silver, but it seems to be happening in just about every other asset on the board.
Okay, we got David Morgan here waiting on the other line as well. We want to switch over to him in 1 second as well. So last question for you, Chris. Where are we going to end February? You give it 4 weeks. Silver price of silver at the end of February. What's your prediction with the information that you have right now?
I think there's a good chance it's a decent bit higher. I'll leave it at that.
Okay, fantastic. Chris, really appreciate you joining us impromptu. It was fantastic. Thanks for coming on. I think based on the viewers we got, we actually have a lot of attention here, and use the chat as well. Like, feel free to exchange ideas. We got the YouTube chat going. We got Twitter commentary going. Use it. Chris, we're going to get you back on very soon to talk about what's going on here.
Thanks so
Chris,
much.
thanks, buddy. Miss you, man. Love you.
All right, fellas. I'll see you soon.
Fantastic. All right, let us switch over to Mr. David Morgan. And let me just double check the sound that we don't have an echo coming in. I think it looks good. David, welcome on the program. Thanks for being available on such short notice, but we felt it was urgent to do it. And your name has been dropped a zillion times, so we're excited to have you on.
Well, thank you.
So a lot has happened, and maybe you help us understand it. And
yeah, I think if you don't mind, Kai, I'll just jump in a little bit. Everything Chris said was pretty accurate, but I want to just kind of set the record here. The rule of thumb of the paper ratio to physical is usually around 100 to 1 minimum. It's been as high as 400 plus. However, in the last several months, it's dropped down substantially, which indicates to my thinking that the leverage boys are not willing to put on the type of leverage that they were in the past. The other part of Chris that's very accurate and doesn't get talked about hardly ever is we only know what's transparent on the futures exchange. What we don't know is what is the over-the-counter derivative market doing, which is far bigger than the transparent market. So the way he kind of smirked, I remember him asking me that question. At least my memory was we were riding in his car out of New Orleans, I think, when we discussed this. But so I want to make sure that, to set the record straight where we are right now. And so just let me give it back to Trevor and Kai and see what kind of questions you've got.
Hey, I was wondering, one of my questions is so it's been a few days since we've seen the last commitment of traders report on the precious metals. And I'm just kind of curious, is that something you look at every week? And if that comes out later this afternoon, I mean, do you think that's really going to show really how dynamic this market was?
It won't, because it only goes through Tuesday. Okay. So we'll have to wait till a week after that to really see what's going on. But I do pay attention to it, not as much as I used to. When it was way back when there wasn't an ETF, prior to the SLV, you could almost trade weekly basis the COT. It was that much good information, and the timing was pretty associated with the report. That hasn't been true ever since the advent of the SLV onward, which is a lot more silver ETFs than just the SLV now, as you're well aware. So yeah, it's still important. The last time I looked was about 2-3 weeks ago before I left the States, and it was neutral, meaning there were just about as many, it was about as bullish as it was bearish, the way I interpret it. There is a little bit of art to it, but it's pretty easy to determine when you're getting near the top and it's ready to fall in paper price, because the shorts have infinite money and the longs don't. So when you're betting at a poker table against somebody at table stakes and they have infinite chips and you've only got 1 million, the odds are highly favorable to the player that's got infinity to play with is going to beat the person that's got a measly $1 million.
There's no risk at the table, right? So fantastic. David, I was just looking, actually, I was just checking out SLV. I was looking at the share price of First Majestic as well, and Hecla, because we had Phil Baker on, and it seems like we're running a bit out of steam here, right?
Yeah.
What is happening? Like, is the, and I asked that before, like, what is your opinion? Like, is this movement that we're seeing, like, I love all the eyeballs on it, but is it strong enough to catapult us to that next level?
Doesn't look like it. I got excited yesterday. I mean, look, if you look at the last 3 days of trading, on the 27th, we had a flat market that was around 25.50, which is it's an okay price, I'll call it. But certainly silver could be a lot higher. And I like what Chris said about, who knows what the correct price is, because we don't have a free market. So yesterday, this thing with the GameStop Reddit folks, et cetera, just started hitting everybody. I was getting flooded with TMI, too much information, and it took off. And we went from around the 25.50 level in New York on the open all the way up, almost hit 27. And then it started to sell off, which means that the short sellers, the professionals, were taking it down. And it closed at about 26.50. So we're up about $1 on the day. It held through the aftermarket or the Globex. And then we opened up in New York, and we got all the way up to about 27.50, and we traded for a little more than an hour. And now it's back down to, I don't know, as we're doing the interview, it looks like about 27. We need to get over 27, and we need to stay there before I get bullish on a short-term basis. I'm bullish long-term, almost a perma bull. And that's how I see it. I don't see enough momentum, but I did a little bit of arithmetic, and I looked at the warehouses. And what I determined was that there's about $4.5 billion worth of metal that the registered category has. So that's really all these guys have to play with. Now, of course, they, as we already said, hypothecate it 10 times, 20 times, 25 times, 100 times, whatever. It varies. But the real physical metal is about $4.5 billion. So if 1,000 people put in $5 million to take care of business. Now, not that the price going up wouldn't cause people to hold it now to sell into the market, but I'm just going to discount that and do a thought experiment that everybody holds their position. There's buyers only. So 10,000 people at $500,000 would corner the market. 100,000 people with 45,000 would corner the market. But here's the interesting one: 1 million people at 4,500 will round up to 5,000 would corner the market. And I think in a nation state of whatever the U.S. is, 330 million people, there's probably 1 million that could be savvy to the silver market. But that's just the U.S., which is 4 or 5% of the world's population. So I think you could easily see 1 million people putting 5,000 U.S. equivalent into the silver market would take care of the entire registered category on the COMEX. And then it's, in theory, game over. Now, of course, a market's a market. Not everyone's going to hold as the price goes up. But silver's interesting. It always moves more when you start hitting new highs. And I think that's how most of the algorithms go. And I think someone mentioned that earlier. I think it was Trevor, that once you get to a certain level, you actually have less risk buying high for a while, because there are no sellers. Everyone that sees that silver's at, $55 and it's never been there before nominally, I'm not selling. Why would I sell? Maybe it's going to 75. So any little bit of new buying drives it up to 75. And I'm not selling. It's probably going 100. Maybe that David Morgan isn't a crackpot. And all of a sudden, a little bit more buying comes in. So you see where I'm going with this. Now, it's not just true of silver. It's true of any market. But it's especially true of silver, especially because anyone, of course, I am biased as all get out. I've devoted so many hours of my life to studying the silver market. So bear that in mind. Nonetheless, there is something to be said that silver has a unique place in not only monetary history, but the technological age. I mean, it's the most important commodity known to man outside of oil. Without oil, the world stops, basically. But without silver, it also stops. So, and there's other things that are important. I know food, water. I mean, I'm not trying to be one way about it. I'm looking at it from an investment or a monetary perspective. So let me give it back to you and Trevor.
Yeah. David, I just, that napkin math you just did was quite fascinating, actually. So thank you for that. But I just keep on thinking, I think Wall Street Bets had what now has 4 or 5 million?
6.1 this morning. So yeah.
6.1 million followers globally. I mean, so what you're stating,
Yeah. I mean, sorry to interrupt. It gets me excited because I mean, let's say that 5 million of them, they would only have to put in about $2,000. Game over. Game over. If the game stops, stop the game. Let's stop the game. You follow my drift?
Yeah. Well, and it's like based on your examples you made with silver just going higher and nobody selling. Well, look at what happened to Tesla. Nobody was willing to sell that stock because it was just getting momentum. And there's really a very simple analogy, right? And of course, there are other factors at play. And I've seen actually the major markets come down a little bit. I think the Dow Jones went down from over 31,000 to closer to 30 right now. Do we see maybe some risk aversion or people taking money out of the main markets? Is that what we're seeing right now? The Reddit crowd, and are people getting more conscious about the main markets now?
Well, I think the overall shift is going to take place this year, and it's going to be from things we want to things we need. I mean, the food, category I've been, I would say complaining. I've been talking about for quite some time about the food supply problem and food disruptions, and also kind of a slant on, meat bad, non-meat good. And there's a lot of factors, but the main point being that the foods prices are going higher, higher, and higher still. That's number one. Most people look at that as inflation, although it's going to be perceived as inflation, but really it's going to be more of a supply shortage, which means no one's going to stop and consider what. Most people are just going to say, it costs me more to eat. I think I better buy more food. And anyone that has savings is going to say, hey, I might want to store my wealth in gold or silver. And the spillover into silver will be unbelievable this time, in my strong, studied opinion. And the reason being that once the institutions run into gold, when the pension funds go, oh no, there's only one thing we can do. We got to put 5% in the gold market. No, let's do 10%. So when you've got all the IRAs, all the pension funds, and all the Wall Street money that's looking for the next hot thing, and the dollar destruction continues even further, because heck, we could only print up 30% in a year more than we had and not have any repercussions. Are you kidding me? How far do you go? You go to the tipping point. You go to the crack of boom that Mises talked about so many years ago, where people finally wake up and smell the coffee and say, you know what, I don't trust the dollar anymore. And when that's hit, and it's already hit, but not at the level where it's going to really move the gold market. But once it happens, you can't turn it back. It's a psychological event. It's not a monetary event. It's not based on how much they print. It's based on how much faith and trust there is in the system. And when enough faith and trust break down to the point where people say, I'd rather buy 10 cans of tuna than hold on to these dollar bills, that's the problem.
Kai and David, I know Chris is still on, and I know Chris has actually got a follow-up question for David. Is there a way to get Chris back on here real quick, Kai?
We'll probably completely destroy
I'm
the
here.
design here. Let me get him on in a second.
Okay.
No, we can't. It's,
okay.
So not on the live stream. I can hear you, Chris.
Type in my Skype, I can read it.
All right. So Chris wants to know if you can
Can you hear
discuss
me?
what would be.
Yeah, Chris, we can hear you, but the stream cannot hear you.
Yeah.
Okay.
So here, so Chris just texted me. He's like, what would be the best way for Reddit to actually force the squeeze?
It's always been the same story, Chris, and you know the answer. I think you just want verification. The only way to squeeze them is to get a hold of this. The thing that's beautiful is I don't know the demographics of the Reddit crowd. Obviously, they're smart, and obviously they understand how rigged the system is. So, you know, you don't need a brokerage account. You don't really need a third party in the metals world, which is beautiful. You just basically call up a dealer and you can over the phone order the product. And so you lock in your silver price at $27.50. There's a premium on the coin. You send them a wire, a check, a credit card, whatever they accept. 2-3 weeks later, you get it in your mailbox or delivered by UPS or FedEx. And that's the end of the story. So that's what's going to do it. That's why I use the analogy, the analogy I use with the napkin math. You know, there's only 150 million ounces sitting with the dealers. Again, that's a fact. That, you know, the part that was a presupposition, a fantasy maybe, I doubt it's a fantasy, is would there be much selling as the price moves up and up and up? The answer is we don't know. We certainly know that the professionals would probably sell into it because, after all, it's just a bunch of Reddit folks. What do they know? Until all of a sudden the supply starts being drained off. And now they're in a position where not 25, or, you know, they shorted more at 30 and 32 and 33 and 38. Now they got a really big short position that they really don't, they're having trouble managing. I mean, that could happen. It basically happened with the Hunt brothers. The Hunts bought a lot of silver, a lot lower than the prices where the exchange started to get in trouble. But the main short was a member of the exchange. So they basically broke the rules. Now you'll say, oh, well, no, there'll be people that will defend that. But I happen to know who the fund manager for the Hunt brothers is. I'll consider him a friend. I've met him a few times face to face, personal, up close, talked to him directly. And he says, and I agree, they changed the rules. They said you can only sell. Well, how rare? Isn't that what just happened on this GameStop? You can only sell. Yeah. So these people work from a criminal perspective and pat themselves on the back for being regulators. What are they regulating? They're regulating their own pocketbooks. That's what they're regulating.
No.
David,
by the way, let me jump in real quick, Travis. Just a quick public service announcement. We brought Chris back on the screen. I sacrificed the whole design of our live stream here, but Chris, you're back live with us. We can all hear you. So,
thank you.
So it's great to have you back on. And I'm not sure. And just a quick second, not sure what everybody's cutoff time is, but I know we have a lot of viewers, and maybe we can jump to a couple of questions after a couple more for David and Chris here.
I have only a few more minutes. I have an appointment here with Roskin Gold actually in 7 minutes that I need to jump on. Shameless plug. But I do want to just probably leave you open-ended for both David and Chris and even Kai about the significance of this moment in history when it comes to the financial history of, you know, the global markets. And I don't think you can downplay really the significance of what's happening and how this is like almost like a grassroots move to democratize, enforce transparency in markets that have just been lining their own pockets for such a long time. You know, there is a real, I think we'll look back in this in maybe in years to come and realize this was maybe a moment in change. Do you think this could be it?
I'll take it. Yeah, I think it could be. I think you outlined it pretty well. I mean, I could go even further. I'm pretty amped up today, as you could probably tell. I mean, basically, the way I see it, in my opinion, is that there is a one world religion. It's called money. It doesn't matter what part of the world you're in. Money is your God. And that's true. Now, most people won't admit it, but it is the truth. And the power elite, the banking elite that control the money system have all the power. That's our quote unquote God, small g, I'll say. But the point is that if the people realize that the power is in their vote, in other words, you've heard it over and over, Trevor, Kai, Chris, you know, if you really want to make a change and get rid of this certain detergent that's harmful to your clothing, you know, gives you a rash, quit buying it. And you know what? If everybody quits buying X brand of detergent, they're out of business. Well, really, the same thing plays here. If you are saying, you know, I got all this digital money sitting in my bank account and I don't trust it anymore. I don't trust the banks. I don't trust the system. It's obvious what they're doing to these Reddit people. I want out. The easiest thing to do is make a phone call to a coin dealer and make a real money purchase. Think about it. When my dad started, when I was a kid, 5-year-old, my dad made $6,000 a year. We had one car, but my mom didn't work. And $6,000, if people don't know, a dollar is about 0.77 77% of an ounce. It's not 1 ounce, even though the current dollar is 1 ounce, because the Treasury doesn't know what a dollar is anyway. And that's the truth. I just proved it. So $6,000 was about 5,000 ounces. So one contract a year put a middle-class American man in good stead, no real financial worries, paid all the bills, was able to save, able to add on to the house, keep everybody, entertained, happy, healthy, and everything else. So you might consider that. What's a 5,000 ounces of silver going to do for you 10 years out or 20 years out, depending on your age? And the answer is, I think it'll be significant, but I've thought that way for a long time. But it'd be interesting to see a free market. So I probably overtalked it, but believe me, I'm not seeing the data I'd like to, that I'd say we're there and we're really going to go. But that doesn't mean it won't. I still believe, regardless of Reddit, it would go. But as you said, and I have to give credit here, Jim Paplava wrote the article, Silver Looking for a Catalyst. And you know what? We might get a synergistic catalyst. The Reddit might just be lighting the Atlas engines that start the rocket ship going. And then all those people that have been conservative and listen to people like me and others, obviously lots of others, and said, you know what, that kind of makes sense. He isn't telling me to put my life savings in silver. He's saying put 5%, 10% in there. And I don't trust the banks, and I don't trust Wall Street. And I've never bought a stock in my life, and I don't want to buy a stock. But I know what that coin is. That's the real money. Real money. I used to end my little videos with, get real, buy real, be real. It's maybe time to reassert that. Get real, be real, buy real. We're living in a fake world. Everything is fake. That's what Robert Kiyosaki's new book is, right? Fake. He's right on. Robert is correct.
David needs the sword. I wish you were holding the sword, David.
I love how riled up he is. And that's actually true, because I did an interview with Robert Keynes, and everybody knows Robert Keynes as well, the other day, where I walked into the interview at 10 a.m. I was like, Robert, what are we doing? Are we masochistic staying in the gold silver sector investing? Like, what's happening? It's been very, very terrible. And then 6 hours later, I'm sitting in my chair clapping like a little kid, super excited about what is going on, right? So we've seen a massive shift there. So I just hope some of the eyeballs stick. And Chris, I got a question for you, because you've done an interview with Robert and it came to mind just now. And you looked at the overall silver coins. I think it was you who talked with Robert. I might be wrong. But Robert looked at the silver coins, and you could see the demand of silver coins. I think I don't know the time frame. It was 3.8 million. I think it was last month, right? What is there a lag in physical demand showing up on the buy side, or is that immediate? Like, do you know what I'm getting at? Like, I want to know, where can I see physical demand for like the Silver Eagle picking up, and B, like, is there a lag from physical demand to price?
Yeah, I think you're asking me. Yeah, there's a tightness in the market right now. Maybe asking Chris. Chris, I'll hand it over to you.
Chris is on as well. Yeah, so both of you could answer. Like, is this more a general question? Because I want to track it, right? Like, I want to see how real this is, because I've seen so many photos on Twitter of people posting photos of their physical bullion, like of silver coins, right? So I want to see if there's a blip.
I before you get started, I really have to jump. I'm really sorry that I got to go.
Okay, Trevor, we're going to wrap this up in 1 second. And
okay.
Like, Chris, if you could answer, and then we're done.
Yeah, the short answer, I mean, people can email Arcadia at Miles Franklin if they, even just want to find out what premiums are doing. I also bring on Andy Scheckman, who owns Miles Franklin, every Saturday night. Supermarket, or the price on the COMEX, generally has very little to do with what's happening in the physical market. Is it conceivable that we are nearing the point where those two forces revisit each other? It's possible. To be clear, there's not enough, at least that I'm seeing, to say that definitively. But you keep throwing enough darts at the board, you eventually hit something. And part of the fun, just like David and everybody else said, if you just own your physical silver, then it doesn't matter whether it's this week or next month or next year. And before Trevor explodes over there, I'll wrap up and say thanks again for having me. Great to see all you guys today.
Trevor, it was your idea. It was a fantastic idea. I got to host, fortunately. Thanks for joining us, Trevor. Follow everybody. Mining Stock Daily. He hosts a daily podcast on gold, silver, junior mining stocks. Follow him. He's doing an interview with a gold junior in a minute. So join his channel. He's on all of the podcasting platforms. David Morgan, the Silver Guru, the Morgan Report. Really, really appreciate you joining us on short notice. And of course, Chris Marcus, Arcadia Economics, runs a fantastic YouTube channel at Arcadia Economics. And he's on Twitter as well, Arcadia Economics. So really appreciate everybody. I'm speaking very fast because I know everybody has to go, and everybody else. Have a great weekend and enjoy the ride.
Thanks, Kai. Thanks, David.
Kai.
Thanks, Chris.
Wish you were there in 2007 betting against the housing market? How about 1999 before the dot-com bubble burst? Sick of chasing the hottest stocks or investing based on FOMO? Yeah, that shit. How about you take a good hard look where no one wants you to see? Not the banks, not the politicians, and it's something so useful and you probably never even think about it, but everyone needs it and it's insanely undervalued. Silver. That's right, and you can learn all about it from this one incredible book, The Big Silver Short. Just click the button and buy the damn book.
You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics for this week's session with Dave Kranzler, silver market expert, chapter 1 of the Big Silver Short. By the way, we thought we were recording the episode. We're just sitting there like making silver jokes for the last 5 minutes. Didn't realize I had not pressed the appropriate button, but anyway, hopefully now you can see and hear us. Special Friday episode, I would say really targeted at whether you are a member of the Reddit Wall Street Bets group, or I know a lot of the people in our audience are probably going in there and in the chat room. So Dave, it's really great to have you here. And, you know, again, you have Wall Street trading experience. You know, it's not coming out of left field. You've seen how some of these things work, a very credible opinion on a very interesting
junk bonds institutionally for 9 years.
Yeah. So you have that background. For anyone who's new to my career, I traded equity options for Susquehanna, which was...
You made markets also.
Yeah. And then in 2009, I started learning about gold and silver. 2011, started realizing something was not quite, despite the CFTC saying they couldn't find squat. Well, they actually found, Bart Chilton found plenty. They didn't tell us. Anyway, so a lot of stuff going on, and welcome on in, and it's going to be fun to dig into this situation. How are you?
I'm doing well, thanks. Happy Friday.
Well, thank you, Dave. It's a pleasure to have you here. And real quick, before we get started, I do have one announcement. Pleased to announce my friend John Lee of Silver Elephant Mining, their company, Silver Elephant, named to the 2021 OTCQX Best 50. And I'll read a quote here from John. States, Silver Elephant's pursuit of mass silver, nickel, and vanadium metal resources in the ground has great appeal to investors looking to preserve their wealth and profit from energy metals in the future. So certainly with a lot of attention drawing on silver, the commodity. Good time to be aware of Silver Elephant mining stock. And there's
Can I ask a question?
Please, Dave, go ahead. Yeah.
I thought elephants were gray, not silver.
This one is looking for some silver. He's digging his trunk around. He thinks he found some. Okay.
So I get it. So he's saying, hey, I got an elephant-sized silver deposit somewhere under the ground here. Where's this project, in Peru or something?
It's in Bolivia, Dave.
Bolivia, yeah.
Yeah.
I knew it was in that part of the world.
There might be
if he's got a big silver deposit,
elephant-sized deposit. So if you want,
why not call it silver mammoth? What if it's a mammoth-sized deposit or silver brontosaurus? If I was him, that's what I would have called it. It's not just an elephant-sized deposit; it's a brontosaurus-sized deposit.
I'd say whether it's an elephant or a Brontosaurus-sized deposit, maybe you want to go to the website, learn more about the company, so you can
I
benefit
look at it as
from
I like
that.
the idea.
Um,
I don't
so-
own it, but I like the idea. I'd like to see it go down in price, and then I'd own it.
Well, it's going to be interesting to see what happens to the prices of a lot of things. Obviously, I know people have seen the prices of GameStop, AMC, historic events. So, Dave, before we get back to silver, any comments in general on what we saw with those short squeezes, and then we can tie into how that might play out in Silverland.
Sure. I mean, these stocks, the non-mining stocks that are getting the dickens squeezed out of them, most of them, or a lot of them, had short interest that was in excess of 100% of the float, which means that whoever was shorting it, whether it's a hedge fund, maybe a Wall Street trading desk, maybe a sophisticated high net worth investor, I don't know, probably was naked shorting some of it. My guess would probably be there were hedge funds that were naked shorting it. I mean, GameStop, the company itself is just a shitty little company, right? And it got juiced because the founder of Chewy, which also loses a lot of money every quarter, it generates massive operating losses. So, the founder of Chewy decided he was going to take a stake in GameStop and shut down their brick and mortar stores and move it into the completely digital world. Well, the problem is it doesn't matter if it's digital or brick and mortar, that company can't make money. And so there was a reason why it was trading where it was trading before the market got a hold of it and squeezed it inside out. So, and eventually it's going to head back from whence it came at some point. I mean, who knows how long this short squeeze will persist, but I mean, that's why hedge funds were, short as hell this stock, because, it was headed toward bankruptcy, and it probably will be anyway, eventually. So, I mean, it's, these short squeezes that are being generated by primarily retail. I'm sure there's plenty of hedge funds that are jumping in on the action. Not every hedge fund is a short selling hedge fund. And some of them are actually traditional real hedge funds where they're long and short, right? So this game probably isn't going to last a long time. I don't know if the regulators are going to step in and shut it down. Certainly, Elizabeth Warren is jumping up and down as she's
Dave, come on, Gary Gensler's on it now. Of course, it's going to
Gary Gensler, sure.
Soon.
What I will say, though, there was a nice article from Wall Street on Parade out this morning, and believe it or not, I mean, one of the objects of attack by the Wall Street Bets group are the big banks. Well, J.P. Morgan was long out the ass GameStop stock, so they, if they sold it when it was over 400, they made 9 figures on their position. So it's not like you're the thing of it is these Wall Street banks and at the longer standing hedge funds, these guys are sophisticated traders. They've been at this game for as long as I have or longer. They know how to play this game, and they're not. There may be some hedge funds that are being hurt, like that Melvin, but so what? Citadel, my old boss, who's the head of my trading desk, worked at Citadel for a while. I guarantee you Citadel is going to make a fortune on that acquisition of Melvin. So, you think you're attacking Ken Griffin. He's out there. He's laughing. He's laughing all the way to the bank. So is Jamie Dimon apparently on this. So,
Dave.
I mean, I applaud the effort at going after the man. Believe me. I'm as anti-establishmentarianism as anyone I mean, Abby Hoffman was my idol when I was in high school in the late 70s, right? Most of the people watching this probably don't even know who Abby Hoffman was. So I hate Wall Street. I hate all the financial corruption. But what's going on out here is not going to bring hedge funds and Wall Street to its knees, believe me.
Well, Dave, I don't even know where to begin. I'm appalled that you would suggest that JP Morgan could in some way be involved in some sort of inappropriate behavior. I mean, what are the chances of that?
Listen, I hate JP Morgan and Jamie Dimon as much as I hate anyone.
Yeah, well, I had a feeling you might say, well, the first part, it looks like First Majestic down 36 cents after the close, but I guess, hey, here's the thing, is that I don't know who's in the Wall Street Bets forum. I'm going to start going through it, though. I'm excited to do that. I think people have been posting stuff on our behalf in there, but I mean, you never know who is in there. I mean, and perhaps more significantly, I guess the what I would say to silver investors, First Majestic investors, just the fact that this is like front of CNBC. Okay, maybe they're not covering the silver part yet, but look at these. Here's the headlines on. Get this. Okay, I see. Thank you. I got that alert. No, it's not going to go away, but silver rallies after Reddit post about executing a short squeeze. So let's take a look here on, I mean, that it's at least in the conversation now, whereas, I don't know, despite, I think we have fun like talking and making jokes about JP Morgan every week, but I think the majority of the world has no idea about this, so anything that sheds light on it, to me, is a net positive. Because, okay, maybe there's not, let's say for a second, there's not enough buying power in there now. Well, maybe by the time the word keeps spreading and now it's a national media event, I just see it can only be a good thing. And let's see if we have any, okay, so there, First Majestic on CNBC. And we'll come back to this Robinhood guy, but any thoughts on that, Dave?
In terms of
just that the fact that this has been a crime that, they tried to keep hidden. And, everyone's like, whenever people like you or I or the others that speak up, I mean, there's a handful of them out there, but anytime we point out evidence, they tell us we're conspiracy theorists and all that stuff. But I mean, it's actually pretty simple. And I think the more that it gets out, now you create that environment where, I don't know, maybe there's some hedge funds that don't give a darn about silver as money, but they're like, oh, this is an interesting situation. Wait, and the COMEX shows them being short. How many contracts? Or actually, give me a second. I'll pull up. I was curious to see what the volume of the futures was yesterday while we were seeing a roller coaster in the markets. So what if all those people reading Wall Street Journal and CNBC, maybe if a handful of them, a couple hundred people watching here now, if they see this darn thing lows, but basically you had 200,000 contracts trade yesterday. Not 200,000. Basically, you had over a billion ounces of silver trade yesterday.
It's paper silver. It's not
right, but
silver.
I'm just saying that there's a tension on things like these. Maybe some hedge fund managers notice so 205,000 contracts. That's over a billion ounces. And I might add.
You had almost the same amount on January 8th or 6th or whatever that was before any of this stuff started.
I noticed. So here's a little trick. January 8th, I did this last night. Whenever there's heavy volume, let's take a look at what happened to the price on January 8th. Let's go to the historical silver chart. But Dave, I guess the bigger point being that people are noticing what's going on. All right, let me put it in different terms. There's one on my question list. What do you think Eric Sprott is doing right now? What's he talking to his friends about right now?
I don't know. Maybe where they're going to take his Learjet for the weekend. They can fly without wearing masks because it's a private jet. So
maybe they're going to go to the COMEX.
I'll tell you what. He's not out there.
There's your January 8th chart.
He's not out there loading up on paper silver. He's probably have his guys. His team is probably still scouring for junior mining stocks with highly prospective silver projects to invest in. Maybe he's buying more physical silver. I don't know. I don't think Eric Sprott dicks around in the paper silver market.
Okay, that's great. That wasn't really my question, but
you asked me what I think he's doing right now.
I won't leave a
just told you
question.
what he's doing right now.
If I
He's
can
doing what he
just
normally does.
Okay, then I'll share my opinion if I may for a moment.
Sure.
I wonder if there's any chance that at some point this weekend, Eric Sprott talks to any of his friends who aren't probably high school kids, but have investable funds and think, gee, maybe there's a vulnerable situation. And I don't want to speak for Eric, obviously, but I mean, I just think that thought is running through a lot of people's minds, which to me makes the situation interesting.
I mean,
I see you're not impressed. Okay, but
I mean, honestly, I'm not sure that these silver mining stocks make great short squeeze candidates.
That's not what I'm talking about, though.
What are you
about
talking
PSL?
about?
A lot of these guys in the Reddit group, they're talking about PSLV, and we'll get to the mechanics of what might be the best way to do something like that. But you have now a spectacle that is bringing attention to silver, and in the meantime, I think this happened after last week's show, and I don't think I can wait any longer to share this one. Despite the Fed's balance sheet now being almost $7.5 trillion, they're moving Janet into the White House allegedly, and she's saying it's time to go big. I mean, I'm going to call, if Andy Scheckman's listening, call in and we can just put this on the front of the Miles Franklin homepage. You couldn't make a better marketing campaign. I'll get a picture of the balance sheet. I'll put her there. And then now we have Reddit groups that I'm told is picking up steam, and there's like more people joining by the second. But I see you're not phased. You're like, okay. All right. I got, don't worry. I got a backup plan. All right. Let me try the curveball. Let's see if
that nasty picture of Janet Yellen just leaves me speechless. I mean, every aspect of that woman horrifies me, intellectually and physically.
Okay, well, how about
she should be like, somewhere in living in like San Diego, knitting sweaters for her grandchildren or something.
Well, how about, we'll look at the antidote for central bankers, which would be GATA, our good friends, Silver Bill Murphy and Chris Powell. Chris Powell's been on fire this week. He's the one who writes these headlines. By the way, Chris and Bill, if you are listening, your first Majestic Silver cubes came in. Yara has
Where's
hers.
my cube?
You didn't win a cube, buddy. You got it.
Yeah, well, I have this.
Start answering some of the questions, buddy, and then maybe you get yourself a cube.
Look at that. I've got this.
That's like a little.
It's a 1 ounce silver bar, minted by Degussa. And that's a tennis player. That's me right there. That's what I got.
The silver tennis Dave ounce.
I don't need no stinking first Majestic silver cube, although I do want one. They're really beautiful.
I love when you start pouting. It's one of my favorite parts of the show. Dave, all right. Well, maybe you can start building your resume for a silver cube at Silverfest 2, which is right around the corner in September. Here, JP Morgan helpfully lists 45 other shares vulnerable to the short busters. Wow, that certainly is kind of them. I wonder if they mentioned JP Morgan. I tried to find the list. We'll click on their link. I don't know if this has been updated.
I guarantee you, before they put that out, the first thing they did is they went out and their prop desk loaded up on call options on every single one of those stocks.
Dave, come on now. This is a family show. I gotta I got to issue the warning here. You know, the legal stuff too. So obviously, you know, we can't just go on the air and talk about a bank being a bunch of felons. Well, actually, yeah, you could
Well, I mean,
do
it's a true
exactly that
assertion, right?
because there's already 74,600 search results when you Google JP Morgan felonies. 2 more felony counts for price manipulation.
Right. See, you can call him a felon. It's
920
that's
for
a true statement.
misdeeds. And I think I'm seeing one of my lawyer friends this weekend who I've got excited about the premise of figuring out how Daniel Shack and his hedge fund already got a settlement from JP Morgan. And so I'm going to find out somehow what he said that made them write the check. And then I'm going to invite a couple thousand of my silver friends to come to the party. Dave, you can join in on that too. But not surprising to see JP Morgan involved in this one. But Dave, I'm going to get to some of the questions I have here. I guess, first of all, did you happen to catch the guy from Robinhood? For folks who may not have heard all of what happened, Robinhood and several other brokerages put restrictions, basically saying you couldn't buy. Sounds kind of like the Hunt brothers almost. You'd probably know a lot better than me. I hear there's, you know, if it's remove the buyers, kind of would help the shorts. And then he came on the air and there was some video with him on CNBC. I didn't understand anything he was saying, to be completely honest. Any thoughts on what Robinhood and the brokerages did?
You mean when they restricted the trading?
Yeah, that was, yeah.
Yeah. Oh, I don't watch CNBC, so I will say the guy who started Robinhood probably could use a haircut, though. But I mean, honestly, brokerage firms have a right to protect the integrity of their business. I'm not saying Robinhood is a business of high integrity, but when they extend margin to their customers, I mean, that's a service that the brokerage firm is providing. They don't have to extend margin if they don't want to. They have to borrow the money themselves, and they need credit lines in order to be able to extend margin to their customers, right? So it's quite possible that they either ran out of capital that they needed to fund margin accounts so that people could use margin accounts, or they were probably worried because of the high volatility that, you know, they may be over their skis in terms of the amount of margin they've extended to a large body of their customers. They're all retail guys, right? You know, and so even if you're talking about odd lot positions, you add that up over thousands of customers, and that's a pretty big margin tab. And it's one of those things where, you know, if you owe the bank $100 and you can't pay, you're screwed. If you owe the bank $100 million and can't pay, the bank's screwed, right? And so my guess is, this is what I said before the news even came out yesterday, that they tapped into or got extended credit lines, bigger credit lines, and they got $1 billion cash injection from the people who have originally invested in Robinhood. So my guess is they were worried about either blowing themselves up because their customers would default. And GameStop yesterday, keep calling, GameStop. I want to call it GameStock, but that thing dropped from, like, you know, 485, I think, is where it peaked. It was trading under 200 at one point. I mean, that can blow up a brokerage firm if the customers can't meet their margin calls. Now, you know, fortunately, and who knows, you know, Robinhood might have even been itself may have been part of the, you know, part of the push to push the stock higher to protect their franchise. But, you know, that was, didn't look at that in the same light as what happened to the Hunt brothers. That's not why the Hunt brothers were for, you know, that's not why the Hunt brothers were shut down. And for a while, the COMEX was only letting people sell silver contracts, not buy them. I honestly think Robinhood probably was in danger of blowing up if enough of their customers had margin calls that they couldn't meet, because then all of a sudden Robinhood owes that money to the banks that they borrowed the money from. So I don't. Again, I think Robinhood is a detestable business, but I don't think it was done to stop people from buying GameStop. I think it was, or any of these stocks. I think it was done so that they could protect their flank. And it turns out I was probably right, because they had to raise $1 billion right after the market closed.
Yeah, and Dave, I guess this was. Excuse me, 1 second. Having a contact lens issue, but we'll continue on here.
Work around it, man.
I'm gonna go
game time.
One lensed for a little bit here, but you have here when I heard Elizabeth Warren come out. Again, this is just what I'm wondering. Given everything we've seen in the last month, do you think it's possible that somewhere involved with these short squeezes is one political party trying to stick it to the other in some fashion? Again, I'm completely speculating, but just as an option trader who wonders about possibilities, and we've seen a lot of unusual stuff. As soon as I saw, here's Elizabeth Warren, I wonder who, maybe she's counting on Gary Gensler to do something, but do you think, we hear Soros's name pop up a lot of the time when money shows up for unusual things. What do you think there, Dave?
I think it's a shame that I find Elizabeth Warren as detestable as any of them. But I think it's a shame that, it's gotten to the point where you
Should I leave that up for you?
Oh, God, please. Where you have, congressmen who are calling out the SEC over something like this. Again, don't get me wrong. I'm all for attacking the man, but these short squeezes in the market, ultimately, a lot of people are going to get hurt. This is not really any different than what was going on. The motive might be a little bit different. And again, I think the motive is superficial, but this is exactly what it looked like at the end of the dot-com bubble in late 1999 and early 2000. You had stocks going up even more than GameStop has gone up, or more than AMC went up and is now falling back to earth. But to me, this is almost identical to what it looked like when right before the dot-com bubble blew up. And I saw a study that came out a couple years after that whole thing happened, after the NASDAQ had crashed 85%, I think, from top to bottom. And 95% of the retail day traders who were all of a sudden trading experts for about a year lost. They got completely wiped out. So very, very small percentage of retail traders actually ended up not losing money or making money. And what I'm fearful of is that you're going to see the same thing happen here. So honestly, I'm kind of surprised the SEC is supposed to be the watchdog that protects the public, right? It's a public servant. It doesn't operate that way anymore. It's more like it serves to protect the bank interests. What?
Maybe it never really did, but
there was a time when the SEC actually performed the role that it was supposed to perform, and that was probably the case up until the mid 1980s forward, and it got worse under Clinton, and it just gets worse under every president. So it's the regulatory capture of the big banks. They've got basically the people sitting in the positions at these regulatory agencies, the Justice Department, SEC, the CFTC, they're hand puppets for Wall Street billionaire titans. That's what they are. So, to me, again, it's shocking that Gensler has been silent, silence of the lambs. He's been dead silent on this, and it takes a criminal like Elizabeth Warren who, remember when she claimed to be Native American and she did a DNA test and she had like almost zero Native American DNA in her? So I think it's criminal in and of itself that it takes a congressman to call out the SEC before, and we don't know if the SEC is even going to do anything. Who knows?
Well, I mean, at least that's one of the things I try to get across on the show where.
Well, but what I will say at the end of the day, and I'm predicting this, call me out if I'm ultimately wrong, I think there's going to be a lot of retail traders, these newly minted experts who took their stimulus check in March and gave it to Robinhood. I think there's going to be a lot of those who end up losing all their money, and they're going to be hurt by this. And it's not like Robinhood is basically, they sell all of their order flow to Citadel. So when you trade on Robinhood, you're actually, a pawn for Citadel. Citadel's making a lot more money off of this than these traders are.
Well, that's usually usually baked in there somewhere where nobody's looking.
Right.
Although, Dave, in terms of, again, not legal financial advice, but just an old timer like yourself, if any of the kids are watching and be like, all right, maybe someone made a couple $1 billion or $1 million on Bitcoin or GameStop, where I hear the market cap is about 27 billion, which probably could many times over buy the available silver supply. So in terms of available options, obviously if someone tried to take delivery on the COMEX, and I know you've done that before, so you can comment on that if you'd like, and if I'm remembering that correctly. I find it interesting that these guys have been targeting the options market, which certainly I would do if I knew the price was going to. So yeah, I fortunately did last week, and this time it worked out okay. Although, I hear a lot of people talking about SLV, and obviously I know we've talked before about do they have the metal or not? Who knows yet? It made me think, what if, what is it, 50,000 or 500,000? There is supposedly a redemption feature of SLV. Do you remember how many units that is? I know it's really big, so it's beyond most average retail investor, but what if someone, I don't want to even put a name because it's, again, I'm speculating, but let's say there's a couple billionaires on reading those messages right now, and someone wanted to buy $1 billion worth of SLV shares and then try to execute that redemption feature. What would that play out like?
It's already played out with GLD.
No, SLV.
That's happened with GLD, where wealthy entity or individual has tried to go and it's a redemption basket. See, I don't know what it is with SLV. I've read the GLD prospectus front to back and back to front. And I think it's been, I wrote a paper about it in 2009, but I think it's 10,000 shares of GLD is what you need to redeem for gold. People have tried it and they've been told to go pound sand. The only entities that are allowed to redeem shares for bullion are the bullion banks themselves. I think they're called approved participants or something like that. So, and again, I know of this for a fact because I was having a conversation with someone, and this was several years ago, off the record, someone who's well known. Most of the people who are in the audience probably would know who it is. But he insisted in anonymity, who said that he knows specifically of a certain couple people who tried to redeem shares from GLD and they were denied. So make of that what you will, but I have never thought that either of these trusts have all of the gold or silver that they're supposed to have in them. And we already know that GLD leases a fair amount of its bars from the Bank of England as a sub-custodian. So Those bars never leave the Bank of England. I mean, technically GLD doesn't even own, they don't own those bars. They're just borrowing them. So I don't think you're going to squeeze SLV, because if a lot of cash flows into SLV looking to buy the shares, and just buying the options in SLV, that's not going to do anything. That's not going to create a gamma squeeze, because they'll just print more shares. You know, that's the same thing with COMEX contracts. You're not going to squeeze the shorts.
Although, Dave, to be specific, I'm not saying just buying SLV shares, but what if someone took $1 billion, bought the shares?
And what I'm saying is they're going to be denied. They're going to be denied. It's already happened with GLD. I know for a fact it's happened with GLD.
Well, this is perfect, though, because if somebody did that, then we could call, in fact, some billionaire, if someone with $1 billion goes in, buys SLV.
Call Gary Gensler at the SEC and whine?
No,
I'll laugh at you.
If somebody actually does that and gets denied, email me and I'll call Elizabeth Warren and invite her on the show, and we'll explain it to her.
She won't care either. She's essentially a captive of the banks, believe it or not. She's just grandstanding right now.
Although here's the thing is that, yeah, of course that's true, but I always leave open the possibility that, like, for example, I'm not a big fan of Nancy Pelosi, but what if somehow, like, it presented, hey, if you, here's the silver thing, the Republicans let it go on their watch, and look at the security. It's like somehow if you pit these bozos against each other,
they're all the same flavor. They're all like, go look at who their biggest donors are.
Ye of little faith. Well,
I've been doing this for 20 years, and I've seen pretty much everything and every attempt at trying to break the bank cartel.
You sound like the guy who said they couldn't run a 4-minute mile.
There's only I did run a 4:38 mile in high school. There's only one way you're going to break this, and I don't think you can do it, because I'm with the Hunts. That's all the Hunts simply tried to do. They figured out there was more silver contract open interest than there was silver in the COMEX. So they were basically just doing a rich man's arbitrage, you know, a billionaire arbitrage. They were going and they were going to just say, okay, let's see how much silver the COMEX really has, and we want to own silver. So they went and bought a bunch of contracts and tried and wanted to redeem them for silver, and they were shut down because the COMEX didn't have enough silver to fulfill the delivery demand. So
all Ponzi schemes end, though. I'm not saying, I to be clear, I don't think anyone can sit here and say, like, all right, yeah, the silver guys are defeated, but it's going to happen someday. And I mean, it's you're one of the people that
I'm not sure it's going to happen
the
on
housing
the COMEX,
bubble, and you're one of the people that forecast the housing bubble collapsing in advance. And I think it would be a similar sentiment. You know, there were probably times when you're watching that. I mean, we saw in the movie The Big Short how, yeah, you had to sit there and wait. There's days where it's like, gee, is this ever going to happen? And again, to be clear, I don't have the information to say that it's Wall Street bets is going to be able to take it down. But to say that because it's not happened, I mean, if you say that the theory that the metal is levered and that, you know, silver isn't undervalued and $25 silver makes sense, and I'm just completely missing it, okay, fine. Maybe there's some probability of that. But if this thing is a Ponzi scheme, and that, in my view, that it's a fractional reserve Ponzi scheme that has more people watching than ever, I don't give a darn if Nancy Pelosi or Donald Trump likes it. But if you know, I mean, you already have Elizabeth Warren commenting on it, and yeah, probably they're not going to go out of their way to talk about silver, but I'm just of the school of thought that when you keep throwing all these darts and the bubble's that big, that eventually something hits, and, you know, and that's fine. I see your old curmudgeonly old man like, well, it's fine. That's okay, though.
That's cute, Chris.
You were all cranky at me because I didn't give you official warning that I was loading up the call options earlier this week.
Yeah, that pissed me off.
I'm
You
just
know, I got
telling
other
you
things to do
what
besides figure out what Wall Street Bets is going to do next.
I'm just telling. I told you in
All you had to
advance.
do was text me.
I did that. I mean, I recorded a darn webinar about the whole thing. Like, I don't know what else. In fact, Dave, you were even gotta warn him. All right, Dave, I gotta point out oh yeah, actually I should mention this. This is actually quite intriguing because as we're sitting here talking about a short squeeze on silver, but I mean, it's already started playing out on First Majestic. I don't know if you remember we dug into that.
I don't know how long that's going to last. I mean, the short interest was what, 28%, 25%?
Yeah, just that's great. But
I think First Majestic will go up on its own merits as the price of silver goes higher.
Okay, and I think it's interesting that a week ago, you and I and Chris Marchese and Rob Keynes did a call saying, what's up with the short position on First Majestic? You and I talked about, I think it was Monday after we saw First Majestic trading a little weird. Any thoughts there? I mean, it could just be interesting timing, although it was spooky or surreal to see. And
someone on Wall Street Bets saw the podcast and said, "Hey, let's gamma squeeze First Majestic," because I think what you saw yesterday and today with First Majestic was done primarily with call options, not like
that might have been me
the short. It's easy to squeeze a stock that has a short interest that's in excess of the float, but I mean here you're only talking about what 27% of the float. And again, I would argue that, I mean, who knows to what extent price of silver is up 4.5% today. It's up $1.16. That's not Wall Street Bets guys squeezing the COMEX. It's not the Wall Street Bets guys going in there and loading up on silver contracts. I think that is a product of big investors saying, hey, look at what's going on here in the political and economic system. Look at all the money the Fed's printing. Silver and gold are really cheap, and silver is really cheap relative to gold. So, to what extent, I don't know, you could run a regression analysis on it, maybe. To what extent was the increase in First Majestic yesterday and today a function of the price of silver going up? And how much of it was a function of Wall Street Bets guys and you didn't give me a heads up because I would have done it too, buying out of the money calls, right? I mean, you bought at the time, First Majestic was trading where 14, 15, and didn't you buy 18s?
Bought a whole bunch of stuff, but
but it was way out of the money. I mean, and if enough people do that,
we'll see
it forces the market makers to buy the stock, and that's how you create a gamma squeeze. I don't think what you're seeing in First Majestic and Fortuna was also another one that was up a lot yesterday. I didn't really look at Fortuna today, but
everything was soaring yesterday. I mean,
right, because all of a sudden everyone's looking, hey, what silver stocks? Even the 5-letter OTC bulletin board silver junior stocks that I own a bunch of, they were up a lot yesterday, and they don't have options that trade. But I think people, they're in and of themselves, their options, right?
I mean, I think you're proving my case for me that you saw the whole silver board soar yesterday.
Yeah, because the price of silver was up also.
All right. Well, I'm just saying.
And based on that headline that you showed of that really nasty, gnarly looking lady, she basically she's telegraphing, hey, the Fed's going to print a shitload of more money. The government's going to deficit spend a shitload more. That's the perfect recipe for gold and silver, And again, silver is 2 to 3 times cheaper than gold right now, especially if you consider, that the gold silver ratio is around 71, 72, and it's headed down to 30 and probably lower. So if I'm a fundamental investor, I'm going to look at this and say, I don't care what Wall Street Bets is doing. I think silver's cheap as hell. So I'm going to go buy some.
Well, that's why you're Dave, the silver expert, they call him, right? In fact, I got
about this.
Well, I will re-raise you, Dave, because I have this book here. I'm going to turn let me get it there. The big silver short coming through maybe I'll turn my background off a second because interesting, this book, Dave, there's chapter 1 about some guy from Denver who lays out.
Some idiot.
lays out. So we got the big silver short. Chapter 1, Dave Kranzler, gold and silver expert, newsletter writer, fund manager. Actually, I have this thing I've tried a couple times. Maybe we'll do today live on the air. It's actually interesting. If you just like pick a random page, and then it's funny how it often connects to what's happening. And it really, so here on page 14, okay, perfect. And isn't JP Morgan the custodian of SLV?
Isn't it amazing the coincidences in this world?
So
also the largest silver short position on the COMEX.
I mean, maybe Elizabeth Warren will actually, I'm going to step back into my silver vault, my basement, finish this one up. Although, Dave, we're gonna wrap up. I'm exhausted. I mean, it's been a great week and a fun week, although a long week. So, just a couple last news items here, and I'll give you the final word. But here, seems somehow inflation is not as there's not the low inflation crisis does not appear to be spreading to Germany as much as it is in the Central Reserve's, the Federal Reserve's central banker office. Apparently in Germany, they're getting plenty of inflation.
Bernie Sanders there in the red jacket?
I don't. It's kind of hard to tell. He's wearing his mask.
Look, it's Bernie and Janet.
Well, the CO2 price, that's driving the inflation rate. Man, the things these guys talk about that are driving the inflation rate and how they manage to avoid, who was it? Powell the other day in the press conference. He actually said monetary policy had nothing to do with the inflation, or he said some whopper like that.
He said that the Fed's money printing and balance sheet had nothing to do with the rise in the stock market. So I immediately found a graph that showed the pretty much 99.5% correlation between the spike up in the Fed's balance sheet and the spike up in the S&P 500 and tweeted it out.
Yeah.
I can't believe, I honestly can't believe that guy gets in front of the public and expects the people who are watching to believe the bullshit that comes out of his mouth. I honestly, if he really thinks that people are going to believe what he says, then, and I don't think he's dumb, or stupid or low IQ.
It's not
but
ruled
if
out.
he really believes that, if he really thinks that people are going to buy that bullshit, then he really is stupid.
Well, let's keep all options open here. I mean, let's not be hasty on that. I don't want to sell that.
I am keeping my options
zero.
open,
You know what I mean?
after hearing some of the nonsense that comes out of his mouth.
What did you think about when he said on 60 Minutes last year, said prior to COVID, the economy's never been stronger. You didn't seem to explain the part about the swap lines that had started about 6 months prior to that and how he was pumping trillions into the economy.
The economy's never been stronger. You know what? What they're calling growth since 2008, since the last recession, is the weakest level of GDP growth in the history of the country. So I don't know how he could say it's never been stronger.
I
and actually, if they use
that
a real
for you.
GDP deflator, a reasonable estimate of inflation instead of that BS that they call the CPI, you wouldn't even register nominal GDP growth. GDP growth would decline. I did a paper on that with Paul Craig Roberts and John Williams several years ago.
Will you
And
come and
you'd
read
be
it
stunned.
to us one day?
Pardon me?
Will you read us the paper one day?
Yeah. Pour a cup of warm milk and read the paper by the fireside.
It'd be lovely. I'd love to know what your thoughts were on that one. In fact,
it's on my blog somewhere. You just got to search for it.
Well, I'll tell you what. Here's an interesting piece of Dave Kranzler history that.
No. No.
Came
All right.
across the other day. Dave talking about the options expiration, which that one happened earlier this week. But Dave, this is a young Dave Kranzler there. You look sharp, buddy. All right, we'll take down young Dave Kranzler and replace that. I figured out why Powell, you said you didn't understand how he came to that conclusion, but I got an anonymous tip. I don't know if it's accurate that he was sneaking into Ben Bernanke's lectures at Princeton. I'm like, wow, I want to be like Ben, who said subprime is contained, and other Keynesian economic ideology that might, I don't know. I don't think that Jerome Powell really believes any of the stuff that he says there, but we'll leave that aside. Dave, did you
Leave
sign
our
up?
options open.
Yeah. And even better than him, did you sign up to win this month's Arcadia 10-ounce silver bullet giveaway?
No, but I'm going to right after we're done here.
It's 10 fine ounces. Keep it out of the
I'd
bank.
still rather have the first Majestic cube.
Well, you gotta start answering the questions. Maybe next year will be your time. I got one final question for you. Where can people go to figure out how this is all going to play out in the gold and silver markets?
Go to church on Sunday.
I stumped him again. You could go to investment research.
Go to church or synagogue this weekend and pray.
Or I'm wondering if there's a mining stock journal by a guy named Dave Kranzler that backs up the truck. Dude, why don't you just send your truck over to the COMEX? This thing will be done by Monday. Come on, buddy.
Well, that one, I guess, was visiting the U.S. Mint. But
if you had taken your truck to the COMEX this week before my weekly options expired, we could have been doing this from the beach already, Dave.
Well, you know what? What I will say now that you mentioned the COMEX and physical gold and silver, if the Wall Street bets crowd wants to really squeeze the silver market, you're not going to do it by getting long COMEX contracts, because the banks will just print more and sell you all you want to buy. Okay. What you got to do is you got to buy, and you can even do it with one contract, 1,000 ounces of silver. One contract, a big contract of silver is 5,000 ounces. So, form LLCs with your buddies and buy a contract of silver and stand for delivery, and then tell the COMEX that you want to take delivery of the bars and move them out of the COMEX. And so that would be 5 bars. So you get 5 buddies together, form an LLC, fund it, buy a COMEX contract, stand for delivery, and then remove the bars from the COMEX. That's the way the COMEX is going to get squeezed. Not in the paper side of the COMEX, but by people, entities who stand for delivery, stoppers they're called technically, and rather than leaving the bars in the COMEX vaults, take them out. We did that in 2000. I think it was 2009, April. It was April contract, maybe. I forget. But it took us 6 weeks beyond when we were supposed to have the bars delivered to get our silver out of the COMEX and into the depository where we keep our silver. 6 weeks. And if we had a bigger fund at the time, we probably would have filed a lawsuit against HSBC, because HSBC was the counterparty, just to bust their stones. We didn't want to waste the fund's money on that at the time.
Well, that's now we got the good stuff. That's what I was trying to get an hour ago. But yes, so kids at home.
Well, that's what I mean. That's the way the COMEX is going to get squeezed. If stoppers remove their bars from the COMEX, and not coincidentally, the COMEX incentivizes people who take delivery to leave their bars in the COMEX, because there's fees that you have to pay to load out your bars, and the fees that they charge to keep the bars in COMEX vaults is much lower. The fees are much lower than it would cost to keep the bar, and we're talking like 0.5%. So it's not like you're going to go broke storing your bars. And I personally would store all my personal silver and gold on my own premise. And that's what I would recommend that everyone does. But if you know, you form this LLC and you take delivery of the COMEX silver bars and you move them to another vault, you know, Delaware and
Can I
West
send
Point
some of
aren't the
my
only
silver?
places that have precious metals vaults.
Can I send some of my silver to be stored on your premise?
You'll never get it back, but I'll be happy to return fiat.
What if I just keep hopping the fence and
I'll
showing up in your hot
buy
tub?
some Bitcoin and trade you the Bitcoin for the silver. How's that?
That sounds good, buddy. So anyway, folks watching at home, where's the darn webs? There we go. Investment Research Dynamics. You can get the Mining Stock Journal, back up the truck like Dave. And perhaps if anyone has been active in the Wall Street Bets forum, perhaps someone could put a timestamp of that last section, Dave, where you explain not legal financial advice, but if any kids at home are toying around with a couple $1 billion and want to know how it's done, maybe you could even do a write-up in the Mining Stock Journal, how to short squeeze the COMEX. That could be a hot little seller, right?
Maybe I'll do that.
Oh, so you don't know, but you got to subscribe to find out, right?
That's right.
Yeah, that is right. Dave, final question for you. What has Trump been doing? The last I think we've heard from him was Tuesday before he left the White House. Where has he been in the last week?
I don't know. Didn't I hear that he bought a small island somewhere in the Caribbean or something?
I didn't
I
hear
have
about
no idea.
that.
Maybe he's in Mar-a-Lago, holed up in his bedroom, you know, trying to get back on Twitter, eating Big Macs or whatever. Oh, doesn't he like the double Whopper with cheese or something? Whatever the McDonald's thing is he likes. You know, it's just getting more fat and grotesque.
I don't know about that. Although, did you see that CNBC article that I don't know how I missed this? Apparently, he called the Federal Reserve officials boneheads at one point, which I thought was.
I'm going to miss
special.
that.
So, Dave, I thank you for being here. Great call as always. Thanks for telling people how they can put some pressure on the short squeeze again if they do so at their own risk, and it's something they want. And not legal financial advice. And just in closing, what I might be wondering this weekend is that if Trump talked for 4 months nonstop about the election being rigged, he's shown the term backing down does not appear to be in his arsenal. He's just gone.
You are watching the Silver Squeeze 1-year anniversary festival coverage all weekend long here on Arcadia Economics. We're going to have some live shows over the weekend, rebroadcasting what happened last year, all here on Arcadia Economics. So hit that subscribe button and the notification bell, and we're going to keep you posted as this situation unfolds live.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Late on a Friday night. I thought we were done for the day, but the silver news, it's like the ballots when they come in. They come in all night. Silver news coming all night. So here we are. And, well, the Wall Street Bets Reddit crowd made their presence known today. And we have the first sign of some data here because hats off, hands out. A little exhausted and tired tonight, so if I don't make complete sense, bear with me, please. But let's give a round of applause to Bob Coleman, first one for reporting this. Bob on Twitter at Profits Plus ID. Bob found SLV just added 37 million shares to the trust today. 1,150 metric tons of buying in one day. This is huge. This is equivalent to 25% of all of the registered inventory backing the silver COMEX futures contracts. Maybe we can read that again. I guess my haste, I was focused on this. Although you can read along at home with me. This is equivalent to 25% of all of the registered inventory backing the silver COMEX futures contracts. So interesting that, I don't know, maybe you could call Thursday day one of Wall Street bets and Reddit targeting in on the silver market. And certainly we saw First Majestic, and we saw silver move on Thursday too, but that's quite an impact. Now let's put this in perspective. Actually, before we do that, let's show the data. Here, Bob was kind enough to send a picture from the SLV sheet. You can see January 28, there's 610 million ounces. January 29, there's 647, so 37.15 million ounces. Now, again, anyone who's new to silver, I know a lot of the veterans know this or have heard this already. Is SLV actually adding the shares, or that the depositing the metal? I've called, it may have been iShares or BlackRock. I don't remember who I called, but one of the, I dialed up a bunch of phone numbers to actually call them and ask, to at least ask the question. Whoever I spoke with, they sent me a few things back and basically said yes. They claim metal was going in. Now, does that mean it is? I don't know, but I thought for my own amusement, I'd at least have on the record that they told me that. Whoops. We're going to mute that in the background. But so they're supposed to be adding metal, silver, every time they create a share. So if new people buy shares, if there's additional demand, I don't know, people can sell their shares, or the SLV can create new shares, which require the deposit of metal. Does that happen? Well, keep in mind, guess for anyone who's new to this, just take a guess who is the custodian. So who's supposed to make sure everything is safe? You're gonna think I'm making this up, but it's JP Morgan, who just got fined $920 million for rigging gold and silver. So, I mean, in terms of watching the hen house, maybe we could paint costumes on there, actually get a fox to do it. But either case, as bizarre as that may be, they are alleging, I've not seen the metal. Now, we asked Andrew McGuire, there was a 20 million ounce deposit, I believe it was last week, that was massive. There's people who don't believe it's physically possible to process that much metal. I mean, that quickly. I don't know. I guess there's always a way, but I mean, that's a lot. Now, let's put this in context a little bit. First of all, here is the great Gold Charts R Us, Nick Laird's site. Keeps us humming with all the data. Let's see if, I'm not sure when that gets updated, that latest day, because I've been curious. Looked over here earlier today. In either case, you can see last week, 20 million ounce deposit right there. And to put that in perspective, this is the 3-month chart. You look at 6 month, it's the biggest. 1 year, it's the biggest. 2 years, it's still that one there. It's biggest in 2 years. 5 years, still the biggest. 10 years, it looks like there was one in 2013, slightly bigger. I mean, you get the idea that 20 million, except for that thing in 2013. I mean, here's back 10 years. So aside from that one, what we saw last week was the second biggest. And now whenever the chart data gets updated to include today, you have, like, I guess where that 5 is would be around where 30 would be. So we'd be above the scale of the chart. Let's go out 20 years, see if the chart, yeah, Nick is going to have to make a new chart because so much silver. Wow, I guess I didn't really think of it this way, but this was an all-time record. Yeah, congratulations, Wall Street Bets, setting on day 1 or 2, depending on how one does the accounting, an all-time record for largest deposit into SLV in history. How exciting is that? Actually, although I'll do you one better, because keep in mind here, all right, I remember how to get back out there. No, that is not what I was looking for. What I was going to say is that SLV is only one of the trusts. There are multiple trusts, as you can see here. So here is, where is iShares SLV? So this is yesterday's number. Here's the Sprott Trust. So my guess would be, I've started searching through the forum a little bit tonight. I hear a lot of people talking about PSLV. That's PSLV, which is the Sprott Silver Trust, which I would feel a lot safer with, I might add, than SLV. Again, there's some people who just want silver that they can hold in their hand, and I can understand either way. But again, that 37 million was for iShares. I don't know. Hopefully, we'll have data by the morning, I guess, what Sprott added and what the others added. So that number could be bigger. I guess theoretically, it also could be smaller, although that would seem unlikely. So, yeah, in either case, I'm going to pull that chart back out there a second. So there was so much silver added on, we'll call it day 1.5 of Wall Street bets targeting silver short squeeze, that I'll just call it the first day for artistic purposes here. So on the first day, so much was added that it's a record in the history of silver trusts. I don't think it can go any further. Let's click long term, see. Okay, wait, what do we got here? Oh, that's an interesting one. I've never noticed that before. 1996. I would guess that would somehow be related to Warren Buffett, who some of you might know had a silver position even larger than the Hunt brothers. Although, let's get another interesting little piece of history, because people know about the Hunt brothers and how they cornered the market. I don't know if that's exactly how I would phrase it, but they had that massive silver pile. Some people know, maybe not quite as many, about silver stocks. I don't know if you can see this yet, but give me a moment. Some people know that Warren Buffett, I believe, held even more than the Hunt brothers. But here is what is interesting. Oh my goodness. All right, give me a second. Let me back out and pull this up. Wow. Amazing the things that happen on this planet when you're happen to open your eyes from time to time. So here we see JP Morgan. That was interesting. I think it was back in June or July. It was interesting. Andrew McGuire was on, and we were talking about how on the first day of the deliveries, this was around when things were going on with the Department of Justice case, that 30 million ounces were switched. Let me pull that back up. Always get registered and eligible confused. Okay, so JP Morgan, basically, to put this in context, so you're going to love this, especially if you're hearing it for the first time. The JP Morgan had, I believe, 0 ounces, and I don't even think they had a warehouse in 2011 when silver went up to $49. Comes crashing down. I think they opened the warehouse actually that month. I mean, it was a very coincidental chain of events. You probably wouldn't want to explain in cross-examination, I'm guessing. So basically they went from 0 and then just kept accumulating over the last 9 years until then on the first day of, I guess it was the July silver deliveries. They delivered 30 million ounces from eligible to registered. So back in July or end of June, this was number where you see 152 there. That was 160, and this was 0 for a total of 160. So yet you have that happen. You have them get fined $920 million for, I got to pull it up. I'm sorry. You really have to see this one, the CFTC, JP Morgan, 920 million, because I can understand, I get it. You know, it's like some of this stuff, you know, especially for people who are new to the show, I can certainly understand if you think I'm making some of these things up. I mean, you know, but here's the CFTC's website. There's JP Morgan and their manipulative and deceptive conduct that spanned at least 8 years and involved not a few, not 2 or 3, but hundreds of thousands of spoof orders in precious metals. And let's not forget, they were rigging the treasury market too. So anyway, you know, they had 160 million ounces. Let's get that one back up there. And so 30 million goes from eligible to registered. Now, perhaps what's more significant in some ways is that still does not appear as if metal is leaving the building, which I think would, if there's any like real sign to watch out for, at least in terms of the COMEX, it would be that. But in either case, so you had, it was 160. They've added another 33 million ounces since then, while they're getting fined $920 million for manipulating the market on hundreds of thousands of occasions. And of course, simultaneously, they are the custodian of SLV. So yeah, that sounds like an all-around great setup. Can't see how that could go wrong. But I'd like to put, excuse me, this, again, thank you, Bob, for pointing that out. So everybody, get big hand for Bob. To again point out how big 37 million ounces is, let's take a look at Silver Institute. Here's the mining supply. So you see 700, 800, almost 900. If you add in the recycling, 150 to 200. So, all right, let's add all that together. You see it's about been pretty consistently right around $1 billion. So if you say 37 million ounces, let's round down to 33 so that you say in 100, you can fit 33 3 times. So in 1,000, you could fit it 30 times. So basically, if you take 1,000 divided by 33, I'm going to get my math right here. Let me check it. A little bit tired tonight, but we will make sure I'm getting this exactly correct here. So 1,000 divided by 33. Yeah, okay. So basically, at this pace, over 30 trading days, what was purchased in SLV would eat the entire supply for a year. So 37 million ounces. So if that happened again Monday and Tuesday, that's 100 million ounces. That would be in 3 days. That would be a tenth of the world's supply. Keep in mind, this doesn't include what people are actually buying when they buy physical metal from Miles Franklin, where if you are trying to buy or sell gold or silver, you can find out pricing, quote, information, Arcadia at milesfranklin.com. And by the way, you know, just not biased, you can sell the metals too. They'll give you pricing or information. If you do have any questions about stuff like that, Arcadia at Miles Franklin. But so this doesn't even include the physical that people purchase from all of the dealers. And I'm sorry, the 37 million ounces doesn't include that. So that's a lot. And I guess that was the question a lot of people were wondering today, where the Wall Street bets thing, could it really make a difference? Could it really make an impact? On one hand, I mean, I think that's your data point that it did. Hearing now, I had wondered, we talked about it earlier in a video today. Is there other groups behind this? And there's a lot of interesting things going on tonight, hearing about political pressure that may have been lobbied on Robinhood to force them into that decision. So there's some posts going around that are alleged to be from a Robinhood employee. I do not know if those are accurate as phrased, but I don't know. It didn't. I mean, I try to phrase things appropriately on the channel. I've learned to trust my intuition more in later years than always trying to find rational proof. So I mean, I think that's important too. But I don't know. Often in trading, you don't get an official like flare gun going off. It's kind of like in poker. You have imperfect information and you don't know all these things for sure. And I try and balance this where I think it's useful as someone who trades. I try and share what I think is relevant and phrase it appropriately. So hopefully that comes across right and is helpful. And either case, with that said, get back to Friday night, snuggling with your loved ones and doing something fun. Take a break from silver for a while, but wanted to pass this along. Certainly a very interesting development. What else can you say? But again, it's like just the first data point of the impact of whatever you want to call it, whether it was the Reddit group, whether it was the attention that was placed on Reddit. I saw even Wall Street Journal even had a silver article today. I think that was shocking. I didn't even know they had a commodities section. I'm kind of joking, although, actually I'll take a couple questions here. Why not? Because I see Carlos Danger asks, why in the heck are the folks in Reddit buying SLV? That's a good question. I would not go with SLV if I were trying to cause a short squeeze, because what concerns me is that if you ever, or not ever, I mean, I think it's coming, but if you have a break in the market and we find out that the metal isn't all there and you're holding SLV shares, those are the people, along with COMEX contract holders, that, you'd be worried really are going to end up not getting a good outcome. So now on the other hand, Eric Sprott, if you're watching, I'm curious if you've thought of, or someone else like that. I would be curious what would be the impact if someone started, I think SLV, you can't go in and say like, hey, I have 10 shares of SLV, like send my silver into a box. And I think I'm pretty sure it's 50,000. Maybe if anyone in the chat room can help me out there, if they happen to know. But what's it? So you'd have to redeem a 50,000 share block. But if somebody did that, that would be interesting. If they started redeeming whatever the size is, large blocks of the SLV and converting that into physical metal. It's not an easy process to do. So it's not like you can just call your Schwab broker, but so that would be one way of doing it. I know they're doing a lot of options, and I guess there's some, I don't know if I'd go there first to trigger a short squeeze. That would be the place that you would make sure that you massively amplified your return if a short squeeze then did happen. But I mean, for the folks that are, have an interest in putting pressure on these short positions, anything that if you buy physical, certainly that's the safest thing to do. So actually calling a place or going online and buying physical silver that you hold in your hand, that takes it out of the system. I feel the Sprott Trust is putting their metal there 1-to-1. I feel pretty confident in Kinesis Money is putting its metal there 1-to-1. I'm guessing Gold Money is probably safe. There are a lot of good ones out there, and I don't know, maybe that's how it goes in many areas of life where one bad apple can scare people away from things. But I don't know if SLV, unless someone was planning to redeem a large block of shares, if you were trying to force a short squeeze, I'm not sure if that's the way that I would approach that. Robin Hood is a joke. Everyone is jumping off the boat. Yeah, I can certainly understand that. I'm curious to know, again, there are reports that the White House called him and basically stiff-armed him into pulling the bids. I mean, I think it's... I listened to the Robinhood founder. I was on CNBC last night, and what he said did not make any sense to me, for whatever that's worth. And if basically the guy was sitting there with a lot of pressure on him and had to bite the bullet and give some, forced explanation, that would fit a lot more, because it's certainly, then you have, Elizabeth Warren going out and saying, wow, this is a travesty and we have to get the regulation. Give me a break. I mean, all right, why don't go investigate silver, Elizabeth Warren. In fact, all right, there you go. If anyone knows if Elizabeth Warren has a Twitter, or go to her website. Let's see. Let's see if we can find Elizabeth Warren. Anyone in the chat room can help out here and let me know if Liz has Elizabeth. People could tweet this episode to her and she needs some help. Senator Warren. Okay, there we go. All right. So there you go. SEN Warren. So if you take the link to this YouTube video and you can tweet it to Senator Warren, because let's see here, she seemed pretty upset about the short squeezing and market manipulation. And my guess is that, okay, stock market isn't our economy. It's a giant casino and playground for billionaires. The SEC needs to clean it up, and Congress needs to do more for working families barely hanging on by their fingernails. So I'm going to start the party here, if I may. Let's see. What should we send Elizabeth Warren? Yes, I will send her. Hopefully not my spelling results. There we go. So I can't spell that great when I'm tired. What are you going to do? All right, pause there. Okay. Let's see, what should we say? Dear Senator Warren, if you are interested in areas of Wall Street that have been corrupted and could really use some investigation on behalf of several thousand viewers nightly, serial, several thousand nightly viewers, I would implore you to look into the silver market. Whoops. Well, let's go back there. Yeah. Let's check it before. We always proofread, read it out loud. Good, catch a lot of errors. And Dear Senator Warren, if you're interested in areas of Wall Street that have been corrupted, it can really use some investigation. On behalf of several thousand nightly viewers, I would implore you to look into the silver market. Yeah, well, I will send that. And yeah, I mean, I don't know if you can call her office but keep thinking there's got to be like some politician who some way, could be the hero to their voters. Be like, look, we screwed you. Look, at the Democrats didn't do this. The Republicans didn't do that. I'm the hero. So Elizabeth Warren, if you don't, I'm this Democrat. I don't even know. I don't care. Fortunately, I'm I guess if she's watching this, hopefully it doesn't matter. Even what is sent. I'm assuming a Democrat. Who knows? It doesn't matter. But yeah, Senator Warren, the stuff is out there. Watch that video that I posted in there. Find out who Bart Chilton is from the CFTC. The guy was there for the investigation. He talked about what a rigged job it was. So hopefully there's some politician, whether for noble or unknoble purposes, whether it's for their own, fine, use it. Dear Congress, use it for your own political gain in whatever way you want, but there's a massive felony being committed on a day-by-day basis, and you could do something about it now, or you could just wait and let's see if there's another 37 million. Well, actually, this is interesting. So if they did 37 million today, and again, if I can encourage folks at home that are watching, post this in the Wall Street Bets forum, and let's see if we can double that score on Monday. Everybody go out and buy some silver. In fact, on that note, all right, we're going to do something. Oh my goodness. We're going to do something special for this occasion. This is going to be a tough one, but I have something special on the way. So as some of you know, my Magnus Opum, if I may, I've been thinking about this literally for a decade. Oh, actually in February of 2011, when I was at Freedom Fest in the Bahamas, that was the last time silver was soaring to 50. And it was wild because we'd come back from lunch and everybody would be like, wow, silver's up another $1. Silver's up $2. And it was pretty exciting. That was where I first came up with the idea of making a silver statue of Ben Bernanke in a helicopter throwing $100 bills out of it. And I don't know. I mean, I thought, you can't really do stuff like that. Who am I? But then years later, if you can see my silver soldier there, was sitting on my windowsill, and I was like, if I can make this guy, I got to make the silver Ben Bernanke. So in honor of this fine moment and to encourage Wall Street Bets, and I say this in completely legal fashion. Hey, I mean, do whatever. Actually, to be clear, not legal financial advice, but I'm happy if people buy things they like. And on that note, I'm going to give away the Silver Soldier tonight. He is ready for a new home. So, folks, go tag Wall Street Bets, Reddit, on Twitter. Tag Arcadia Economic, and we'll pick a winner for the Silver Soldier. This is the exact unit that helped bring the Silver Chopper Ben, which will shortly be coming into reality. An exciting moment for everyone because I know the joy of what it will feel like having a silver Ben Bernanke figurine spitting out $100 bills on your desk. So anyway, thanks for watching. I guess this ended up being a little longer than expected, but hope you smiled a little bit. And in either case, that's a darn big chunk of silver. So we'll see what happens on Monday.